Would never order coffee. I mean, it's so funny because I do have this weird schedule. We go out for dinner, and you and I have gone out for dinner a lot.
Mm-hmm.
You know, we usually go early, so it's Blue Plate special.
5 o'clock.
5 o'clock. You're absolutely
Which I'm not
right.
even trying to joke about. I love
and
5
I've
o'clock
argued
dinner.
with people. Can you do a 4:30? And they're like, you really are sad.
Yeah.
But it's when we go out with friends, and all of a sudden they're like, they come around for dessert. I'll tolerate somebody having dessert, and then after the dessert they go, and I think I'll have a cup of decaf. It's like, what is that? You're just drinking hot water with no function.
It turns out people want to talk and
the whole
and
talking
be around
thing is
each
so
other.
overdone.
Overrated. I agree. If you could just tell my
By the time I
girlfriend
hit
that,
home
yeah.
at 4 o'clock, I've used all my words. I have got the perfect wife who completely understands that. And she's heard that story before at all. What's going on? I've used up all my words. I've got no more.
I wish I could get that one. My
You've
girlfriend.
got a work in progress.
Yeah, she's great.
Wonderful.
Yeah, she's great. But yesterday, so we do the show at 6:30, and then I also on Mondays I do the crypto show with
you were
Ryan.
dipping tokens late.
And
yeah,
so
with our boy
I'm
Ryan.
here until like 5 or so, and then last night Callie's like, because I was in I was in Montana and then I was in London, so I was away for 4 solid weeks, and then I came back in an irritable mood.
Wow.
And so
Really? She is already twisted. You were working for 3 weeks in London, and she was there for one of them.
Trust me.
To your defense and sanity, don't.
I appreciate that.
Her and Michelle are masterful tacticians at moving the pieces around the board to like. How did I get over here on this island with no defense?
I thought I was a king or at least a rook, and I'm a pawn, and it stinks. But last night, Pete, I'm like, I have to eat, and then just like I have to go to bed, because like this show is gonna kill me. I have to be up at 4:15 to get all my daily routine in, and then get here by like, what time do I get here? Like 6:15. And she is like, hey, I texted you an apology quiz. I think we should take an apology quiz to see what we score on how we resolve issues.
And
I
guys,
was like,
if you turn in to Forex Focus tomorrow, we'll be reviewing that apology quiz. And
I do need to take it. Today I need to take it or I will be in trouble. And so we can review what I have no clue what it means.
Oh my God.
Or I'm sure my score will say that I'm a jerk and I don't apologize the right way.
That sounds like a virtual minefield, and you're going through it with lead boots.
Well, I don't know. How else am I supposed to go through this minefield aside from just taking the quiz and being like, babe, you're right. Squip the quiz?
Squip the quiz or skip the quiz. Just use some cash. That may work. This may be a case where cash solves the problem.
That's one of her positives, and I don't mean this to
Don't you love the sweater? You would look spectacular.
Michelle is great, and she does like the finer things. And so a trip to the Hermes store maybe solves a lot for you.
That's not true.
With Callie,
don't rat me out because, hey, my wife is
anything.
watching right now. So
I love it. I love Michelle.
She wanted to know, when are we taking call-ins? Because she wants to be first-time caller, long-time fan.
I'm going to have to take a lot of these apology quizzes. I need to apologize to so many people. But I wish, with Callie, I wish that solved things. But she's an Okie.
You've got the perfect venue here. And
she's a barrel racer. She doesn't care so much for luxury goods, which is actually a nice thing because...
Again, I know a place you can get a really nice saddle.
How much is the Hermes
sell a kidney
saddle?
and buy a saddle? I don't know.
How much is the
I know
Hermes
the little
saddle?
tiny one I took a picture of you for was $12,000. So a real one I couldn't imagine, but
it's got to be at least 35, 40.
I don't know. They make them for you. So, and it's like 3 pieces of leather. It's one of those things I don't get. It's just like, I mean, we've both ridden. It's like, as long as it's a seat with some coverage and something I can hold on to, it's good enough.
It's got to be like a hard asset kind of thing, where it's like almost like a painting, where it's like it's inflation proof. You buy the Hermes saddle.
It's a statement that some people feel.
But you can't ever wear it. No one ever wears the Hermes saddle actually riding a horse, do they?
I don't know. I've never seen one in action.
Yeah, but we don't see a lot of horses. We do see a lot of Forex markets. If we get to the platform, I swear we'll start talking about trading here at some point. Some dollar buying
Yep.
the last several hours since we were on yesterday morning. What's happened? I mean,
Paradoxically,
Powell
with
talked.
with U.S. rates a little softer.
Mm-hmm.
We saw U.S. rates bump up a little bit. The dollar actually month end come off its lows and a little bit follow through on that right now. So, I mean, are we off a lot? Sure, we're down from 112 to below 111 in euro, which is a pretty
It's a nice move.
decent correction. So, we talked about month end flows yesterday, and we didn't see big flows around 10:30 or 11 o'clock. In other words, there wasn't a really big move. The bigger move came off of Powell speaking at noon, and surprisingly, slowing the cart down from 50 basis points isn't a sure thing next November.
Yeah.
And again, we know that looking at that, this is why we don't look at the Fed dot plot or the Fed. Do we look at the Fed watch tool to get probability? Sure, but we don't trade against those because those are just reflective of people's opinions in the market. As those opinions change, those change. So it's not like, oh, I've got this magic key. It says rates should be here in 90 days, so I'm going to do this.
I'm
'Cause
buying
guess
everything
what?
under it, and I'm selling everything over.
Right.
Yeah.
Guess what? In the next hour, that changes.
Well, it's a funny thing you bring up, and we have here the Eurodollar 15-minute chart, and you can see yesterday. I mean, this was a nice move. This was off of, I believe, there was some German inflation, some data early in the morning.
It came in soft.
They brought euros all the way up to 112, and then it was pretty much nonstop selling until right now. They're trading 110.83, which is the low for this week. Going back to last week, you raise a great point. It's something that options trader, every kind of trader, butts up against this idea, which is the data that you have, the data that you got an hour ago, or the data that you looked at when you put on the trade yesterday or last week changes. It becomes historical data every single moment. And so you get a lot of times, Pete, IV rank is 100% and I sold options, and so implied volatility has to come down. That's not a guarantee. The data can always continue to move in that direction or move against you. Same with, you bring up the dot plot, and I think it's a great point, which is to say, okay, there may be, given information that we got 2 weeks ago at the FOMC, they're pricing in now a bunch of cuts over the course of the next 6 to 12 months, and the market priced a lot of those in the next 3 months by the end of the year. And people hold on to that data and say, okay, well, the market now has to move in this direction, and the Fed has to do what the dot plot says, what the Fed fund futures are saying, what the not Eurodollars anymore, the SOFR futures, treasuries, and everything else. And it all changes. Like all the data, the non-farm payrolls that comes out this week will affect whether or not we get a 25 or 50 basis point cut in November. Inflation data that we get in October will affect what that is. Just because the market prices something in the last week of September doesn't mean that it's going to hold true for all of October. And I mean, you and I looked at this yesterday in all of these dollar markets. It's easy to look at this move.
This is interesting, though.
And say, Pete, the Fed's going to cut to zero. Right. All interest rates are moving through their lows. The yield curve is normalized. All these things are pointing to U.S. dollar weakness. But I mean, we spoke on it a little bit at the end of yesterday's segment. I'll be damned if we weren't in this exact scenario at the end of last year, where they started to kill the dollar, and we saw 133, 134, maybe even 135 in the pound. We saw euro right at 112. They priced in 6 or 7 cuts for 2024, just like they're pricing in 6 or 7 cuts for 2025 now. And everyone kind of jumps on that bandwagon of, oh, it's a foregone conclusion, when U.S. interest rates are still at 4.5%. And yeah, the Fed came out yesterday and said, we're inclined to just do 25 basis point cuts. throughout the rest of the year. And now you're seeing the dollar make a little bit of a comeback. We'll see how far this comeback will take it, but right now it's trading its highs for the last week or so. I mean, which piece of this puzzle is the most interesting to you? I would have expected more out of the dollar yen piece, but the euro and sterling are giving back most of the ground here.
They are, and that's an interesting takeaway there too. And that brings into account the play of the yen and a little bit of change in the government over there.
Yeah.
Euro on a percentage basis, much bigger move to the downside than cable. I mean, we're off the highs, but we're not back into. We talk about. When we looked at this yesterday, we were seeing everything slightly above 6 months up to a year and a half ranges. And the question is, do we have another failure back into the middle of the range, which we're teeing up for a little bit here. But this pound here is continually outperforming to the upside and not giving ground on the downside a little bit. So we're seeing that pound market being a little bit more resilient to holding on to the upper end of its range. So I think that this is one that can still kind of work within the framework of, and I'm glad you brought that up, because when we look at the move here, now this is euro sterling. So one of the great things of Spot FX, and let's just take a minute and talk about. So
Sure.
Tasty FX offers Spot FX products. So Tasty FX is a sister company of tastylive and tastytrade. We have 80 FX currency pairs. Different than futures, different than stocks, different than options. We're a separate company. But, and you can go to tastyfx.com if you want to learn more about the products and how to open an account and how to trade them. But what it does is gives you, and this is where I started, my later part of my career was trading FX institutionally, so trading non-dollar crosses, as they're called, something other than euro versus the dollar, yen versus the dollar, dollar Canada.
I don't know if I knew that crosses were what you primarily traded.
You would, because your flows would still, who would come to deal with you would be. A lot of it would be dollars, but you'd look at other non-dollar pairs to hedge risk,
would be there, yeah.
and the arbitrage would be
Yeah.
there. So now what do I look for? I look for opportunities. And while we saw a great move in the dollar over the last year and a half, all the way down to equivalency back up to 112, where we saw an even greater extreme was in things like euro yen.
Yeah.
And what's great with these products is constructing that trade in futures is tough.
Yeah.
It is a difficult trade to build and wait out, and you're margined on both sides. It doesn't make one better or worse. It's just understanding, I don't know if the right term is horses for courses, but what product fits best into what I'm trying to accomplish. When we look at things like, and here's another one, Aussie Canada. We look at that Aussie chart from yesterday, and yeah, Aussie's a little bit weaker, still holding on, didn't quite get through 64, holding on to 63. But the relationship, this is what we talked about yesterday, Aussie continuing to outperform Canada as we go ahead. Why? Well, crude's lower again today. Metals sold off a little bit yesterday, but came back. China's still holding on. They opened higher, as we talked about yesterday, and gave back a little bit of ground, but honestly, not as much as I would have thought. And I think that may be a little bit more taking. So Aussie, the proxy for China, outperforming against Canada. So how do you take a look at, how do you construct that trade easily? This is where the ability to go to the pair itself and build out the trade in a single transaction is really straightforward. So the ability for Spot FX to give you a different type of exposure. We talk about large number of occurrences, small trades, non-correlated returns. Well, and this is something you and I have talked about for years, and I used in live shows. We talk about what do you have a lot of exposure in? I'll go around the audience. I got a lot of Tesla, I got a lot of Amazon, Nvidia, maybe some consumer staples. What everybody has is a lot of long dollars.
Yeah.
So looking at non-dollar correlated non-dollar pairs or looking at currency trades is a great way to diversify. This is a great way to start that journey of second and third level diversification, adding in adding in option strategies, adding in premium plays, adding in non-correlated commodities, all good steps to diversification. This is just another step.
Yeah.
We should be product indifferent. We should understand that we shouldn't be afraid of any product set or anything else. We should understand the dynamics of it. But if I can efficiently create a different type of trade that has, whether it's an interesting extreme, if I'm a contrarian, or has something on a breakout and I'm a momentum trader. Now, which is the right kind of trader to be? There is no right kind. My old business partner, who I worked with for 20 years, was the best momentum trader I ever saw. Market would break out and he'd be buying every new high. And I'm up there selling them because I'm a contrarian selling them, and his bids would run into my offers. And it was like, we didn't want to necessarily cross streams, but it was just like we could see the different mindsets work, and he was fantastic at it. That's up to each individual to figure out what works best for them. But what's great here is this product set gives you that ability to find and discover a new set of extremes, a new set of opportunities. And for me, the important part is we talk about trading small. And I think we've all gone through the exercise. I remember when I traded in the pit, the first day I traded 2 1-lots. And at that time, you had to put in a trading card, and the lady comes over, the key bunch lady, nice lady, and she goes, honey, can you come out of the pit? And I'm like, sure. And she goes, I have no idea what this says, because my hands were shaking so bad, I had to rewrite the cards. You then start to get comfortable with 1-lots, and you're like, well, geez, if I did a 2-lot, I'd make twice as much. And you realize, well, that's twice as much risk. And what I love here is the ability to size up a trade and not be constrained by, I've got to trade a full future micro futures, great innovation. They get it smaller. What if I want to get smaller than that and try this on a smaller scale? There's a great opportunity here. So it is, again, exploring new products, and this is what we're here to do, is bring you a new product set, new way to engage with product, a new way to engage with the markets, and look at that next level of diversification, and do it in a way where these positions don't become overwhelming. I mean, starting small, it's so funny, every time I run into, that really worked, I'm kicking myself I didn't have more on. And it's like, we all kick ourselves when we're right, but when we're wrong and we get uncomfortable, the mechanics break down. That's the problem. So we need to be able to start small and scale. Here we could start as, Frankie, you brought up here, what are we looking at? Euro right now. A micro lot is $1,000 a notional of a currency pair. This is about as small as you can get a micro lot on the trade. $22 in margin. Very small trade, very easy way to start and engage with product. And you can scale up from there if you want. So it's a great way to start to, much like digital assets. One of the great things they did with all the digital, you can trade whatever size you want.
Yeah.
You can, trading a full Bitcoin is a big clip right now. I'm talking to the digital master here. It's a big bite. Here we could start with a smaller bite, which is great. And you can kind of grow into product, find opportunities, try different currency pairs. I mean, you've got everything here from the majors all the way running through the non-dollar crosses. And the great thing with the non-dollar crosses, if we look at something like, let's go back to Aussie Canada. The platform does all the math for you. So you're not having to figure out, okay, wait, how many dollars of margin am I having to put up? What is this really about? It will walk you through all that. So looking for tradable opportunity is what it's all about. And the ability to access that easily in a size we like is great. So this is still, I think this is an interesting one, because at some point, this is one that has cleared that ground we talked about. And it's held on to it for 3-4 days.
Yeah.
It hasn't failed. So the contrarian in me says it'll catch up and fail. The other one says, I'm not sure I want to be short this, because whatever happens here, rates are higher, rates are lower, this one's not coming off.
Well, that becomes a lot of times the conversation, especially at a point like this, where it's like, okay, if I'm a contrarian, then maybe I want to get some long dollar exposure in here because dollar's been beat up the last couple of months. And like we talked about yesterday being maybe a blip, but maybe an inflection point of, oh, you guys really killed the dollar over the last several weeks, planning all of these rate cuts from the Fed. And then Fed Chair Powell comes out and says, yeah, we're moving rates lower, but maybe not as an aggressive pace as you might think. So, okay, maybe I'm looking to get some long dollar exposure in here. The question then becomes, out of all of my dollar pairs here, which is the most intriguing? Because, yeah, you have the Aussie and the Kiwi and the Canadian dollar piece that tend to be highly correlated.
Right.
Like we talked about a little bit yesterday, more risk-on commodity currencies. And those can be more volatile. And what we've seen, to your point, Pete, is that they've kind of held on to a lot of their strength and have been, if anything, I think, diversified from the interest rate talk. Like the Aussie price action to me, Pete, yeah, it's swayed by what the Fed is going to do with U.S. rates and what the Reserve Bank of Australia is going to do with Australian rates. But a lot of this is that China story.
Great point.
And so I would
That's always the third part of the conversation, if it's ever amongst the talking heads, is the difference in Aussie Fed rates. And you're right, the bigger...
We almost never talk about it.
No, and I think that's an important part to the discussion here. And, you know, one of the things, when we look at this for opportunity, and you talk about this, you know, VIX is, it's interesting. With Spoo's putting in, I think S&P's put in lifetime highs yesterday, if I'm not mistaken.
I mean, they're a rounding error off of them if they didn't.
Yeah. VIX is stubborn around 19, though.
Yeah.
You know, does that give us the impression that risk is on or risk is off versus these currency pairs? I mean, the correlation between stock VIX and currencies is not, I don't think we've ever run that, to tell you the truth, but I don't think it's great, but it talks to, there's a little bit more uncertainty out there, which in my mind just means there's a little bit more elasticity in these prices.
Well, and if you looked at the Chinese equity story, or you looked at that VIX,
right,
and you were of the thinking that equities are going to give up some ground, then maybe this would be the place for you to get short Aussie and get your long dollar exposure, since there is some correlation between this currency, those Chinese equities, and thus an inverse correlation between this currency and VIX, albeit slight, because we do bring up that Aussie rates versus U.S. rates are going to have an effect, maybe more muted than euro dollar to the ECB and the Fed. But that might be your flavor here, and I just want to paint the other side of...
Can you do me a favor? Cue up a one-lot trade here. So one lot is $100,000 of notional. Now, what we're seeing here is a margin of about $2,000. So what does that tell me right now? I'm controlling $100,000 of 100,000 Aussie for $2,000 US. This is a leverage product. There's risk on both sides,
Sure,
just like futures. So the leverage ratio here is 50 to 1. So you have to be mindful that there is risk involved in these trades, just like there is opportunity. Leverage for us is capital efficiency. Leverage used smartly lets us do more with less. But we need to be mindful that these are leverage products, just like futures are leverage product.
Well,
different type of leverage. When I say different type, different leverage structure to them. They're not span margin, they're margined in a different way, but there is leverage to these products. So we need to be mindful of that as we go and start to explore. What I love is capital efficiency with the ability to choose the slice of the pie I want. And when you go down, now Frank's just brought us down to a mini lot, which is 1/10 that size, 10,000 Aussie exposure. Again, the margin gets cut by a factor of 10. Does that mean we're getting less leverage? No, we're just taking a smaller slice of exposure, which is great. The ability to tailor my exposure to a level where I'm comfortable and my mechanics and my discipline can stay intact is really important to adopt successful product.
And the other part of this, just quickly before we get out of here, and you're seeing
Why, are there guys after us?
a different chart as I jump back and forth. This Aussie holding in better at its highs against US dollar versus this euro, which is continuing to trade lower here, down another 5 pips since we started talking. This pair is going to be, or at least has recently been, extremely sensitive to interest rate price action and the interest rate differential between ECB and the U.S. And so it really comes down to, well, Frank, you're talking about U.S. dollar and maybe it's about to come back a little bit, or maybe you're that momentum trader and this is an opportunity to sell more U.S. dollars on a larger upswing in the grand scheme of things. The different flavors here, first of all, it seems like a lot. There's really only 5, 6, 7 major flavors of U.S. dollar that you're going to end up trading for liquidity purposes and for leverage purposes and everything else. And that's going to be your commodity currencies that we just talked through: CAD, Aussie, Kiwi, your major currencies that we've talked through: euro, sterling, yen, franc. This one, the flavor is much more interest rate intensive. And so if that's the kind of trade that you want, then maybe you do go with a euro or with a pound versus this Australian dollar, Canadian dollar. It's just different ways of trading. It's like going into the market and being like, I'm going to trade, NASDAQ versus Russell, large cap versus small cap. But we'll dive more into this stuff in the future. That'll do it for today's episode. Pete, it's always a pleasure to talk to you here in the morning.
Good stuff, my friend. Goes fast.
You got Tom and Tony coming up next. Thanks, everybody, for watching. We'll be back tomorrow at 6:30.
If you missed the live show, here's our cherry on top yearly recap.
I bought a Westinghouse TV for my gazebo outside.
Oh, look at you!
Yes, and I put up Roku. I would watch the game. I got my apps all done.
So you're outside and you're pulling
Yes.
Can you see it from the hot tub?
Yes,
Wow.
yes.
Are you going to invite Tom over?
No.
Yeah, that's going to... There's a spider on my desk. No, kill it. Oh my God.
Where is it?
It's on my microphone.
I don't see it.
Thank you, Bat, for coming to my aid.
You're welcome.
And Tom, where's your firecracker popsicle?
Yeah, really.
When did you see that?
On every single Zoom call you've ever been on, you're pounding
I didn't want to spoil
firecracker
it.
popsicle. On any Zoom call I've ever been on with you, you've got a firecracker popsicle rocket pop, and you're not just like licking it, you're literally like biting it off of the thing.
And I don't know who was taking pictures of me.
Anton,
Hey, when you-
if somebody's on a Zoom call and somebody's eating a rocket pop and they're just like biting into it, somebody's gonna notice and somebody's gonna be like, what is going on here?
I'm doing this just for you this one time.
Yeah, you got to put it against your white shirt. There it is.
It's disappearing. You see that? All right. There you go. No, that's all you get.
Oh, but getting back to our soda machine, which does work. It's the greatest feature we have because it makes nice ice cubes. And
Got a lot of reports. It's out of syrup by 9:30 in the morning.
I just use it for the ice, and then I get water, which we
You
do
got
have a water
ice?
filter.
Don't be showing off. Don't be showing off.
Do you know what kind of ice we have?
None.
Mid ice.
Yeah, he learned that on TikTok.
I learned that yesterday. That was my whole lecture. I got lectured.
Mids, like mids.
I said-
mids, like
Hey,
medium.
the ice, it ain't bussin', I'll tell you that much.
I said,
Mickey,
I said we have ghetto ice here, and I got
Yeah.
lectured. And I go,
You
we
should
have
get lectured.
we have
Yeah.
mid ice.
Yeah, no cap on that.
So does Tom get to take his paw and stick it with the scoop, or do you just go in and grab it? See,
There's a
we
cup
got
right now. Wait.
Hey, it's not a cup, it's a mug. It's
No, that's right. We have a ceramic mug that chips off on the ice that you can use. But Tom's already used his hand in all the ice.
and that mug, it's
Nobody thought about putting a plastic cup in there or something like that. It's a ceramic cup with chips in it.
it's one of the old mugs from like 12 years ago.
Oh my God! Has anybody died here recently?
It's a dome mug.
Has anybody died?
The ice is so old; it has like that like old ice smell. You know, like the ice that sits in the refrigerator or the freezer.
Mold, Nick. It's called mold.
Like it has like kind of that stale smell to
Freezer
it.
burn.
Yeah.
Freezer burn.
Yeah, exactly.
Yeah, the ice is freezer burnt. Yeah.
That just means it's colder. Little cantankerous, but
And I'm not cantankerous. Why does anybody ever say I'm cantankerous? I'm not cantankerous. I don't even know what that means, but I'm not cantankerous.
You want to know what it means?
Yeah, what does it mean exactly?
Bad-tempered, argumentative, and uncooperative.
they laughed.
I heard laughing.
Not
Perfect.
I'm not bad-tempered. It's not my design, period. I don't want to be with you losers. All freaking losers. Degenerates. I'm not going to your stupid hat store in Manhattan.
Argumentative.
That's not empirical ham.
Well, they say it is.
No, they don't.
You just said she's vegan.
I didn't say vegan.
Oh, she's pescatarian. Okay.
Pescatarian. Never heard of it. Occasionally.
And uncooperative.
No, I'm cooperative. Yeah, what else you need?
Yeah, nothing.
There you go.
Okay.
Beautiful. I could be
You're
argumentative.
68%
Beat the opening bell. Newsletters.
Woo! Get tasty, pre-market. Come on, you know it. Can you feel it? We got some things to talk about. Pre-market. It's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no! Just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
Hello, Miss V.
Hola.
I am calling it Boomer Free Tuesday. Yeah. I don't see
You
any
having a good
boomers
time,
here.
huh?
I don't see any boomers. Who's asking me to help them with their phone? Nobody. It's Boomer Free Tuesday.
Yeah, don't get used to it. Don't get used to it.
Nobody wants
Speaking
to
of
work anymore, you boomers.
Speaking of new phones, I need that new phone. You need to go with me next week.
It's literally not my job, Tom. I will help you, but I'm gonna charge you extra though.
I consider that a road trip.
Yeah, all right. How is New York? How's the Big Apple?
It's good. I mean, it's good.
Forget about it. I know. Let me ask this a different way, Vanetta. One way that we can engage with him. How are the coffee shops in New York?
I only went to Gregory's this morning, which is right next door, and it's kind of like a New York chain. It's good.
Okay.
She went to a chain coffee shop to do research.
Well, it's a local chain. I don't think they're outside of New York.
What did you have for dinner last night? Where'd you go?
I didn't do well. I didn't
what
want to go out.
happened? Would you go to Chili's in Times Square?
I was really beat, and I had late conference calls and everything, so I just went and grabbed a quick bite to eat at a bar next door by myself, and it was like I wanted to spend like 15 minutes max, and it was unedible, so I kind of threw it out or inedible, and got from a street vendor. I went and got Indian street food, and that was borderline inedible, but it was better than the bar food.
Wow.
Man, you have really fallen from grace, man. I remember,
have.
at least when I was going out on the road with you, we'd go to a nice restaurant. We always had that.
I know.
I just you guys are screwed up in Miami. You guys are screwing up everywhere.
I just didn't feel like I was really beat. I was starting to break down yesterday. It's been a long.
I heard you walked 40 blocks yesterday. What's up with that?
I did.
Why?
Well,
why did you walk 40
Well,
blocks?
I had an hour between where I was, where my hotel is, and where my first podcast was going to be, and so it was 40 blocks away, and it was on kind of the same, it was right down Broadway. So I decided to walk it. I figured it's like 40 blocks is probably 2 miles, maybe 40 up, up and down, not crosstown blocks. So
did you go? So did you go to the halal cart on 53rd and 6th?
no,
Oh, you didn't?
on 44th and 6th.
Oh, 44th and 6th. Got it.
But let me tell you something right now. I don't know the last time you were in Manhattan. There's not 1, 2, or 5 carts. There is at least 4 carts on every street in New York now.
That's amazing. See, that's what a free market is for.
No, I don't. There's too many. And you know who has a cart on every block now? Nathan's.
Really?
Every single block in Midtown has a Nathan's cart.
Are you not a Nathan's guy?
I think Nathan's has the best French fries in the world.
Oh wow!
The crinkle cut fry.
The big.
Do they still serve them in a cup?
No, but they have the big crinkle cut fries. I think
44th and 6th is touristy. You're not supposed to go there.
Oh, I'm sorry. So sorry. Like one street cart's any better than the other.
Yes, for sure. The one on 44th and 6th, everybody knows is bad.
No, the one on 44th and 6th is a big sign out front saying they were voted
Oh
number
man,
one.
they say you're gonna be farting all night.
Well, then somebody's gonna have a bad plane ride home with me.
Oh man, that's horrible.
Mama, no.
That's horrible.
Mama, no.
But no, the food was, I can handle that food. But anyway, there's a Nathan's cart everywhere. Yeah, Nathan's. I mean, the only thing I've had Nathan's in the last couple of years is the French fries, and I like them.
Okay.
But
so I didn't hear your answer. Do they still serve them in the cup?
No.
Oh, you gotta have them in the cup.
No, but I did go somewhere yesterday for lunch that I'm going to say is better than Cava and better than Chipotle and better than Roti.
Wow, you went to a place that's better than a chain restaurant. You're
Yes.
amazing.
Wow. Okay.
But it's called Little Beat in New York.
Little Beef.
Little Beat.
Okay.
Not like BEAT, but BEET.
Yes, and it was great.
And so you just get like an overpriced bowl?
Yes.
Yes, you love overpriced bowls. They hate to see you coming.
It wasn't even that overpriced, and I loaded it up with all veggies and stuff, and it was great. It was really good. So anyway, I found a place.
God, I don't know what's happening to you, dude.
I know. So
really is sad. All right. It is what it is.
I know. It is what it is.
Yep.
So yeah, but I got a full day today, so I'm going to be running around the city. So
wait, how many bagels have you had? Are you at 0 bagels?
1.
Oh, okay. You're 1 bagel bid.
Yesterday, 1 bagel bid for breakfast at the Red Flame Diner, which is one of the worst diners in America.
Okay.
It's probably the worst Greek diner I've ever been to.
Okay.
So, but I already knew that because I've been there. I've been to this hotel many times. I've been in that diner many times, so I knew it was bad.
Sure, you're a glutton for punishment. Yep, you don't learn.
Yeah. I'm not on this is not a eating reconnaissance trip. This is, actually
your little beat is a vegetarian friendly restaurant. It's on 333 Park Avenue.
No, it's not vegetarian. It's they definitely have
vegetarian friendly restaurant, I said.
Oh, vegetarian friendly maybe, but I had pork.
But I had pork.
And it wasn't vegan pork.
But you loaded it up with vegetables, you said. What you said was, I loaded it up with vegetables.
I did load it up with vegetables, but the
underneath the pork.
Yeah, exactly.
Got it. You left that out. Sorry. Got it.
Okay. Got to have a little protein.
Yes, of course.
So,
soy boy like you, I thought you'd have something like that.
Which one?
I thought you'd have some soy.
Nah, not a soy boy.
Okay. Yeah.
What? Boomers,
so anyway,
boomers, come back to me. Focus here.
Anyway, I got a full day today, so I'll see what happens. After the show, I'll be out running around, and I get home late tonight. Be back in the studio tomorrow with bells on.
With black and white cookies for Vanetta. Those are little. You can fit those in your backpack.
Yeah, if you want them, I'll get them tonight.
Yeah, I want black and white cookies.
If I can get them. I might have to.
Now it's if I can get them.
They might have to be airport black and whites, but I'll do my best.
That's fine. I will.
You're right by Junior's right there. Just walk in.
I'm not right by Junior's.
You kind of are. There's one in Midtown.
You're a block and a half away in your hotel.
Like
2.5
crosstown blocks. I'm like 3.5 blocks away, crosstown. That's long.
You just walked 40 blocks to have a bowl of vegetables on top of pork, and now you can't walk 4 blocks, 3.5 really, for my friend?
I can. I just don't have any time. Busy.
Okay. Got it.
Hey, it was crazy news in the sports world last night. We lost two sports greats, Dikembe Mutombo and Charlie Hustle, Pete Rose, both sadly.
I thought you were going to talk about the big news in sports last night was Dr. Jim lost $23 to me, and he's going to absolutely kill him on his bet of the century.
I was going to talk about Pete Rose and Dikembe Mutombo.
No, I think
Pete Rose, the all-time greatest hitter to ever play the game. I'm sorry, I bet on baseball. Pete Rose, they did him dirty. But Sosnoff wants to talk about the $23 he won from Dr. Jim.
I'm sorry. I'm sorry for not knowing that.
I think $23 from Dr. Jim is a bigger news story.
He'll never forget it. He'll say it's the day Pete Rose passed. I mean,
I've never seen in how long has Dr. Jim been with us? Since 2015, 9 years. I have never seen him make a bet ever.
I know. He gave up betting.
Wait, what was he? Was he betting on the Dolphins last night?
Yes.
Oh,
yes.
Okay.
It's too good to be true.
So wait, what happened? What happened?
Tennessee beat him.
Oh, I didn't watch that game. Okay.
Nobody did. It was a horrible game.
Can I say that also, since you were talking about greats, I have watched Dikembe play many times.
Yeah.
And was there the night of the finger. Not him giving the finger when Michael gave the finger, but watched Dikembe play many times. The most amazing thing about him was I think I don't know what he weighed, but he looked like he weighed about 150 pounds.
Soaking wet.
He was long and lean, yes.
That's an understatement, long and lean. Understatement. But I want to say that we coined the term in golf, when a tree knocks your ball down, that it was Dikembe.
You get Dikembe, yeah.
Yes. Because for years, every time you hit a tree, we'd always go Dikembe. And so I'd like to take credit for that, me and the boys. But I did meet Pete Rose twice.
You did?
One, yes. Not
at a signing event that you two were both at?
Well, I wouldn't say it was a signing event because I've never been to an actual signing event, but
this is just like a rich people thing?
No. I was at two different times when I was in Vegas. He was there, and once he was at some store and he was just shaking everybody's hand that came by. It was like it might have been a sports store, but I don't remember what was there, what he was doing. And another time he was.
What are you, O.J. Simpson? I don't remember if I signed it or not. I don't know what happened. I just.
No. I never got.
It was probably a memorabilia store.
Yeah,
it was probably a memorabilia store. Yeah. And the other time he was actually in the casino, but I never talked to him or anything. Just shook his hand twice.
They did him dirty, Sab.
So wait, my question though, do you think he gets into the Hall of Fame now that he's dead?
No.
Who gives a crap now? You know what? They disgraced him. I mean, He should have been. It was 1987 when he did all this stupid stuff.
It was 89.
He bet on baseball and got caught. Big freaking deal. Let it live already, crying out loud.
Well, they said that it was his lying about it that was really kind of worse than.
Oh, you know what? You sound like a parent now. I'm not mad at you. I'm just disappointed, so I'm not gonna let you in my club.
I hate baseball purists that way too, because the reality of Pete Rose was that he was one of the greatest hitters of all time.
I mean, his record probably will never get taken down.
And he had an attitude about playing baseball that was,
never satisfied. That was his thing. Never satisfied.
Yeah.
Never satisfied.
I mean, the guy's definitely like a hometown hero in Cincy and things like that. But, I just don't like the whole baseball purist stuff.
Well, but you can't bet on your own team, man.
Well, that's to be determined, but he only bet for them. He never bet against them.
Okay,
if he bet at all.
Well.
Yeah, whatever.
I wish every player bet on their own team.
Yeah. Okay.
I mean, come on.
RIP to two sports greats. That is
17-time All-Star. I'm reading here. Played 5 different positions. Come on, got to give him a break. Should have been in.
I mean, we used to make markets. We used to make markets on Michael Jordan every single night when he'd play at home, and he would say, "What's the market on me?" And we would make a we'd make a market on how many points he would have, and he would always buy the over. He won every night.
Well, he got secret suspended for gambling too, so that's not.
I don't think so.
That's my conspiracy theory of the day. Hey, we got a great show for you today. We got to keep it moving on this terrific Tuesday here at Tasty Live. At the top of the 8 o'clock hour, we're going to do an options jive, expected move, and IV. We're going to look at both of those two things and how they work with each other. And then it's Tuesday. Has anyone checked on Chris? I don't even know how that Mets-Braves shenanigans even shook
They
out.
won. They got in. The Mets got in.
Okay, so Chris will be in a good mood today. Okay, good.
They
Tom,
both got in. They're calling it one of the greatest games in the history of baseball. I mean, I did not watch the game, but I watched the highlights.
You were live on the air when it was going on.
What Saz is trying to say was he came back to do the show so that Chris could watch his favorite baseball team get into the playoffs. That's what Tom's a giver.
Yeah, I'm a giver. You do know that I grew up as a Mets fan, but I haven't been a Mets fan for a long time.
Oh, Dr. Jim just emailed me. He said he paid you at $23 in Starbucks bucks. It's in your email.
Ooh, can I have it?
I don't care how he pays me. I just want to document him paying me. He can pay me in pennies if he wants. I don't care.
Well, Chris Vecchio will be in the house at around 8:40, and then 9 o'clock. We have a market measures to long or not to long. Clever. Directionality in 0 DTEs. So it's part of our 0 DTE series. I don't know if you want to elaborate on that, but too long or not too long? That is the question.
It's a little tasty Shakespearean. It's a little of our Shakespearean.
Yeah, because you're good with English. You talk good. And then 9:30, my personal favorite, Scott Sheridan in the house. Big boy Scotty S breaking down live from the trade desk, counting down all the top trending tickers over at Tasty Trade. But hey, in the meantime, in the between time, you guys want your daily dose?
Sure.
All right, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Across the wire.
Leading story. Top story. Jump in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today is a terrific Tuesday. Rabbit. It is October the 1st. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Yes. Can I first just say, as an elderly millennial, there is a new royal baby. I don't know if you heard about this, but the son of Tony Hawk and the daughter of Kurt Cobain and Courtney Love just had a kid together, like Gen X, elder millennial. Like, this baby is the chosen one.
That's impossible. I'm too young for this to happen.
No, Tony Hawk posted on his Twitter. Tony Hawk's a grandpa now, so he was holding his grandson. But again, just iconic legacy for that grandchild. But congratulations to both families. The kid's doing well. So isn't that crazy though?
Yeah, that seems a little crazy.
All right, you don't.
I don't think the math works, but fine.
Hey, this is the part of the show I like to talk about today's financial news and headlines. My name's Vanetta. Hey, getting to the first headline, Jerome Powell indicates further but smaller rate cuts are ahead and insists that the Fed is not on any preset course. He said that the recent 0.5% interest rate cut shouldn't be interpreted as a sign that future moves will be more aggressive. The market hated the news at first and then sorted itself out. I want to talk about treasuries and what you made of the moves yesterday.
Well, Treasury's up almost a full point today, so they obviously liked that story.
Love it.
I mean, but they've been in a very tight range from 124 to 125. They haven't gone anywhere over the last 5-6 days.
Yes, that's true. Yep.
After making highs prior to the rate cut, right?
Yeah, we had some long deltas in the 10-year. I took it off this morning. It just hasn't gone anywhere.
Because you're a boss.
Because you're the boss. Hey, speaking of preset courses, do you guys believe in free will?
Free will?
Yeah.
As long as Tom approves of it.
Sure.
No, do you believe everything? Like, do you believe that you were destined to become this legendary trader, sell companies for billions of dollars, or was it the actions that you deliberately made? Like, you chose...
what you're asking is, did you think he would meet Tony Batista, climb on his back, and build these billion-dollar companies?
I don't understand how that's free will. But
free will says that you are making active choices and that you're determining the course that your life is going on. But if it's predestined, then you don't believe in free will. And I was curious.
No, I believe in free will.
Oh, interesting. Okay. How about you, Bat?
Of course, I think we're all able to choose between, different courses of action, good, bad.
I'm just curious. I like to get philosophical. But
there's a lot of other things that play a factor into that. I mean,
sure.
Luck is a big one. Sure. Connections are another big one. I mean,
sure.
There's a lot of factors.
Yeah, you guys both have penises, so good job there. So
That's correct. That's correct. And if we were born at a different time, we could have been kings.
Hey, in other news, the Texas Stock Exchange announced a board of directors on Monday in its latest step towards building a national exchange to rival long-established platforms in New York. It said it was gearing up to launch trading next year. The TXSE announced in June that it plans to register with the SEC, and it has backing from BlackRock and Citadel, and it said it had secured $135 million in funding. So the former governor, Rick Perry, will be a board member. So do with that what you will.
Yeah.
Tom, your thoughts on the Texas Exchange?
I don't know enough about it. I really don't.
Oh, I didn't know what you. Okay, I don't know anything about it.
No, I don't. I mean, no, I don't know enough about it.
Okay. Hey,
I'm all for more exchanges. It's only going to benefit, it's only going to benefit customers and myself as well. So sure, bring it up.
But unless the exchange wants to do like weird rules about like throttling how fast trades can be or something, I don't know. That's my only concern.
I doubt Citadel would be an investor if they were throttling trades.
Okay, that's true then. That's
so.
True. But who knows? Hey, Morgan Stanley, our friends over at Morgan Stanley, warned of 70,000 U.S. monthly jobs would be eliminated if Trump tariffs get enacted. Morgan Stanley economists estimated the implementation of Republican tariff hike proposals would drive up inflation and impose a hit to U.S. economic growth that would undercut employment. As just a, PSA, the vice presidential debate is set for this evening between Senator J.D. Vance and Minnesota Governor Tim Walz. So just putting that out there. Okay. Morgan Stanley, JP Morgan, bank stocks were moving yesterday. Let's talk about that.
Taking a look at JP Morgan, because you mentioned them, 210 basically unchanged. We had a very tight market last night. It's unchanged so far tonight. Most things aren't moving too much at the moment.
Sure. Hey, Bank of Japan's Japanese market got rocked yesterday, and it did climb up a little bit, but the Bank of Japan debated a need for caution in rate hikes, according to their Fed minutes. Let's talk about what you're doing in the yen.
I'm still long the yen. I'm not doing anything in there to change that.
Okay.
The yen's had a nice rally. I mean, going back to July, when it made its lows, and earlier in September when it made its highs. It's come off of its recent highs, ever so slightly. I'm curious, why are you staying in this? I know for 3 years it's been down, but it's had a nice rally. You're usually a trader. You usually kind of, play the moves. What's the deal here in the yen? Are you falling in love?
No, I'm just. Okay. I said I'm staying short puts in the yen into perpetuity.
Oh, okay.
Okay.
Like I said,
so
you were going to be short bonds into perpetuity too, and that changed. I mean,
yeah. So markets move, but this time
that's what I'm trying to say. Markets have moved here on the yen. What's going on?
I'm sticking with it.
Okay.
But thank you for your concern.
Fine.
I feel like a broken record, but everything just keeps hitting new highs. And that's China. Chinese stocks had their best day in 16 years, sending U.S. ETFs soaring. Chinese stocks rallied Monday. The Shanghai Composite Index surged 8%, its best day since September of 2008. Let's talk all the Chinese exposure that you have.
I don't have any more Chinese exposure. I'm out. I took advantage of this move. I got out of my Chinese stocks, and I am now very happy to be flat China. I think it's a buy on any pullback, but I think right now China's a little too expensive.
Okay.
Ooh, I wish you never would have said that. Like, a buy on any pullback, that means they can go significantly lower, but then you kind of wishy-washy that Baidu, Baba seemed to make spiky new highs yesterday, only to come back to unchanged. We'll see how they are today. They're basically all unchanged. I can use them a little lower.
Yeah, I can. A little lower would not hurt me.
Hey, congratulations to former Binance CEO CZ. He's out of jail, out on bail, fresh out of jail, California dreaming. As soon as I step on the scene, I'm hearing hoochie screaming. No. He tweeted that he was so happy to be a free man. He was excited to eat more than one piece of fruit a day. He says food tastes so good. And then he also announced his new initiative. He says he will now be focusing his energy on something called the Giggle Academy, an educational initiative that would be free basic education grade 1 through 12 for all, no revenue, gamified, adaptive. He says they're hiring now. Let's talk about Bitcoin. It kind of got hit yesterday. And what are your hopes and dreams for CZ post-prison?
I don't really have any hopes and dreams for CZ. He's, I'm sure prison changed him dramatically.
I bet he got swole.
Yeah, whatever. It sounds like a very noble cause what he's working on now, but I don't know anything about it.
What about, let's check in on Bitcoin this morning.
63.7 after making highs just about a week or so ago at the end of September, around 66 and change. It's fallen off a little bit to 63. I mean, it too has been in a high, a very, I don't know, for a $63,000 product, it's been in a pretty tight $4,000 or $5,000 range.
You know what I'm going to ask?
Ooh, Coinbase, you got me again. You always get me. I usually can't take until Wednesday to catch up to you. Coin is trading, let's call it 180, unchanged after being up $1.80 yesterday.
Okay, that's good. That's good to know. Hey, Nvidia stock slipped yesterday on reports of Chinese pressure on local businesses. Chinese chip stocks were up Monday following a report that the Chinese government is urging companies to halt the use of Nvidia's H2O chips in their AI development. Then that sent shares of Nvidia lower. Let's talk Nvidia.
Let me see what NVIDIA's doing this morning because
I can do that for you because it takes you a long time to type. NVIDIA 121 and change, basically unchanged, Sadnov.
I don't even think NVIDIA it might have been down early, but I thought it closed for the day back up around one. Yeah, I don't.
It did. It closed higher yesterday by about 50 cents, I think.
Okay, yeah, right. Fine. I don't think it was down. Right. Yeah.
Hey, AI chip startup Cerebus Systems on Monday filed its prospectus for an IPO. They plan to trade under CBRS. They would take on Nvidia. They had a net loss of $66 million. Good job. In the first 6 months of 2024 on $136 million in sales.
Yes, I'm very, very. I bought Cerebus. I invested in Cerebus.
What? How? It's not what?
I know. I did about a year ago.
Oh, on the private market because you're a private client.
There's another winner you told nobody about?
I didn't. It was they've been trying to sell stock in there for a long time. They couldn't raise any money, so I invested a little money in Cerebus about a year ago. So on the hopes that it would go public.
Okay, girl.
So we'll see, but we'll see. I don't know what valuation they're thinking of going public at.
Yes, I don't know that had been outlined just yet.
But I have been
Just let me know. Did the usual merry band of thieves get in on this?
I'd never heard of this.
Oh,
company
you
before.
stuttering prick! You look at you.
What I will say is that I've been following this company now for about a year.
The company said in 2021, Tom, that they were valued at over $4 billion in a $250 million funding round. So.
Right.
Okay.
And and there was a lot of investors trying to get out, so I bought a little bit, but it's not a big deal. Whatever happens, happens.
The U.S. has set new rules. The U.S. Commerce Department on Monday unveiled a rule that could ease shipments of AI chips like those from NVIDIA to data centers in the Middle East. Since October 2023, U.S. exporters have been required to obtain a license before shipping advanced chips to part of the Middle East and Central Asia. These new controls would then sort of lighten sort of that regulatory structure. What are you doing? We already talked about NVIDIA. What are you doing in like a SMH or something like that?
We have pretty big positions in SMH. We're flat. We're just short premium.
SMH looks to be unchanged. This is going to be a theme so far this morning, unless something drastic happens with the market basically unchanged. Most products are unchanged. I haven't found one that's really moved too much yet today. Even Tesla's unchanged.
Well, I'll get a story about that. But something that was moving ahead of the curve yesterday was Apple, and I think there's a hilarious way to look at this headline two ways. Apple stock did close in on a record, but this headline says it's high after an upbeat call on iPhone availability. But the other part of that headline is, yay, everyone's so excited because there's so many iPhones available. But the other part is, no one is buying the new iPhones, so any phone you want is available. So do with that what you will. The street decided to interpret it as, yay, all these phones are available. And the Apple stock was up nicely yesterday.
I think it's down this morning, down about $3.
Right.
Ooh,
because they're now realizing the other part of that headline.
Right.
Well, I want to go get mine next week.
Okay, we will go.
Figure
out what color you want, girl.
My battery won't even last now, like, I don't know, like half a day.
Nope,
I know. I spoke to Corinne. She was like, no matter what they gave you, your battery would still only work half a day.
Oh,
sad.
Man. Tom, what are you doing in Apple?
This morning with the stock down $3, I'll be a little bit long it, but I don't intend to stay long it. That's for sure.
Okay. Hey, good news. Amazon has won a partial dismissal of a U.S. Federal Trade Commission lawsuit accusing the retailer of maintaining illegal monopolies. Though the details of the ruling by a federal court in Seattle were not immediately clear, at least Amazon can breathe a tiny sigh of relief. But again, it's still facing some pretty damning charges from the federal government. Amazon's Fall Prime Day, going to be here October 8th and 9th, if that means anything to you. What are you doing in Amazon?
We're pretty flat. We have a little bit of some time premium in there that we're short, but directionally, I mean, we have a few short deltas. That's it. Nothing much.
I will say,
Amazon basically unchanged.
Because I'm sitting here at Bat's desk, I can see Bat is like searching for something on Amazon, and I gotta tell you, at just a glance, it looks like a personal massage device, but it's actually just a weather sensor. But I can see his screen, and I was like, what are you searching for?
I'm going to tell you right now, do not look at his search history. It's going to disturb you.
It's right. I can't not look at the screen. Is like 37
I'm just telling you,
inches.
You'll be disturbed. You'll be disturbed for a long time. You're never going to get over it.
Oh my God! You wait until you see what's on there tomorrow. I'm going to put some stuff up there. They're going to drive you nuts.
No, tomorrow I'm gonna be back on my little island. The boomers will be back, so it'll be be fine. But I was concerned, but it's fine. Meta won't say whether it's training its AI on smart glasses photos. Meta's AI-powered Ray-Bans have a camera in the front for taking photos, and
a potty in the back.
Yeah, I know. But Meta was asked if they plan to train AI models, like its Llama model, on images from Ray-Ban's Meta users, and the company would not say. Cool. Tom, how's your Meta position?
Don't have one.
Oh, you're out.
Yes, no Meta.
Meta looks like it's higher this morning by a couple of bucks.
Hey, today's Tuesday. You know what that means?
Option trades today, every Tuesday and Thursday. That's right. You knew it was going to come sometime.
There you go. Maybe something in Meta. I know they got earnings though coming in the way, but
they do October 22nd. But we can work with it. Ivy rank is good at 48. Earnings are October 23rd. We'll see if you did something.
Okay. Hey, in other social news, we don't talk about them a ton, but that's Reddit. Reddit is now making site-wide protests basically impossible. Moderators will now have to submit a request if they want to switch their subreddit from public to private. Thousands of subreddits went private as part of last year's protests. Tom, what are you doing in Reddit? RDDT, that.
Thank you.
You're welcome.
I've been long Reddit since it went public. I'm just starting. I'm out of most of it now.
Okay.
And that's why the stock's basically unchanged.
Yes, I've been selling it out. So I've held it for a long time, over a year, and now I'm getting out.
Okay, good.
It's a good trade.
Hey,
love it when a plan comes together.
Hey, Ford is aiming to boost sales of its EVs by addressing potential customer concerns through a new program that would give customers free home charging installation. The Ford Power Promise, I like it, that's catchy, starts today. And so any customer who purchases or even leases a new Ford EV will get a in-home installation charger, a level 2 charger for free.
Did you say anybody who had ED?
EV, yeah, any electric vehicle. So that's.
Oh, I thought you said ED as in David. Sorry.
Oh no, not erectile dysfunction. No, that will not help you. No, the Mustang Mach-E or the Ford 150 Lightning.
Shark is on his way to get one right now. If it can happen, he will get it.
That is a pretty good thing. That's interesting.
Yeah, this could go into the thousands of dollars, like $2,500, $3,500 I've seen online for an at-home level 2 charger. So that's a nice little incentive.
Yeah, the weird thing about at-home chargers, which I don't get why people do them, if all you got to do is just put a 220 volt in, and that's really everything.
All you have to do, okay? People can't.
All you have to do is go in there and just wire it up a little bit, really.
No, but I'm saying, so if Ford wanted to go out and hire an electrician for every person that bought this to put a 220 volt in their garage, whatever, that would be cheaper than putting in individual charging stations.
You're talking about basically it's a washing machine plug.
It's a washing machine plug, exactly.
Yeah. But you gotta have
for those other men who don't understand what 220 is.
Yeah, but it's not just that; it's the whole. the whole the casing on. I don't know.
I know. I'm saying, like, I just have a 220 and it powers up everything.
What are you guys doing in Ford? Anything?
It's unchanged. It's a $10 or $11 stock. It's not that interesting of a trade unless you have a bias on a direction.
I mean, I would rather buy Ford here than sell it, but there's nothing to do.
Well, hey, Tesla is expected to report an 8% jump in third quarter deliveries on Wednesday, according to Wall Street estimates. The automaker also looks like it beat another shareholder lawsuit about self-driving or something. But again, Tesla's quarterly delivery numbers, I believe, are set to come out tomorrow. What are you doing in Tesla?
We're kind of flat here.
Good IB rank in Tesla, 91.
I neutralized it on the close. I'm a little concerned about all the Tesla stuff going on, but I'm not gonna change my position. I'm gonna lean a little bit short, but with short premium.
The thing that's scary to me is all of the post-Hurricane Helene stuff where fire departments are like, look, if you left your electric vehicle in your house, please tell us, because salt water is like causing some of these cars to just catch on fire. And it's something, just another layer that people are now having to contend with, which is...
Yeah, I mean, the crazy thing is that, like, you know, you account for a lot of things in life, but I don't think most people account for salt water.
Yeah, right.
You know,
Yeah. No, but the
if you're
cars do have to be tested, but they're supposed to be tested first.
No, I understand. I'm just saying, if you're living inland, you know, whatever. It just,
Right. Yeah.
it's a
No,
weird,
I know. Yeah, if you're living in the mountains of Asheville, North Carolina, you're not thinking normally that you're gonna have to worry about those sort of things. But
yeah, exactly.
hey, CVS is exploring options, including a potential breakup. CVS is exploring ways to break up the company into its retail and insurance units. The company expanded, getting into Medicare benefits, health clinics, the stores, but they learned you don't really make any money in insurance in Medicare.
I don't believe that.
There's no money to be made in Medicare, so they've been struggling, and they're now discussing various options, including how a split would work. You look at a stock also like Walgreens, which has just been annihilated in 2024. What can you do in CVS?
I don't know. I mean, Walgreens is like $9 now.
Yeah.
And CVS is up a little bit on this news. It's hard to say where the stock is. It made a low around 55 about a month ago. It's 63 and change right now, but well off of its highs, in the 80s. So
I mean, what's scary is that all these stocks are. I mean, who's gonna save these?
Yeah, I think
stocks?
Rite Aid, I think even filed for bankruptcy. I don't even know what's going on with pharmacies, but
that whole space is talk about disruption. You know, that whole space has been disrupted.
Yeah.
Mm-hmm.
Hey, I forgot to mention Nike set to report earnings today, I believe, after the bell. They're going to post the steepest sales drop since COVID. They are bringing back a guy, since they have a new CEO. He started as an intern in the company. Their current CEO had no experience in retail or in the sneaker business. He came from like the cloud, like that was his background. And the stock has suffered. Elliott Hill had spent 32 years at Nike before retiring in 2020. He's going to return at the helm. People are just saying Nike forgot how to innovate. What are you going to potentially do for earnings?
That's a good question. So I'm going to look at my Nike position now because I didn't realize that they had earnings there. I forgot. In Nike right now, we have on a wide strangle, very typical position for us. We're short the 82.5 puts and the 97.5 calls.
Okay.
It's fairly delta neutral. In November, and I don't think we're going to change much. I don't know. I think they'll give the new CEO a little bit of cush here. I think somebody asked that question yesterday, and I think when you have a new CEO, you get a little bit of you kind of get like a free pass on earnings.
Yeah, well, we'll see what happens. Check out our News and Insights tab. Our very own Mikey Butler wrote a wonderful piece about how he would approach Nike earnings. You can check that out. And also a lot of other really great blogs from all of our Tasty Live writers on the News and Insights tab. Hey, today, October 1st is officially sanctioned, is National Taco Day. National Taco Day.
No, please.
Yes, it is officially National Taco Day. The Taco Coalition, Federation, I don't know, decided that the first Tuesday in October, henceforth, shall be known as Taco Tuesday, so it will always be on a Tuesday. Taco Bell, which is Yum Brands, this is great. Starting at 10 a.m. Pacific time, 1 p.m. Eastern, every hour, they're going to offer a $1 deal in the app. So starting at 1, it's the Crunchy Taco, then it's the Double Stack Taco, then it's the Chalupa Supreme, then it's the Nacho Cheese Dorito Locos Taco, and so forth. Every hour, a new dollar taco. I'm very excited for this. Sadly today, in Tasty Live headquarters, We're having Greek kitchen today. I don't know what's up with that.
Oh my God. You're not having tacos and Tony's not there?
Right?
I know, it's not right.
On National
like-
Taco Day? So wrong.
I do like a little Greek kitchen. You know, their spicy tzatziki, brilliant move.
Oh, they have spicy tzatziki?
Yeah, red tzatziki. It's spicy. It's great.
Oh, I did not know that. I got to get on that level.
No. I'm sorry. Take it back. I meant spicy tahini, not tzatziki.
I was gonna say. I was like, I've never seen spicy.
No,
tzatziki.
tahini.
Okay, all right, there you go. Hey, finally today for my viral video of the day. Tom, who's gonna pick you up from the airport?
I have my car there.
Oh, okay. Who would pick you up from the airport? Like if you needed to be picked up, would it be your wife? Would it be your daughter?
No.
Would it be Bat?
No.
Would it be Scott?
No.
Would it be JJ?
No.
Like who?
No.
Who would pick you up from the airport?
A random Uber driver or a random cab driver would be my only bet.
Oh, I think Bat would pick you up from the airport.
No.
Yeah, Saznoff, I'll be there. You wait right there by United. I'll pick you up.
As a woman who has never been picked up from the airport by anyone other than her parents, it is a dream of mine. But this video shows Instagram fantasy versus reality when it comes to getting picked up from the airport by your significant other. Watch this. It's kind of funny.
I've seen this. This is great. I've seen it.
We don't have sound. But yeah, I got the roses, the 4-piece quartet. Compared to horn honking, go, 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 go. Go, go, go. She dives it.
Yeah, it's kind of true from a person who traveled a lot.
Yeah.
Not like this. Yeah,
That's
you're
funny.
right.
Yeah, it's a little less glamorous getting home from the airport than you would think it is.
Yep.
Come
The
on.
only person that ever used to come get me was Larry, the limo driver.
I miss Larry. Oh, Larry. Anyway, hey, if he wanted to, he would. Bat, what's coming up next?
We're gonna take a quick 90-second break and come back. I got more Tasty Live after this with Confirm and Send. Thanks, Vanetta.
If you missed the live show, here.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Mike Butler, the DePaul University. Number 33, because I like to collect 1/3 the width of the stripe.
Frank Caberna, University of Michigan. Number 4, because I utilize a lot of four-legged trades.
Mike, Beef, Hart, St. Bonaventure University. Number 68, because 68% of the time, it works every time. Also, it's one standard deviation.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
What happens when two titans of trading come together to harness the power of their prowess? Let's watch these two master the art of the noble sport boxing. Wow, look at those geriatric thumbs go. Someone had an extra dose of fibre this morning. Like a flutter of fills, it's definitely fists of plastic fury over here. And I'm spent. Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And tastylive in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, we could take a quick look at the market if you want to. It's basically unchanged. Even the S&Ps are down 4 handles. NASDAQ up 7 handles. Russell is down 3, and the Dow down 120. Dow maybe the weakest of the group by a 0.25 percentage point. Everything else basically unchanged. Volatility up by 10 cents, and bonds up a full point, 125.06. Bitcoin a little bit weaker, under 64,000, 63 and change. Gold, after selling off yesterday for one day, has caught itself another little bit of a bid, up 15. And oil is down 92 cents to 67 and change, trying to flirt with recent new lows that it made back, as you can see here, the beginning or middle of September. Sosnoff Silver's up 22 cents. Nat gas, which has had some big moves, is lower by around 3.5 cents. I figured I would put that in there after it's rallied. I think is corn at all-time highs or recent highs? Yeah, corn just off of recent highs. Wheat basically going sideways, and soybeans going sideways too. That's all I got. Euro's a little weaker also. It means the dollar a little stronger.
The euro's had a pretty big drop the last couple of days, from 112 down to 110.5 or something. Whatever, doesn't matter. All right, let's go to Confirm and Send. Emails that came into us overnight.
Right.
Lots of them. Busy. And these are obviously from customers. I usually adjust my strangles at 20 deltas overall, but I've been testing cheap wings to limit losses. While I've been testing cheap wings, I've noticed that wide iron condors, if you buy the wings, it slows down the delta changes. For example, when one side of a strangle hits 30 delta, the wide iron condor with the same short strikes will still have 11 overall deltas. How should I adjust in this case? I've only been moving the shorts, as the wings are just for the entry.
I would continue the same way. I think you're buying the wings to reduce buying power, from what, if I could read through the
It's like a synthetic strangle, and they are buying the wings just for buying power.
I do a lot of this on my option trades today, Sosnoff, every Tuesday and Thursday to accommodate those with a smaller account, trying to show you how you can use the same amount of buying power as a margin account. But that's neither here nor there. That's a lesson for those who like to watch my podcast every Tuesday and Thursday.
Yeah, but try answering the question.
I would continue doing the same thing. I would look at it the same way.
Okay, I think that is the right answer. I think that you're actually, this person, you are doing things right. You're right that the wide iron condor wings, they'll slow the delta changes, but the reality is that when you're just adjusting your short strikes, which I don't recommend for everybody, but if this works for you in the world of synthetic strangles, sure, go ahead, continue to do that. It's only going to have some very subtle changes to your delta, but if you're doing wide iron condors, it's the best way to approach it. Or I shouldn't say the best way, but it is one of the ways to approach it. It's the easiest
way to reduce delta by moving one leg.
it's fewer contracts. It may add a little bit more to your buying power, but it's fewer contracts.
Yep.
Let's go next slide. Has there been any research on doing a wheel strategy in the SPY for 0 DTE options?
No, I don't think there's been any recent wheel strategy. The wheel strategy is selling out of the money put, leave it, really don't manage it that much. The stock goes lower, you get put stock, then you sell a call, you continually do that. But let's just think about what's happened over the last 10, 15, 20 years. I mean, we've gone straight up, basically. So I would imagine this strategy would do better than even the return over that same period of time because we went higher. Now, if we went lower, this strategy wouldn't work. It was a bullish strategy.
Yeah, it is a bullish strategy. And you got to remember something. 0 days are a little different because, you know, you're only going to sell, well, whatever put you sell, you're going to get X amount of dollars for it. There's not much you can do during the day. So you might be pretty far underwater, you know, to start with this strategy. I don't particularly love it in the 0 days. I mean, I think there's so many better. I think the last thing that you want with a 0 day trade is to have that trade linger on into perpetuity. So the reason we haven't done any research on a wheel strategy for 0 days is I personally don't really think it's an appropriate strategy for 0 days. I mean, could you do it? Of course, but it wouldn't be something that we recommend.
Yeah, but let's just take a look at it. I mean, let's look at the last year. I mean, we really haven't had any sell-off.
Any sell-off that you bought, you made money on. So sure.
Right. So it had to have been. I mean, I think the obvious answer here is it had to be a good strategy.
Sure. Yeah, it had to work. I don't love it for 0 days. Let's go next slide. So if I adjust a strangle, I don't go beyond a straddle. But what will I do? But what I will do is move the entire straddle up or down if the price keeps moving. Do you ever do this? And is there anything wrong with adjusting this way? So what happens is this person starts with a strangle and then adjusts till they get to a straddle. And then every time the underlying moves big one way or it moves a certain amount, they just move it up and down the straddle.
Yeah. It's not something I've ever done, so I would say no. I usually revert back to a strangle when I get to a straddle and then have to move it one more time after that. So not something I do. I don't have any problem with it. I mean, you're reducing delta by doing this and selling the most premium that you can sell, wanting the stock to stay right where it is, basically. I don't have a problem with it. I think it takes a little bit more risk, but there's more reward to it. I don't have a problem with it. It's just not something I do. I'm glad you're doing something.
I think my answer is very similar. I first of all, I don't do this, and I probably never will. I don't like it because when you're adjusting your straddle, your positions. I mean, you're gonna reduce risk by a little bit, but you're also going to have a lot of risk on it that one side gets really far in the money. So I would much rather see you buy that straddle back and resell the wings and recenter. But if you want to do this, I mean, it's better than doing nothing. I would just really rather see you buy the guts and sell out new wings. I don't like this approach at all. Let's go next slide. In one of your videos, you had recommended a 50% allocation to options, 20% each to stock and futures, and 10% in cash. Yeah, that was a live event that I was doing. And it was also the webinar I did for the SIBO and the CME, the precursor to the live event that we're doing this year, building an option portfolio. It was more to show what you could do with a full portfolio. It wasn't, I just didn't want to build a portfolio only using a portion of the money. That's why we did it that way. In another video, I saw your recommendations for only 50% to positions and 50% in cash. Is that dependent on the volatility in the market? Also, what is the rule of thumb for beta-weighted deltas in a portfolio of 100K? How about large accounts that are diversified? There's a bunch of stuff in here, Pat, but let me just explain why we originally when I did the webinar and I talked about using the whole 100,000, there was a reason for that, was because I wanted to give you a full portfolio, and it wasn't something that we tend to use no more than 50 or 60%. Right now we're about 35%, so we tend to be way under that number. But I'll let you go from here.
No, I mean, I think you should answer this, yourself here, since you did it. I'm not 100% familiar with what you went on your tour.
That's what I did. One was a teaching portfolio to show you kind of what a full portfolio would look like from 0 to 100,000, and then you can take whatever percentage you want of it. And then if you sign up for the digital collectible that we just posted, this whole discussion is in that digital collectible. A rule of thumb for beta weighted delta in a portfolio like of this size, that's hard to say. That's really up to you. But what we do talk about is that neutral would be anywhere less than let's call it 200 deltas. So when we talk about kind of beta weighted or beta weighted delta neutral, however you want to say, anywhere from 0 to 200 deltas would kind of be, that's the range that we like to live in. We talk about adding short delta to a portfolio. It's 0 to 200 S&P deltas on a $100,000 portfolio. That's like the notional equivalent of being short $100,000 worth of stock. Mm-hmm. And so large accounts that are diversified, it's the same thing. It's 0 to 200 deltas per $100,000, and that's how we look at it.
Very good.
Okay, let's go to the next slide, Beth. I'm long 300 shares of a stock with one covered call sold in October. It's still out of the money. I want to sell 2 additional calls, but I'm not sure how to do this. Should I sell the additional calls in October at the same strikes as the existing call? Should I leave the October calls and sell the additional calls in November? If so, what strike would you use, or is there something else I can do?
I mean, October has 17 days. We like to roll when there's around 21 days. So we're inside that 21 days right now. If you wanted to sell to reduce your delta of this 300 share long position you have, I would move all of them to November. And I typically go to around the 30 delta strike. If the short call that you have is in the money, I would never roll to another short call in the money. If I was still bullish on the stock, I'd roll to at the money at the very tightest, but that again is just me, at my personal preference. You have to do what you want to do, but I would take all of those calls, move them to November, probably be somewhere between the 30-ish delta on all of them.
I'm exactly with the back here. I don't see any reason to still be in that October call, and as long as you made the decision you want to go, basically short 3 calls against the 300 shares, which I'm totally fine with. In fact, I would do that myself. I would do it all in November, and I would be somewhere between the 25 and 35 delta strike in November. So that's, I'm with that. It doesn't make any sense to be short. I would not sell more October calls because they were inside of 21 days. I would roll the existing short October call to a higher strike in November, assuming you can, and then I would sell 2 more at the same strike. You want to all be in the same strike if possible. Mm-hmm. It just makes adjusting and rolling easier.
Got it.
Let's go to the last slide. Would you ever sell a put that is in the money on a stock you want to own? My effective cost basis would still be lower than my short strike, right?
Let's take a look here. You're saying, would I sell a call and put the same money on a strike?
No, would you ever sell a put that is in the money on a stock that you want to own?
I mean, never. I can't say that. Yeah, sure. Deep in the money, probably not. At the money, a strike or 2 in the money. If it's basically a synthetic covered call without having to buy the stock. I'm okay with it. I would prefer to be at the money, but again, that's just my own personal preference. I get the idea why you're doing it. You want to hold the stock. You don't want to do a covered call. It's one click. Okay, I'm okay with it with that assumption.
Yeah, I mean, the answer here is that your basis would still be lower than your basis would still be lower than if you had your basis is always going to be lower if you sell the put, because there's going to be some premium in there no matter what. So your basis is always going to be lower than if you had bought the stock outright. But even if you sell an in the money put. But again, the goal of selling a put to reduce your basis to buy the stock is always to collect the most amount of extrinsic possible. And the most amount of extrinsic, if you want to do this, is probably going to be either right at the money or the nearest out of the money strike, not an in the money strike. But that's up to you. Is there an issue with this? No, of course not. Because you're still going to be buying the stock cheaper than you would be if you just bought the stock outright.
Got it.
Yeah, we don't sell puts to buy stock. We would rather buy the stock and sell a call against it if that was the case. We sell puts to collect the money from the put, and we say to ourselves, well, if we had to buy the stock here, it'd be okay. But it's we never want to buy the stock.
Right. All right. Let's take a quick 90-second break and come back. We got more Tasty Live after this with an option jive next.
If you missed the live show, here's our Cherry on Top weekly recap.
I see you. You've been very quiet. What's going on?
I think I'm injured.
What'd you do?
I think I injured my. Lou? I think it feels like a rotator cuff.
What'd you do? Lift up a bag of coffee?
Something like that.
Did you try to wave your hands in the air and you tried to wave them like you just don't care?
I think I'm injured.
Vanetta, I see.
I was doing I was doing a lot of manual labor, working out, doing a bunch of stuff, and it just,
It's the mason jars. The mason jars took him down.
Guy from California that was on the show once. Remember that guy?
Mark Sisson?
Mark Sisson.
What's the company?
Oh, there's John.
Just have to say that so that it sounds like you're ordering something, like, I was ordering something fancy, pork shoulder. So
it was
Tony?
a pork shoulder.
This is what he told me too.
Yeah, I'm not.
I don't know to believe him or not.
Do you have a photo?
Oh my God! I will tell you exactly what this thing is. Webs. It's called pork shank. Pork shank. It's called Stinko.
Oh my God.
Tom, can you get in frame, please?
You promised on Wednesday that you would tell us where you got the Bears tickets from.
Go ahead. I told you I was going to ask you.
Go ahead. I got it here.
Please,
you said,
please.
I don't forget. I don't forget things. Was it Goldman Sachs or JP Morgan?
Now he's got to tell me. He doesn't remember the lie he told me right now. That's what he's trying to figure out right now. There's no way he remembers the lie he told me. Go ahead.
Let's hear.
To him it was JP Morgan.
Go ahead.
I can get up there and slap that stupid beret right up the head. Go ahead. Admit to him that you lied to me during the show earlier. Go ahead.
I didn't lie to you. I didn't say anything.
Yeah, you did. Go ahead. Tell me.
What did I say?
I'm not telling you. No freaking way.
I didn't lie to him.
Where'd you get tickets?
I was gifted the tickets.
Sure you were. From who?
Just look clean. It hurts only for a second. Go ahead, JP Morgan.
Mm-hmm. I'm in my car, so I'm going home, gonna buy the tickets, and then somebody emails me and says,
"Who is this? Is it from JP Morgan?"
I'm not telling you. Somebody says to me,
"How come he gets the stuff from JP Morgan? I don't get anything from JP Morgan."
They like me better than you.
Apparently.
Unbelievable.
Get the full scoop by checking out the archives at tastylive.com.
Having trouble understanding what your trader buddies are saying? Here's what a scalp is. We love those quick profits. A scalp is a trade opened and then closed in a short period of time, usually minutes or hours. A scalp is usually done for a small profit and is typically a very directional position. Scalps are most commonly done with future products because of the liquidity and added leverage they provide. But you gotta be careful. It's not always a profit.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Hey Doc, your tips on diet and exercise have been illuminating. I'm sure busting my ass at the gym 5 days a week is gonna be way quicker than just giving me the skinny shot.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Batten down the hatches, everybody. He's going on the skinny bitch diet. He's gonna be hangry.
From the smart mouths at Tasty Live.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
It's options. Jive.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with a little option jive.
Little option jive. We got a tough one today. You ready for a little heavy math to start the day off?
Sure.
A little expected move and implied volatility.
Let's see.
Somebody asked me yesterday, they go, how would you define implied volatility? And I said, it just means expected move. And they looked at me like, that makes no sense. I thought volatility was fear. And I'm like, well, a volatility index is a fear index, but implied volatility is essentially suggesting what the expected move is going to be. It's the marketplace interpretation of expected move. And so would you want higher or lower volatility? And I'm like, well, I mean, most people would want a greater expected move, so you'd want higher volatility, right?
Yep.
And it throws everybody in financial media into a tailspin. That's all I can tell you. Let's go to the first slide. Get your helmet on for this one. There are 3 moving parts in the standard formula for calculating expected move: price, implied volatility, and duration. But which one of these is essential in determining the value of expected move? Do you think it's price? Do you think it's implied volatility, or do you think it's duration?
What's the biggest factor?
Yes, which one's essential?
Expected move, it's got to be volatility. I mean,
sure,
if you're going to go for
volatility,
365 days,
volatility is going to be the essential one. But, because because price is what it is, days to expiration is what it is. Let's go to the next slide. Since duration is selected, the most important factor should be stock price or implied volatility, like we said, or both.
because you get to choose the duration. You can't choose the stock price or the volatility, but obviously those are critical. So we're going to break this down for you. And let's take a look. Let's go to the next slide. So theoretically, the stock price and implied volatility have the same weight in the calculation because they all have a 1-to-1 ratio against it. So this is interesting. So if the stock price goes up by 10%, the expected move goes up by 10%. If implied volatility goes up by 10%, the expected move goes up by 10%. Okay.
As you would expect, they are who we thought they were.
So far. Let's go to the next slide. But looking at the historical data, we can see that although the stock price could be pretty volatile, the velocity of implied volatility, the change there is on a completely different level. And this is what separates everything. So as you can see here, the daily percent change on the SPY can be from, let's say, down 10%. The average is 0.03 to up, 14.5%. But what you see here is that the VIX will change, all over the place, and the difference is quite significant for a maximum versus a minimum versus the average. This is just in the VIX daily percent change, and the average days you're talking about 0.3%. But when you get a huge move in one way or the other, things start to move. The reason it's not as big on the down moves is because you're probably already starting from a relatively high level. Let's go to the next slide. So double the expected move of an underlying, it requires its price to increase by 100%, which is really rare and difficult. However, an increase in implied volatility from 15 to 30% is far less uncommon. This is why implied volatility is the dominant factor in determining expected move. Does that make sense to everybody? Because remember, we just said they're 1-to-1, but the chances of a stock moving 100% a day, going from 50 to 100, is really low.
Sure.
But the chances of implied volatility going from 15 to 30, it's low, but it's much better than a stock doubling.
Yes.
So that's why implied volatility kind of takes the prize as the lead dog in this case. Okay.
The big dog.
The big dog. Let's go to the next slide. Since most of the time traders only need to know the potential daily move of a stock or futures, here's a quick way to calculate the daily expected move using implied volatility. So the daily expected move percentage is essentially 19% of whatever implied volatility is, right? Yep. So let's take or a 19%, the easier way to say this is a 19% implied volatility equals a 1% move in the underlying. So let's go to the next slide.
That's back of the envelope. Don't come back at me with, it's 19.75, like.
Okay, I'm giving you the formula right here. So you can calm down, Sparky. Here's your formulas. And because we have the daily expected move, and then we explained the whole thing out, gave you all the formulas. So there's no question. You can come back to this anytime. And then if you go to the next slide, Beth. So the implied volatility of an underlying is 19%. Its expected daily move is roughly 1%. If the implied volatility of an underlying is 38%, its expected daily move should be close to 2%. This is just the back of the envelope, super easy way. But again, implied volatility is the most dominant factor in determining expected move. On the platform, the discrepancy with the one DTE cycle occurs because the standard formula includes some irrelevant but more expensive further out of the money options. Yeah, when you have 1 day to go, longer term further out of the money options don't really mean that much.
Sure.
But the expected daily move as a result can become slightly inflated when you look at the 1 day. The formula is best used for underlyings with no 1 day expirations. That's just a little caveat that they threw on here. Just the numbers work out better. But The reality is the most accurate indication we have of expected move is to say that 19% in implied volatility leads to a 1% expected move on a daily basis. So if something has, like, let's say a 9.5 or 10% implied volatility, like the euro, okay, the expected daily move would be 1/2 of 1%. If something has a 38% implied volatility, like I'm not sure maybe that's NVIDIA right now. I'm just guessing.
Yeah,
but that's a 2%. I don't know what is the implied volatility of NVIDIA?
Let's just call it 48 in the shorter dated options. But
okay, so 48.
You're close enough.
No, but what is it at 30 days?
At 30 days, you're looking at 49.
49. So 49, just use a great example in NVIDIA, the daily expected move would be about 2.5%. Okay, that's how it works. So, when you think about a 1% move in NVIDIA is $1.20, a 2.5% move, let's just call it $3, give or take. It just gives you an idea of what is the expectation on a daily basis. Let's go to the next slide. So on average, the volatility of implied volatility is far greater than its underlying price. Implied volatility is the most influential factor in determining the expected move, the daily range. Using implied volatility divided by 19 to estimate the underlying daily move is quick and convenient. And we might need
it's quick, it's convenient. All the cool kids do it.
We might need to slightly adjust the number to the downside due to its overestimation. The formula is best when there's no 1 DT expirations available, because that kind of throws off the skew that we look at. But the reality here is that it is a very good back of the envelope way, and all the information that you ever needed to understand expected movement and how it's calculated is on this little segment. Really good, a little heavy to start the day off, but really good.
Awesome. You know what, Tom? You did a great job with that. You really highlighted the key factors in that option, Jive. I'm very proud of you too. We're going to take a quick 90-second break and come back. We got more Tasty Live with the moment you've been waiting for, ladies and gentlemen. That's correct, the opening bell right after these messages from our sponsors.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at tastylive.
It's the day that when you write dates in the American system of month, day, year, which is a little bit funny, looks like 3.14, which is one of our better approximations. And actually this year is even better because it's 3.1415. I've never before, but this year there's a couple other math people who just got a pizza oven, and so they're bringing everyone over, and we're gonna make a bunch of pizzas. It's one of the few very important transcendental numbers, right? I mean, 0, 1. There's a lot of good contenders for most important number. Anytime you have anything that's circular, you're going to wind up with pies. Anytime you have a pie, you should sort of expect there to be something circular. I can do one more than the date on Saturday. I can do 3.14159. Irrational numbers are fractions, and pi just is not a fraction. 22/7 is pretty close, but that's not what it is. It's the ratio of a circle to its area, right? And so that's not an integer ratio. It just isn't. Pumpkin. No, just circles are great.
The beautiful thing about talking to entrepreneurs is that they have the ability to maintain their positivity and their confidence when they know what and they know why, but they don't quite yet know how. And they're willing to take not only their own risk, but sort of to organize people around their idea and enroll them in the idea to try to bring it to fruition. And I think that there's something that's very appealing to me about people that are willing to transition from talk to action. Watch Bootstrapping with Dylan Radigan on Tasty Live.
How do you reach your goals of becoming a full-time trader?
I think the best way to do it is he has to start thinking in terms of what's a fair objective return-wise. You know, if you're actively trading and you're going for some number and you have $200,000, I mean, saying that, hey, I'm going to make $35,000 on this, which is an 18% return, is not an insane number. It's not ridiculous. It's 2 or 3 times a passive return, and it's 4 times a risk-free return. It's completely normal. So that's where I'd start, and then you try to build off from there.
I started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with the opening bell. It's imminent here, sounding off in just about 90 seconds. E-mini S&P's very tight range last night. They're down 6 right now, but as you can see here, I'm just going to round and say they had a $22 or 22 point or 22 handle move all of last night. Relatively small, tight move on the E-mini S&P's, NASDAQ, and the Russell. We're set to open here in just about a minute. On a percentage basis, I guess silver up a little over 1% is your big mover to the upside. Nat gas to the downside by almost 1%. Soybean down by 1%. But really, it's an unchanged market here. I think the biggest mover that we will look at or see today in our look is Apple, which was a leader yesterday, is down around $3.50 right now, trading $229 and change. Apple.
Yeah, I don't have much going on here.
Baidu is still looks like it's unchanged to up small after having a good day yesterday and then giving it all back. We'll see what goes on there with some of the Chinese stocks.
Yeah. Well, I'm looking forward to it.
I think you're going to have to. No real economic news that I can see on the frontier. And they got construction spending and job openings coming.
I mean, it was just a weird rally last night on the close. That was like a 20 handle rally. And
some people are saying that there should be a statue erected outside of Tasty Live. The bat said they'd be up 18 on the close when they were down around 7 or 8, and they were up 19. Some want to erect a bat.
Yeah, I don't know who that someone is. Probably somebody who's delusional or just stumbling out of a bar.
Some would say I was gifted is the way I like to answer that, Sadnoff. And then I say Tom is not one of them that would say I was gifted. Let's see what's moving this market a little bit lower right now. Apple, as I said, down 4. That's your leader in the clubhouse. Dick's is lower, Sadnoff, by almost $3. JP Morgan, Vanetta talked about this morning, down $2.70. Costco down $2.40. Microsoft down $2.30. Amazon down $2. Lulu had a good day yesterday. It's down $1.75 today. Let's see what's going to the upside. You got Meta, Sadnoff, up $8. Netflix up $6.66. That's the devil. Google up 2. Gold GLD up 2. Roku up $1.70. That's all I got for now. DJT up $1. First uptick in what seems like a year.
I am looking at our positions right now to see it's a very flat opening for the good kids.
Even the S&P is trading to the lows, down 11.
Could use the Russell up a little bit from here. As far as problem children go, I don't see any yet.
But that can change.
I don't see any problem children.
But that can change.
It can change. I'm curious. It can change. But I'm a little curious.
What are you curious about, Saz?
I'm a little curious whether or not they're... I just think they got overdone on that markup at the end of the day. And I just don't think they got a lot of bullets.
They sold them off by 15 handles right now. I mean, it was the end of the quarter window dressing, South. It was easy to kind of see. I'm surprised you had a hard time seeing it, but you are getting a little older, long in the tooth.
Not only was it not easy to see, it was kind of a total bogus move. And I don't think it holds. And I think they just gave up the entire thing.
Pretty much, pretty close.
Yeah, Apple's a little bit weaker than I thought. I have not made any adjustments in there yet. I'm going to roll down some calls.
I was trying to lean a little short Apple. It got me a little bit, maybe roll up my puts to 215, but I'm 215, 240, a little short delta, basically on down here, down 4 or 5. It's basically flat.
Yeah, 227.5 is a little bit softer than I thought that stock was going to be.
Yeah, down $5.50 right now, trading near its lows. NASDAQ only down 20.
Yeah, well, still a pretty big move.
Yes. Did the winner to the third quarter final number contact you yesterday?
Not me.
Oh, then I guess we get to keep the money. That's nice.
Sure, you can keep the money. I will.
Even the S&P down 22, making new lows for the day.
Yeah.
Tight little range here in the even the S&Ps the last week or so.
Very
Volatility
tight.
Up by 25 cents. Off over 19 again, 1905.
You know, it's funny. I did not buy, not for 1 second, did I buy that sell-off yesterday afternoon. I mean, I'm sorry, that rally yesterday afternoon, the NASDAQ and the Russell, and the NASDAQ and the S&Ps. There wasn't much I could do about it. I tried selling the S&Ps on the close. I tried doing all this stuff. It no work.
Yeah, well, it was always a bid. You just weren't aggressive enough. That's on you, boo.
Yeah, I know. I was not that aggressive. Bonds up 107. For bonds have been really soft. This is the first kind of it's the first decent
uptick in bonds that we've had, a full 0.08. Really haven't had any type of sell-off. You can see they're trading near their recent highs. What Tom's talking about here, you can see here over the last couple of days, they've been going lower. Now they're trying to catch a bid back to where they were, I don't know, call it the end of September. End of middle of September.
Yeah. I'm a little bit of an ugly opening. I don't know if they keep them down.
We haven't had an uptick, down 30. Volatility's kind of helping you here too. It's up 60 cents, showing a little bit of weakness in the overall market.
Yeah, I mean,
now they took back everything from yesterday on that little rally on the close for sure.
Yeah. Oh, they definitely took back everything from yesterday, but I'm just rolling down rolling down a little bit. I think gold, I got to roll up some puts, but at everything else,
gold up $3. I'm talking about GLD 246.
And the Nasdaq, the Nasdaq was so freaking strong this morning, even with Apple down pre-market, that it was tough. It was tough to adjust into that.
Yep, Nasdaq now down 100.
Yeah, Nasdaq now down 100. I would check your positions. My Nasdaq position's pretty flat. I don't know. What do you think? Do you think this got legs?
I do. You got volatility up 65 cents. You know, if it wasn't quarter end yesterday, I think you would have had that move down yesterday. So Well, we'll see what happens for the rest of the day. Still got a little bit of a tug of war going on here. I mean, these 30-point moves to the downside have not held. So let's see what goes on here.
Not a single one has held.
Yep.
So now they can rally them back because I just rolled down a bunch of calls.
Oh, now you tell us. So we do have jolts coming in 25 minutes. I don't know if jolts.
I'm not a jolts guy. Let's see. How about Apple here? Do you roll down calls in Apple? Do you go the distance? I guess you got to assume that this is real.
Well, you're not helping by rolling down. Now you're going to cause it to rally.
Whatever Powell said about, it's so funny when you say when the Fed chairman says everything we did doesn't really mean what we're going to do next, then the market interprets it as it absolutely does. And when they actually do it, then
you want to know something, rightfully so.
I know. I kind of think the same thing.
Yep, totally agree.
Let's see what else we got here. I wonder if there is. Well,
it's sell Rosh Hashanah and buy Yom Kippur. Or is it buy Yom Kippur and sell Rosh Hashanah?
It's always sell Rosh Hashanah, buy Yom Kippur. When's Rosh Hashanah?
Thursday.
Wednesday night? Thursday?
Okay. Yeah, I mean, you're asking the goy. I said Thursday. We goys think it's Thursday. You other people probably think it's Wednesday night.
You other people. Wednesday night, the night of immediate seating.
That's right.
Yeah.
Everyone at EJ's.
We will be there. All right, I'm good, man.
All right, let's take a quick 90-second break and come back. Even the S&P is making new lows, down 40. We'll be back in 90 seconds. We got Let Me Explain with Chris next. He's going to be in a good mood. We'll be back in 90 seconds.
To my trusted financial advisor, let me know your thoughts on reinvesting what very little remains of my money into ramen noodle stock, now that I'll be eating it for every meal until I die. Best, Cynthia.
Sometimes it feels good to get smart. Get even smarter with live market insights and insults.
They're all freaking losers. There's no skill.
From the smart mouths at tastylive.
Tom, when you talk about the good guys, who are they?
They are us. We are the good guys.
When you say they take out the weekend, what does that mean to you?
That means when you're a premium seller and they take out the weekend, that means that all the decay over those 2 days, Saturday and Sunday when the markets are closed, come out of the market Monday morning.
When I say bell to bell, what does that mean to you?
Bell to bell is like, in horse racing they would call it wire to wire, and in trading they call it bell to bell. So the opening bell to the closing bell.
If you're saying something's thin, what does that mean to you?
That means it's not very liquid. That means that the marketplace is relatively illiquid. That's what thin means.
If you can't buy an uptick, what's happening?
If you can't buy an uptick, that means the market is going down and there's no bounce.
How does Daddy do it?
Daddy does it good.
If you say way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who's not willing to take any risk, who's very risk averse. So when somebody's very risk averse and doesn't want to do anything risky, you say, "Hey, way to go out on the ledge."
When you say you're going to whack the bid, what are you doing?
When you whack the bid, that means you're selling at the best available price.
A scoopy. What's that?
Scoopy! That's one of my favorite. That's when you're just like scooping something at the bottom, like, you know, you bought something and it never goes lower. Scoopy.
Back in the pits, you guys call them teenies. What are teenies?
A teeny is a 16th. So before we went to decimalization, we used fractions. And we used 16ths under a certain dollar amount.
Do you want the penny or the position?
Well, that's always something. The penny or the position is, do you want the trade? Then just pay up to get the trade. But do you want to squeeze it for a penny? That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far. Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago and learned all about it. And we've been trading actively since February. And just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
really
you,
do
Rob.
appreciate it.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
My friend, you know what that means. Time for a little bit more Tasty Live with this man. Let me explain. Chris, how are you, my friend? Congratulations on your Mets win. Congratulations on the volatility. Almost 7% move, up $1.30 on the Mets win news.
You're welcome, Tasty Traders. It was the New York Mets that brought all the volatility to this market today. The baseball world is torn asunder by the greatness that was yesterday's Game 1 win. Tony, this is the 7th time in my life that they've ever made the playoffs. This happens like once every 5 years. So statistically, I'm only hoping for my team to get there 20% of the time. So this is that 20 Delta trade that finally worked out for me.
I like it. Good for you, man. Good for you.
Great for me, great for markets. But guys, we have limited time here. So let's talk about all the things that are happening here at the start of October. It's a brand new month. It's a brand new quarter, which means it's a good date to talk about some of the top line seasonality. We made our way through August and September, which tend to be vol spiking months. And October is really no different. Over the past 10 and 20 years, October has seen a rise in volatility across the board. But it also is the month of the year that if things turn, they tend to turn dramatically. Why do we say that? Because if you were to look at over the course of history, going back to 1950, what month does the market bottom most frequently? 1 out of 3 market bottoms are found in October. Now, of course, this is a bull market, so we won't be finding any sort of near-term bottom here. I suppose the question is, what happens when we've gone this far, this fast? This was a very, very strong year, right? You're talking about % plus gain year to date by the time this month starts. And for bulls, that's actually problematic. This is the 10th such occasion in which that's occurred. And the other 9 times, October tends to be a month for a breather, even if the fourth quarter is strong overall. In fact, we see here that going back to 1950, the average return for the month of October when the S&P 500 gains more than 20% year to date through the first 3 quarters is negative 3%. The median return is negative 2.5%. It trades lower 77.8% of the time. That's different than what you typically see. In all of the years when the S&P 500 hasn't clocked a gain of plus 20% year to date going into October, the market averages a rally of 0.9% higher. So yes, there is something there. When you got too far too fast in stocks up into the fourth quarter, things tend to cool down a little bit. So I'd also remind people that we have these conflicting seasonal measures. This has been a year where you have to throw away all of your priors. kind of like in 2022 when none of the seasonality mattered coming out of the pandemic and the Russian invasion of Ukraine. This year, with the way that the presidential election has taken its twists and turns, the timing of a Fed rate cut cycle in September, the seasonality matters. It's a good guidepost. I put far less stock into it this month, even though you could paint a bearish or bullish story on either end, depending upon how you want to cherry pick your data.
If you want me to comment on that, I would say that that just by presenting seasonality, you've already cherry picked the data, because that's what seasonality is. Sure. It's cherry picked data.
Okay.
But I do think that we can't ignore the fact that there are some huge binary events coming up that's going to change kind of the inflection points on how volatility trades over the next couple of at least over the next couple of weeks. Let's call it 6 weeks. And so I do expect that trading is going to be remain very robust, very nervous. I also think that, one of the things that traders should focus on is weird stuff like the close yesterday. And again, there's no way you could adjust for volatility being up. Like Tony said, the VIX up 2 points today, but volatility futures are up, almost a 0.20, which is, 6 or what did we say, 6-7%? Well, it's actually 6%, but you can't really adjust for that, but you can, it does raise some red flags. Like there was a crazy amount of short covering on the close last night. And of course, what does that lead to? It leads to basically, a little bit of a pretty big sell-off on the opening today. Now, it wasn't that obvious because you had all morning to do anything you want, I mean, I sold futures last night after the close, and I couldn't wait to scratch them this morning or cover them this morning. So it wasn't easy at all. Mm-hmm. I think that talking about the election is actually healthy for markets. Because bringing up the idea that, listen, in different cycles, the market reacts very differently. And in times when the market has been in election cycles, when the market has been up big prior to the election, there generally isn't that much activity that takes place. That's the weird thing. In very negative cycles, when we're entering a really tough period, the election doesn't seem to have a big impact, but it can. But volatility doesn't come in that much. Like if you go back to 2008, you go back to 2000, and if you look at even in 2016, vol did not come in after post-election in any of those cases, and so. In fact, in 2008, it was extended for almost 400 days. In 2016, it stayed all the way until we got into 2017, a couple of months. And in 2000, it went all the way over almost to 2002. So I don't think you're going to see that this time, because I don't think we operate at the same pace. And I think things happen much faster. I think the gamma of life has just exploded. But I think pointing it out is important.
The volatility is really interesting right now because, I think the normal cadence of a market is that when vol spikes, traders come in, and if no fear is realized, they'll sell it and they'll push down the curve. But as you go into the second half of October and into early November, vol is inflated and it's really not coming down. And so you're starting to see this convergence where the spot VIX feels like it's starting to rise to meet future prices, if only because the events that are spiking volatility are giving it a little bit of a boost here over the next few weeks. They're not going to go away anytime soon because it's the November 5th election. So until that happens, that vol really has nowhere to go unless the market feels very, very confident in how the results will play out. I know there's a vice presidential debate tonight. I don't think anyone's anticipating that to move the market or move the needle for the election results itself. But we are basically a month out now. It's October 1st. And the convexity on how the polls begin to impact people's feeling increases now over time, right? We're going into the later half of the decay curve here for the election impact. And so every little twist and turn has a bigger outsized influence moving forward. Tom, interestingly enough, if we go back to 1920, right, the market gives a pretty good signal for whether or not the incumbent party is going to win. If the incumbent party ends up winning the presidential race, the stock market, the S&P 500, will have rallied about 1.2% in the month prior to the election. If the incumbent party is going to lose the election, historically, the S&P 500 loses about 0.8% in the month leading into the election. So stocks could be the tell here. And quite frankly, if we're looking for that as a tell, a choppy two-way month of October probably is going to leave a lot of people frustrated right now. But either way, there is a new risk here, Tom. We have the international longshoremen are striking, which is apparently the most powerful union on the planet, as I've learned in recent days.
It is. That's what people say. I don't know what that means. Like, I don't know if that's tradable. Let's put it that way. I mean, on the surface, I say I don't think this is a tradable event, but I don't know. Or at least I don't know how you do it.
That's a great question, right? Because the strike, who knows how long it's going to last? Who knows how widespread it will ultimately be? And right now they are on strike, and it's impacting the docks across the East Coast and the Gulf.
I don't understand how you can downplay this. I mean, everything goes through. I mean, there's been studies done that the reason why America was able to grow and create the economy that it did was because we have basically a river that runs right through the middle of the country. I mean, there's no.
What I said, I wasn't downplaying the strike. What I said was, I don't know how you play it.
Oh,
I said I don't.
So we can model out some impact, right?
I don't know.
It's not bullish, and it's not bullish. I don't know how it's tradable.
I don't know that it's tradable.
I mean, and we're at all-time highs. I mean,
yeah, I just
it's
don't
probably
know
not tradable in the short term.
I
right?
just don't know that it's tradable. That's my point. So you want to sit here and have a debate about longshoremen going on strike? That's fine. I mean,
you and Tony can do that. That's not what I'm here for.
Exactly. I'm not debating the whole industry or the value of union. I don't want to have a union debate right now. I'm just saying that I don't know that event itself is a tradable event. That's my point.
I think upfront it's not. But there does seem to be a compounding factor here. With each passing day that these longshoremen on strike, it takes about 4 days to fix the backlog that comes into the port. So you figure a week of a strike, it's going to take about a month to unclog the ports here. But if you were to look at the amount of money that's trading hands as a result of these goods that are coming in and going out of ports, it's going to cost the economy maybe $3.5 billion, $4.5 billion a day. And for an economy that if you were to strip it back down, not to annualized terms, but to raw dollar terms, typically is growing around $300 billion to $400 billion per quarter. This is something that could begin to have a serious impact. A week goes by, you're shaving off we'll call it $35 billion, maybe 0.1% of GDP, or excuse me, 1% of GDP, 10% of GDP after a month. It starts to compound very, very quickly. And the longer we go on, the greater the backlog becomes. And so it has a longer and longer tail. Up front, it doesn't mean anything. There's no trade there. But in a week's time, 2 weeks' time, all of a sudden there could be more legitimate economic issues where, yes, the economy slows down. Yes, prices spike. Does that impact the Fed's path forward? Probably. And then you have conversations about the bond market and other interest rate sensitive things. So today, not that big of a deal. In a week's time,
hold on.
It becomes a big deal.
Hold on, time out. We have weekly options, daily options. You say not that big of a tradable event. We talked about the weekly move being very, very tight for this week. It was very tight.
No, this week was pretty big. If you remember, it was over 90 points.
Well, it's now well over that. It's 36, 37 points for the 0 days for 1 day. It's 52 for the 0 days. It's 52 points for 1 day. So all of a sudden, volatility just took back Monday and Tuesday and put it all into Wednesday, Thursday, and Friday for the weekly move. The 3-day move is now almost 80 handles on the E-mini S&P. So yeah, there's a tradable event here, gentlemen.
I mean, you're assuming this is a longshore event. I'm telling you.
I don't care where it comes from, Tom. You know me. I can't even read. I don't know how to read. But
right.
I know how to see numbers, and numbers have just jumped by 50%. So there's a tradable event here.
Yes.
For whatever reason.
The market.
Is it the longshoreman? Is it attacking? Is it? Yeah. Is it?
Yeah. I don't think it's. My point is, I don't think it's this longshoreman argument. I don't think that has anything to do with it at all. I don't think that's even a factor. I think the
the marketplace right now got a little spooked this morning by, by what the White House just said. The marketplace got a little spooked by everything that's, which is, listen, markets are emotional. They're allowed to get spooked.
Yep.
And that's what's happening right now.
Yep.
Is it tradable, the whole market here? Of course. But I just don't think it's longshoremen.
I would agree there. It's hard to trade out in the short term. If we're talking about this in 2 weeks' time, then there may be, obviously the market will start to price it in. But in terms of how it's going to impact Fed policy moving forward, that becomes a real conversation for the November 7th meeting. We mentioned the White House comments here, Tom. There was a report at Axios this morning that Iran was getting ready to deliver a new ballistic missile barrage to Israel, akin to what they did back in the middle of April. And while that's something that's probably likely to be repelled, we have seen crude oil prices spike up a bit here and equity markets drag down on some of these headlines. Ultimately, as we saw in April, though, that was not the opening salvo in a broader regional war. Israel, of course, has moved some troops into southern Lebanon, which many people are pointing out this should be an act of war. This is the start of World War III. Why isn't oil responding? Oh, let me explain. In 2006, when the Hezbollah Lebanon fighting versus Israel ended, UN Resolution 1701 was passed. UN Resolution 1701 says that south of the Litani River, Lebanon is supposed to keep a peacekeeping force, such that Hezbollah and Israel don't need to have fighting in that region. Obviously, the Lebanese government hasn't done that. Hezbollah has occupied the territory, and in part because Hezbollah has helped repel ISIS from the eastern borders over the years. So Hezbollah and the Lebanon government have this interesting relationship where, yeah, they're a terrorist group, but they've also helped prevent other terrorist groups from coming in. So the devil you know versus the devil you don't. In any event here, what you now see is that Lebanon is being forced to deploy troops to southern. I'm getting some feedback in my ears, by the way. I don't know if anyone else can hear that.
Beth.
I heard it too. I don't know if I touched something.
Is that God?
Hey, Beth.
Yep, we're working on it. One sec.
That's that's production.
Just making sure. I took the medicine this morning, so the voices should be away.
Beth, you're running a commercial in the background.
All right, she'll work on it. Continue on, gentlemen.
I'll try.
Make believe your children are in the room.
Oh, Tony, I listen to every single word they say. I'm a good father. Just making sure that's on camera so she knows in years from now when she finds the archives of Daddy when he's on the run for something. Who knows? At least I said positive things. In any event, UN Resolution 1701 says that there should be a peacekeeping force here, and so the fact that you're now seeing this area treated the way that it is, very clearly the UN resolution hasn't been upheld for nearly 20 years. It's a non-factor right now for the market. Does it impact oil supplies? I don't know, but a tried and true trading strategy, perhaps Dylan Radigan's best trade this year, has been whenever there has been a spike in oil prices around geopolitics and an expansion in volatility, it becomes an opportunity to sell volatility. It usually takes a day or two to wash over. As we saw in April, the day of the attack, April 12th, that really didn't do much of anything. Markets spiked that day and then immediately calmed down. So these headlines that we're seeing here today, if they're contained, if it's this escalation through de-escalation strategy, whatever that means, not sure about that military doctrine. Nevertheless, this is an oil spike that we should watch and ultimately look to fade once more. It probably doesn't stick around, and it certainly has nothing to do with the longshoremen strike going on in the ports right now. So
this market, Chris, this market that we're looking at today, this is strictly a flight to quality right now. I mean, the oil was just up about 250. Now it's only up 195. I mean, the volatility move is clearly
gold is up. Yep.
Yeah, gold was up like $35. It was just up 35. Now it's up 31. This is just a flight to quality. They got everybody, sirens are going off. People are scared. This is a definite.
And all of this because of the vice presidential debate?
Yeah, I don't think so.
No? Oh, man.
But
I'll find a reason.
Yes. All this and more, because we made Stevie Cohn's day yesterday. But I think that what you're looking at right now is just a very short-term emotional reaction to what's going on. It's just, do geopolitical events have a short-term impact or emotional impact on the market intraday? And the answer is yeah. Could it go overnight? Sure. But the reality of most of these moves, like you just said, Chris, they tend to be very short-lived, and they tend to be irrelevant over a short period of time.
And there's healthy volatility right now in oil. It shouldn't be dismissed. Yesterday we were at 63. The IVRs are still hanging out in the upper bound there. The beautiful thing about a spike in oil here is that for the most part, going back to the start of the Russian invasion of Ukraine, oil's been in a fairly tight range, right around the mid 70s, low 80s, a few bucks on either end. And so if you get a return to the midpoint, if you get a move into the lower 70s, it's just an excellent place to put on iron condors. It's directionally neutral. And of course, what does energy care about what's happening in the stock market right now? They're totally unrelated. In any event, guys, we have much more to talk about later on. I would encourage everyone to check out the most recent episode of the Prediction Trade. We had Robert Cahaley on from the Trafalgar Group. This next week, we have Alan Lichtman, the 13 Keys guy that you hear about all the time. He's going to be joining myself and Jeff Joseph. So be sure to check out the Prediction Trade Thursdays, 4:30 Eastern, 3:30 Central here on Tasty.
One thing.
Good job out of you. And hopefully you won't be pushed to the sidelines like Sosnoff did yesterday. Although he did say he pushed you to the sidelines so you could watch the Mets win and get into the playoffs. So Sosnoff is a giver. Don't think he did that because he doesn't like you. He did that because he loves you.
I told my wife, I go, Tom just did something that was more important than the birth of our first child. And you'll never get that.
But I also forgot
she got it on the first guess.
And she's like, yeah, I'll see you in court.
Hey, we also forgot to mention bonds. They're up 1.5 right here. That is about the biggest flight to quality I've seen in the bond market in a long time.
Sure. Yep. Awesome. All right. Well, listen, let's take a quick 90-second break. You want to? We'll come back with a market measure after this. And later today, you will see Chris on the last call at 2:30. We'll be back in 90 seconds. Thank you so much, my friend.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
Success is a combination of lots of non-correlated or lightly correlated underlyings to reduce risk.
It's better for your investments to trade volatility than it is to own S&P index funds at Vanguard. That's what you're saying.
I can't sleep at night as a passive investor.
Why not?
Because I think the risk is too great. Here I am, I'm a derivatives trader. I have hundreds, if not thousands of positions on, and I sleep fine because I know what I've done. What we do, it's a mathematical equation.
what asset other than fear is mean reverting?
And it requires no additional capital to play both sides of the market, then why would you even be directional in the first place?
The problem with what you're saying is it makes a little too much sense.
Yeah, it's logical.
And so it raises a lot of
scares the crap
skepticism because it makes a little too much sense.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards, become a trading mastermind. Get the guide at tastylive.com/guide.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards, become a trading mastermind. Get the guide at tastylive.com/guide.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. But first, let's take a quick look at the market. I know we got a market measure coming, but even the S&P is making a new low here, Sadnoff. They're down 58. They were trying to catch a little bid here. They were down around 43 or so just a moment ago after making recent lows and then sold off. NASDAQ down 268 and change, trading near its lows by about 15 handles, all down around 1.25%. The Russell's the weakest of the group, down 36, and the Dow, which was the weakest earlier, actually on a relative basis, on a percentage basis, the strongest of the group, down 3 and change. Volatility back up $1.60. That's one of the largest moves that we've seen in probably a month or so in volatility. When I go back to early in September, the beginning of September, September 3rd, when volatility spiked. Sadnov, what say you? I say close all watertight doors right now. I don't think you come back from this today.
I do not think you come back from this today either. And looking at this,
Apple down $7, weak right out of the chute. Been weak all day, all morning.
I don't see how you come back from this.
We're dead. We're gonna have a rip your face off rally once again. I can't stand this market.
I know, but I don't. I mean,
you're traveling today. You know what happens when you travel. We get a 3-handle move, you know, in the spoos.
I know.
You know it.
I'm looking at all my positions right now. There's nothing here that I like at all.
Well, everything is setting up. You mentioned flight to quality. Bonds are higher. Gold is higher. Silver's higher. Oil's higher. These are all the fear indices that kind of take away from the market's bullishness. So volatility is there.
I mean, you got vol, you got bonds. I don't give a crap about crude oil, obviously, but and I don't really care that much about gold. But when you have bonds up over 1.5 points on a day like today, because there's no reason. I mean, bonds are, they're going to be a dead product for quite some time. You got bonds up huge, you got notes up huge. You definitely have a flight to quality. You got S&Ps down 60, Nasdaq down 300. Russell down 40. There are no there's not much out there that's available to save this market. I mean, I don't think Google's going to save the market. Let's put it that way.
Agreed. Or Meta up 8 or whatever it is.
I don't think Meta's still up 8, is it?
$4.60. Sorry, I said 8. I apologize.
Meta has been.
I didn't look.
Yeah, Meta's been one strong puppy.
It was $5.83, so it was $6 higher. This was up around $10.
Yeah, I don't know what you do with. I mean, this is an all ugly move in Apple. I mean, there is no. There's no way
Apple down. Apple down 777. I mean, it squoze them to the upside. I know it squoze me to the upside, and now it's squeezing them to the downside.
There is no way to sugarcoat Apple down 7. It's not. Those aren't the moves. They don't come in and start buying Apple down 7. You know what I mean? Like, it's not like some stock you can't move around. When you get a stock like Apple,
I hate it when you say this. You know that, right? I really do hate it when you say this.
When you get a stock like Apple that's down 7, it takes some bigly selling to get that stock down 7 points. Yeah, I'm looking at my watch list. It ain't pretty. The stock
my friend Chris said the longshoreman may be nearing a deal already. I don't know who he's talking to. Let me talk to my friend Mr. Gambino and see if they're really. Nah, Gambino says they're not ready for it yet. But whatever you think, Chris, I'm good with you too. I hope they do. And nobody likes a strike.
No, I don't think so. And I think that will be short-lived. But again, I do not think. I don't think this is I don't think that's the issue here. I'm going on record, but I don't think that's the issue.
Okie dokie.
Is the Tesla numbers come out tomorrow before the opening, or is it after the close?
I don't know, to be quite honest with you. I can find out for you. Tesla down $8.67. Even the S&P down 70.
Yeah, 70 is a big move at 9:12 in the morning Central Time. And today you have Nike is the one stock that I think you mentioned that they do have earnings.
Yeah.
And my question would be, under normal circumstances, you have a day, like a kind of a normal trading day, and you get a stock like Nike, because it's not going to move much today because it has, earnings. So it's down 25 cents. Normally you'd be like, completely neutral on earnings, right? But you get a day like this when it's ugly, all of a sudden you start to think differently about earnings. I always hate when companies issue earnings on bad down days. It's like, okay, this might not be pretty. But we got a piece for you today. I mean, we didn't know this was going to happen. We have a piece for you today on zero DTs, because on Tuesday we do zero DT options. But before we do the zeros, just a quick little reminder, in 2 weeks, on October 17th, 2.5 weeks, we will be in LA. I'm sorry, October 19th. I said 17th, I meant 19th. On October 19th, on Saturday morning, we'll be in LA at the Fonda Theater. And we would love for you to come out and hang out. We got a lot of people signed up for it. We're really looking forward to hitting LA. And the whole gang's going out there. So we'll be at the Fonda Theater on Saturday morning, October 19th. And can't wait to get out to LA. That's where my son lives, so that's where we get to visit family. We're all happy. And doors open at 8 a.m. Show starts at 9, and we'll see you in LA. Also, right after that, just 2 weeks after that, we're going to be in Dallas, Texas. And if you haven't signed up yet for Dallas, we would love to see you there. We're going to be in Dallas, Texas on Saturday morning, November 2nd, and the same crew, and really looking forward to Dallas. Maybe we'll even sneak in a little barbecue while we're there, Bat.
Good for you.
I always try to make a pit stop at Pecan Lodge or Terry Black's, and I think we will be able to sneak one in for the good kids. So that should be fun.
I think men of your stature now say pecan.
I say pecan.
No, you're not a man of the people anymore. You can't say pecan. I say
pecan.
I'm not a pecan person.
You're a pecan guy now.
I'm a pecan.
You are. You've changed. You know you have.
After that show in Dallas, we will be in. We're going over to the UK, and we're gonna kick off a 5 days of shows on November 11th in Edinburgh in Scotland. And we have never done anything in Scotland, Manchester, Birmingham, or Dublin before. So we're going to start in Scotland. We're going to end in Ireland. And in between, we're going to go Manchester, Birmingham, and London for a live trading event in the UK to kick off Tasty in the UK. So Tasty is now live in the UK, and we are kicking it off with a 5-day event, all live trading shows. If you haven't signed up yet, please do. London, we're about to shut down registrations because we're full. I think she's going to keep it open till Saturday, but we're going to shut down London registrations. But all the other places, Edinburgh, Manchester, Birmingham, and Dublin, all have plenty of space, and they're small, intimate, venues. So really looking forward to seeing everybody. And if you haven't signed up yet, tastylive.com/events. All right.
Beautiful.
Let's do it. This is
more than a mouthful, Sosnoff.
This is a zero DT piece that our research team put together that is, I really like it. Anyway, they called it to long or not to long. I don't even know what that means.
Mm-hmm.
But based on overnight moves in the SPX, the ES, whatever you want to say, what about directionality for zero DTEs? Do you think you get paid by being directional based on an overnight move? So let's say the market was up overnight last night. Do you buy them? The market was down overnight. Do you sell them? I mean, what do you do based on what happens in the overnight markets when the market opens the next morning and you're sitting there going, all right, how do I want to trade these zero DTs? I don't want to sell a strangle. Should I just sell a naked put? Puts are schmutz. Puts are schmutz.
I mean, I don't know how long this study is going to be with zero in 1 day. I'm going to imagine it's relatively short.
18 months. 18 months.
Yeah, and in that time frame, we've gone to all-time highs.
Yes.
So I got to say, if we had a down day and you sold puts for the next day, you had to have done well. I think it's good. I think you get paid, sure.
This is an 18-month study looking at overnight markets and determining whether you should sell puts or calls or just taking a directional shot. We're going to give you all the details if the market. Go ahead.
No, I was going to say, I'm going to say the numbers are going to be better for just selling puts versus calls, but I don't think it's going to be as big as you think. That would be my guess.
There is no question over the last 18 months since we've had zero DT options that the market has done really well. In fact, for the last 2 years, the market's been up huge, and we're basically, a day off record highs.
Right.
So it would be really hard at this point, to think that anything you did in the put selling, with respect to put selling, would be successful.
Sure.
Let's take a look. So at Tasty, our core mechanics rely primarily on delta neutral strategies. And to be fair, we're pretty directional, so that's not totally true. But when we talk about, we do research, it's mostly delta neutral. But the zero DT options are different enough from longer dated options that it's worth reevaluating our longstanding practices. In an efficient market, deciding to be long delta, short delta, or neutral delta is a personal risk preference and market assumptions. But what happens if we pick a side for our zero DT trades and have overnight SPX moves been helpful as signposts? Have they been helpful in us picking direction? And we're going to see. Let's go next slide, Beth. So we did, in this case, like we always do now, we use 18 months of research, and we used all basically the tick data every 10 minutes, just so we can control the amount of data. We considered selling zero DT options, not the day before, but at the market opening, using deltas now, 35 deltas, 25 deltas, and 15 deltas options, puts and calls, not together, but puts and calls. all the trades were closed at 25% of max profit. So this is not holding all day. This is just quickly taking profits if you can. We contrasted the performance based on the size and direction of the overnight moves. Did the SPX rise or fall overnight? Was that by more than 0.5%? And did the SPX change in absolute value by more than 0.5%? And we did everything at mid-price, so you can add a little or subtract a little, however you want to look at it. Let's go to the next slide. All right. So short 16 delta puts. Now, this is the one that if you were ever going to have one that's going to be probably the most, I'm not saying the best bang for your buck, but I'm saying you're going to have the highest win percentage. This is going to be it. Because Tony and I both said we've been up for 18 straight months. This has been kind of the layup. I mean, I don't do this, but this has been a layup.
In hindsight, right? I mean,
in hindsight. The win percentage overall, 97%, which is insane. If the SPX rose overnight, 98%. If it fell, this is selling puts, 96%. If the SPX rose, it didn't matter what happened. Half a point, down, up, whatever it is. You made money. If you just sold 16 delta puts on the opening in the zero DTs every single day since we had zero DT options, except for today, you'd be doing quite well.
Right. And the day's not over, but sure.
You'd be doing quite well. Let's go to the next slide. So now we're going to look at the 15 delta calls. Would you have done as well? Considering it's been a bull market, the win percentages are really high, 92% overall. The win percentage is actually higher than I thought. Here, and the interesting thing here is 100% win percentage if the S&P fell by more than 0.5% overnight.
And 0.5% is nothing. I mean, let's put it where it is.
25, 28 spoo handles.
Yeah,
That's
exactly.
It.
Yeah, right.
But here's the crazy thing, Tony. Overall, you lost money.
Yeah, that is crazy.
Overall, you lost $80 a trade. If you sold puts, you made a lot of money. If you sold calls, you lost money, even though you had a 92% win rate. And
more than I had suspected prior to seeing the study.
Yeah, pretty much selling calls only worked if the S&Ps had a pretty big down move overnight. Let's go to the next slide. As you go up, step up a class in delta here to the 25 deltas, your short puts still worked really well, of course. Regardless of the market, overall 95%, your average daily P&L $118. Overall short puts worked really well, the 15 delta or the 25 delta. If you go to the next slide, which is the calls, it's a very different story. You lost money pretty much no matter what you did, unless the S&P was down big overnight. The only time to sell calls was when the S&P was down big overnight, because it must not have reversed against you that many times.
Or the volatility got, so high that even if it did reverse, it didn't reach that number. Again, just another way of saying, when volatility is high, you can almost do, you can do both sides.
And that's only when the S&P, by the way, was down more than 0.5% overnight, as measured by, we put SPX here, but it's really the ES futures. It's how they do that, judge that. The win percentages were still really high, but you overall lost money. So selling zero DTEs overall on the call side, whether it's 15 delta or 25 delta, did not work unless there was a big down move overnight. Selling puts works no matter what. Let's go to the 35 delta.
Schmutz, you said it from the very beginning.
On the 35 delta, I mean, the win rate's still ridiculous, and you can see here, you even made more money.
Right.
You killed it with 35 delta puts. I mean, those are, the bigger the put, the more money you made. That's because over the last 18 months, instead of being up 53% of the time, the market's been up closer to, over 60% of the time. That's why these numbers are huge. If you go to the calls, I'm sure it's not going to be as pretty. And go to the next slide, Beth. 35 delta calls, and every number is pretty much a loser, unless we were down big.
Yep.
So the takeaway from this is, with the zero DTs, for the last 18 months, if you wanted to get long, you did really well selling puts on the opening. Didn't matter what delta. If you wanted to get short, selling calls, you did really poorly. Period.
That's the facts, Jack.
That's the fact. Unless the S&P was down big. That's the only thing. Let's go to the next slide, Beth. So takeaways. Over the past 18 months, short out of the money zero DT puts have generally been a winning trade, provided they were managed aggressively. Remember, these are all managed at 25% of max profit. So nothing went at the end of the day. So you had a day like, we had one day where we opened down like 100 points the S&Ps, we closed up.
Yes.
But you had a chance to manage that at 25%, you were out.
25% of the profit, yes. Correct.
Right. A large overnight gain in the SPX was the only negatively correlated factor for short put success. Short calls, on the other hand, were generally successful only after large overnight losses or large overnight drops. I'm sorry. The efficient market hypothesis says that we shouldn't put too much faith in looking at past price moves for making our trading decisions. But if you decide to be directional with your zero DT trades, considering overnight SPX moves or overnight ES moves is a reasonable place to start. The numbers are pretty remarkable.
As Spanky would say of the Hour Gang, remarkable.
Yeah, and just as a little, before we get into Scott here, bonds have just sold off actually about 9 ticks off their highs, just bringing up some points context. And gold sold off about $10 and crude oil sold off about 50 cents. Maybe things are starting to normalize a bit here.
Yeah, even the S&P's almost 10 handles off of their lows. NASDAQ still about 20 handles off of its lows. Volatility, on the other hand, Sadnov still up there, 20.35, but about 40 cents off of its highs. We'll take a quick 90-second break and come back. We got more Tasty with this man, Mr. Scott Sheridan, coming up from the Tasty Trade World Headquarters. We'll be back in 90 seconds.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000% and I made a bunch of money and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win and it was mostly failures thereafter that. And I thought I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into Tasty Live. Really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
You hear it all the time. Spoos up or spoos down. What exactly does that mean? Spoos is a slang term for the S&P 500, specifically the S&P 500 futures contract /ES. It's the world's most liquid asset. In the S&P 500, billions and billions of dollars trade hands each day. The S&P 500 represents the top US stocks, all in one basket, traded through one contract. The S&P 500's movement day to day gives you a good overview of the market as a whole and what it's doing.
We just ripped higher up to 50 points, and I just thought we would stay there, but
the thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, I don't know, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Oh, yeah. Tasty Nation, good morning.
Tomas, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live with, enough out of you. That's right, ladies and gentlemen, the moment you've been waiting for, my friend and yours, Tom's acquaintance, Mr. Scott Sheridan. How are you, kind sir?
I'm excellent, but I'm a little concerned. So I gotta ask. Talking to Tom yesterday, he was a little tie-tie. He worked very hard, not been critical. He wasn't sure what he was doing for food. So I threw out some suggestions. He didn't like them. He liked them. He said they were too far. So he said there was a place near the hotel. He thought he'd go. It's not, wait, this is when you know it's bad. It's not that important to me.
I know.
That's what he said. It's really not that important to me, says Tom Never about food. But go ahead, where do you?
If I can add a little bit more to the wait a minute. If I can add a little bit more of the backstory that you might not know, Scott.
Yeah.
Very good friend of mine, Mr. Shark, invited him to a 5-star restaurant, and Sosnoff said, "I'd rather eat in the halal cart on the corner."
Okay. I don't want to call Shark out, but restaurants don't go by 5 stars. So I agree with Tom on that one. I'm calling major BS, and I think he was better eating out of the food cart. But what?
Wow.
Yeah.
Shark getting no love these days. No love.
Okay, so I was really tired. I had a call late. I didn't want to go out, so I just went to a bar next door to pick up a burger.
You didn't pick anything up. You ate there. Go ahead.
It was not edible.
Oof.
So I went to a food cart down the street and just got myself an spicy Indian wrap.
And were you throwing up all night?
No, it wasn't that good, but it wasn't, it was edible.
I will say, I get confused on the parks. Is Union Square, what's the one with the arch down like around 12th and 13th? Is that Union? Is that Washington or Union? Whatever, one of them. They have a food cart that has Indian food that literally people line up for. Now, you know me with Indian food, kind of like oil and water. But the 6 wanted it. I said, you know what? Let's do this.
Oh, my man, you are a lover.
It was pretty good, I have to say.
Okay, wow. So there's 80,000 food carts in
a million.
City.
And in New York, they pay based on location, like they bid for them.
Yeah, I know. So anyway, there's a million food carts. They're all, to me, the exact same.
Scott, I didn't know that, Scott. So I'm glad you brought that fact.
Yeah,
they're basically basically all the same, and the food is very.
Oh my God, they're all the same.
Yeah, they are.
What happened to you that everybody's craft, whatever it is, it's all the same except you? You're just better than everybody else at what you do. But every other profession.
I'm gonna write this answer down. Go ahead. What is your answer, Tom?
First of all, why are you going off on me? I'm just telling you that.
Because anytime we talk about a profession, pick one. They're all the same. They all stink. Whatever. They take an attorney, take an accountant, take a doctor. You know what? They all went to medical school. They can all fix a heart. It's all the same. Mm-hmm. Now, when it comes to
yeah, that's correct.
See? Food carts, all the same.
Yes.
Okay. But finance, We're the best, which I do agree with you. But why are we the best versus everybody else?
Because of the bat.
Okay. So, did you pick up, because this is a new one in the last handful of years, maybe 5 years or so, that it's really become popular. Mango with lime and some chili powder on it. They cut it up, put it in a cup.
Oh my God. Do you know him? He does not eat mango, even when it's cut for him.
Oof,
Did
really?
I pick up some mango with lime on it?
And,
Why would I do
chili.
that?
But wait, but the tahini, you like spice. That's the only way you taste things.
I don't. I'm not eating mango from a street mango vendor.
But you'll eat Indian food. Okay.
Sure.
Okay.
Don't use logic. Do not use logic to win an argument, Scott.
I was just reading an article about chicken and all the possible issues that come from it if it's not handled correctly. You're fine eating that out of somebody's food truck, but a nice woman who's slicing a mango for you, you don't know what you're going to get there.
Do you know how long that chicken's been cooking on that
months?
Probably since about 7 o'clock in the morning. By the time
Do you know how long that chicken has been sitting in that hot water on that cart?
Hey, I'm still here.
Yeah.
So anyway, so I did. The bottom line is I did not go out to eat last night.
Well, no, you tried. You just made a bad choice.
No,
With the burger?
I didn't. I know, but it wasn't. It was a convenience thing. I wasn't trying to go out to eat. I didn't have any interest. I was tired. I wanted to catch up on some work. I wanted to watch a little football, and I wanted to go to sleep early.
Okay, I'm a seller of all those except for going to sleep early.
I did.
Okay,
and I won
I'll sell all the other ones, but going to sleep early, I'll buy that.
And I won $23 from Dr. Jim, so my whole night was made.
23. I got to hear the bet. What was the bet? Who bets $23?
Dr. Jim. He took Miami for $23.
$23.
Yes.
Doesn't Miami?
Because he has two other bets with me on the season, where he took the Patriots to win the Super Bowl at 300-1. And for $3, and he took the Dolphins to win the Super Bowl at for $20 at like 20-1 or 30-1. I forgot what it was, some number.
Good bet.
I sold them both.
Smart sale. Isn't the quarterback?
So he wanted to win $23 back last night.
Got it, to win it all. Then he had a risk-free. Then he had a risk-free bet. He's playing with house money. The problem is now.
He was trying to do a butterfly for a credit. He said.
Now the problem is he's down 46, and he's going to press. And by the time the season's over, you're going to be up like I don't know $2,000-$3,000 on him for sure.
Oh, easy.
Isn't the quarterback from Miami a guy that came off of like Baltimore's practice squad last week?
Yeah, well, obviously it showed, but I'm considering trying out for that. I got to loosen up the rifle, see what I got left.
Not much. Not much. How far do you think you could throw NFL football now? Think you could throw
about
20
8 yards?
20? Do you think you could throw it 15, 20 yards?
20 yards, yeah.
With a running start?
I don't know.
With a gun machine?
I would say 10 yards for sure.
Yeah, I'll buy you a 10. At least I like to see. At least you're being a little more realistic.
Cut it in half.
You know that the NFL football is huge.
Huge. It's ginormous. I know it's big, but you could throw it 10 yards.
Well, Josh says the quarterback on his wheelchair Bears team can throw 40.
That's impressive. That's good arm strength.
40 from a wheelchair.
And Josh could throw it 60, but they don't like his spine.
No. He said the quarterback can throw 40. He said there are quarterbacks from a wheelchair that can throw 50.
Okay, what does this have to do with you wearing cowboy boots doing it?
I'm saying that I could go to somewhere between 10 and 20.
What does this have to do with the price of tea in China?
Because we're saying that if they can do it 40 or 50 in a wheelchair, Tom should be able to throw it 15 yards with a running start.
Exactly. That's my point.
I got it. See, I followed that.
But I need like, I can't throw it to a spot. I need it like a receiver. Like, can you get me like DJ Moore just running like a 20-yard out, and then I can see what I can do?
You would have to throw the ball like 3 seconds before he started running. Okay, because you throw it up in the air to get the distance, and then he could maybe run under it.
Maybe.
It's all right.
So we have to get DJ Moore for this to happen?
Could you see what you can do?
Unbelievable.
You know, one of my regrets is at a charity auction once that I was in Chicago, they auctioned off.
Okay, first of all, there's two problems here. One, you never have had a regret in your life, and two, you've never been to a charity auction. So I'm not believing any of this story, but go ahead. Let's hear it.
Scott, you almost lost me with the first one, but when you reach the second point,
right,
100% you got it. I'm with Scott on this one.
Yeah, go ahead.
I was at a charity auction, and they auctioned off a playing catch with not Kerry Wood, but
Mark Pryor.
You got what?
Mark Pryor?
No, another pitcher in that era. It wasn't quite as good as those guys, but somebody else. Anyway, he was pitching on the Cubs. He was a well-known pitcher, and they auctioned off. You could play catch with him, and you know, for whatever he gave like a half hour, you could play catch with him
At Wrigley, or you go to like Wrightwood Park or something?
I think at Wrigley.
All
I think
right.
at Wrigley. And I was like,
you didn't want to pay the $200?
No, what do you think it traded for? This had to be, when was Kerry Wood? What year was that? When was he, in the 90s?
Late 90s, early 2000s? Late 90s probably, because probably late 90s.
Okay. So late 90s. And this was a pitcher a couple notches below Kerry Wood. But he was a starter.
Okay.
What do you think?
$250 tops.
No, it went for $2,500.
Wow.
That's for charity. Hey, Scott, did you once lift Sosnoff's paddle for him to win an auction? Look at the big smile on your face.
The six and I we were hosting the auction. We needed a little extra money, so I told him I'd take care of it for him.
Yeah, I wanted to. My wife.
You
wanted
gave him
to
a not held order?
Yeah,
You
the
know you'd never do
missus
that.
loved it. It was a great package. Great.
She really wanted to go to Indy with her
Bobby
brother,
Rahal.
and
Does she
to
still?
see-
Hold on. Does she still have the racing suit?
Yeah.
Oh, I'd love to see that on Halloween night. Oh my God.
So she really wanted to go to Indy with her brother.
Signed
Oh,
racing
baby,
suit.
You are so hot. You have to be in a fire retardant suit. Yeah.
So I go to Scott. I go, because we were at a different auction that night. I go, Scott. I go.
Because you go on the auction circuit. You were at a different one that night. You had like 2 or 3 others. Oh my God. Revisionist history. Go ahead. Okay. Go ahead.
So I gave Scott a not held order, and what does he do? He pays above the market. He goes.
We were a little light. We were a little light on the total, so it's okay.
He wanted to make sure you got it.
Yeah, he got it.
He made sure.
And wait a minute.
Yeah.
Did she get to go down like trial? She got to go into the pit. She got a race.
Yeah. She loved it. She
Yeah.
loved it.
And I'll bet you that package today, it goes for 3-4x what you paid for it. See, it's a steal in hindsight.
Right. So Scott paid for the car that day. Bought his car. He bought Bobby Rahal's car. Nice job.
It's a true story.
Pretty nice of you.
It was very nice.
pretty nice.
See?
I like
He's a
it.
big schmucker. He put his paddle up so everybody clapped for him.
Well,
I had to give him
we needed to get to $1 million for that auction, and we were light. So thank you. I appreciate it. You got a store number.
Oh, great.
See, you should feel good about it. With all the auctions you go to, I know internally, it's like inside, it gets you nice and warm, fuzzy when you help people.
He texts me, he goes, I got you your racing package, and I'm like, don't even tell me what you paid. Because I don't care. Because I know you reached.
I mean, that had to be a great feeling for charity, Scott,
Great.
to do that.
Great. Did feel
Made you feel good, I'm sure.
very good. All right. Should we get to some business? By the way, I have to say, Tom, I got to call it again, the way I see it. Your desk is spotless.
Yeah.
Spotless.
Yeah, because he hasn't been there in a couple of days, and we've cleaned it.
No. There's no noise. There's no extra anything. It's just it's efficient.
I am a minimalist. Okay, I don't keep.
I mean, now that I'm looking at your keyboard, it's a little disgusting, but I'm not touching that. But the desk itself and the screens look good.
If you go to Tony's desk, he's got like all his little, tchotchke crap around. He's got like pads and pens and all this stuff. He's got a million things. Like he's a pack rat. He's a hoarder.
I think that's harassment, Scott. What would you think? You recently,
100%.
Just
No,
all you do
harassment's
just
talking about the size of your butt. That's harassment.
Omaha.
Brianna, I hope you're listening.
Saying that you are a pack rat and a hoarder, it is not harassment.
Tony, I don't see you. I don't
This is
see
gonna
you as
cost
a.
you,
I don't
sir.
see you as either a pack rat or a hoarder.
I just want to go on record. I take offense.
Do you? Is your garage full of stuff?
Yes. All he's got is crap. He just saves stuff.
You have newspapers from like the 70s? Okay.
No, they got wet in the flood.
He kept his trading.
Wait a minute, is your house? Wait a minute.
When the air conditioning leaked.
Is your house okay?
Oh, me? Yeah, no, we're okay. Yeah. Thank you for asking, Scott. I appreciate that.
Okay.
Thank you, man.
All right.
Appreciate it.
Should we get to some business?
Sure. People are writing in. He's a minimalist with hundreds of cans of Campbell's soup on the wall.
That's right. That's art.
And little boxes of cereal in the kitchen.
That's art.
It's
See,
art.
there's a difference. That's art, right? So you got to understand. Here it comes, Tony. It's way over our pay grade. We could never comprehend.
No.
All right. What are Spoos doing?
They are down 57 at this moment. They're off of their lows by about
15,
20.
20.
18 handles or so.
Okay. All right.
Volatility back to 20. That's about 70 cents off of its highs. A little more like mid-range for the day.
Thank you. Top 15 symbols going through the system. First 40 minutes today. No broad-based indices or futures. Tom, for you, number 15, Netflix at a 73. For everybody else, Tesla at 100, NVIDIA at a 36. Apple at a 50, Meta at a 54, TLT at a 14, Microsoft at a 56, Google with an L at a 58, GLD at a 76, Amazon at a 57, AMD at a 62, MU at a 41, BABA at a 101, Coin at a 55, Boeing at a 107, and number 15 for Tom, Netflix at a 73, rounding out the next 10. SMCI at a 41, NEO at a 119, SLV at a 76, Goog, Noel at a 64, MSTR at a 42, TQQQ at a 46, Oxy at a 73, BITO at a 35, and Intel at a 107.
Nice.
Intel to 107 sounds really high.
That's your takeaway?
Yeah.
Intel down 64 cents, Sosnoff, to 22.80. Still well off of its lows, under 20. It is 105 and change. The man is correct. Does have earnings coming October 24th.
Is Nike's today, isn't it?
Tonight. Yes, you are correct. Nike has earnings today after the close.
I mean, this has to be like the tail end, right? I mean, what's left?
This is after Nike. It's over until you get to the middle of October when you get all the bigger players. Yeah, you're 100% correct.
The big boys.
So we take like a 2-3 week vacation on earnings, and then we're back in the chips.
Hey Tom, I have to give a shout out to the hotel that you're saying because your Wi-Fi, beautiful.
That's about the only thing Tom likes about the hotel.
No, there's some good things here.
Oh, you've revised your opinion.
There's some memories here that are worth holding on to.
I haven't been to that hotel in 20 years. Easy. Yeah.
The showers are beautiful.
If I remember correctly, it was barely enough room to get out of bed to get to the bathroom. It was tiny.
No. This hotel is like the biggest rooms in the city.
Then
I think you're thinking of the wrong thing. This hotel has huge rooms.
No, then I'm thinking of a different one. Or maybe I had a closet or something when I stayed there. They never.
Yeah,
maybe they
like
gave
the original,
you the Sosnoff room.
This was the original like Ian Schrager hotel. Yeah.
Do you go upstairs? The entries, you have to go upstairs? The escalator?
No.
Oh, different hotel. Okay.
Thanks,
Never mind.
guys. Appreciate it.
All right. Are you going to get good lunch today? I'm worried about you. You got to eat.
No. I have meetings all day. I'm not going to be able to get a good lunch.
So here's
but
Okay, I'm going to give you a pro move. I can only help you so many times. Order Russ and Daughters and have it sent to your last location. You bring it home.
No, I can't do it. I'm on the road. I have no location to order anything to. Can't get there. Can't do anything. I'm all booked the whole day. No, I'm not saying it like that. I really am all booked. I don't have any time.
Okay. Well, the next time there's 6 orders, I'll tell her that she doesn't have time for you. Don't get any more Russ and Daughters.
Wow.
Yeah, it's all right.
All right.
We'll leave it at that. Okay. Tony, have you, I asked this, but talk about Netflix.
Yeah.
The new show with Kristen Bell. It's funny.
Oh my God.
No, it's a good one, but I don't remember the name.
All right. You know what, Scott? I'm really sorry. I mean, I look into your eyes sometimes during this segment with the three of us for like a home. Like I look at it like I'm home when I look into your eyes.
This is gonna be bad.
You have become a housewife. Okay.
Really?
It's the worst show I've ever seen. I'm watching it with my wife, and she has to pay it forward for me to watch it with her.
Oh my God, I think it's hysterical.
Oh my God, it is so bad.
Oh my God,
it's so good.
Beth, it's hysterical, isn't it?
Coming from a suburban housewife, what does your husband think of it?
Oh, you know what? I can't even talk to you right now.
He wouldn't watch that with you, right?
No chance.
Does B watch that? Be honest.
No, he does not.
Okay.
I love it, Scott.
Thank you, Beth. I think it's hysterical. What show was the guy in? Like from the early 2000s. What show was he in?
Oh, he's in everything. She loves him, right? You love him, right?
The OC.
Yeah, the OC. That's what it was.
Oh my God, you watched that too?
No, I didn't. But I just read a review of the New York Times.
Oh, you should with the kind of taste you have.
Excuse me, the New York Times critic thought the show was great. Okay, but said the OC, whatever, and I'm like, didn't know what that was. I kind of miss TV in the 90s, like other than The Sopranos. Like, what else? I don't remember TV in the 90s.
Yeah, that was. I mean, your kids might know it, but that was
TV in the 90s, like Sex and the City.
Oh, look at Mr. Sex and the City over here.
Look at this guy.
Look at this guy. Haven't said one thing about a show ever, and the one that comes up, Sex and the City. Okay, who is your go-to? Come on.
I didn't really have a go-to.
Oh, come on, Samantha. Everybody knows
He's
that.
such a Samantha.
Such a Samantha.
Samantha.
Yeah, for sure, right, Beth?
I'm just saying.
But you are more the Terry Bradshaw of the group. I will say that for sure.
Carrie?
Yeah. Yeah,
whatever her name was. I don't know. I didn't watch
Terry Bradshaw, did you say?
Carrie, whatever.
Well,
more like Terry Bradshaw lately, the way he looks now. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with our own Carrie Bradshaw, Liz and Jenny. Peace. And Samantha.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
The beauty of Thinkorswim was that we were different.
From the name to the front-end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
On today's Trader Taste Test, Tom has a fever, and the only cure is the KFC Chizza. What? Let's go.
Let's see what we have here. Okay, I don't think it's elevated chicken parm, okay? I don't know.
What are your thoughts? Just visual presentation.
He's just going in with his hands.
It's pretty beautiful. Let's see. I'm gonna be totally objective.
Okay.
Impossible.
Okay, Jamal, you're black. We're eating fried chicken.
Yeah, all right. I know it's on there. I know it's on there.
It's warm.
No, I like it. It's hot. It's delicious.
It rivals the chicken parm in prison.
Out of 5 stars, what do you give it?
1. I'm going 4.2.
Wow.
I'm easily impressed, as Tom will tell you, though, but I think it's very good.
3.5 just because I like Kentucky Fried Chicken.
Do you want to be KFC's proud?
3.7. I gotta be real. 3.7.
Okay.
Because the chicken's good. I mean, the chicken's not bad. The sauce tastes like pizza sauce, like bad pizza sauce. I like it.
Out of 5, what do you give it?
3.5.
That's what you do. What?
He likes it. 3.5 stars. He doesn't like it a lot, is what he's trying to say. It's an elevated. It's an elevated. It's an elevated nothing. It's a chicken. It's actually pretty good.
It was a great show. It was very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Hello, everybody, and welcome to the Liz and Jenny Show. I'm Jenny. That beautiful blonde over there is Liz. Good morning, Liz. It is a crazy market today. After yesterday's rally at the end of the day, we've got today everything down.
It is a bonkers day. Booze down 60, right? I mean, close all watertight doors. Gold up, oil up, VIX up, everything else down.
It's so weird. Because yesterday's market, the end of the day, you know, I trade those 0DTs at the end of the day, and at the end of the day, 230, 245, they were expensive, and VIX options, short-term VIX options, were expensive, and it's almost like the VIX options seemed more expensive than usual. It's almost like it's knew something was coming.
No. It was end of quarter, end of month.
Well, as far as the options at the end of the day, end of quarter, end of month, we've heard we've heard this before. I called Liz right after, and I said we should have known this was coming. End of quarter, end of month. Why did we forget about this? Why did we forget about this?
So I'm writing it in permanent marker on my wall. End of quarter, end of month, buy 0 DTE calls at the end of the day. Because this has been 2 cycles where you watch in the very last minute, it just shoots up. End of quarter, end of month. I mean, there's no real science behind this. We've talked to TP, we've talked to Anton about this. End of quarter, end of month. That's what I think happened yesterday.
I'm not surprised about the big move today because do you remember on the trading floor, we were talking to someone and they said like the market's barely going to move until the end of the month, until the end of the quarter, until the end of the month, because there was some reason like a million boxes or I can't remember the
reason. For the record, my windows are open and they're testing the emergency alarm systems. Do not alarm. It is
10 a.m. on Tuesday.
It's just a test.
Do you remember what they said? Why the floor traders in the SPX pit at the SIBO said that we weren't going to see any movement until after September?
No, they said, because they had the 5750 box. There was a massive 5750 boxes on. So it's gonna pin 5750, which it did yesterday.
Where did it close? Where did it close yesterday? Well, let's go into the platform. Let's go on the platform so everyone can see. They claimed it was going to pin 5750. Go to yesterday's close, one day over. To the left, to the left, to the left.
I'm on it. Yeah, that's yesterday's close.
No, you're on today's.
Oh, sorry. Okay, there we go.
Close 5762.
I mean, it's pretty darn close.
Yeah, they said it was going to stay right around there until the end of the month.
Yeah.
Then all bets off.
Yeah, because those SPX traders know about all the international drama that's happening.
And you know what?
They've got a pulse on what's happening overseas and at the ports. No,
I'll tell you, being on the floor, I do feel like we get a little bit of insight.
Hindsight's always 20/20. You can hear what you want to hear though too. But end of quarter, end of month is going to be my new. That's going to be my new mantra. I'm going to say it every day to myself. End of quarter, end of month. End of quarter, end of month.
And I'm putting it on. But the weird thing is the next end of quarter, end of month is going to be December 31st, which will also be end of year. So maybe we ask for a study. What typically happens throughout the day and at the close, end of year?
You mean New Year's Eve?
Yeah, right. Last trading day. Not necessarily New Year's Eve, but last trading day of the year.
That's true. Last trading day of the year. No, we were only because we were talking about this here. I just wanted to go to this. I love it. This was 18 hours ago. I bought a call out of the money in XSP after listening to your show, and it was down most of the day, and it worked out great. So it was funny because we were talking yesterday about how one of the market manager studies that our research team has done, saying that the market usually bottoms at 10:15, and I love this because this is totally tradable for you and I, Jenny. If it bottoms at 10:15, we're alive, and then it usually goes up from there. And I've got the study, but this worked out. This is what we were talking about. If they bought it at 10:15, he bought it at 573, and it was skyrocketed up at the end of the day.
At the end of the day, we saw a crazy movement at the end of the day. Now we bought an SPX call spread at 10:15, put in a GTC to take $50 out of it, which I think like on a day-to-day, I don't know that I'm going to just try to get long and hope we rally by the end of the day, because I don't know that we're going to rally with the VIX up so much and the market down. I'm not playing for a turnaround. But if you wanted to do something and put a GTC to take a small profit, I'm okay with that because we might get some two-way movement, but I'm not playing for a big reversal by the end of the day or a big jump like we saw yesterday.
Oh, no. That's end of quarter, end of month. Today's day one. We're not playing for the big one. But I did kind of like, and I'm going to go to the study right now. We might as well, right? Because I know we have a little bit of extra time. So I pulled this up. This is the best time of the day to buy and sell. And I just went to on demand. It's on demand market measures, and I found it. So this is the takeaways. But I also want to show you. Now, it's a big, long study, and we don't need to bore everybody with this. But here's where I kind of vetted down here which ones we want to look at. And this is my one big takeaway from here, which I loved. It's 10:15 Eastern Standard Time is when the VIX peaks and the market bottoms.
Oh, so that's not during our show, Liz.
10:15.
No, 10:15 Eastern Time. We're Central Time.
We're Central Time. So it's 11.
Forget it. Forget about it.
10:15.
10:15 trade.
Here, I think they might. have had it wrong because he says 10:15 a.m. Why would they be giving us Eastern Standard Time? Now, this is somebody who may not be in the country who wrote this one.
Well, I know, but in the previous slide, it said at 10:15 Eastern Time.
I know, but you know how sometimes slides might have errors on them? Maybe it was an error because it was 10:15.
You think it is? We'll talk to him. We know who it is. We know who made the study. We'll talk to him.
Because why would they give Tom and Tony a study that was Eastern Standard Time instead of just changing it? Well,
I don't know.
But here's what I found interesting. Generally around 10:15 a.m. No, I didn't see this. I didn't see this study. I went back and looked for it. I heard someone when I was it was when I was doing the show with TP. So because you were driving and I was doing the show with TP, I listened to the callers because usually you and I are talking. We miss the funniest point of the day when Scott's in there, usually because you and I are talking. But somebody had called in and said that this was a great study, that the market usually bottoms at 10:15. And I like it because this is tradable for us. But look at this, except in September, because it's 10:55 a.m. in September. That's why that was hysterical.
But if you look at even the line above, it is EST. He's got Eastern Standard Time for this study.
Yeah, that is interesting, but I don't know why they would do that.
But 10:55 a.m., that's right before the start of our show. I mean, the nice thing is it worked out yesterday. Are we going to do this trade every day? Well, we've got to get to the bottom of this. We'll go right to the source and check his research and check the correct times.
Yes, I agree. But nonetheless, it is pretty interesting. I thought this was a good study saying what is the best time of the day to trade. And in my mind, I'm just going to go with 10:15 because it's during our trade. And then check out this because I love this. This is where Mikey comes in. Some possible names for the new trade ladies. Look at these.
And I don't even, Liz and Jenny paint the bottom. Liz and Jenny catch the knife. Liz and Jenny automatic teller machine. Liz and Jenny show me the money. Well, Mikey, I'm glad it worked out for you yesterday. Look, he bought it for $260, sold it for $250. Nice.
Yeah.
He had almost full profit.
No, he bought it for $260, sold it for $450.
Yeah, right. Almost full profit.
Yeah. That's pretty good. Pretty good.
So on down day, we've got the start of October. This Wednesday is going to be 2 weeks from when we placed that SPX trade. Do you remember the study we had about when interest rates are cut, the market rallies initially, but a month later, it's lower. Now we have the first sign of a down move, the first sign of the market turning around. When we placed this trade, SPX was 56.25. Now it's 56.93. Maybe by tomorrow, when we're sitting in our chairs at the SIBO, maybe this will be almost back to where it was when we put this trade on.
When you take a look at this, though, take a look at this. This looks like nothing.
Oh, I know. But if you go, we've only had this trade on. Wednesday will be 2 weeks, right? Wednesday will be 2 weeks. Yes.
Yeah. Tomorrow will be 14 days. Correct.
So what we're hoping for is by the end of the month, that SPX is lower than we are right now.
Lower than it was when we put the interest rates on, because this is a delta buster, meaning that we are long a put spread and we sold a call spread to pay for it. So we don't make any money. Now we don't lose any money in between this range, but we don't make any money unless it's beneath 56.25.
Right. So we'll see. That was another study about what happens when interest rates are lowered. Initially, the market pops, but then around a month later, it falls. And 6 months later, it's typically down, what was it, 3%, 5%?
Yeah, it was something crazy. And that was an Anton study, right?
Yes.
Yeah.
So go Spoo Dogs, go. I hope that, I'm kind of rooting for a fall today just because it's really easy to sell puts when products are at their bottom. It's very hard to sell puts when products are at their top.
And I do kind of like looking at this. I mean, VIX, this is a big pop for VIX, don't you think? Let me look at the.
Yes.
Let me look at the VIX futures.
Yeah, to go from like last week's was in the 15 handle, and now we're 20.
Yeah. Mm-hmm. But we've been here before. That was the beginning of the month too, right?
Well, so you don't see this one at 15. It was the like the one that expired. Remember, we were looking at our puts and we're like, geez, our puts. We're like the spot VIX was.
Oh, you're looking at VIX.
Something. Yeah.
Yeah, you're looking at VIX because that's got puts. And we still have the puts. Hold on.
Right, which those aren't. They're going to be 10 cents, 2 cents.
Yeah, but they don't. We didn't spend that much.
No.
Yeah.
Not at all.
So we still have those, which is interesting. Now, you kind of vetted and looked through all this stuff. There's not much to do. Chinese stocks can't stop, won't stop. Pinduoduo, JD. Now, what was crazy is, I don't know, did you see Tim Knight last night or yesterday?
No, I didn't.
He was very bearish, Pinduoduo.
I hear a lot of people are, easing up on their Chinese stocks, thinking, we've had quite a run. Let's wait for a pullback. I think it's a common sentiment.
Yeah, he didn't know what Pinduoduo was, but he said he looked at the chart. He didn't know what Pinduoduo was, but looking at the chart, he said that he was going to be very bearish in that and buy some puts in it, which I thought was interesting. Like I said, you vetted this and said there was a couple things that we should be looking at.
I went through our entire portfolio here. The only thing we needed that we didn't do for roll it, hold it, close it is Walgreens Boots Alliance. We have a short put in Walgreens Boots Alliance. It is deep in the money. Deep in the money. Okay. So what do we are going to keep the dream alive in this. There's zero. Now, Jenny, we're going to buy this back. We're going to get back $170. Yeah, just buy that back and we'll come up with a new trade. I don't know if rolling is the, let's just buy it back and come up with a new trade. Because I think
I would sell the 10. I would sell the 10 because it's got,
sure.
You're paying money for it. It's a debit outlay, but you're getting extrinsic value. You've got a 10 synthetic covered call. Anytime you have an in the money put, it's a synthetic covered call. I kind of looked here saying, okay, well, I'm getting back $100. If I wanted no extrinsic value, I could just buy the 5. But I'd rather get some extrinsic value here.
See, for my Walgreens Boots, I'm further out in time. I'm just like long calls in Jan, and then I'm selling 7.5 puts against it. So long calls in Jan, selling 7.5 puts against it in Nove. That's my Walgreens.
Here. Hold on, let me do these together so we can see this. I just want.
But honestly, you're better off at that price just buying Walgreens Boots because it's only going to use $400. If you're going to pay $400 for an option, just pay.
That's what I was going to say. When you're out, and especially when you go out to Jan, because why would you buy Jan? Why would you pay?
But I think what I would do if I were starting, I would buy the 7.5 calls in Jan. Let's say I bought 1 7.5 call in Jan for
a lot of extrinsic value.
And then I'm going to sell two. Then I'm going to sell 2 Nove 7.5 puts. I'm going to sell enough Nove puts to cover the extrinsic value on my Jan.
So then if you go to Nove and you're going to sell.
Yeah. So then extrinsic value is washed, and I've got my synthetic shares of stock in Jan.
Yeah, you did cover your extrinsic value.
Mm-hmm.
Yeah. Honestly, this is something I don't know that we want to quadruple down. We've seen so many things go to zero, but we're going to keep this position. So I'm going to close this. Jenny, I'm just going to roll it to a put. We're going to get some extrinsic value. I don't actually mind doing that.
Yeah, I don't mind that either. Like 1 7.5 put, 1 10 put.
Yeah, let's just ship both because then we're in the money. We've got extrinsic value. We're not adding too much capital.
Yeah. It's interesting.
Didn't you say Carvana? Wasn't it Carvana you said too? Something like that.
Okay. So Carvana, we have a bearish diagonal, but it's almost like a zebra. When we're less than 10 days to go with our long, that's when I think you need to take action. So our long only has 10 days. I think we just need to, if we want to keep a bearish position going in Carvana, we need to just move this out in time with a new diagonal.
Oh, yeah, I agree with it. Hold on. Somebody said, this is from JC, tell Liz and Jenny it's 10:15 Central Time.
Oh, even though it says Eastern Time in the study.
Yes, it's when the European markets close, which we know.
Which we know is 10:15 when our show is on.
Yeah, I'm saying sometimes people make mistakes in the slides.
Well, thank you very much. And that makes more sense. Because we always see action right around that time.
Yes. Okay.
And it's 10 right now. It is 10:14.
10:14. Well, and SPOOs are down 80, so this is when it's going to be the lowest. And we're going to put in a very small. We're gonna keep the dream alive, Jenny. Let's cue this up while we're doing this because I kind of like having.
Do a small fry. Do a small fry instead of SPX.
Oh, I was just going to try to get $50 out of it. Like you can just kind of go buy one, sell one. We're spending, hold on, sell that. $255, and we're going to try to get out of it for like $320. I just want a little pop.
Yeah, right. And we just we can't get greedy. you'd have to take a very small amount out of it.
Just like
because
we did
I don't
yesterday.
think that we're going to rally. I just think we might bounce around a little bit.
Oh, I don't think we're going to rally either, but it's down 80. Maybe we're going to go to down 70. That's all I'm saying. So we'll pop this in at exactly 10:15. You keep an eye on the time. I wish we had a clock in the corner.
9, 8. Oh, let me get the. Oh, I do this. You know how many times, and I'm sure you do too, and you have in the past, when we use the world clock. When you use the world or the clock with the seconds, let me see. Where am I? Oh my gosh. Go to my world clock and it's all different places.
It's because you're all over the place, Jenny Andrews.
When you use it with the seconds, because when we used to have to book fast passes at Disney, it would be like right at 7 a.m. on the dot. I would be watching the clock and it'd be like, go now.
Yes. I know what you're saying.
I don't know.
Okay,
I'm not getting
I'm shipping it because I see it. It's at 10:15. So I'm going this way, and then I'm going to put a GTC in. We bought it for $265. I'm gonna sell it for
quick.
I'm gonna say
just don't even just close position. Sell it for
$315. That'd be $50.
Yeah.
Okay.
And with this market, I don't know. I feel like we could be down 150 by the end of the day.
We could be. But by the end of the day, we might be down 150. But all we're looking for is a tiny little pop right now. You know what I mean? By the end of the day, we could be down 150. Okay. So that is our fun little exercise that we do. Let's go back into Twitter. I love this. I love it. Okay. And then Frank Walsh comes in. Monday's option value of 45 million contracts was 4% below recent levels. Wow. Okay. And a month end of quarter, low volume. And then let's see what we've got on deck today.
Oh, today we had the jolts at 10, which was 9. So jolts and what else? I don't know. I mean, there's a lot of stuff going on. We'll see how the market shakes out by the end of the day.
I wonder if there's anything tomorrow. Oh, yes. Oh, wait, hold on. We'll go back to that. But Nike has earnings, and I want to take a look at that. So let's go to Nike real quick.
Nike and ConAgra.
I mean, I don't care that much about ConAgra.
I couldn't even tell you how much ConAgra was. We never traded.
Well, we will look at it now. We're going to play a guessing game. You're going to guess before I go to it.
Okay.
But take a look. This was Nike's last earnings, and it's almost come back.
Yeah.
So it fell from 93, and now it's trading 88. But it's got a 72 rank. It's hard, Jenny, to sell puts in a product when the SPOs are down 80.
When SPOs are down 80, there's a lot going on. It's hard to make earnings trades.
It's very hard to make earnings trades.
Yeah, right. And to your point, when the SPOs are down 80, unless you wanted to do a downside ratio spread, do like the 83, 80, or 80. You'd have to make it tight. It'd have to be, and we'd have to leave it.
You could do, that's 7 cents.
You'd have to go.
Well, if you want to take in 50 cents, you're getting it down to 81. No, honestly, I like Nike. Maybe we'll do an after earnings trade at Nike. You know what though, Jenny? So, and I'm not trying to say I'm bullish Nike because I don't necessarily think that. Sometimes I think whatever direction the market is going, the earnings are going to wind up going too. But I did kind of look at this. It's very cheap. It was crazy cheap. You can get it's $2.36, and you're $6 wide.
That's not
bad. I thought that was pretty inexpensive. And if you wanted to, you could probably do a crab.
Right. That's not bad. It's an inexpensive way to do a trade. But to your point, with the market down, I
don't want to do this because the market is down. But this isn't. When I saw this price point, I was like, that's pretty cheap for a bullish play that you could make a decent chunk of change, because you can make from what do we got here? You can make from 89 to 95, which is $6 minus this. That's a lot of money.
Right. So that's not bad. That is not bad.
But I don't want to do it.
When we're in such a bull market and the market's rallying. It's almost like, doesn't matter what earnings are, everything's going up. And same thing to the opposite. When we're down in a downward trend, it's like, doesn't matter what they say, everything's leaning more to the downside. I don't know if this is the start of something, but what in my mind, if you go to SPY, and I think we talked about this last week with Anton, the move from January till now. So the move from January I mean, it's right there. Yeah. So you've got from 469, so 100 points. So 100 points. You've got like a huge percentage up move on the year. And if you go back in history and you look at the S&P 500, the move from, the yearly move, up this percent, up that percent, up this percent, up that percent, I don't believe that we're going to have end of the year up 20 something percent, up like some crazy percent. You don't see that historically on the charts.
Yeah, I would be very curious. I would like some historic measures on that. Look, let's see it. Let's check our SPX.
It's up $20.
So it's bouncing around. We could get hit pretty quickly.
Or no, it's up $30.
Yeah, that's what I'm saying. You can see the market right here.
Yeah.
We're 15 cents away from our GTC. It's bouncing around. So all we need is it down 70 instead of down 80, and we'll be out of that for $50.
Yeah.
Okay. So I wanted to go to ConAgra too. CAG, right? CAG. Yep. There we go.
Oh, you were gonna make me guess, and I was gonna.
I was. I'm sorry.
I was gonna be way off.
What were you gonna say?
Like $200 or something.
That's pretty funny. Okay. 71 rank, $40 stock. Let's see what's looked at. I don't even know what ConAgra does. Yeah, I mean, with earnings, I think I'm just going to put a pin in these.
No, but let's adjust our crowd. We talked about crowd. Let's make an adjustment to it.
Wait, I thought you said it was Carvana we were adjusting. Is it both of them?
Oh, yeah. Carvana. Crowd is, yesterday we had an iron condor. We collected over $3 for that iron condor. You took off the put spread. So we have over a $3 collection. It's moving in the right direction. We need, $4 more for this to be out of the money. It's not that far out of the realm of possibility.
No, that's fine. Now, Jenny, would you ever want to, and I don't want to do this, I'm just making conversation actually. This is in the middle. You can take this and roll it out in time.
You could.
You could, and you're gonna. This is extending your duration for even, but I don't necessarily need to.
You could, and then you could add on a put spread. So basically, what you'd be doing is moving your $10 wide spread out and collecting more because we'd collect something from the downside put spread. So you can.
Yeah, but then your put spread's gonna be so tight.
Well, not necessarily. You can get $1 for the 232.20. Then basically we have remove it out in a $10 white iron condor, and we'll have collected over $4. Because true. If you pop out the side, we collected over $3 on this. You'll have to go to activity.
Are we really only down 166 on this? Yes.
Yeah.
Yeah.
So if you go to our activity, and we took in 366, bought that for 10 cents. So let's say 350 with the commissions. If we move it all out and then we have a new iron condor and we take in $1, then we've got like 466. It's almost like a chicken where we have almost half the width of the spread. We don't have to.
The only reason I don't want to is if you get a second down day, we're out of this. And I don't necessarily know that I want to be bearish crowd for the long haul. Oh, we're out.
$50. $50.
And it's exactly what we said. We were down, 80. We're only down 70. I don't know if it's going to stay this. We don't know if it's going to rise throughout the rest of the day, but that's pretty good.
Honestly, so we need an 8 point
quick
movement.
$50.
It was exactly down 78 when we put it on. So 8 points higher and we're out.
Yeah. Nice.
Yeah.
I like it. I like it a lot.
Yeah, that was good. We really don't have anything else to do, but we still have to move Carvana out in time.
Okay, so to your point, we've got a diagonal that's very, very short term. We've got the 60-day, the 3-day, 10-day. We're just going to reestablish, right?
I think so.
Now, Jenny, here, this is 75 cents. You could, and I'm not advocating any of this. Buy this back. You still have, when it's a diagonal, you can roll into that next cycle.
You can, sure.
Before we reestablish, we might as well, right? That's a quick theta decay because you're going to get an extra $1.34. That's a good theta decay for 10 days.
Well, not really, because ours will decay more. Theta's greatest at the money. We'll lose a lot more in theta from our 170 than we will lose from the 160.
No, for a chipping away perspective, it's not bad. Like I thought we weren't going to get that much for it. Then we're still bearish. Then we've got a bearish position on. But would you put that position on? Probably not.
No.
So if we were going to reestablish it, we have to do it very near term, because I think that's why we were so 10-day, 17-day, because it was so expensive. You'd have to go 10-day. And we're only putting another $1 into it.
Yeah, that's not bad. That's not bad. We're only putting $1 into it.
Yeah, we're only putting it. I'll just send it out in time because it's only got 3 days left. That'll give us. That'll
give us another week or so for Carvana.
Yeah, it'll give us a week.
Down.
Okay, good. Okay.
Until you're working that, and then our new one will be, how wide is the new one? It doesn't matter. It's 72.62. $10 wide. $10 wide, just like our current one is. $10 wide.
It doesn't matter. We're just putting an extra $1 into it. Okay, then let's take a look. I want to go back to Twitter because I saw some good stuff coming in. Here we go. We've got the earnings. I don't know what this is.
Hibachi. Is it White Shirt Tuesday? This is a new thing. We do look like we match.
I'm in a white sweatsuit, by the way, because it's like athletic. It's like Athletic Tuesday for Liz. Hair in a bun, going back out in the rain, walking the dog immediately after this.
It is your Lululemon jacket. Is that correct?
No. After I was inspired, after you and I brought the girls to Lululemon, this is Amazon dupe. This is like that sweatshirt. Remember that Lily got, the green one?
Oh,
it's Amazon. It's an Amazon dupe. My white Lululemon's like a tight one. This is a loose Amazon dupe.
How do you find it? What do you search? What do you search when you're trying to find the Amazon dupe of the Lulu sweatshirt?
Amazon dupe. And they give you all the Amazon dupes in like Lulu dupe.
You just Google search that, or you search it on Amazon?
In Amazon, Lululemon dupe, and they'll give you a bunch of stuff that they dupe.
That looks good, Liz. Looks good.
Thank you. Okay. Now, Frank the Great comes in Walgreens, if bullish, the Jan 5 12.5 call vertical can be bought under parity. Well, I don't know if it's under parity. Let's look.
Well,
do you know what I mean? So Jan 5/12. I mean, I don't know that it's under parity, is it? No.
Well, so let's talk about this. 5, 6, 7, 8, 48. Yes, because we're trading 871. We're trading 871 and you're paying 348. So I see what he's saying with under parity, but I feel like these options aren't ever wrong. I don't think this is like, and maybe Frank, you caught some amazing situation here, but and I don't think so. There's got to either be like it has to do with dividends or interest rates or some reason why it's not.
And extrinsic value, because look at this. You're buying 15 cents extrinsic value and you're selling 40 cents extrinsic value.
Right. So that's the difference right there.
Yeah. I don't know that there's a gaming in the system. However, I do like it. I haven't heard the word parity in a long time. You're going to get a gold star. Whoever posted that on Twitter, you get a gold star for looking at parity and doing the math. Good job.
Okay, so I will say he is alive. Anton, I had asked him how Cabana Bay was, and did he make it? Was the trip to the water park halted by the hurricane? And he wrote, Cabana Bay was great. They really liked it. They even got a cabana.
Oh, good. Now, so my question to you is, do we have the study?
If he's alive and well, posting about how wonderful Cabana Bay is, he must be working hard on that study he's he promised us the study. It's coming. I guarantee it. Perfect. I have faith in Anton.
I do too. In Anton, we trust. Okay. So that is good. Speaking of, he was at a Disney World near Disney. Let's see what Disney is doing.
And I'll tell you, you know how I said when I was there, the parks were empty?
Yeah.
Well, now I've been trying to get to book a room for these 3 nights coming up. I can't get a room to save my life. Everything is sold out. That Veterans Day weekend, sold out everywhere. Can't get anything.
Really?
Mm-hmm.
Wow.
Yeah. So I guess they're making a quick comeback, quick turnaround.
Yeah. Or there's a conference. Sometimes that they load those up in November with conferences too. They do.
So I think this is the only weekend where it's the end of food and wine and the beginning of the Christmas stuff. So it's like you get you get both. You get food and wine and Christmas parties and Christmas activities. So you get both in one weekend. And I think it's the only weekend that has that.
Oh, gotcha.
And it's Veterans Day weekend, which might be a holiday for some.
Yes.
We're not up on Veterans Day, are we?
You do not get Veterans Day. No, we do not get Veterans Day. But so Disney's down. I mean, that's a big move for Disney.
It's a big hit. It's a big hit today.
It is a big hit. You would think Anton could be propping us up, although it was a Universal resort that he went to. Volcano Bay is a Universal. Yeah, Volcano Bay is a Universal park, isn't it? Yeah, yeah.
We have a Disney position, and what is it? A diagonal? We have a diagonal, which maybe we want to do something with our. No, I don't think we need to do anything to it.
Yeah, this is right in the middle. We keep this. I mean, no, we could kind of show the problem here. Let me just break this down. Oh, there is dollar wide strikes because it used to be $5 wide strikes. Do we have dollars here? No, you have $5 wides here. That's part of the problem with the diagonals with $5 wide strikes is you have the 17-day, which is fine because usually you can reestablish the diagonal and take your profit off the table, but you can't with the limited strikes.
$5 wide strikes. But you know what we can do? So you were talking about recently managing a losing zebra and how the extrinsic value works in your favor. Intel is probably right there. I believe 22.5s are long. So 22.5s are long and we're trading 22.69. So this is a losing zebra. And I just want to show the viewers what you were talking about.
Okay, so and we're not going to try to say it's winning. Like I just want
No, it's a losing zebra. I said managing a losing zebra.
But active management in zebras is helpful in my opinion. If you're going to trade a zebra, I think you need to kind of know what you're doing with it, and active management is helpful. And I'm glad you brought that up because it is trading. When your longs become your at the monies, they have a lot of extrinsic value. Right? So what you would do is you close it, the whole thing.
So let's add up and just look at the extrinsic value there. So you're long 22.5s, which has 85 cents twice. So let's say, $1.70, $1.70 in extrinsic value, and the one you have to buy back is only 60 cents. So you have about $1.10 in extrinsic value total.
Right. And then you would be selling, you just reestablish with the same rules. So you're selling the 50 delta, buying 270 deltas. And what I'm doing here is I'm rewashing my extrinsic value. So I've got 84 cents in extrinsic value here, and I would be buying the 70 delta with 43 cents in extrinsic value.
So you're not giving up any extrinsic value. When you place the trade, you didn't give up any extrinsic value. Now the one you're buying, you're not giving up any extrinsic value, but the one you're closing, you're getting $1. So this is how you can use the zebra to your advantage to reduce basis. You're getting $1 in extrinsic value.
Yes. Now we are outlaying capital. And I know that, wait, hold on. I know that is very, very, very confusing when you look at things like that. We're talking when you and I are talking right now, this is not for your basics, right? So we know we're outlaying a debit. We are paying for this. We are reestablishing the zebra, but we're selling out the extrinsic value of the longs.
Right. Selling out the extrinsic value of the longs. So net taking in $1 in extrinsic value on the zebra, which when it starts, you don't have any extrinsic value in it. You're not giving anything up. This is how it can help you to adjust it. This is for members of the Over Management Club, but it makes sense.
Yeah, it does make sense. It makes sense. I mean, this takes a second to sink in, but it makes sense. And that's why when you do have a zebra, it does require, I do believe it requires overmanagement. Overmanagement meaning like, hey, but don't you think you're a trader, right? So I'm going to manage it on the way up. We're going to manage it on the way down. When your longs become the at the money, you reestablish. I think that was a good catch, Jenny.
I mean, it's just an example of how to do it. Now you're putting more money into it. So if someone's thinking like, I don't want to put any more money into it, then you wouldn't do it. You would just leave what you have. If when you place a zebra, your limit is what you pay for it, you can leave it. You can leave it. You don't have to reestablish it. But if you want to, use that extrinsic value. So if Intel pops up, you pick right back up from where it is right now. Otherwise, when the zebra becomes out of the money, it doesn't pick right back up until the stock gets back into the middle of your zebra.
Well, and that's what I was going to say is we had the 24, our long was the 23 and our short was the 24, right? Or the 24 and a half. I don't remember which one it was. Either way. But so right now, by reestablishing the zebra, if Intel pops up 74 cents, which is down right now, we're going to instantly make that. It wouldn't have been that way before.
Right. It wouldn't have been that way with the others if we left the other one.
If you leave it, right. If you leave it.
Look, it's only down 56.
I know. And exactly at 10:15 was the bottom of the market.
I still think we're going to be down. I don't expect a rally today. I think we'll be down at the end of the day. I think maybe our big.
I don't think it's going to. I don't think we're going to be green.
I'm going out to have lunch and I'm coming back to trade in the afternoon. And I have some shorts that are expiring today and I'm leaving them till I come back at 2:00.
I don't think we're going to be green. I will tell you that. I kind of agree with you. But it is interesting that, and as of right now, the study is working out perfectly because the bottom was at 10.15. Right now, we're only down, 56. We were 30 points lower.
I'm calling a lower at the end of the day.
Lower than this or lower than what? You have to clarify those words.
Lower than where I don't think that we saw the low at 10.15 today.
So you think it's going to be lower than down 86?
Mm-hmm.
Okay. You think it's going to be lower than down 86? I think we're going to close down 45.
Okay. I think we're going to close down like 90.
Okay. Well, these are all premonitions and really have no basis in any real life scenarios, but they're fun to do. Okay, kind of taking a look at everything else. We already went through our SPX position. You know what, Jenny? In honor of Tom's toast story.
Toast is just a calendar.
Do you ever go through? So on down days like this, sometimes I'll go through and open up, and I know you did it today.
We have nothing to do. Trust
and
me.
I will look at like those low, and sometimes with zebras, I'll even buy back my short calls that are sold against the longs.
You know, we have more bearish trades, honestly. I believe XLF, like if you go to XLU, XLF, we just have long options that were bearish. Like we've got a long put in XLF. We need more.
I'm going to flip this over so people can see it. Hold on.
We have a long put in XLU, long put in XLF. They're just right.
We need to reestablish these. We can do diagonals with these, but these were clearly, so if we're long this put, I'm going to just go back and let's continue our bearish position in these. I don't mind, but let's reestablish. So
well, see what we had, see what we started with, because if we just bought, so XLU 77.79.
What?
Zebra. That was a zebra. That was a zebra.
And how did we get locked with?
And then
how did we get locked with one long put? How did we turn a zebra into one long put?
Because it was we turned it into, it was a losing zebra or running out of time, and all we did was buy one in the money put because there was like zero extrinsic value. So we have one long put that's supposed to be short stock in XLU. What you could do, similar to the way you just managed that Intel position, is now it's at the money, sell out that extrinsic value and reestablish with a new bearish position. This was a bearish position that we had in XLU.
I was thinking, let's just do a diagonal in here. And I'm going, this is like the long game, because I'm going to go to the 45-day, sell one, and then I'm going to go to December and buy one. So what do we have here? Yeah, so I'm establishing it for zero credit, and I've got the 78.81, so we can make $3. Yeah.
And that will, like, it, for us to make $3 on this, this is you've got to, you know,
let's go nearer.
It's a long game of trying to make $3.
This is too long. Let's go here. I'm going to sell that long out. I'm going to sell the 79.5. Sure. We're going to go 17-day, 45-day.
Yeah, that's better. So then our short is going to be 81.79.5.
And it stinks.
I know. That's why we just bought one in the money put. There was nothing good. You can't do a diagonal here. You can't make them wide enough. I think we've looked through this before. That's why it was either like a put zebra or we could put in a November zebra.
Let's take a look at the November zebra. I don't like this position. I don't like just leaving it, although it is bearish. Okay. So we're going to close this. And then if we're going to look at a November zebra, this is going to be expensive though. I don't think that's
that expensive.
So 50 delta. I'm trying to make it as cheap as I can. 70 delta.
Well, and you could buy the 84 since we're getting some extrinsic value from the one we're selling. It's not that bad.
So this is an additional $3. That's not that bad.
No, it's not bad. And we're getting money back from that 82 that we're selling in the 17-day. Then we have 45 days for that.
Still, it is still a defined risk spread. I'm going to ship this. Let's do the same thing with XLF.
It acts like 100 shares of short stock. Open up the chart in XLU. Has XLU done nothing but gone up?
Yep. That tracks. We put a bearish position in. I think it's the same thing with XLF, right? So let's take a look at XLF. We've got something that's worth, $1.87. Here's the chart. this hasn't gone straight up. This has at least had some.
But
some
at least, we could leave this. There's probably no extrinsic value in that. No,
there's no extrinsic value in this one. This
it.
one is different. When we opened up XLU and it was the at the monies, that's all extrinsic value. Do you know what I mean? We had to get rid of that one. So financials we'll just leave.
Can we take a look at TLT? Because I want to see how that is moving today. Because
bonds just faded is what the TLT's up.
Okay. So, I watch these short-term options, these weeklies. If you go to the trade page, TLT has even dailies. They have, if you go to just the trade page. So the October 2nd options, the 1-day options, the 98 calls yesterday, I was looking at the end of the day, the 98 calls yesterday were about 30 cents.
Oh, were they really?
Mm-hmm. Mm-hmm. Yeah. It didn't. So the move in TLT is this 86-cent move in TLT is, more than what I guess it was like. Let's say it was 30 cents for if you bought the straddle, the 98 straddle was 80 cents. We're up 87 cents, but we still have a day to go. But those TLT options, the short-term ones, trade very cheap.
They do.
If someone wants to play like a short-term move, if they think they know something.
Well, and I'm not saying, but all the nearer term, that's what's so different about now having all these zero DTEs. It changes the game because it is cheap to make a play, right? In anything, it's way cheaper to make a play than just having the 45-day options or the 17-day options. Anything you do, it's going to be a lot cheaper if you go nearer term.
Oh, yeah. I love all these short-term options because if you want to make a directional play, I mean, some of them are expensive and you're just kind of in too much theta. But some products, they're not expensive. And you can make a directional play if you think there might be a move.
Yeah, right. For sure. For sure.
And especially Thursday. Thursday afternoon is my most fun, busy day because every single one of them has a 1 day because every single one of them has a Friday expiration.
It's true. Yes. It's true.
So Thursdays at the end of the day, I am usually taking directional, positions in a handful of things using the 1 days.
Yeah. I mean, most things have. Oh, you know what I did?
No, but like everything, like every product has a 1 day. And you could go to anything like Nvidia, Apple, Snow, whatever. Everyone has a 1 day.
Apple, I got to take a look at Apple because I've heard it was down a ton. Apple's down $7. That's a big move in Apple. Although it doesn't look like it.
And so we've got the Russell down 29, SPOOs down 48. I still have that pair on. It was not good yesterday when the SPOOs rallied at the end of the day.
So you've got the Russell. What's it doing today? Here's your Russell.
Russell down 1.3% and the SPOOs are only down 0.8. I know it's not good.
It's not good.
Maybe we want to put it on if we have enough buying power. I was losing it yesterday, losing it today.
So we've got it pulled up. It's 2 M2K that we're going to be long, short, 1 MES. Now, it's a lot of buying power, but you could put it on overnight. Like we can say whatever happens tomorrow.
I mean, I guess you could never – it's hard to see that chart and feel like it's moving. But I'll tell you what – when we were going to put it on, I put it on, and I have not been able to get out yet for enough of a win. And I'll tell you how much I'm down so you could see.
You were almost yesterday. Almost yesterday, you almost got out of it, right? Look, SPOOs are only down 47.50.
Oh, so since I put this trade on, mine's down $210.
Oh, that's not bad.
No, it's not bad, but I'm just saying if you wanted to put it on, you're in a $210 better position than I'm in.
So the hard part about this is it's $3,200, which is fine. And I know we have the capital to pull it off because we have $15,000 in buying power right now. But we also have what's your assumption tomorrow. So if we put this on, we got to get out of it pretty quickly.
We'd have to get out quick.
Yeah. I mean, and that's famous last words. That means we're
This is one that could move by the end of the day. This is one of those like it has swings every day.
Yes, it does have swings every day. So that is something. Now, the other thing too, Jenny, and I'm sure there's a way, and people are much smarter than us, and maybe they're going to tell us. I don't know how to put a GTC in for this. Do you?
No. I'm sure there's a way, but I don't know. I've never done it.
Yeah. Do you know what I'm saying? So I know you kind of alluded to that yesterday. And once again, we're always learning. We're always forever learning and growing, right? With this, but you were in there and during the show, you're like, oh, I was going to wait till after the show to get out of it. But if you would have had some type of order in, you probably would have gotten out of it.
Maybe it would have gotten out of it.
So that's kind of interesting too. So I don't know. I mean, we could ship this. Let's ship this and close it in 15 minutes.
Let's like see what it is tomorrow. Maybe even by the end of the day. If ours is winning by the end of the day, we can jump into the platform and get out of it.
I am working
because it's a bigger position. Using over $3,000.
I'm working it.
Where is it?
It's right here.
Oh, okay. They're not next to each other.
No, they are not next to each other.
Mine are next to each other because I don't have M6B and MCL.
Would you want to? Let's take off our M6B. We sold it. We made $50. Let's close it.
And that all came today. And so thank you. That was from one of our viewers on Twitter.
Yeah, let's close this one. I'm gonna like that.
Sure.
Okay, hold on. I just got to see the tick size because I'm so.
I mean, this is the micro Great Britain pound. And
okay.
I'm sure each tick is not that big.
I don't think it is. I was just playing, kind of using it. So I just want to make sure.
Oh, there, you're out. Oh, no, we're in the M2K.
Yeah, we're in the M2K. Okay, we're out of that too. Good. Okay, so took our quick $50. We're in the MES M2K.
And just make sure we have it in right. 2x1, long 2 M2K, short 1 MES.
Yes. So we're in that. We'll keep an eye on that tomorrow, or by the end of the day. We'll see how.
Or in 15 minutes. Like who knows? Who knows how things will change.
Yeah, for sure. Okay, I'm gonna see if we have anything in Twitter as well. Oh, and then somebody wanted us to take a look at VLO.
Okay. All right, Punished Pixels. Good morning, ladies. Any idea when the options backtesting tool will be back available? They've been working on it. And will the new and improved version include futures options for backtesting? Okay, I was texting back and forth with Dr. Data about this week. It should be coming anytime because I think people were using it. I feel like maybe it is. Is it out? Let me text him. Let me text him and see if we can get a real-time answer. Because I know people were using it because they were making changes this week.
Yeah, but I also think it was in beta testing for people to see if they like the changes. So she'll get to the bottom of this. Hopefully somebody can let us know what's happening. And then Liz and Jenny forever, love it. Love the little baby picture. Good morning, ladies. Got back from vacation yesterday. Couldn't tweet because we never got up that early. Good for you. I'm glad you didn't get up that early. Liz and Jenny, you go girls on that 0 DTE trading. It's great. Like I do love our 10-15 time. It's fun. It's the Liz and Jenny trade. Personally expecting a 5% drop to 50 DMA on SPY and QQQ. Do you ever add 50 DMA to your RSI and RSI to your graph? Go gold, go GLD. So do you ever add this? I don't even know what this is. What he's asking. Do you ever add 50 DMA and RSI to your graph?
Moving averages and RSI? No, but you can. If people want to use a chart, if people want to use tools, sure, go ahead.
So yeah,
50-day moving averages. I don't have them on mine, but if you want to,
here, let's go.
Honestly, like I know Tom is kind of against charts, but I like them.
I like to look. It's more of a and this is what he's saying. You can add all the stuff on here. I don't add any of the stuff in here. We used to have those cones, but that was just the expected move cones. Remember?
But if somebody wants to put it on there, sure. I love listening to Tim Knight because if Tim Knight says, oh, bearish in this, I'll go look for an option strategy that might be bearish in that. So it's like layering options and your assumption that you're getting from the chart. Because again, anyone's directional assumption is just their own opinion. It doesn't. So if you get it from a chart or if you get it from just your own personal, idea, what's the difference? Place a good strategy, come up with a high probability strategy.
But I'm not a chartist, and I know Tim's very good at it, and other people look at like you said, they come up with their assumptions from different directions. But when Tim Knight says I'm bearish in this, I could be looking at the exact same chart that he is and have no idea what the hell he's saying. Because do you know what I'm saying? He's pulling something up. He's got these like lines and cones, and I pull up the chart. And I'm like, that doesn't look bearish to me. Do you know what I mean? But that's his forte. He wrote the book on it. He wrote Slope of Hope. Like it's a book. He's been doing this for years and years and years, and that's how he gets his directional assumptions. And he's been doing very well at it. But to your point, I like somebody else's assumption, then we put a high probability trade over.
It's kind of like the guys on the trading floor telling us, oh, we're not going to move. We're going to stay around, we're going to stay around 57.50 because the box is here. It's like, I don't need to know how the sausage is made. Just tell me just give me some info and I'll come up with a trade.
Yeah. Yeah. True.
So we're not chartists, but I do listen to Tim Knight, and sometimes I'll take some of his ideas and place a trade. Probably our short positions in XLU, and I'm pretty sure our XLU position might be because of him.
Oh, I'm pretty sure it is as well. But to your point, you don't need to know why. And that's, you and I were talking the other day. We were going back and forth with Fazia, and I love Fazia, and she's very clear of the concept as well. But we were talking about zero DTE option trading, and there was a huge long thing, and I was like, just tell me what it is. I need it's kind of like when we're looking at the market measures. I want the takeaways. I don't need to know how you got there.
Right. Like, I don't want to watch an hour and a half video just to show me the trade.
Yeah. Just what is the trade?
Show me the trade. I don't want to watch an hour video.
Well, that's what's nice about where our knowledge base comes from is we have that knowledge base. So just show me the trade. We'll work backwards from there, right? And right. You don't need to go through all the nuances of it. And that's what we do have is that wide option space. And I think a lot of Tasty Live does as well. Okay, back to Twitter. Thank you very much. And then Theta Trader, ladies. Trade if they have time. VLO short put in November, trading through earnings. Okay, let's take a look.
VLO, they said short trade, bearish in VLO.
I'll go back. I think it was a short put if I remember correctly. Here, wait, hold on. VLO short put in November, trading through earnings. 135 strike. 135 VLO. So that's pretty aggressive right there.
Yeah. But if it's down and it is aggressive, but you're taking in a big premium. If your thought was, oh, I want to own VLO, I want to buy the stock, maybe that put is a better choice, but there is risk of getting long 100 shares of VLO at about 130.
Yeah. So, I mean, I like this. So kind of going through your trade, sure. Getting aggressive. You've got a 61 rank. You're going through earnings. You're directional. I have no problem with that. Now for us, $2,500 for a 45-day trade is a little bit hefty. Maybe I would go down and sell something a little bit less aggressive.
Right. And that's
and we've been leaning towards too. If I wanted to be bullish here, I have kind of been leaning towards these diagonals.
Okay. So this is coming from Dr. Data, and I thought so. He said it is out to everyone right now.
Okay, great.
But it's not officially. Okay, it's not officially out until October 15th, but it's like a soft opening.
Who gets to participate in the soft opening?
I'm guessing you could find it somewhere. Where do they find it? I'll ask them. Where can people find it?
Yeah, where can people find the soft opening? Because we're going to tell everybody live on air.
I don't know. I mean, I guess so. It's not really out till October 15th, and maybe I shouldn't have said it is out. But I'm guessing you can find it somewhere. I'm guessing you can find it somewhere because I was using it. So if I was using it, I didn't have some secret password. I was just using it this week. Working on my our special that's going to be coming.
You do have a secret password. I think you have.
No, but that one is gone. That one isn't working. That one, it says like that one was shut down because there's a new one coming.
Oh.
Like if you go to the old one, it says like new one coming.
October 15th.
I don't know. And again, I've gotten in trouble before for saying things on air that I'm not supposed to say. So you didn't hear it here. You didn't hear it here.
And that was from Anton. He's like, I thought you were trained a little bit better than that, Jenny.
Oh, because I gave it away that he was at Volcano Bay because someone was going to go fly to Florida and go to Volcano Bay just to see Anton.
I bet somebody did. You'd want to see that guy. Okay, so let's kind of go through what we did today. What do you think? Because we are almost out of time.
Sure, yeah.
So today, all symbols. And then I'm going to take a look. Well, actually, I'm going to take a look at this first. We're down $15 on our M2K MES. That's fine. No big deal. No harm, no foul. But so today, all symbols today. So we did quite a bit, actually.
Tell me because I'm asking where can people find it, and I should know. But just on the feel like I'm always pestering him about this back testing.
I do feel like you do talk to him all the time about the back testing.
Well, because they've been making changes, right? They've been making updates, been making changes, and they were. they were making some adjustments as to, where you're doing spreads, how wide the spreads can be. And so I kind of texted him with some of my, what I thought needed to be changed.
Well,
and he's like, we'll get right on it. And it was changed by the next day. They changed it by the next day.
That's why they're doing the soft opening, because, people want it. That's good information to get back. Like what should be changed.
They're still like tweaking it, right? Perfecting it.
For sure. Okay, so today we adjusted our Walgreens Boots Alliance. We got $50 in how many minutes? We put the trade on at exactly 10:15. We took it off at 10:22 for $50 scalp, in and out. In Intel, we reestablished our Zebra. Then we did the pairs trade M2K MES, which hopefully we will be into and out of by tomorrow because we're not out of it right now. And then we also closed our M6B. So we did quite a bit today.
We did do quite a bit today. We did.
Yeah, we did quite a bit.
Yes, it was only down 49. It was just a second. It was in the 40 handle.
I know. That's what I'm saying. So I know. So Jenny's prediction is we're going to be down 90. And my prediction is we're going to be down 40. We'll see.
It's just wishful thinking because I have a few bearish positions on today.
Yeah, talk your book. I like it.
I'm holding them till 2:30. I'm not getting out.
I'm just saying that study's going to be factually accurate, and the low of the day was our 10:15 tick, and we scraped the bottom. I like it. Mikey, let's go back to Mikey's names, and then we're going to take a quick break, because if that is the case.
Oh, yeah. What are they?
Paint the bottom. I'm going to call it Liz and Jenny Paint the Bottom. That's what it's called.
All right. I think that's it. I agree. If I went through all those, that's what I would pick.
Liz and Jenny Paint the Bottom. That's where we're going to go with Mikey.
The PTB trade. Paint the bottom.
PTB. Paint the bottom. PTB. I like it. All right, Jenny. Good luck. Enjoy your afternoon, and everybody else.
All right, and nothing new from Dr. Data. So maybe it's not announced yet. Maybe it's not out. But if it's almost like an Easter egg, if you can find it, you could use it.
If you can find it, if you can catch it, you can keep it. All right, everybody. Have a wonderful afternoon, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny Show. We will see you tomorrow live from the SIBO.
Live from the SIBO. See you tomorrow.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on tastylive. Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
We also went to Universal Studios, which was really fun in Hollywood. So we drove to LA with our rental car. You can't do that if you don't have a rental car, can you? No, you can't.
Drove from Vegas to LA.
Well, actually, my wife drove because I had food poisoning. So
I have heard it all. Heard it all. I am done. I am done here.
You live in Florida.
Yeah.
Don't they have Universal by Disney? I know they do.
That place sucks. No, they don't have Super Mario World, and they don't have the trolley tour. They don't. So can you just listen? They don't have the trolley tour, which was my favorite. That was pretty cool.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
You hear it all the time. Spoos up or spoos down. What exactly does that mean? Spoos is a slang term for the S&P 500, specifically the S&P 500 futures contract /ES. It's the world's most liquid asset. In the S&P 500, billions and billions of dollars trade hands each day. The S&P 500 represents the top US stocks, all in one basket, traded through one contract. The S&P 500's movement day to day gives you a good overview of the market as a whole and what it's doing. Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mikey Butler with me as always. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever, just come hang with us for the next hour of the day. My favorite hour of the day. I get to spend it with my buddy, Mikey Butler. How's it going, sir?
It's going good. It's going good. Got a little two-sided action in this market here.
Mm-hmm.
Market's down 50, was much lower a little bit earlier, but seeing a lot of the stocks that we trade frequently take a little beating here. What are you doing here?
Yeah, we've got E-minis down 58 right now, as Mike was saying. That we were down about another 20 handles from here, 75 to 80-ish at one point today. NASDAQ down 3/34. It's the weakest of the group, a little over 1 2/3%. The Dow down 147, and the Russell down 36. So the Russell and the NASDAQ, the weakest of the group. Oil catching a little bit of a bid, Ford /CL 70.86. up $2.68. Volatility futures in the 20 handle, 2015 up $1.35, a little over 7%. It's a big move in vol. Bonds up over a full point. You got gold and silver both moving higher. Gold's up $24, silver up 33 cents. Bitcoin taking it on the chin a little bit over the last 2 days, down 900. But yeah, it's been a little bit of a purge here this morning. Yesterday, if you were watching on the close, E-minis and SPX had a nice little bid higher. They were up like 20 or 25-ish, maybe even a 30 handle. Shout out to Bonnie, the SPX winner. We had guessed the market yesterday. So
shout out Bonnie.
57.64. An incredible guess. It was basically right on the money. The SPX close yesterday. It was 57.60. Oh, I'm sorry, that's the high. Let's get to. So
57.62.48.
62.48. I mean, a point and a half. So that was incredible.
Amazing.
Yeah, but yes, some big moves. One of them, Microsoft down $8 and change. Apple is down $7. It was down like $9 at one point at $224. Yeah, it got down another dollar or so from here. Nvidia at like $117 now, down $5 and change. The stocks bucking the trend, which will be in our cherry picks today. The China names Baidu, Pinduoduo, ABA, JD, and these things are the upside movers. The American tech names, not so much.
Yeah, lots of big name stocks selling off more than others. If you look at like the NASDAQ 100 or the S&P 500, S&P 100. But yeah, I've actually placed 3 new trades, all to the upside, as you might imagine.
Very nice.
But yeah, I just pinned a link to the newsletters page on tastylive.com, which will bring you to the cherry pick sign up. If you want to get your free cherry picks newsletter. But yeah, earlier this morning I closed the micro oil contract that I had.
Oh, that was a nice hold.
Yeah.
You took some heat.
Hold. Yeah. Definitely took some heat, but it was it's one contract. It's a micro, so I can hold it forever, which is nice.
You don't want to. You don't intend
want
to, of course. Yes.
But it's small enough to where even if crude oil futures were to go to zero, it's not going to matter.
Yeah.
It would matter, but it wouldn't.
It would be a painful spanking.
That's right.
But you would survive. You would survive.
Precisely. So yeah, I closed that for a $120 net winner.
Nice.
And then I got into an AMD position. I bought the 160 November call, sold the 170 against it for $8.96. 10-point wide diagonal spread for $8.96. Micron MU, I bought the 100 November call, sold the 107 against it in October for $5. So that's $7 wide. And
both those stocks up $1 from when, or $2. So you had nice timing there with the E-minis rallying a little bit here.
Yeah. And then MicroStrategy got back in when it was down 10. It was selling off yesterday too, so we're back down to it was 157. Now we're at 163. But I bought the 160 November call, sold 2 of the 180s in October, and bought one of the 200s. So
crab trade,
a little 20-point wide crab trade. Learned my lesson the hard way in MicroStrategy. It's 10. I had a 10-point wide crab trade last time. I had an opportunity to close it, but didn't. Yeah. But then it just gapped up beyond my strikes. So like 10 points wide is just not. It's not wide enough in this product.
In something that's this high vol.
Yeah.
And it's a mid-range stock price, but
yeah,
the volatility is really what got you.
Right. So put up a little bit more capital for that one, but I'd rather have a 20-point wide than a 10-point wide that can move against me quickly. As I've realized last month. So
very nice.
Yeah, all 3 of those trades are looking good right now. But
I made an interesting adjustment in MicroStrategy yesterday, which I got a couple emails about. But I had a crab trade where I was like, I started off 10 by 15. So I had a little bit of extra risk on the upside. So I was long one of the 165 calls in November, and then I was short the 175, 190 short premium position in the October cycle. We've obviously had a really nice rally up, and the trade was profitable. I could have taken profits. It was actually more profitable yesterday, but I took the short premium part of the trade, and because of how high volatility this underlying is, I was able to roll this out to November. So I'm now all in November with a equal with butterfly. I'm long the 165, the short the 190s, and then long the 215. So I'm 25 points wide on both sides. Big wide 50-point range to hit. And I did that roll for $6.60 credit, which essentially puts me in this butterfly for like 80 cents. So I have this super wide upside butterfly here.
Love it.
And into this move, I was looking at it this morning. I was like, maybe I just like dabble in a call diagonal spread or something, like really just double down here. But we'll see if we get a little bit more to the downside, and I can think about something like that. So I did that yesterday. But I also spent the morning doing some stuff. I put on a PDD position because we're talking about it in the cherry picks coming out in the next couple hours. I put on a Coinbase, so I did sort of get a long position like you did in the Bitcoin space. You have gold, silver, bonds all rallying today. If you think there might be something to the flight to safety, maybe Bitcoin gets some of that love too. Close out some short premium in QQQ and AMD. Those were both pretty short. AMD was one that I did last week, I think. Qs I did a little longer ago, but took some profits and some premium off the table into this move, so freed up some capital, and ready for more.
Yeah. And speaking of more, we've got Nike earnings after the close today.
Ooh.
And I'm playing it to the downside.
Really?
Yeah.
Oh, I was going to say the upside because Nike's a somewhat China play.
Fair. Yeah, I mean, I don't normally place the trades to the downside.
Because you're so damaged?
Yeah, but I kind of like the way that the general market is setting up for Nike earnings right now. You're seeing kind of a macro sell-off in a lot of different products, but I did the Nike earnings preview, and it just doesn't look that great. They had their CEO pump on, September, I think it was that 19th or the 20th when they announced it. I'd have to double check that, but they basically announced a new CEO. The stock price rallied from the lows, but if you look at the last 3 earnings reports, the stock is down every single time. And that end of June earnings report, I think was the worst day in Nike history in terms of a loss, percentage loss. So I think the pump goes away, and they basically said that they had to reduce their expectations for the year because of how poorly they're performing.
That's exactly when they come in and beat the reduced expectations and pump.
That's fine. If they do, my risk is tolerable. I actually already did it. I got a 90 strike put in November, and I sold the 83 put in the weekly, and that's a $7 wide diagonal spread that I paid $3.55 for.
Cool.
So small risk. Even if it rallies, I can turn it into a calendar spread or whatever. But if it sells off, that could be a nice downside trade here.
Well, the good news is that one of us will likely be profitable, if not both. If we get like a little bit of a inside move, because I'm going to take the upside here. I am doing a call crab trade. I'm going out to the November monthly expiration, buying right at the money, the 90 strike. In the weekly, expiring this week, I'm selling 2 of the 95s against it and buying one of the 105s to cut the buying power basically in half. So that 105 cost me 10, 15, 20 cents. It cuts my buying power down from 1,500 to 700, and just showing kind of like how our risk profile will look towards the end of the week here. Basically a 100 strike print would be my break even-ish to the upside. Got a little bit of buffer to the downside because I'm long this right at the money call. I got $2 and change of extrinsic value coming off the table. So if we look at the weekly position, selling these at $1.20-ish, buying one of these at 14, 15 cents, put you at like $2.20 of extrinsic value coming off the table. I did the whole package at $1.98. So as long as that long option trades for $1.98, which would be the case if it goes up or goes down a little bit, I should be at a scratch or profit on this trade. Risk is above 100. There might be a little bit of risk, and then, big move to the downside.
Love it.
Inside, up/down would be perfect.
Perfecto. Yeah, that's that. Lots of activity today. I think there's opportunity in a lot of different sectors if you've been waiting for an opportunity to get in, or at least waiting for volatility to have a nice little pop, which is what we're seeing today.
Yes.
All right. I'm going to pop over to the YouTube chat now. Theta Trader, do we like Bitcoin here? I heard IBIT is getting approved for options. I prefer that to BITO when it happens. Yeah. I mean, the inclusion of options in different products is just going to bring more activity to the entire space, which will be perfect. But yeah, I mean, if you're trying to buy a Bitcoin dip here, it's sold off 4,000, 5,000 from the highs and 2 days ago. So if you think it's going to go higher, if you think it's going to get up to that 70K mark, totally in the cards to take a little shot here.
The IBIT options, I don't think there's any imminent implementation for the options. I think there's still some hoops that must be jumped through. So, but yeah, when that launches, it'll definitely jump up to one of our most traded underlyings, I would imagine. If it happens by the start of next year or in the middle of next year, I would imagine it's going to be one of our top traded symbols just because it's going to have very high implied volatility. I'm talking, I mean, just if we use Bitcoin volatility of mid 70% implied volatility, that's about as good as it gets for a $30, $40 underlying. Just to put that into context, you'll be selling, and I look at DraftKings as our proxy here because it's got like 60% implied volatility, just to put a number around it, but you'll be selling the 30 strike puts at $1 month over month. It'll be beautiful.
Yeah, I will be definitely trading that, similar to MicroStrategy.
Yeah,
I would put them all in the same bucket: DraftKings, MicroStrategy, and iBit. I mean, just affordable stocks we can do a lot in. They move. There's premium there. That's what we're looking for.
Yeah.
What's your opinion on Carvana? In theory, it should go down. Reminds me of GameStop. Yeah, this thing is mooning.
Yeah, what's the theory though? I know that.
I don't know, just that it's too high, I guess.
I remember when it was like a $10 stock.
Same. And now it's $170 stock.
Yeah, it's a pretty big move.
Yeah, what's the deal here?
It's a tough one because volatility is very, very high. So, selling call spreads here is a pretty cheap game. Does it have earnings coming up somewhere? Oh yeah, November 7th.
Mm-hmm.
Yeah, this is a tough one. If you have a directional lean, I might do something like a diagonal spread. I mean, you can even see, so to just put into context what the skew looks like, out in November, the 180 calls, which are there, the 180 strike, which is $3 out of the money, the puts are 47 delta and the calls are 53 delta. So the delta is a representation of this curve. And you can see the skew, the top of the curve is actually lower, and that's because of how much call skew you have here. So it is very much skewed to the upside.
Yeah. And I don't know, I guess if we want to trade it, maybe we just wait for earnings, but we shall see.
Yeah.
$30 expected move on a $170 stock, that is... If it stays there, that's definitely the biggest earnings expected move I've seen in quite some time. So we'll come back to that. Yeah. But if you're trying to play it in the near term, I don't mind diagonal spreads, sticking with crab trades, things like that, like long November, short October. Definitely defined risk, though. Yeah. I mean, this thing is just ripping around every day. So, but there's plenty of premium there. So a downside play might be like long 175 November, short 165 or 160.
It's still it's an expensive one because you could see it here in the implied volatility. You have almost 30 points of difference in the implied volatility of November versus October. So, there's a lot of vol there.
It's expensive.
It's expensive going into earnings. So I think it's a pass for me, but I get it. It's moving.
It is definitely moving. This is your big chance at Tasty Fame chat room. What are today's closing assumptions? With a Stephen Hawking quote to boot.
The close of the market?
Close of the market. I think it's pretty easy.
Yeah. What's the easy play?
I think we're flat or green by the end of the day. I mean, that's the classic buy the dip. But to put context around the expected move through the end of the day, regardless of assumption, 22 points, plus minus 22 points.
What are you looking at, SPX or?
Yeah. Actually feels kind of right.
22 points?
Yeah. Like I could see it go from down 50 to down 70 or go from down 50 to down 30 or 25. Like it feels about right.
Yeah. Yeah. I mean, one of the things that kind of popped off this morning was the volatility kind of pushing into the end of this week. So you can see when you look at all the implied volatilities are higher. Obviously, the 0 day is going to be the highest because it's expiring at the end of the day today. But there is a little bit of juice baked in through the rest of the week versus everything that we see in the back month. So I'm kind of with you. I don't think we're bouncing back to green, but I think we've taken a nice little breather here. I don't think we'll go much off of this mark. You sit around the 5,700 mark and wait till tomorrow's decision.
Yeah, I think 22 points feels right. For the first time in a long time, I can say it feels right. IBIT options in Tasty Canada, same time frame. Lol. Yeah, IBIT options might take a little bit, but Tasty Canada, I hear some rumblings.
Yeah,
that there's some things moving.
Yeah,
we'll see.
Yeah,
but yeah, thank you for your patience, Canadian traders. It is it's a long road.
I think
a long road.
I think I'm gonna do something in Apple. A little bit of a pullback today. Volatility at 47 IV rank. Probably, yeah, it does have earnings coming up in November. And just a flat delta iron condor.
That's what H. Montero's looking at.
That's what he's pulling up?
Yeah.
There we go. Well, if he's
Went
thinking...
up 7, down 7. Vol picked up. Thoughts on a 10-point wide November iron condor into earnings.
Wow, look at that.
205, 245. So pretty close.
Yeah, so I went to the 210 just to make it flat delta. If you wanted to go to the 205, that's totally cool too. That's beautiful that we're on the same page though.
Isn't it?
It's either beautiful or a sign that this is going to be a tough one. So I'm in at 340, a little bit more than 1/3 the width of strikes, so a little bit lower pop than what H. Montero is looking at. But yeah, that was the same thing that, and that's like our style of trading. That was a perfect example of it. Like we both were looking at a stock that has had a nice move higher. It gave back some of that move. Volatility has expanded. I mean, this is kind of the thing that I talk about on our roadshow. LA's coming soon and Dallas, but you know, playing the game of like thinking where a stock or the market is going in a short time frame in the future is impossible. But you can look at Apple and say, you know what? Apple has been really strong. It moved $10 to the downside. If you've been trying to buy it, you know, it was $10 more expensive yesterday. It's now $10 cheaper today. You know, that's something you can quantify. You can quantify implied volatility and say, you know what? Volatility has spiked up. So to put risk on, whether you want to be short, long, or neutral, you're getting paid more to take that risk relative to yesterday or a couple days ago or middle of last week. You know, those are the things that you can play into. You can't play into Apple dropping $7 today. Like nobody, if you were watching the markets yesterday, you probably thought we would open up another 50 points after the end of the day rally. I mean, playing that game is really hard, but just taking a objective look at a stock and, you know, if you want to get long here, that would be totally justifiable. Stock's down 3%. That's what you want.
Yep.
You know, you don't want to buy something that's up 15% and hope for 18%.
Correct.
You want to buy something that's down 3% and hope for it to go to, you know, flat.
Speaking of, coin looks juicy here to the upside. Only downside is Kathy Wood bought shares yesterday.
Oh, no.
Yeah, I mean, down 12. Pretty big move here.
I sold a put spread for the cherry picks.
There you go.
150, 135. I did it at 454. It's trading at 5 right now. So you get 50 cents better than I did.
Perfect.
Kind of near the lows of where it's been trading, 150 or even 145-ish, kind of the lower end of where it's been trading.
Yeah.
I definitely think it's an interesting trade. You want to do a crab trade? I had one on. I closed it yesterday. Had a good timing on that one. That one moved $1 against me today. if I still had it on.
Let's see here.
What are you thinking?
I'm trying to make something that's not that so expensive.
Yeah. That's kind of why I went with the out of the money put spread.
Yeah.
I mean, you can go tighter if you don't want to use as much capital. You know, you can adjust the strikes now. Like you can do like, I don't know, the 140, 130. I mean, it gives you a break even basically at the lows of the year.
Yeah.
And it trades at $3. There's not many underlyings where you can sell a $20 or $30 out of the money put spread for $2, $3, $4.
Earnings are looking like they're in the November 8th cycle.
The next earnings season is upon us.
Let's see. Let's see here. Yeah. I'm going to do... Can I do a crab trade? That's not that expensive. That's the question.
If you did like a December Nove, you could probably do on that. I guess you could do October too.
Yeah.
If you wanted to.
175, 185, 195.
And 75.
185, 195 for $10.
Yeah.
I think that's what I'm going to do here.
Yeah, that gives you.
I'm in at 1028. Because then what I can do is, if this doesn't work, I can get rid of the crab component and turn it into a call diagonal in the November 8th cycle and just have like a micro, basically a vertical spread.
You could do, if you get a sideways / up move, you could do what I did with the micro strategy position and just roll it to a big wide butterfly.
Yeah.
You know, like a shot trade.
But yeah, Coinbase down 12. I want to take a little shot to the upside here. But all these trades, AMD, Coinbase, MicroStrategy, and Micron, if we get a reversal tomorrow, I'll be out of all these trades. I'm just going to trade out of all of them, and just keep playing the chop. But this is kind of crazy. AMD's picking up a little bit from the lows.
What about putting on like a neutral delta position?
I don't know what that is.
Oh, neutral is okay too.
I know. I almost did a calendar spread in coin as opposed to the crab, but it's a similar price. And
yeah, I was thinking of something more of like a core type position in something like SPX, because you did get, again, you know, some good things have happened for premium selling in the last 24 hours. You got a 20 VIX, a little bit of a pullback. You know, you could set something up like an SPX wide iron condor, you know, selling somewhere around the 1 standard deviation for the short options, or if you want to lean a little bit long, move it into like a 15 or a 20 or 25 delta short option. But you could do something like the 5400, 5380 on the downside. I'm looking at the November 15th weekly, which is the PM settled options. I like to trade those instead of the AM settled options. And then on the upside, the 6,000 60-20. I mean, that gives you $300 in either direction over the next 45 days. It's a 20-point wide spread, $6.25. If I had to guess, and we could probably, let's pull up the change. This was probably $4 yesterday.
Yeah.
So this one moved like 350-ish. And this spread, it's tough to even see because the change here.
Yeah.
But, you know, like this sort of trade kind of plays into this move and leans you somewhat long. I mean, this give you just to give you a context, 54 on the downside and all the way at the top of this at 6,000.
Kind of like it.
Why not? And then it allows you to like get a little bit of short delta. If we get to 6,000 in the next 40 days, you might think about putting out a little short delta, wouldn't you? Or no?
No.
This wouldn't move all that much, is what I'm saying.
Yes.
If you get to 5,400, this allows you to buy it. If we chop around here,
the risk is at 5,400. There's no the portfolio risk is not at 6,000 because I have every other position on here is a call diagonal spread.
Yes. So a little neutral delta allows you to buy.
I'm gonna do it.
Yeah, and it's a reasonable amount of capital. Like,
Yeah.
you know,
$1,300.
yeah, this is as good as it gets. I have my little put butterfly that I was trying to close this morning. I was trying to get $200 out of it, and it's not. It was close, but I didn't get filled on it. I have this order routing for $15.15. It got up to like $15. We had a little bit of a bounce, but
All right, I'm in 620.
all right.
So I've effectively doubled the amount of positions in my portfolio today.
There you go. That's what you got to do, you know.
Yeah.
Do I put this one on too? Do I follow you?
I think so.
But I have this like
Why
little
not?
downside kicker, so
Yeah.
I guess let's do that. Okay.
So yeah, neutral trade in SPX, bearish trade in Nike, bullish trade in Micron, MicroStrategy, Coinbase, and AMD, which are all pretty correlated, but they're all relatively small positions.
All right. I'm in at 620 as well.
Perfect.
That somewhat fits because I closed out of my NASDAQ position.
Lockheed Martin mooning.
War is on the
twisters.
horizon again.
Yeah, it's really wild.
I know. See another one.
Yeah, Lockheed is
RTX
mooning in a big way today. This stock has performed really well this year in general with the craziness.
Well, we keep going to war.
I know, it's insane. But yeah, $23, big move.
Yeah, it's a huge move.
Huge bar.
I think we've looked at this before, and the options just like aren't. Yeah, they look not too bad right now, dollar wide, but that's probably helped by the move today. You probably have a lot of volume relative to what it normally trades. So I don't know. I know everybody gets like obsessed with these massive moves and wants to either ride it or take the other side. I try to like not get involved with these sort of things.
Yeah.
One-off stocks. Like Coinbase, I trade all the time.
Yeah.
I've been waiting for a down move to sell a put spread. Like that's a different situation. Like the one-off stocks that have these like explosive moves in either direction, I don't mess with them. Usually. Sometimes.
Yeah.
If the itch must be scratched.
Like the only thing you can do in here is directional trade, really.
Yeah.
Like $23 move to the upside that's exceeding the implied volatility for the monthly cycle. Like it's big. But yeah, it is mooning for sure. For futures options order chains, does it show the market snapshot like stocks or equities or not yet?
Do not know. I do not see it on there, unfortunately. Futures get all wonky because there's different expirations, there's different contract prices. I imagine that'll be coming at some point. I don't know when. Yeah, that's a good question. I don't know.
How do we feel about shorting the VIX here with SVXY or short VXM?
You could.
Yeah, SVXY has come down a little bit. These markets can be really illiquid though. Yeah, like the markets in SVXY are just really bad, unfortunately.
Yeah.
Even in the October cycle, it's really bad.
Mm-hmm.
But yeah, if you're trying to buy some shares here or something like that, I don't mind that. And then short VXM, that's a little scarier.
Yeah.
But
I think it's $5.
Yeah, $600, $666 in buying power requirement to short the VIX futures.
Yeah, that can move $600 against you quite quickly. So I try to avoid that. I think if you're really trying to get short, vol, I would use something like UVXY and do some sort of synthetic short position. You know, buy an in the money call and cap your risk that way rather than, or I'm sorry, buy an in the money put rather than be short the futures because, you know, this has a embedded stop because it's just intrinsic value. It's just an option.
What about a Broadcom strangle? No earnings, and IV rank is relatively high. IV rank's 40, implied volatility is 45. It's decent. Yeah, totally. If you want to.
Just looking at the buying power, use about $1,500 to be naked here. So if you wanted to go naked, you certainly could.
Plenty of premium.
Yeah.
Like the 150, 185 is what I'm looking at.
There you go. I pulled up the 145, 190 if I was going to do a strangle.
Sure.
So it's same thought process.
Either way, it checks the box where you're collecting well over 20% return on capital relative to buying power. It's small enough. We can do it if we want. $500 in credit is a decent starting point for defensive management. So yeah, I think it's totally on the board if you want to do it.
I think I'm going to add this 150, 140, 190, 200. Iron Condor, $3 and change.
Sure.
Cap the risk a little bit.
Yeah. Just in case things go haywire here.
Yeah. It's basically delta neutral. You got a little bit of call skew here.
Two related questions. Would you trade Tyreek Hill and would you close the other side in SPX if it goes against you? Yeah, I would not be rolling. I'm kind of unsubscribed from rolling up and down Iron Condors.
The SPX one is wide enough.
SPX is wide enough. It's 20 points wide.
Yeah.
So you could if you wanted to.
Yeah.
But if it was a 5-point wide or 10-point wide, I wouldn't be rolling up or down because you're picking up credit, but you're picking up very small credit relative to the risk you're moving. So yeah, and I don't mind getting long at 5,400 or short at 6,000. So I would probably just close the untested side, roll the tested side out in time. That's kind of how I've been battling Iron Condors. Your credit for just getting rid of the other side and rolling the tested side out in time is likely similar than if you were to roll up or down and create a tighter profit range. So yeah, I would definitely close the untested side for an Iron Condor here. But if you want to roll it, it's 20 points wide. It's a little bit wider than what we would normally do. So don't mind that either. Would you trade Tyreek Hill? I don't know, man.
Are we talking from
like, it's actually wild to me how reliant they are on Tua, because nobody can run that offense, and their offense looks absolutely abysmal. And Tennessee's defense is like fine. They're not great. They're not Minnesota.
Yeah.
They're not Green Bay. They're not the Bears. So.
I don't know if we're talking about from like a fantasy football perspective or from a team perspective. Like the Miami Dolphins.
You have a prophecy. Would you like to voice it?
What should happen, and which would benefit me greatly in many ways, would be for one of the three old guys to get traded to the Chiefs. You have Hopkins, you have Reek, that's Tyreek, and you have Amari Cooper. All manageable contracts. Tyreek's is a little bit bigger, but...
What about Devontae Adams?
Devontae Adams is another one that's on that list. I just don't have a lot of Devontae Adams exposure, so I don't want to put that out into the world.
Yeah. Detroit looked amazing last night. You saw, but Jared Goff received a touchdown pass, which is just so funny.
Yeah, that was pretty sweet.
Yeah. But he actually broke a record. He was 18 for 18 with no incompletions, and that's an NFL record.
Started off 18 for 18?
No, the whole game he was perfect.
Oh, really?
0 incompletions.
Wow.
Yeah.
That's incredible.
The most attempts with no incompletions in NFL history. And he didn't get the game ball, which is hilarious. Let's see. LMT will reach the moon before Elon Musk.
Maybe.
Possible. Tasty rule is to sell a 45-day 20 delta put. Why'd you sell a 33 delta put on coin? The rules
I
are not
don't see no
rules.
rule. I just placed the trade. I'm in. There's
Yeah.
no rules stopping me.
The rules are not rules. They're just like starting points.
Yeah.
So like, yes, we're gonna sell a delta of anywhere between 30 and 16.
Yeah, you can do whatever you want.
So Coinbase, there's 5 different strikes at least that we can choose from. It's just a matter of what you want your risk to be, what you, you know.
And the stock's also
what your
down
deltas wanna be.
$6 from where I put the trade on. So it was probably more towards a 25-ish delta.
Yeah. So it's a good starting point just to like look there. But then there's also liquidity things. Like what if the 22 delta or the 20 delta strike is much less liquid than the 30 delta strike? I'm going to pick the 30 delta strike every single time. So risk is still risk. It's markets are moving. You're going to be making adjustments. So your starting point is really not that important. It's not like we're holding trades to expiration and we have to be at this exact strike because we're manipulating our trades pretty frequently. But yes, 20 delta or 30 delta on coin I think is fine.
Yeah.
Just a matter of risk. How about GEHC for a long-term rise? GE Healthcare.
Oh yeah, they
Did
spun off.
Yeah, I was
they
gonna
spun
say.
off like there's another one too. I forget. They did. It was like they go into like 4 tickers or something. I don't know. Something funky.
Yeah, I mean it's at highs now. But if you think it's going to keep climbing, then just like I guess we'd have to figure out what long-term rise means, like through the end of the year, or like leap style or stock, etc. But yeah, I mean markets are decent in here. Can do some different things. MCL is a little illiquid. USO has wide spreads. Any alternative for a small version of CL? MCL is fine. If you're trading options, maybe it's a little illiquid.
Yeah.
But straight up contract is in and out.
And the oil futures, you know, you can go as tight as 50 cents, which is $500.
Mm-hmm.
You know, those are. It doesn't get much smaller than that. I would say if you're trying to trade like an ETF sort of proxy, XLE is probably the one you would go to. But even then, you know, it's the same $500 that you'll be risking with a lot less potential upside.
Mm-hmm. Yeah, it looks like there's some people saying MCL is a little illiquid.
Yeah, the micro futures, all the options are just, you can only get so small. I know this is like a normal size, but you know, when you're talking about like micro E-mini options, that is, you know, a 20 delta is 10 shares of SPY.
Yeah.
It just gets really small and there's just not a lot of trading there.
Adams getting traded to the Jets. We'll see.
Yeah.
They need a little more help than that. I did like the meme of Rodgers though, with his towel over his head when he was like, because that game was just so disgusting.
Yeah. Yeah, the Jets, they have a problem.
You mean you'll be collecting pennies on the dollar if you sell the other side if it goes against you? I just mean like if you're moving up and down, like unlike a strangle where you're just closing the short option, selling a new short option, when you're moving an iron condor spread, you're closing out of the spread and then you're moving it up, but the problem is you're rebuying another defined risk wing, and that's what kills your credit received. Instead of collecting $5 or $6 to move a short option up, you're collecting $1 or 50 cents or something like that, and you're still moving your risk up in the same way. So the risk reward from moving spreads is much less than an undefined risk trade, of course. But spreads are pretty binary in nature to begin with. So I kind of like just getting rid of the risk on the other side instead of tightening the profit range.
you're defining the risk on entry. So at a certain point, you have to like make the decision to potentially hold risk at a certain point. Like you were saying, you had to drop to 5,400. You'd want to be long.
Yeah.
In the SPX position.
Yeah.
Like you want risk there.
Yes.
That's another way to phrase it.
Mm-hmm. Yeah. XSP butterfly for October 11th, 554, 560, 566.
For October 11th, is there something special there? Is that the Tesla day? Doesn't Tesla have a day coming up?
Oh. Let's see. October 11th is
5
for PPI.
Okay.
But either way, October 11th, 10 days out, a 566, 560, 554, 6-point wide butterfly for 50 cents to the downside. Yeah, I don't mind it. It's a small shot.
Yeah.
You could probably get $100 out of this thing if you get a move down to 560.
Cash settled, just like SPX. So, yeah, markets are a little wide. XSP usually really only trades like in the front monthly and then the dailies. Like you'll see here, when you look at the volume, handful of contracts. You only have a handful of contracts in the open interest. When you go out to the monthly, you know, there's a little bit similar in open interest, couple round strikes. But then if you look at the weeklies, those are getting the most activity. You see the volume is much greater than even the monthly open interest. And that's just because these are a proxy for SPX. You know, if you're trading 0 day in SPX, cost you, $4, $5, $6. This costs you 50 cents, 60 cents. So has that same sort of liquidity to it, higher liquidity in the dailies.
With just call diagonals, you have a lot of long delta in the portfolio. How do you balance with short delta? So with these positions, I really don't. I manage it afterwards by rolling them into calendar spreads and whatnot. But I have the SPX position, which is neutral. I have a downside Nike trade. So I've got some neutral to bearish positions, but I'm just trading this chop here. And if it goes against me, these positions are small. So I can still hold these positions. These are all November positions that I've layered on. So 45 days out, plenty of time for them to work. And if they don't, I can still reduce basis by rolling the short option down and manipulating it or taking other risk elsewhere. But yeah, right now I'm just leaning a little long into this sell-off here.
E-mini is down 72, near the low of the day. 10 points off the low. Big move.
Indeed.
Big pop and vol. All at the high of the day, or near the high of the day, 15 cents off the high.
VIX,
yeah. Gold and silver. Mooning.
Classic. Wow, gold.
Gold has been just on fire.
It's insane. I've got a covered call I want to roll that's near expiration. Stock earnings is the same week of expiration. Is it better to roll after the expiration due to the high price to buy the call back? If you want to roll it, you have to roll it. But if the premium if all the IV is in the short option that you already have, if you're near the stock price, then you're kind of at like the best place for the IV crush. But if you roll that out in time, you kind of move it into more of a time-based premium versus IV premium, for understanding it correctly. But if you give us the actual strikes, we can look at it. What do you look for to turn a crab into a butterfly like you did with MicroStrategy?
MicroStrategy is kind of a unique case because of just how high volatility is. Like I was rolling from October, which has very high implied volatility, 90%, to 110% volatility. So it allows you it's a little bit more flexibility than if you're rolling, SPY from October 19% to 20%. Like that, there's not much difference there. So MicroStrategy has that kind of component that is interesting to it. It also was one that played out, right? So I put this on September 13th. So, 20 some odd days have already passed. So this premium hasn't changed all that much. We can even look at the October. So I had the 175s for the short option. So I'm going to just pull up the chart, and then I put this trade on the 13th. So the 13th, it got to $4 and change-ish was kind of the high. So let's just say $4. And today, or even into yesterday, it got up to 9-ish. But we look at this long option, the 165. So this went from $13 where I got filled up to $30 yesterday. So you lost $10 on the short premium position, but you gained 20 on the long. So you got that directional move. Because of how high volatility is in the November expiration, you can now roll that short premium up and out for small credit. If I would have rolled to the same strikes, it would have been big credit. But then you have this really tight range to hit. So it's the move in combination with call skew and upside volatility that you have in MicroStrategy that helped with that roll.
Yeah. So,
but it would be hard to do that in something like SPY. You would need the short options to be right at the money to be able to roll for a big enough credit to make it like a free butterfly type position.
Yeah. So like the one I just put on, the 160, 180, 200, I paid $1,300 for it. If I turn that into a butterfly right now, the 160, 185, 200, that's an $8 credit. So right now, it's still doesn't really make sense to do that. But if markets move, I could do that.
Yeah.
Especially as I get closer to expiration, like you're saying. Like the 17-day premium, the 180, 200 component in the crab right now has $700 of premium to come out of it.
Mm-hmm.
So if I get all that and I secure all that, and then I roll into this for $7, like that's a totally different story.
I also made mine wider.
Yeah.
Because I was only $10 wide.
Yeah.
So, that long option held so much value that I was able to roll the short premium out.
Yeah. And that's the nice thing with diagonalizing or calendarizing short premium versus long premium in a debit trade is that you can make those adjustments and manipulate the trade. Mm-hmm. Because you have the ability to roll out. When is the best time to put a covered call on a down day or up day? Well, a down day will give you the lowest cost basis relative to what you were looking at before. So if you're doing a covered call into a sell-off, you have a cheaper price to buy the shares and you can move your call down.
Yeah. If you're just looking to sell the call, though, you'd want to do it into an up move.
Correct.
But
depends if you already own the shares or not.
Yeah.
If you own the shares, you want to see a big rally. If you don't own the shares yet, you want to see a market sell-off like this.
Yeah.
So both. What is the minimum net lick to be able to safely play naked puts or strangles, in your opinion? Well,
depends on what you're trading.
Depends on what you're trading, but I'm of the camp like if you're selling a strangle, you should be able to afford the shares in a margin account. Because then you can withstand literally anything if you can do that. Which means it removes the whole like Japanese yen unwind, corona, all these things that can happen and will likely happen in the future. You don't have to deal with that headache if you're trading small enough. So trading super small is the answer, and that depends on the product you're trading and your account size, etc. But if you're selling puts and you're planning to do that for the rest of your trading career, I think if you do it small enough to where you can afford the shares, turn it into a covered call like the wheel strategy, is a really high probability way of trading and high probability of avoiding big issues that can come with expanding buying power, trading too large, et cetera, et cetera.
Yeah.
So less than 5% of the portfolio in buying power requirement, closer to 1 to 3% is kind of the sweet spot, I think. It just allows you to absorb a lot more volatility.
Yeah. Yes.
VX up to 20. Nike earnings. Yeah, Nike earnings we talked about earlier, but
I'm long, he's short. Pick your
pick your battle.
Yeah.
I'm short. I've got the 90 long put in November, and I'm short the 83 in the weekly. So $7 wide diagonal spread for 350. We'll see if they sell off or if they rally or if there's an inside move.
Inside move
could
we
work.
could both. That would be a nice, because I don't want to profit while you lose.
Correct.
It
would feel bad.
Yeah, I would feel bad.
Yeah.
So let's both try and hit it.
But what do you have? The call.
I did a crab trade.
Crab trade.
So I'm long the 90 out in November, short 2 of the 95s in the weekly. I was going to just go naked here, but it uses about $1,600 in buying power. So I just bought the 105 to cut that down to $700. And it defines the risk, but I'm not planning for the stock to be at 100 tomorrow. It could. A big old gap. There's a big old gap to the downside too.
Yeah.
So who knows?
Something's happening there.
Or nothing.
Or nothing.
Nothing can happen.
Or it could be something, or it could be nothing. That's all we know. Couple of minutes left here. What do we have this week? October 1st.
We had J-Pow yesterday. I don't know if I attribute it to him, but there was like a little mini micro dip in the middle of the day yesterday, if you remember. Good time frame. Oh, this was it. Right around 1. Let's see what time that was. Yeah, 1 p.m.
The 0-day range has expanded. It's up to 24 points now in SPX.
That spook you?
Not really. But the VIX 1D chart confirms that. We're near the high of the VIX 1-day volatility reading. So yeah, doesn't really spook me, but I mean, it is what it is. If you're looking to play a range, you now have a better situation than you did an hour ago with 1 hour less. But yeah, crazy times indeed. I put the link to the cherry picks in the top of the YouTube chat, so click on that if you want to get the free newsletter coming out shortly. And I think that's it.
Cool.
You want to get out of here a little bit early?
Yeah. I'm hungry.
Cool. That's it for us. Thanks for tuning in. If you have any questions, you can reach us on Twitter. I'm a Trader Mikey B. Nick's a Trader Nicky Bat. Stay tuned, though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. It is the start of the wild card baseball, which is going to be probably pretty wild, considering it's the wild card. So we'll see. But yeah, go baseball teams. You're rooting for them. I know Vecchio was very happy that the Mets won the game yesterday.
Yeah,
that was the most psychotic game I've ever seen.
Really,
I was paying attention to it. I wasn't really watching it, but
watch baseball, but
it was apparently they were the most wild swings in percentage win chance, like maybe ever.
Oh, like on the predicted thing, where
yeah, because they were down 3 in the 6th, then they were up 3, and then they were down, and then they
scored
were up.
like 8 runs in 1 inning.
Yeah.
Right?
And then Atlanta scored like 4, and it was just like insane. But good for Vecchio. They can get into the first round and lose. Just kidding. But yeah, thanks for tuning in. We'll be back same time, same place, 11 a.m. Central tomorrow. Have a great rest of your trading day. Peace.
Peace.
Thank you, gentlemen. You're up.
Thank you.
So, Tom, what is your definition of underwater?
The futures close 15 minutes after the cash markets close. So underwater means when the futures close under fair value, under the cash price.
If you're selling in the hole, what are you doing?
Oh man, if you're selling in the hole, you're puking. That means you're selling it at a price you don't like, but you have to do it because it's hurting too bad.
Tom, in the pit, when somebody would say it was an out trade, what would that mean?
An out trade's a mistake. That means one person thought they were doing one thing and the other person thought they were doing something else. And so an out trade is just another word for mistake. You can use an out trade in anything in life. When you just have a misunderstanding, that's an out trade.
When Tom says double whammy, what does he mean by that?
Ooh, double whammies when you roll down calls because the stock's going lower, and then all of a sudden the stock goes higher and you start rolling up puts, you're getting double whammied.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
What does it mean when you hear can't buy an uptick?
When a stock can't buy an uptick, it means that the stock just continues to go down every single day, every single minute, every single hour. It's a phrase to use when a stock just continues to go lower. What's it mean when you eat like a bird and shit like an elephant?
Eating like a bird, shitting like an elephant. That means you're probably picking up a couple pennies here and there on a trade. And then you might have one trade where you get a little too big for your britches. You have that big loss and it kind of wipes it all away. So you're pecking at profits and then you piss it all away.
What does it mean when you get whipsawed?
Ooh, when you get whipsawed, you are basically selling into the hole or buying into a big rally, and then the opposite happens. So let's say you have a strangle on and the stock rallies towards your short call. If you roll up the short put to add more premium to the position and then the stock drops, you have effectively been whipsawed.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at tastylive.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Yeah, Option Trades Today. Are you listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. I thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Don't die like squirrel.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades. Today, I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9.
Yeah.
It's same thing. It was right there. Right when we
So,
started.
He was my friend first, clearly. Met at work.
Yeah, at Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer.
Say it. Having trouble understanding what your trader buddies are saying? Here is what they mean when they say slippage. Every business has costs. Slippage is in reference to the cost to transact in the market and is most associated with the difference between the price you can buy and the price you can sell at for options or stock. If you can buy at $1 and sell at 99 cents, you have 1 penny of slippage. If you can buy at $1 but sell at 90 cents, you have 10 cents of slippage. The more slippage between the prices, the more likely it is to lose out on value when opening and closing positions. This adds up over time. That is why liquidity is so important. I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows, but it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Mike Butler, the DePaul University. Number 33, because I like to collect 1/3 the width of the stripe.
Frank Caberna, University of Michigan. Number 4, because I utilize a lot of four-legged trades.
Mike, Beef, Hart, St. Bonaventure University. Number 68, because 68% of the time, it works every time. Also, it's 1 standard deviation.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Contrarians! I just signed up for Dough and opened a new brokerage account. Time to get trading!
Newbigard, Big Barbarian on Hillside. To celebrate, let's slaughter 1,000 ewes and suck the raw marrow from their bones. Oh, yeah. Why did I say 1,000 ewes? I always get caught up in the moment.
I don't even really like raw marrow. I mean, it's fine, but it's definitely not my favorite.
Hey, maybe next time when I do something cool and smart, just give me a subscription to Bob the Trader, okay?
You hear it all the time. Spoos up or spoos down. What exactly does that mean? Spoos is a slang term for the S&P 500, specifically the S&P 500 futures contract /ES. It's the world's most liquid asset. In the S&P 500, billions and billions of dollars trade hands each day. The S&P 500 represents the top US stocks, all in one basket, traded through one contract. The S&P 500's movement day to day gives you a good overview of the market as a whole and what it's doing.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this.
To me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling all around the world. And I'm out like Tupac in a peaceful transition.
We are back. It is still Tuesday, October 1st, 2024. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, thanks for bearing with me as I fed the mice that keep the Wi-Fi running in the house. We are here finally.
We are here finally. I'm not exactly sure what you mean by that. For me, it means I've been waiting 2 weeks for this move, Chris. I'm just telling you, I've been waiting 2 weeks. 2 weeks! It's finally here. Do you know what kind of patience that takes from me? Do you know what kind of patience that takes from me? Oh, my God.
Tell me what move that is, Jamal.
The downside move out of nowhere. Call it what you will. I'm sure it's probably, obviously, it's geopolitical fears. Not that I want that. That's not, I never specifically said what I want the move for. I just felt that the markets could use a little bit of downside move, and this is what we've got.
It's very anti-American of you. As we look to the markets here on this Tuesday, we find ourselves looking at a market that is enamored by the lights in the sky above Tel Aviv. We can go right to the charts here, guys. Go to the platform. Iran has apparently launched a ballistic missile strike against Israel. I was just watching the feed of Tel Aviv, and it seems that the defenses are ongoing. Clearly, the oil market's having a bit of a day today. We see oil vol has spiked up significantly over the course of today's session. Jamal, that's the starting point for all of this because oil vol spikes around geopolitics tend to be fleeting. This is a daily chart. Going back to last October, we can see that when we get to these 80-odd IVRs, they do not stick around for a long time. So make hay while the sun shines, folks, unless this is the start of World War III, of course. But I think we could take the under on that.
Yeah, I mean, this is, look, we often talk about, we talk every single day about markets and vol and things that are happening surrounding the reasons why. And a lot of times it's kind of scant details and it's kind of hard to actually link something. This is clearly a result of what's going on over in the Middle East right now. This is clearly a big move. And so, whether you decide to fade it or whether you decide to go along with it, this is clearly moving as a result of the current dealings over there. So you do have a high vol situation, right? I mean, this is a high vol and a high move. And this is one where you have to trade with caution. And we're going to find ways to sort of take advantage of this throughout the show.
We are going to try to find ways to take advantage of it, Jamal. If you've been long deltas in oil and looking for a prayer,
yeah,
I suppose we're thinking the Ayatollah. Oh, God, that also feels anti-American, Jamal.
It does.
All right, I suppose we're both afforded one infraction here today. 57.40 here in the S&P 500, down by 1.27%, running back down towards the highs that we saw at the end of August, beginning of September. Swing high there is 57.30.5. The low for today is 57.33. It's only a 33.8 IVR, Jamal. It's not a huge expansion of volatility just yet, although the VIX did spike above 20 earlier today and lingering around those levels right now. A little bit more damage here for the NASDAQ. Tell me, comrade, what makes you so excited about the decline of capital markets in the U.S. here? Is this a long-standing thing you're watching for, or are you looking just to take some profits on this short-term pullback in price, this expansion in vol, and maybe reposition yourself on the long side once again?
Yeah, I mean, we've talked a little bit about this, a lot about this actually over the last couple of times we've gotten together. I just felt that the market was, first of all, we were trading in a very quiet, low volume week last week where we were mostly drifting higher. And, again, chart-wise, especially when you're looking at the S&P, for example, I mean, I thought it was actually a pretty clean chart. I thought there was a couple of dojis in there, and the general trend was higher. I just felt in the wake of the last Fed meeting 2 weeks ago that something just didn't seem right. And I was surprised that the market was so excited about the way things were transpiring, given the fact that we had 50 basis point rate cut. And it wasn't, and nobody seemed to feel like it was out of fear of a declining economy. Even though most things are seemingly okay, there are some things underneath the surface that didn't suggest so. However, today is not about that, right? I mean, sometimes, like we often say, it's better to be lucky than be right. I've been mostly short equities, and I've just been sort of waiting for somewhat of a pullback. Not a complete decline, which, to be honest with you, we could be on the verge of. I mean, if things are really that scary in equity markets, because again, we're going to get to all of it. But today, when you look at it, we're obviously down. Most equities are down. And obviously, there's been a flight to safety. So that's not necessarily the market that I was planning on. I was just expecting a little bit of a pullback on some fears that the economy is not doing so well. This is a whole different move, a whole different animal that we're dealing with today. I am going to decide towards the end of the day whether and how to take profits on my shorts, because I'll be honest with you, there's two different types of things in my mind, and none of them has to do with the market bouncing back all the way flat. One is that we continue this downslide and we end up being down more than the percent, almost 1.5% that we're down now in S&P, which obviously is not that great. And the other is we kind of hang out here and then we have another day like this, right? So neither one of those are necessarily the greatest. And personally, what's so funny? Most of the time when you have a situation like this, when you've been going one way for a couple of weeks here and you're like, okay, finally, today's the day it happened, and you get all the way out, it usually ends up leading to more of the same. So that's my fear with my position being short. I'm going to have to try and figure out how to manage it. But I'm sort of, going off here, but just there's a lot happening clearly today. And I think you got to really be careful on how you trade. and a little bit at a time, right? This is where we talk about, like we talked about on August 5th, like we talked about in October, April, little bit at a time, because we just don't know where this is headed.
No, and I see some headlines here that the Israel Red Cross says that no missiles have resulted in any injuries across Israel. Oil is coming back in about 25 cents immediately on that headline. 57.39.5 here in the S&P 500. It's a 2% loss for the NASDAQ in today's session. We see a little bit more damage as we pull back into our 1 month moving average fairly quickly. That happened
Let me ask
short
you
order,
this.
Jamal.
I know we're going to go through our through everything, of course, but when you see a day like this, right? Equities are down pretty big. Gold's up. Obviously, you already have a gold position, but still, gold's up. Obviously, volatility is up. Bonds are up. Obviously, that's a flight to safety. Everybody's a little fearful. You see oil doing what it's doing. What's the first thing that you want to trade out of all of these? Is it equities, or is it something else? Like, what's the first thing?
If it's geopolitical related, it's oil. And this is a helpful day, considering that I had an iron condor where the guts, or at least the put spread side, was short the 71 put. So this pulls that back out of deep underwater and makes it a more palatable loss. It helps the short put spreads for the positioning rebuild trade that was put on 2 weeks ago as well. But oil vol, when it spikes, it doesn't stick around.
Yeah.
And then oil prices tend to not jump higher and stay higher significantly. Now, when Iran launched their missile attack against Israel, that was April 11th or 12th.
Mm-hmm.
Israel waited a week until the Ayatollah's birthday, going into the 19th, to respond. Nothing came of it. That week was the week that equity markets bottomed out in April. So if we're going to follow a similar cadence here, and if we're thinking about how the market really just kind of does look like how it did at the end of August, beginning of September, right? Rally into the end of the month, consolidate, drop on the first trading day of the month. Then where we head, non-farm payrolls. Then we pick ourselves up the next week. Maybe this is that Tuesday, Wednesday, Thursday, Friday, get back into the downtrend, and then we start to pick ourselves back up. Either way, though, Jamal, there's a little bit of a cadence here that seems familiar. And if we're going to try to trade this off of stocks, you maybe got to give it another day or two, particularly with non-farm payrolls around the corner. But with oil, you got to start sizing up fading this right away.
Yeah, I mean, that's the other, and I do think I have a trade for that when we get there. But yeah, I mean, this is definitely one of those fascinating days because, again, I mean, all of the different things, boxes are being checked right now. When you talk about equities down, oil's up, gold's up, bonds are up, dollars up. I mean, that's clearly some fear in the air, and hopefully, again, I as much as I've been short, never been calling for any serious carnage. So this is on the precipice of something like that because, again, this is a global fear, and we'll see how long it lasts. But right now, it looks like, as they often say, day one. It looks like a potential day one on the way to a possible day two, day three. We'll see how it turns out. And not to mention, we do have a what was that you just did?
Getting out of an iron condor that was in crude oil, and I'm going to use it as an opportunity to put something back on now, but with strikes that are not hugging the immediate price.
Yeah, we'll talk. Well, cool. We'll talk about that. I thought you put something on. Well, so you took it off. We'll talk about what we're going to put on. But I'm looking here. Am I seeing this right on ES? When we are, let me see. The last big down bar that I can see around this same area was July 17th, and the low was 56.95. Yeah.
Yeah.
Right?
Yes.
Yeah.
Yes, sir.
What do you think? Is that going to be problematic for us?
I think that we should be buying out of the money 0 DT calls. That's what I think.
Tom is rolling over in his grave as you just said that.
I know, but Anton's not here, so I have to.
He's just dead to me right now. He's not in his chair.
Okay, so I say like Dikembe, right?
Oh man, that would be a day. I know, right? Dikembe, Pete Rose, Tom Sosnoff. Wow, thank God Tom Sosnoff's not on the list. Yeah, you know what?
This
I'm
is
all over
bad
the place
juju.
today.
We're done with talking about
I know,
this.
but I gotta ask you though.
S&P is
No, I gotta ask you. I gotta
738.
ask you two things. How
Okay,
do you
hit me.
feel about Pete Rose in general as an athlete? And two, does he belong in the Hall of Fame?
He belongs in the Hall of Fame. He was a great athlete. He was a cheater and miserable manager. It's a slap across the face and an insult to baseball if they let him in post death.
I mean,
You
they
know,
probably
I think
are,
it's-
right?
To be a disservice to him, his family, and the sport. If the thing that all of a sudden changes people's mind is like, well, now that he's not here to enjoy the accolade, now we can give it to him. It's kind of like an FU.
Yeah, pretty much.
Pretty much. 57.40 here. Should we just say this is a market that's gonna bounce back here? What's worth $100? $77. Jamal, this is obviously a very small out of the money trade. If this Iranian headline is what it is, and we're watching oil prices come back in, maybe, just maybe, we find a reason for the market to bounce back here quickly at the end of the day. Oil is off sharply here.
But I like the trade.
It's $75, right? High today of 71.94 in oil. We're now back down to 71.17 over the past 10 minutes. Israel Red Cross says no one injured. If stocks were pulling back in this morning because of these headlines, then if it's just like April, maybe you see a little bit of a bounce today, but certainly got to start thinking there's going to be a bounce coming up in the next few days. But Jamal, it's the start of October, which means it's time to talk about stock seasonality, which if you were to just look at the past 10 and 20 years, you'd find some pretty promising things. It's actually a very good month when it comes to seasonality for October. In fact, when we get that pulled up here, we see that it is the third best month of the year over the past decade and the fourth best month of the year over the past 2 decades for the S&P. For the NASDAQ, it's been the third best month of the year over the past decade and the third best month of the year over the past 2 decades. And we come into the fourth quarter, into October, up 20% year to date. And so you may say, surely that's fertile ground for more gains. I think we need to have a question or a conversation about timeframes here. For the month of October, when you rally more than 20% year to date going into it, the 9 previous times in history post-World War II that's happened, the month of October has returned negative 3%, falling 77.8% of the time. How about the run-up to presidential elections? The first half of October in presidential election years has been the second worst 2-week period of the year since 1928. And that's not to say all bad things happen in October. Even if you do get a setback in quarters with which the market has rallied by 20% or more year to date coming into the quarter still ends up higher by 2.1% on average. So that tells me if there is October weakness, if there's October weakness in the first half of the month, almost similar to the price action that we saw at the start of September, don't let it spook you. To get seasonal here, don't worry about it. Use it as an opportunity in the inflated volatility, assuming that the uptrend off of those October and September lows remains. If we can get an opportunity to sell some puts or establish long ES or MES positions closer to, say, 56.60, I think that'd be a gift. And it'd be a great long setup heading into the last, say, 10 weeks of 2024.
Yeah, I mean, I think when we look back across this year, right, look at the few opportunities that you've had to take advantage of market drawdowns, regardless of seasonality or not. And I think that served you well this year if you've taken advantage of them. So I completely agree. I mean, this is just another opportunity, seeing volatility pop, seeing markets pull back some. Again, the hard part about it is just slowly, methodically trying to find ways to attack this market from the standpoint of selling vol or finding some ways to get some long deltas. I mean, that's the hard exercise, right? Like trying to do it slowly, not jumping all in on a day like today, because we just haven't had any down days for some time, right? So that's your real challenge.
That is the challenge. I've been watching some of these polymarket headlines around this today. Will Israel respond to Iran? I can't believe there's a market for this. There's a market for it. 26% right now, down from 50% earlier. Let's see how this volatility unfolds over the course of the session. The VIX here did have that spike higher. now 20.29. It did hit a high of 20.73 in today's session. There's still that inflation, as it were, in the volatility future structure, which, outside today's events, I don't think we can call that surprising. We're going to see that the risks that have led to this kink and vol, it's the election. The election's not going away. It's still happening on November 5th. We're getting closer and closer to that time horizon, and so we should be expecting that vol is going to be elevated here throughout the month of October. Now, if we do get a more decisive set of polling that says one candidate is heavily favored to win over the other, maybe the vol disappears because you have less uncertainty about what happens after November 5th. Either way, though, this is a feature, not a bug, of what I think trading is going to be like for the next few weeks.
I think it is, yeah. I mean, this is going to stay the same. There's not going to be any difference until we get some resolution with the election. And there shouldn't. I don't even see any possibility of how November jumps above October in any way, shape, or form, just because that election looms large. So, but again, it's notable that we're seeing a 20 VIX again, right? This is at least the third time, maybe fourth, that we've seen this year, and every time this year so far, it has retreated in fairly short order. So I'm not to say that that's going to happen here. I really don't know, right? Because again, the main reason you can almost exclusively attribute to this move today to what's going on in the Middle East, and we certainly don't have any control over that. However, over the last, just in the last 4 years, right, your guide with Middle East tensions has shown that eventually, whether it's Middle East or I should say war tensions, have largely calmed down over time. Hopefully that's the case here. Again, I'm certainly not hoping for war just to make money on markets moving to the downside.
Marco Rubio says a large-scale Israeli retaliatory response inside Iran is certain to follow. Looks like we're due for an interesting day here the rest of the session, Jamal, and probably overnight as well.
Not to cut you off, that is probably the most important thing here. This is going to be a headline-driven market at this point now.
Yes, right. So paying attention to the news matters. If Israel comes out and they decide to blow up a bunch of cardboard Iranian missile launchers in the desert to make it look like tit for tat, this particular chapter is closed, fine, we move on. If we find out that Israel is doing another pager operation inside the IRGC, it's a different flavor of response. So we'll have to watch out for it. We can see here that stocks are getting a little bit of a bounce here as some of these headlines are coming out. Tiny bit of a bounce. Let's just go back to the highs. There's those zero TDs that need to print. The geopolitics you really can't, latch onto when it's this kabuki theater. And it's a boy who cried wolf situation to a certain extent, right? We just saw a spike in volatility in IVR for oil higher than it was after October 7th. In what world is that reasonable? Are we really that much closer to World War III? The world that can only end once, Jamal.
One time.
Bet against it.
Yeah, one time. That's the thing. You can only end one time. And so, but again, I mean, for those who are short, you gotta figure out how you're gonna manage this day. You gotta figure out how you're gonna get, whether some of the short off or get some long deltas on, because like Chris said, the world only ends one time, and hopefully the world's not ending at all. But the point being, like, you gotta find a way to monetize your short if you're making money on this. You gotta find ways.
And it's a great place for the S&P 500 to turn, right? If this is an inverse head and shoulders pattern, if that was the neckline, left shoulder head, right shoulder break, you'd really like to see that held up here. So line of defense. Let's get it done. Just
feels
what's
like
50 S&P points between friends?
Yeah, it feels like it's defending something here for sure. You can just tell.
Bonds roar back. For all the bad seasonality there was last month in terms of being inaccurate, it wasn't accurate for FX, it wasn't accurate for metals, wasn't great for stocks. It was actually pretty accurate for bonds. Bonds had a good month. That's what the seasonality suggested. Seasonality loves bonds for the month of October. Past decade, it's been the second best month of the year for ZN. It's been the best month of the year over the past 2 decades for ZN. 6.54% over the past decade and 4.31% over the past 2 decades on average. ZB, similar situation, second best month of the year over the past decade to a tune of 4.67% on average. And over the past 2 decades, also the best month of the year, averaging a gain of 3.35%. We've been advocates of the long bond trade, Jamal, even though we've seen a little bit of scuffling and weakness here in recent sessions. The ethos has been buy yourself time. Volatility has been low, so get into some out-of-the-money calls with enough duration and just get your seat in the upright position and wait for the plane to take off. We don't know when the liftoff's going to be, but considering how it's been trading as a hedge against equities, this is a reason why you want to have it in your pocket for a day like today, if at least you're long stocks like I've been.
I completely agree. I mean, if 75% of the idea for being long bonds has been the fact that they're going to cut rates and that's supposed to be good for long bonds, the other 25 is a day like today, and not even so much geopolitical, just the fact that it's a hedge for long stocks, right? So that's the other 25% of it for me as far as putting on the position, and this is one of those days where you feel good about it.
VIX having a pretty interesting pullback here as well. 2049 was the high during futures power hour, now down to 1952. So almost a full point off the board there as the session moves on. ZB 125 and 8 ticks. No significant treasury auctions this week, so not much to report on that front. In terms of Z and Jamal, this trade is starting to get a little bit. You talk with your hands too much, you start to knock over the mic. ZN here, there's kind of like a staggered double bull kind of thing going on right now. I still have the long calls that you and I put on, the long call spread, 113 short 117 a few weeks ago, obviously working out better on a day like today. But I also use the recent pullback as an opportunity to lay into a short put spread as well. And so today, with prices moving up and volatility expanding, it's been a good session. I feel like I should trim down some of my bond exposure right now, although considering the short put spread side's been only on for 4 days and we're pulling up into the area where we've seen support over the past several weeks, I'd rather keep that going right now. But there is a rolling here where, given the longer term charts, having some long bond exposure, if it's a little bit longer duration, if it's a little bit deeper out of the money, it's a worthwhile endeavor on a pure technical basis, considering how these markets look like they're bottoming coming out of the COVID downtrend.
Yeah, it does too. And we've talked about how far out we want to go. I know we've debated on even moving to the next expiration. I'd even probably do it on a day like today. However, markets are just a little weird right now. Maybe it's just my computer. I'm not exactly sure, but I do want to move this thing out to December at some point, the December 27 expiration, just because I feel like I could say we too have a longer term view on bonds, and I don't mind giving myself more duration on this position.
More duration would be fun. Jamal, Anton and I were discussing about how to approach this. Instead of doing it through the typical 45 in, 21 out tasty methodology, basically treat 45 days as the exit point now. So at 52, when we get down to 45, we roll out then to the ZBH5 contract, right? If there is a sharp spike in prices, we want to go out even further. If we're meandering and we're doing what we did the last few days, you can probably afford to get the shorter term duration for more convexity. But if you are seeing, again, that combination in ZB where IVR is below 10, given the technicals and given the broad sweep of how the Fed moves along rate cuts, we're basically priced for perfection, aren't we? How much worse could it get? Well, it could get a lot worse. Can it get better? That's the argument that bears have. Everything is priced to perfection. Valuations are too high, yada, yada, yada. So that means more Fed cuts are coming if the market is surprised in any form or fashion. That's good for ZB, good for ZN, good for the bond boys, Jamal.
Good for the bond boys. That's us.
Let's keep moving and talking about these precious metals here, which are enjoying a safe haven bid on this Tuesday. In terms of our seasonals for the month of, for the month of October, not great for all commodities, but it's slightly positive for gold and silver. In terms of the distribution, middling 5th best month of the year over the past decade, 7th best month over the past 20 years. Nevertheless, today's a strong start. Gold prices 2690.30 right now, erasing effectively the losses over the past 2 sessions. Jamal, for bulls who maybe didn't take the opportunity to get out, would you see this as a gift and look to fade this ultimately and see gold and silver continue along the path that they were trading along coming into the month of October?
I do. I expect them to continue to trade on the path. As you know, I relinquished my position looking to get back in somewhere around, which I'm assuming, is that like the 2-week moving average, 26.19? I assume it's something like that.
That is the 1 month right now.
Oh, the 1 month moving average. Okay. I would look, I'm looking at that area as some area for myself to get back in, but I'm certainly not rooting against gold. I mean, I think this is one of those where it's continuing to go higher. It's just a matter of the fashion in which it does so. But I mean, I think the long gold play is still the play, honestly.
Where you point out right around that 1 month moving average is a really interesting spot. We had that evening star candlestick cluster here that quite frankly never found any follow through. The doji the following day and hold of the 1 week moving average and validated that as a potential top. Mm-hmm. But that point right there lines up so neatly with the 1 month. So if you can get a pullback into 2620, that to me would be a very healthy spot to look to add long delta exposure. And that's what I'll be doing down there. I still have on the long 2650, short 2700. So this is, basically getting into max profit territory. That said, if there's a way to extend duration and exposure, 2723 still appears like it's ahead. And then we go to the continuous contract, the 2910.50 target is all the way up there, which I think is possible. So taking a flyer on it is worthwhile.
Yeah, I mean, again, this is a momentum play, right? And gold definitely has the ability to make that type of move. It's just a matter of the fashion in which it happens, right? Like if we get a straight $200 move, A, that's incredible, and B, you better have a plan for when that happens, if that happens.
Yeah, I don't have enough gold if that's happening anytime soon, Jamal. So don't ask me what the plan is.
No, I'm just trying to, what I mean? Like, I'm just trying to help people because dude, you and I both know these things happen. And when you're like rooting for it, and when it happens, you're like, oh my God, well, it's like the Joker says, like, I wouldn't know what to do with it. I mean, I just wouldn't even know what to do. Like when it happens, it catches you off guard and by surprise. So just have a plan for either one of those type of activities, right? Whether it pulls back to that 1 month moving average, know what you want to do with it. And if it does make a strong, spike, say $100 spike, right? Have an idea what you're going to do.
We saw, by the way, I pulled up this chart for gold back to April specifically because when do we see the Iran attack against Israel? April 12th. When do we see the Israel response? April 19th. That is all that happened here for gold. Once we saw that it was a de-escalation through escalation, I haven't read enough war theory, I suppose. We're seeing here that gold prices came off. That could potentially be the reason why we get down to 2620. It by no means was a reason to get short gold, though. It was just the catalyst that drove us higher were exhausted. Gold today is coming in. We go to that 4-hour time frame, you're going to see those little wicks. Jamal, if oil's coming off the board and stocks have a potential to reverse, and there's not going to be any further escalation here henceforth, gold probably is going to take a little bit of a tumble. I'm not saying get short calls because that's antithetical to all that I love and believe about trading gold.
But
it seems like it's a good place to take some profits if you're long.
They could get short MGC
right.
if they want.
Yes,
that'd probably be the only way I would do it.
And when I've shorted gold, that's the only way I do it. I don't do it through the options. It just doesn't make a lot of sense given how volatility responds. Now, gold is going to stick around, I think. There are fundamental reasons for why gold's been moving up, and so I'm not going to discount those. I'd rather look for the opportunities to get long rather than try to time it short. Either way, though, if you are long, just be aware of what's happening if it ripples through. Part of the reason why gold did elevate is because of that White House report about an Iranian attack. The attack has come. There's no injuries. Israel is apparently going to respond in some kabuki theater fashion, and then we all can keep going on to our previously scheduled programming, which was stocks at all-time highs, Jamal.
Yeah.
And we'd like to do that today with those 0 DTEs on the board right now. We should go to silver. We haven't talked about silver. We haven't talked about copper. What am I doing? Too excited. Getting ahead of myself.
I know, you're so excited. I mean, I can't believe you haven't talked about silver yet.
The Mets are in the playoffs. It doesn't happen a lot. 31.74 here. Did rebound today, starting to creep below the 1 week moving average and providing a little bit more context, perhaps, that maybe we're due for a little bit more consolidation, sideways movement before we see a significant break to the upside. Either way, if we do get a return to the midpoint of the consolidation, Jamal, it's real tempting to look to try to call this as an iron condor. The vol is there, and so if you want to sell calls, you got to at least do it with the puts. So you're protected a little bit more in case the price starts to go up and up and up.
You know, I will say this chart is starting to look pretty good now. And by that, we mean like for most of the year, you know, I know for you, this has just been a play because of what you believe in silver. But the chart hasn't always looked that great. But now it's starting to get to a point where it could be coiling and eventually coiling to leading to higher prices. I mean, it's starting to really pique my interest now, and I do want to put on a position. I'm just trying to determine how I want to do it and what product to use.
$43. That's the target long term. We'll see if we can get there this year or maybe early next. Copper, on the other hand, holding up here. That was a real ugly candle yesterday, Jamal. Surged to the highest level that we've seen since the end of the May, immediately closed below the prior day's low. That's a bearish engulfing bar if I've ever seen one. And yet we didn't close below the 1 week moving average. Sound and fury, all for that, a drop of blood. I didn't get out of my short put spreads. This is a great place, I feel like, for people who are looking at copper for the first time. We are in the middle, exactly just off of a retest of the 50% range from the highs that we had earlier this year to the lows in August. Let's slap that 50% mark on here. That's where we basically hit the low for today. It's an IVR of 99.4. This is a product that I know a lot of people don't pay attention to because it's not one of the equity indexes. But in terms of futures products, it's actually a little bit more tradable than silver in terms of liquidity and open interest around the big round numbers. And there's a heck of a lot more vol right now.
Yeah, this that was pretty ugly bar yesterday, but you could see that it's been somewhat resilient compared to what we saw going back a few months ago. So this one, there's a lot of vol in it. There's a lot to be had. It seems like you can harvest the vol because it was over 100 at least a couple of days ago, but now it's come in just a little bit on this pullback. It's usually how we see it, right? With these metals, usually when you get the pullback, you usually get the pullback in vol too. So I don't know. From here, it's anybody's guess though. And the range on this thing, when you look at the Nove options, it's like, whoa, there's a big range as far as expected move goes. So seemingly that gives you a decent amount of opportunity.
Jamal, I got 27 days to expiration here on the short put spread. I think this is as good of a place as ever to flip this around and turn it into something else. Let's see here. I'll take a little bit less profit to get out of the position.
It's usually how you have to do.
That's fine. Taking that into account, if we wanted to take a look at this from the Iron Condor side, we go out to 55 days. We look at the recent pivot lows prior to the Chinese stimulus, not the exact range low, right? Because if we get below the Chinese stimulus lows, we got a real problem here.
Yeah,
we got a real problem here. So thinking about that in mind, that's closer to 425.
That's what
and that's 22 delta. Go there to the upside now, which I think where the risk is given all the liquidity and easing in the system over 510. We do the 5 and we can go out to this is the range. I think this is the tradable range. You got to have a little bit more upside skew given how the momentum is carrying us right now. And if the market's going to continue to move up, it would be prudent perhaps to continue to roll up the put spread side of this. In fact, it may be prudent just to start doing that now. Maybe go into the 30 delta effectively, but the liquidity is at the 29. And we pull this up from 410 to say 5. 18 delta. Yeah, I mean, that gives a little bit of a risk to reward. Probability of profit's only 53%, but you have to make do with the volatility as you see it.
Yeah, you do. And just looking at, you're basically risking 2 to make 1. And I guess, obviously, I mean, you got risk in both directions, but I'd probably be more worried. Oddly enough, I'm a little more worried about the downside than the upside.
Oh, I have a full. China's doing this easing right now. It's going to be like 20.
I know. That's the thing about the upside, the China easing.
China easing. I'm going to do it again. They're going to keep doing it. I think this is a whatever it takes moment.
You think?
All right. I think it's a whatever it takes moment for China. I don't think they're going to. This is not something they're just doing. They're legitimately trying to fix the problem. Will it work? Who knows? Who cares? But we have a few months to trade it to the upside while we figure that out.
Well, you know what? I'm going to join you. 59% pop. I'm actually doing the 410, 4 1/4, and 5 and 5.15. I'm going to do that one. Try to get that off.
Heave ho. Let's go. Speaking of, oil prices here continuing to collapse. $70.54. Glad I got out of that condor when it was back above water.
I'm out of my oil longs. I closed those out today. I closed one out yesterday and I closed another one out today. So
follow the Israel Red Cross. That's the news source. When everyone goes into the shelters, they're the agency that reports to the government if there's been any injuries. If there's no injuries, then the scale of an Israel response will likely be limited. And if you have long deltas in oil, you got to take them off the board, or you got to shift out give yourself some more time. Vol here is obviously coming in. We can go to uso.ivr to get a better look at this. The IVR today hit a high of 91.61. It's now 78.80.
I'll save that for the end. Go ahead.
No.
Remind me, I got a question, but I'll save it for the end.
Yes. Hands down, please.
Yeah.
CLZ4, is this the place now to look to add long deltas? I don't think so. Look, we're pulling off of some of the recent highs. We know that the Biden admin is refilling the SPR. They put in that announcement yesterday after the market closed that they started to refill the SPR. Certainly, it's a great-looking daily candle. If we close here even a little bit lower because it is an engulfing bar, but the winnowing down into a triangle, that is the story that we want to watch because that's the breakout. There's a lot of convexity that could be had here by taking a directional bet soon in oil. I myself am leaning long deltas right now because positioning is so thin. And if the China story is sticking, then that should have a positive impact on oil. But today's not the day necessarily to put those short put spreads on. If we're going to see the geopolitical risk deflate, there's probably more downside in the very near term, next 12 to 24 hours.
Yeah, the last, almost 6 months of oil has been really interesting. And I think we've had on a number of trades in here, whether it's vol or whether it's directional. Even today, I mean, this is almost it might be a 10% range in oil today. I mean, when you look at it, big move, obviously, on a lot of the news. Got a decent amount of vol. I'm eyeing up a condor. I'm eyeing up a condor myself here, and Nove, if I can get the right strikes that I want. I got 80 to 82 on the upside. I think I'm going to go 63, 61 on the downside, I think is where I'm going to go. So, but you know what's coming? I mean, IVR has come in about 20 points since we've been on the show. About 14,
exactly.
Yeah. So, I don't know.
And IVR is coming in as prices are coming down. It's almost a mirror image of what we saw back in April, where you have the initial attack on April 12th. You get the spike higher, 81.76. The Israeli response doesn't clear those highs. You had a few days where we're basically sizing up what the Israeli response will be. They could respond today, right? Yeah. The time horizon could be constricted. I haven't seen anything from the IDF, but it's very possible they announce in the next few minutes, they're going to do this, they do that. Okay, it's all done. It's not going to take a week to unfold. It took a day. That led to a pullback in oil, right? So if you're looking for a place to sell some calls, this is probably as good as it gets above 71.72. So Jamal, if this is a futures trading show, Let's take a look at something short term. It's going to be inside the Tasty methodology, of course, because we're looking for some convexity here. Short put vertical, 20 days out. Now we want short call vertical, thank you. Are these going to be the highs, Jamal?
71, 72s? I mean, again, headline-driven market, right? Your guess is as good as mine.
Is it, though? Your guess has been pretty good recently.
I just wait for extremes.
Market's giving us an 80% shot of this. Yeah, I'm gonna. We gotta fade the geopolitical risk.
Wow.
We gotta fade the geopolitical risk.
Wow, 80% pop, huh?
And risking, 2 to make 1.
Mm-hmm.
Can't ignore it. Can't ignore it. $69.77, down 25 cents since I started trying to size up that trade. Jamal, sometimes life comes at you fast. There was more yen pain today. There's more yen pain now. How about that on a day when stocks are dunking and bond yields are falling? Yen can't get it going. Look, the carry trade's probably coming back. I don't know what to say about this, Jamal. I haven't put on any long out of the money yen puts yet, but that's what I want to do.
I still have long dollar via the short euro put spread. That's working really well today. Closing in on 50% gain, even if it doesn't, I might close this thing out. I mean, this thing is breathed at times, and I probably could have put it on at least 2 or 3 different times over the last couple of weeks and made money closing and opening. So I may close this today. Of course, that almost guarantees, just so you know, if I close this, that almost guarantees the dollar's going to go higher, and so are bonds, and market's really going to freak out because this thing isn't over yet. But I digress.
I don't think that you should be closing out any dollar longs right now, Mr. Chandler. That Euro chart looks real double toppy.
I know, right? I know. It's, systematic, Chris. It's the account. It's not me. I can't do anything about it. It's the account decides.
The tyranny of the algorithm. What's next on the calendar? There's a few things for tomorrow. Japanese consumer confidence. That's something that you care about. I do. So I'll be watching it because I want to trade the yen. We have some revenge trading to do, Jamal, with the yen. Germany 10-year bond auction in the morning as well. If you're trading the euro, keep that in mind. There's no U.S. Treasury auctions of note this week, so overseas events can carry a little bit more weight. As we wake our way through the morning, we see that we have an ADP employment change report that moves boosh ahead of non-farm payrolls on Friday. There are so many darn Fed speakers tomorrow, so choose your pick. They will provide us the lens with which we should be interpreting the non-farm payrolls report. Of course, we don't have a Fed meeting this month, so these Fed speakers could carry a bit more weight than they would otherwise. Weekly inventories for energy, and then, of course, later in the afternoon, oh, wait, that's another Fed speaker. We have 1, 2, 3, 4 on the calendar, Jamal. So if you didn't like one, we have many more. As we do at the end of every one of these shows, we do a brief bit of education. Head over to the website. You know it. You love it. It's tastylive.com, top banner learn beginner futures, where you can find a coursework put together by the fine folks on the Tasty Live research team. Today, we're talking about products and markets. The notional value of a futures product is the number of units multiplied by the price per unit. Futures products are separated into 6 different categories, including energy, metals, agriculture, interest rate futures, equity index futures, and foreign currency futures. There are a handful of market participants, each with different goals, each with different behaviors that trade in each product, which is why we talk about the CFTC COT report and positioning extremes, because when a rubber band stretches as far as it can go, Jamal, it's got to snap back at some point, right? We'll cover that, of course, on Mondays for the positioning update, and you can learn more about positioning and how it impacts the market at tastylive.com, top banner learn beginner futures. Click the link here at the bottom of the slide. It will take you there directly. Jamal, we may have avoided World War III today. Now it looks like it's time for oil to come crashing back in. Hopefully stocks can rally as well. We need some 0 DTEs to print.
Yeah, I know, right? That's exactly, that would make you a very happy man. We'll see how this market plays out, but there is definitely a little bit of fear out there when you look at vol and bonds and gold today. So
57.65 here in S&P. What's another 40 points between friends? Let's make it happen. Folks, we're taking a brief break here on Tasty Live for Jamal Chandler and Chris Vecchio. After that break, we're going to have Dr. Jim Schultz with From Theory to Practice.
Thank you, Jim. You both out.
Cool. Later.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, I mean, we could take a quick look at the market if you want to. It's basically unchanged. Even the S&Ps are down 4 handles. NASDAQ up 7 handles. Russell is down 3, and the Dow down 120. Dow maybe the weakest of the group by a 0.25 percentage point. Everything else basically unchanged. Volatility up by 10 cents, and bonds up a full point, 125.06. Bitcoin a little bit weaker, under 64,000, 63 and change. Gold, after selling off yesterday for one day, has caught itself another little bit of a bid, up 15. And oil is down 92 cents to 67 and change, trying to flirt with recent new lows that it made back, as you can see here, the beginning or middle of September. Sosnoff Silver's up 22 cents. Nat gas, which has had some big moves, is lower by around 3.5 cents. I figured I would put that in there after it's rallied. I think is corn at all-time highs or recent highs? Yeah, corn just off of recent highs. Wheat basically going sideways, and soybeans going sideways too. That's all I got. Euro's a little weaker also. It means the dollar a little stronger.
The euro's had a pretty big drop the last couple of days, from 112 down to 110.5 or something. Whatever, it doesn't matter. All right, let's go to Confirm and Send. Emails that came into us overnight.
Right.
Lots of them. Busy. And these are obviously from customers. I usually adjust my strangles at 20 deltas overall, but I've been testing cheap wings to limit losses. While I've been testing cheap wings, I've noticed that wide iron condors, if you buy the wings, it slows down the delta changes. For example, when one side of a strangle hits 30 delta, the wide iron condor with the same short strikes will still have 11 overall deltas. How should I adjust in this case? I've only been moving the shorts, as the wings are just for the entry.
I would continue the same way. I think you're buying the wings to reduce buying power, from what, if I could read through the line,
it's like a synthetic strangle, and they are buying the wings just for buying power.
I do a lot of this on my option trades today, Sosnoff, every Tuesday and Thursday to accommodate those with a smaller account, trying to show you how you can use the same amount of buying power as a margin account. But that's neither here nor there. That's a lesson for those who like to watch my podcast every Tuesday and Thursday.
Yeah, but try answering the question.
I would continue doing the same thing. I would look at it the same way.
Okay, I think that is the right answer. I think that you're actually, this person, you are doing things right. You're right that the wide iron condor wings, they'll slow the delta changes, but the reality is that when you're just adjusting your short strikes, which I don't recommend for everybody, but if this works for you in the world of synthetic strangles, sure, go ahead, continue to do that. It's only going to have some very subtle changes to your delta, but if you're doing wide iron condors, it's the best way to approach it. Or I shouldn't say the best way, but it is one of the ways to approach it. It's the
easiest way to reduce delta by moving one leg.
It's fewer contracts. It may add a little bit more to your buying power, but it's fewer contracts.
Yep.
Let's go next slide. Has there been any research on doing a wheel strategy in the SPY for zero DTE options?
No, I don't think there's been any recent wheel strategy. The wheel strategy is sell it out of the money put, leave it, really don't manage it that much. The stock goes lower, you get put stock, then you sell a call, you continually do that. But let's just think about what's happened over the last 10, 15, 20 years. I mean, we've gone straight up, basically. So I would imagine this strategy would do better than even the return over that same period of time because we went higher. Now, if we went lower, the strategy wouldn't work. It was a bullish strategy.
Yeah, it is a bullish strategy. And you got to remember something. 0 days are a little different because, you know, you're only going to sell, well, whatever put you sell, you're going to get X amount of dollars for it. There's not much you can do during the day. So you might be pretty far underwater, you know, to start with this strategy. I don't particularly love it in the 0 days. I mean, I think there's so many better. I think the last thing that you want with a 0 day trade is to have that trade linger on into perpetuity. So the reason we haven't done any research on a wheel strategy for 0 days is I personally don't really think it's an appropriate strategy for 0 days. I mean, could you do it? Of course, but it wouldn't be something that we recommend.
Yeah, but let's just take a look at it. I mean, let's look at the last year. I mean, we really haven't had any sell-off.
Any sell-off that you bought, you made money on. So sure.
Right. So it had to have been. I mean, I think the obvious answer here is it had to be a good strategy.
Sure. Yeah, it had to work. I don't love it for 0 days. Let's go next slide. So if I adjust a strangle, I don't go beyond a straddle. But what will I do? But what I will do is move the entire straddle up or down if the price keeps moving. Do you ever do this? And is there anything wrong with adjusting this way? So what happens is this person starts with a strangle and then adjusts till they get to a straddle. And then every time the underlying moves big one way or it moves a certain amount, they just move it up and down the straddle.
Yeah. It's not something I've ever done, so I would say no. I usually revert back to a strangle when I get to a straddle and then have to move it one more time after that. So not something I do. I don't have any problem with it. I mean, you're reducing delta by doing this and selling the most premium that you can sell, wanting the stock to stay right where it is, basically. I don't have a problem with it. I think it takes a little bit more risk, but there's more reward to it. I don't have a problem with it. It's just not something I do. I'm glad you're doing something.
I think my answer is very similar. I first of all, I don't do this, and I probably never will. I don't like it because when you're adjusting your straddle, your positions, I mean, you're going to reduce risk by a little bit, but you're also going to have a lot of risk on it that one side gets really far in the money. So I would much rather see you buy that straddle back and resell the wings and recenter. But if you want to do this, I mean, it's better than doing nothing. I would just really rather see you buy the guts and sell out new wings. I don't like this approach at all. Let's go next slide. In one of your videos, you had recommended a 50% allocation to options, 20% each to stock and futures, and 10% in cash. Yeah, that was a live event that I was doing. And it was also the webinar I did for the SIBO and the CME as a precursor to the live event that we're doing this year, building an option portfolio. It was more to show what you could do with a full portfolio. It wasn't, I just didn't want to build a portfolio only using a portion of the money. That's why we did it that way. In another video, I saw your recommendations for only 50% to positions and 50% in cash. Is that dependent on the volatility in the market? Also, what is the rule of thumb for beta-weighted deltas in a portfolio of 100K? How about large accounts that are diversified? There's a bunch of stuff in here, Pat, but let me just explain why we originally, when I did the webinar and I talked about using the whole 100,000, there was a reason for that, was because I wanted to give you a full portfolio. And it wasn't something that we tend to use no more than 50 or 60%. Right now we're about 35%. So we tend to be way under that number, but I'll let you go from here.
No, I mean, I think you should answer this, yourself here, since you did it. I'm not 100% familiar with went on your.
Sure.
your
Well,
tour.
that's what I did. One was a teaching portfolio to show you kind of what a full portfolio would look like from 0 to 100,000, and then you can take whatever percentage you want of it. And then if you sign up for the digital collectible that we just posted, this whole discussion is in that digital collectible. A rule of thumb for beta weighted delta in a portfolio like of this size, that's hard to say. That's really up to you. But what we do talk about is that neutral would be anywhere less than let's call it 200 deltas. So when we talk about kind of beta weighted or beta weighted delta neutral, however you want to say, anywhere from 0 to 200 deltas would kind of be, that's the range that we like to live in. We talk about adding short delta to a portfolio. It's 0 to 200 S&P deltas on a $100,000 portfolio. That's like the notional equivalent of being short $100,000 worth of stock. Mm-hmm. And so large accounts that are diversified, it's the same thing. It's 0 to 200 deltas per $100,000. And that's how we look at it.
Very good.
Okay, let's go to the next slide, Beth. I'm long 300 shares of a stock with one covered call sold in October. It's still out of the money. I want to sell 2 additional calls, but I'm not sure how to do this. Should I sell the additional calls in October at the same strikes as the existing call? Should I leave the October calls and sell the additional calls in November? If so, what strike would you use, or is there something else I can do?
I mean, October has 17 days. We like to roll when there's around 21 days. So we're inside that 21 days right now. If you wanted to sell to reduce your delta of this 300 share long position you have, I would move all of them to November. And I typically go to around the 30 delta strike. If the short call that you have is in the money, I would never roll to another short call in the money. If I was still bullish on the stock, I'd roll to at the money at the very tightest, but that again is just me, at my personal preference. You have to do what you want to do. But I would take all of those calls, move them to November, probably be somewhere between the 30-ish delta on all of them.
I'm exactly with the back here. I don't see any reason to still be in that October call. And as long as you made the decision you want to go, basically short 3 calls against the 300 shares, which I'm totally fine with. In fact, I would do that myself. I would do it all in November, and I would be somewhere between the 25 and 35 delta strike in November. So that's, I'm with that. It doesn't make any sense to be short. I would not sell more October calls because they were inside of 21 days. I would roll the existing short October call to a higher strike in November, assuming you can, and then I would sell 2 more at the same strike. You want to all be in the same strike if possible. Mm-hmm. It just makes adjusting and rolling easier.
Got it.
Let's go to the last slide. Would you ever sell a put that is in the money on a stock you want to own? My effective cost basis would still be lower than my short strike, right?
Let's take a look here. You're saying, would I sell a call and put the same money on a strike?
No, would you ever sell a put that is in the money on a stock that you want to own?
I mean, never. I can't say that. Yeah, sure. Deep in the money, probably not. At the money, a strike or 2 in the money. If it's basically a synthetic covered call without having to buy the stock. I'm okay with it. I would prefer to be at the money, but again, that's just my own personal preference. I get the idea why you're doing it. You want to hold the stock. You don't want to do a covered call. It's one click. Okay, I'm okay with it with that assumption.
Yeah, the answer here is that your basis would still be lower than. Your basis would still be lower than if you had your basis is always going to be lower if you sell the put, because there's going to be some premium in there no matter what. So your basis is always going to be lower than if you had bought the stock outright. Mm-hmm. But even if you sell an in the money put. But again, the goal of selling a put to reduce your basis to buy the stock is always to collect the most amount of extrinsic possible. And the most amount of extrinsic, if you want to do this, is probably going to be either right at the money or the nearest out of the money strike, not in the money strike. But that's up to you. Like, is there an issue with this? No, of course not. Because you're still going to be buying the stock cheaper than you would be if you just bought the stock outright.
Got it.
Yeah,
Good job.
we don't sell puts to buy stock. We would rather buy the stock and sell a call against it if that was the case. We sell puts to collect the money from the put, and we say to ourselves, well, if we had to buy the stock here, it'd be okay. But we never want to buy the stock.
Right. All right. Let's take a quick 90-second break and come back. We got more Tasty Live after this with an option jive next.
It's option Jive.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with a little option jive.
Little option jive. We got a tough one today. You ready for a little heavy math to start the day off?
Sure.
A little expected move and implied volatility.
Let's see.
Somebody asked me yesterday, they go, how would you define implied volatility? And I said, it just means expected move. And they looked at me like, that makes no sense. I thought volatility was fear. And I'm like, well, a volatility index is a fear index, but implied volatility is essentially suggesting what the expected move is going to be. It's the marketplace interpretation of expected move. And so would you want higher or lower volatility? And I'm like, well, I mean, most people would want a greater expected move, so you'd want higher volatility, right?
Yep.
And it throws everybody in financial media into a tailspin. That's all I can tell you. Let's go to the first slide. Get your helmet on for this one. There are three moving parts in the standard formula for calculating expected move: price, implied volatility, and duration. But which one of these is essential in determining the value of expected move? Do you think it's price? Do you think it's implied volatility, or do you think it's duration?
What's the biggest factor?
Yes, which one's essential?
Expected move, it's got to be volatility. I mean,
sure,
if you're going to go for
volatility,
365 days,
volatility is going to be the essential one. But, because because price is what it is, days to expiration is what it is. Let's go to the next slide. Since duration is selected, the most important factor should be stock price or implied volatility, like we said, or both, because you get to choose the duration. You can't choose the stock price or the volatility, but obviously those are critical. So we're going to break this down for you. And let's take a look. Let's go to the next slide. So theoretically, the stock price and implied volatility have the same weight in the calculation because they all have a 1-to-1 ratio against it. So this is interesting. So if the stock price goes up by 10%, the expected move goes up by 10%. If implied volatility goes up by 10%, the expected move goes up by 10%. Okay.
As you would expect, they are who we thought they were.
So far. Let's go to the next slide. But looking at the historical data, we can see that although the stock price could be pretty volatile, the velocity of implied volatility, the change there is on a completely different level. And this is what separates everything. So as you can see here, the daily percent change on the SPY can be from, let's say, down 10%. The average is 0.03 to up, 14.5%. But what you see here is that the VIX will change, all over the place, and the difference is quite significant for a maximum versus a minimum versus the average. This is just in the VIX daily percent change. And, the average days, you're talking about 0.3%. But when you get a huge move in one way or the other, things start to move. The reason it's not as big on the down moves is because you're probably already starting from a relatively high level. Let's go to the next slide. So double the expected move of an underlying, it requires its price to increase by 100%, which is really rare and difficult. However, an increase in implied volatility from 15 to 30% is far less uncommon. This is why implied volatility is the dominant factor in determining expected move. Does that make sense to everybody? Because remember, we just said they're 1-to-1, but the chances of a stock moving 100% a day, going from 50 to 100, is really low.
Sure.
But the chances of implied volatility going from 15 to 30, it's low, but it's much better than a stock doubling.
Yes.
So that's why implied volatility kind of takes the prize as the lead dog in this case. Okay?
The big dog.
The big dog. Let's go to the next slide. Since most of the time, traders only need to know the potential daily move of a stock or futures, here's a quick way to calculate the daily expected move using implied volatility. So the daily expected move percentage is essentially 19% of whatever implied volatility is. Right? Yep. So let's take or a 19%, the easier way to say this is a 19% implied volatility equals a 1% move in the underlying. So let's go to the next slide.
That's back of the envelope. Don't come back at me with, it's 19.75, like.
Okay, I'm giving you the formula right here. So you can calm down, Sparky. Here's your formulas. And because we have the daily expected move, and then we explained the whole thing out, gave you all the formulas, so there's no question. You can come back to this anytime. And then if you go to the next slide, Beth. So the implied volatility of an underlying is 19%. Its expected daily move is roughly 1%. If the implied volatility of an underlying is 38%, its expected daily move should be close to 2%. This is just the back of the envelope, super easy way. But again, implied volatility is the most dominant factor in determining expected move. On the platform, the discrepancy with the one DTE cycle occurs because the standard formula includes some irrelevant but more expensive further out of the money options. Yeah, when you have 1 day to go, longer term further out of the money options don't really mean that much.
Sure.
But the expected daily move as a result can become slightly inflated when you look at the 1 day. The formula is best used for underlyings with no 1 day expirations. That's just a little caveat that they threw on here. Just the numbers work out better. But the reality is the most accurate indication we have of expected move is to say that 19% in implied volatility leads to a 1% expected move on a daily basis. So if something has, like, let's say a 9.5 or 10% implied volatility, like the euro, okay, the expected daily move would be 1/2 of 1%. If something has a 38% implied volatility, like I'm not sure maybe that's NVIDIA right now. I'm just guessing.
Yeah,
but that's a 2%. I don't know what is the implied volatility of NVIDIA.
Well, let's just call it 48 in the shorter dated option. But
okay, so 48
you're close enough.
No, but what is it at 30 days?
At 30 days, you're looking at 49.
49. So 49, just use the great example in NVIDIA, the daily expected move would be about 2.5%. Okay, that's how it works. So, when you think about a 1% move in NVIDIA is $1.20, a 2.5% move, let's just call it $3, give or take.
Mm-hmm.
It just gives you an idea of what is the expectation on a daily basis. Let's go to the next slide. So on average, the volatility of implied volatility is far greater than its underlying price. Implied volatility is the most influential factor in determining the expected move, the daily range. Using implied volatility divided by 19 to estimate the underlying daily move is quick and convenient. And we might need
it's quick, it's convenient. All the cool kids do it.
We might need to slightly adjust the number to the downside due to its overestimation. The formula is best when there's no one DT expirations available, because that kind of throws off the skew that we look at. But the reality here is that it is a very good back of the envelope way, and all the information that you ever needed to understand expected movement and how it's calculated is on this little segment. Really good, a little heavy to start the day off, but really good.
Awesome. You know what, Tom? You did a great job with that. You really highlighted the key factors in that option, Jive. I'm very proud of you too. We're going to take a quick 90-second break and come back. We got more Tasty Live with the moment you've been waiting for, ladies and gentlemen. That's correct. The opening bell right after these messages from our sponsors. Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. But first, let's take a quick look at the market. I know we got a market measure coming, but even the S&P is making a new low here, Sadnoff. They're down 58. They were trying to catch a little bid here. They were down around 43 or so just a moment ago after making recent lows and then sold off. NASDAQ down 268 and change, trading near its lows by about 15 handles, all down around 1.25%. The Russell's the weakest of the group, down 36, and the Dow, which was the weakest earlier, actually on a relative basis, on a percentage basis, the strongest of the group, down 3 and change. Volatility back up $1.60. That's one of the largest moves that we've seen in probably a month or so in volatility. When I go back to early in September, the beginning of September, September 3rd, when volatility spiked. Sadnoff, what say you? I say close all watertight doors right now. I don't think you come back from this today.
I do not think you come back from this today either. And looking at this,
Apple down $7, weak right out of the chute. Been weak all day, all morning.
I don't see how you come back from this.
We're dead. We're gonna have a rip your face off rally once again. I can't stand this market.
I know, but I don't. I mean,
you're traveling today. You know what happens when you travel. We get a 3-handle move, in the spoos.
I know.
You know it.
I'm looking at all my positions right now. There's nothing here that I like at all.
Well, everything is setting up. You mentioned flight to quality. Bonds are higher. Gold is higher. Silver's higher. Oil's higher. These are all the fear indices that kind of take away from the market's bullishness. So volatility is there.
I mean, you got vol, you got bonds. I don't give a crap about crude oil, obviously, but and I don't really care that much about gold. But when you have bonds up over 1.5 points on a day like today, because there's no reason. I mean, bonds are, they're going to be a dead product for quite some time. You got bonds up huge. You got notes up huge. You definitely have a flight to quality. You got S&Ps down 60, NASDAQ down 300, Russell down 40. There are no, there's not much out there that's available to save this market. I mean, I don't think Google's going to save the market. Let's put it that way.
Mm-hmm. Agreed. Or Meta up 8 or whatever it is.
I don't think Meta's still up 8, is it?
$4.60. Sorry, I said 8. I apologize.
Meta has been.
I didn't look.
Yeah, Meta's been one strong puppy.
It was $5.83, so it was $6 higher. This was up around $10.
Yeah, I don't know what you do with. I mean, this is an all ugly move in Apple. I mean, there is no. There's no way
Apple down. Apple down 777. I mean, it squoze them to the upside. I know it squoze me to the upside, and now it's squeezing them to the downside.
There is no way to sugarcoat Apple down 7. It's not. Those aren't the moves. They don't come in and start buying Apple down 7. You know what I mean? Like, it's not like some stock you can't move around. When you get a stock like Apple,
I hate it when you say this. You know that, right? I really hate it when you say this.
When you get a stock like Apple that's down 7, it takes some bigly selling to get that stock down 7 points. Yeah, I'm looking at my watch list. It ain't pretty. The stock
my friend Chris said the longshoreman may be nearing a deal already. I don't know who he's talking to. Let me talk to my friend Mr. Gambino and see if they're really. Nah, Gambino says they're not ready for it yet. But whatever you think, Chris, I'm good with you too. I hope they do. Nobody likes a strike.
No, I don't think so. And I think that will be short-lived. But again, I do not think. I don't think this is a. I don't think that's the issue here. I'm going on record, but I don't think that's the issue.
Okay, dokie.
Is the Tesla numbers come out tomorrow before the opening, or is it after the close?
I don't know, to be quite honest with you. I can find out for you. Tesla down $8.67. Even the S&P down 70.
Yeah, 70 is a big move at 9:12 in the morning Central Time. And today you have Nike is the one stock that I think you mentioned that they do have earnings.
Yeah.
And my question would be, under normal circumstances, you have a day, like a kind of a normal trading day, and you get a stock like Nike, because it's not going to move much today because it has, earnings. So it's down 25 cents. Normally you'd be like, completely neutral on earnings, right? But you get a day like this when it's ugly, all of a sudden you start to think differently about earnings. I always hate when companies issue earnings on bad down days. It's like, okay, this might not be pretty. But we got a piece for you today. I mean, we didn't know this was going to happen. We have a piece for you today on zero DTs, because on Tuesday we do zero DT options. But before we do the zeros, just a quick little reminder, in 2 weeks, on October 17th, 2.5 weeks, we will be in LA. I'm sorry, October 19th. I said 17th, I meant 19th. On October 19th, on Saturday morning, we'll be in LA at the Fonda Theater, and we would love for you to come out and hang out. We got a lot of people signed up for it. We're really looking forward to hitting LA, and the whole gang's going out there. So we'll be at the Fonda Theater on Saturday morning, October 19th, and can't wait to get out to LA. That's where my son lives, so that's where we get to visit family. We're all happy, and doors open at 8 a.m. Show starts at 9, and we'll see you in LA. Also, right after that, just 2 weeks after that, we're going to be in Dallas, Texas. And if you haven't signed up yet for Dallas, we would love to see you there. We're going to be in Dallas, Texas on Saturday morning, November 2nd, and the same crew, and really looking forward to Dallas. Maybe we'll even sneak in a little barbecue while we're there, Bat.
Good for you.
I always try to make a pit stop at Pecan Lodge or Terry Black's, and I think we will be able to sneak one in for the good kids. So that should be fun.
I think men of your stature now say pecan.
I say pecan.
No, you're not a man of the people anymore. You can't say pecan. I say
pecan. I'm not a pecan person.
You're a pecan guy now.
I'm a pecan.
You are. You've changed. You know you have.
After that show in Dallas, we will be in. We're going over to the UK, and we're going to kick off a 5 days of shows on November 11th in Edinburgh in Scotland. And we have never done anything in Scotland, Manchester, Birmingham, or Dublin before. So we're going to start in Scotland, we're going to end in Ireland, and in between we're going to go Manchester, Birmingham, and London for a live trading event in the UK to kick off Tasty in the UK. So Tasty is now live in the UK, and we are kicking it off with a 5-day event, all live trading shows. If you haven't signed up yet, please do. London, we're about to shut down registrations because we're full. I think she's going to keep it open till Saturday, but we're going to shut down London registrations. But all the other places, Edinburgh, Manchester, Birmingham, and Dublin, all have plenty of space, and they're small, intimate, venues. So really looking forward to seeing everybody. And if you haven't signed up yet, tastylive.com/events. All right.
Beautiful.
Let's do it. This was more than a mouthful,
Sosnoff.
This is a zero DT piece that our research team put together that is, I really like it. Anyway, they called it too long or not too long. I don't even know what that means. But based on overnight moves in the SPX, the ES, whatever you want to say, what about directionality for zero DTEs? Do you think you get paid by being directional based on an overnight move? So let's say the market was up overnight last night. Do you buy them? The market was down overnight. Do you sell them? I mean, what do you do based on what happens in the overnight markets when the market opens the next morning and you're sitting there going, all right, how do I want to trade these zero DTs? I don't want to sell a strangle. Should I just sell a naked put? You know, puts are schmutz. Puts are schmutz.
Yeah, I mean, I don't know how long this study is going to be with zero in one day. I'm going to imagine it's relatively short.
18 months. 18 months.
Yeah, and in that time frame, we've gone to all-time highs.
Yes.
So I gotta say, if we had a down day and you sold puts for the next day, you had to have done well. I think it's good. I think you get paid. Sure.
This is an 18-month study looking at overnight markets and determining whether you should sell puts or calls or just taking a directional shot. We're going to give you all the details if the market. Go ahead.
Go ahead. No, I was going to say, like, I don't think I'm going to say the numbers are going to be better for just selling puts versus calls, but I don't think it's going to be. I don't think it's going to be as big as you think, and that would be my guess.
There is no question over the last 18 months since we've had zero DT options that the market has done really well. In fact, for the last 2 years, the market's been up huge, and we're basically, you know, a day off record highs.
Right.
It would be really hard at this point, you know, to think that anything you did in the put selling, with respect to put selling, would be successful.
Sure.
Let's take a look. So at Tasty, our core mechanics rely primarily on delta neutral strategies, and to be fair, you know, we're pretty directional, so that's not totally true. But when we talk about, we do research, it's mostly delta neutral. But the zero DT options are different enough from longer dated options that it's worth reevaluating our longstanding practices. In an efficient market, deciding to be long delta, short delta, or neutral delta is a personal risk preference and market assumptions. But what happens if we pick a side for our zero DT trades and have overnight SPX moves been helpful as signposts? Have they been helpful in us picking direction? And we're going to see. Let's go next slide, Beth. So we did, in this case, like we always do now, we use 18 months of research, and we used all the basically the tick data every 10 minutes just so we can control the amount of data. We considered selling zero DT options, not the day before, but at the market opening, using deltas now, 35 deltas, 25 deltas, and 15 deltas options, puts and calls, not together, but puts and calls. All the trades were closed at 25% of max profit. So this is not holding all day. This is just quickly taking profits if you can. We contrasted the performance based on the size and direction of the overnight moves. Did the SPX rise or fall overnight? Was that by more than 0.5%? And did the SPX change in absolute value by more than 0.5%? And we did everything at mid-price, so you can add a little or subtract a little, however you want to look at it. Let's go to the next slide. All right. So short 16 delta puts. Now, this is the one that if you were ever going to have one that's going to be probably the most, I'm not saying the best bang for your buck, but I'm saying you're going to have the highest win percentage. This is going to be it. Because Tony and I both said we've been up for 18 straight months. This has been kind of the layup. I mean, I don't do this, but this has been a layup.
In hindsight, right? I mean,
in hindsight. The win percentage overall, 97%, which is insane. If the SPX rose overnight, 98%. If it fell, this is selling puts, 96%. If the SPX rose, it didn't matter what happened. Half a point, down, up, whatever it is. You made money. If you just sold 16 delta puts on the opening in the zero DTs every single day since we had zero DT options, except for today, you'd be doing quite well.
Right, and the day's not over, but sure.
You'd be doing quite well. Let's go next slide. So now we're going to look at the 15 delta calls. Would you have done as well? Considering it's been a bull market, the win percentages are really high, 92% overall. The win percentage is actually higher than I thought. Here, and the interesting thing here is 100% win percentage if the S&P fell by more than 0.5% overnight.
And 0.5% is nothing. I mean, let's put it where it is.
25, 28 SPU handles.
Yeah,
That's
exactly.
It.
Yeah, right.
But here's the crazy thing, Tony. Overall, you lost money.
Yeah, that is crazy.
Overall, you lost $80 a trade. If you sold puts, you made a lot of money. If you sold calls, you lost money, even though you had a 92% win rate. And
more than I had suspected prior to seeing the study.
Pretty much selling calls only worked if the S&Ps had a pretty big down move overnight. Let's go to the next slide. As you step up a class in delta here to the 25 deltas, your short puts still worked really well. Of course. Regardless of the market, overall 95%, your average daily P&L $118. Overall short puts worked really well, the 15 delta or the 25 delta. If you go to the next slide, which is the calls, it's a very different story. You lost money pretty much no matter what you did, unless the S&P was down big overnight. The only time to sell calls was when the S&P was down big overnight, because it must not have reversed against you that many times.
Or the volatility got, so high that even if it did reverse, it didn't reach that number. Again, just another way of saying, when volatility is high, you can almost do, you can do both sides.
And that's only when the S&P, by the way, was down more than 0.5% overnight, as measured by, we put SPX here, but it's really the ES futures. Is how they do that, judge that. The win percentages were still really high, but you overall lost money. So selling 0 DTEs overall, on the call side, whether it's 15 delta or 25 delta, did not work, unless there was a big down move overnight. Selling puts works no matter what. Let's go to the 35 delta.
Schmutz, you said it from the very beginning.
On the 35 delta, I mean, the win rate's still ridiculous, and you can see here, you even made more money.
Right.
You killed it with 35 delta puts. I mean, those are, the bigger the put, the more money you made. That's because over the last 18 months, instead of being up 53% of the time, the market's been up closer to, over 60% of the time. That's why these numbers are huge. If you go to the calls, I'm sure it's not going to be as pretty. And go to the next slide, Beth. 35 delta calls, and every number is pretty much a loser, unless we were down big.
Yep.
So the takeaway from this is, with the 0 DTs, for the last 18 months, if you wanted to get long, you did really well selling puts on the opening. Didn't matter what delta. If you wanted to get short, selling calls, you did really poorly. Period.
That's the facts, Jack.
That's the fact. Unless the S&P was down big. That's the only thing. Let's go to the next slide, Beth. So takeaways. Over the past 18 months, short out of the money 0 DT puts have generally been a winning trade, provided they were managed aggressively. Remember, these are all managed at 25% of max profit. So nothing went at the end of the day. So you had a day we had one day where we opened down 100 points the S&Ps, we closed up. Yes. But you had a chance to manage that at 25%, you were out.
25% of the profit, yes. Correct.
Right. A large overnight gain in the SPX was the only negatively correlated factor for short put success. Short calls, on the other hand, were generally successful only after large overnight losses, or large overnight drops, I'm sorry. The efficient market hypothesis says that we shouldn't put too much faith in looking at past price moves for making our trading decisions. But if you decide to be directional with your 0 DT trades, considering overnight SPX moves or overnight ES moves is a reasonable place to start. The numbers are pretty remarkable.
As Spanky would say of the Hour Gang, remarkable.
Yeah, and just as a little, before we get into Scott here, bonds have just sold off actually about 9 ticks off their highs, just bringing up some points context. And gold sold off about $10 and crude oil sold off about 50 cents. Maybe things are starting to normalize a bit here.
Yeah, I mean the S&P's almost 10 handles off of their lows. Nasdaq still about 20 handles off of its lows. Volatility, on the other hand, sound enough still up there, 20.35, but about 40 cents off of its highs. We'll take a quick 90-second break and come back. We got more Tasty with this man, Mr. Scott Sheridan, coming up from the Tasty Trade World Headquarters. We'll be back in 90 seconds.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Hey Doc, your tips on diet and exercise have been illuminating. I'm sure busting my ass at the gym 5 days a week is gonna be way quicker than just giving me the skinny shot.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Batten down the hatches, everybody. He's going on the skinny bitch diet. He's gonna be hangry.
From the smart mouths at Tasty Live.
Whoa, whoa, whoa. It's a little scary out there, folks. That's right. Bonds up, gold up, dollar up, markets down. Well, are they down? I mean, they're still down, but they're trying to make a furious rally a little bit. So we'll talk about all the things that are going on there. JOLTS report came out this morning. Of course, it's the first of 3 total jobs reports that we get this week. And, well, I don't know what to think of this recent one. We'll talk about what we see. And then finally, Nike has earnings tonight. All they're trying to do is avoid the disaster of last quarter. So we'll talk about those 3 things and more. We'll take a look at not only those Nike earnings, but a couple of other earnings that are out. And we'll look around the landscape and talk about what has changed in my portfolio today. But first, welcome to the most dangerous show on the Tasty Live Network, folks. It's Engineering the Trade, and I'm your host, Jamal Chandler, and I am happy because I have 3 fantasy football teams, and I won in all 3 leagues last night. That's right. It doesn't get any better than that, which makes it a little scary because usually if you win in like 3 leagues and you have 3 leagues and you win in all 3, it doesn't get any better than that. And at some point it's going to change, and I know it is, and I just don't know what the hell to do about it. But in the meantime, I'm going to celebrate. I got to talk about one of them. And I'll talk about the work league in a second. I mean, last night was crazy because, look, I know it's impossible to win in 3 leagues. I don't get in all 3 to win. You figure if you're winning one of them, win them all. Like, I mean, win it all, like championship, right? Like, if you have 3 leagues, it can kind of drive you insane. I mean, really, unless for some reason, like, a lot of people try to mix it up and do it a bunch of different ways and get a bunch of different players, and then your chances of hitting on any one of those teams and that team being the best team is better. Some people try to get a lot of the same people on all those 3 teams per se, and then that way you kind of don't have to think as much, right? Because, well, if everything's going well and all the players are kind of the same, then you basically have just one big team, just 3 iterations of it. Well, you can't control any of that, right? So I just draft who I draft on any given day and team and whatever, right? So the one team I want to talk about right now, and I'm looking directly at the chat when I do this because I know my guy Frankie's in the chat, is the team that is helmed by Jaden Daniels, a quarterback for the Washington. So weird to say Commanders still, but Commanders. Frank and I talked prior to draft night, and I was like, you know, I was thinking about different quarterbacks, And it was funny because it's like he read my mind. He was like, "You should get my guy Jaden Daniels." I was like, "Actually, I was thinking about getting him." I just felt like, he's a young rookie. He had the ability. He's a Heisman Trophy winner. Not only did he throw for a ton of yards, he ran for a ton of yards. I feel like that's the kind of quarterback that does well in today's NFL. And so he was definitely somebody I was targeting one of those drafts, and I did get him. And he's propelled that one team that I have to 3-1. That team also has A.J. Brown, who's been mostly hurt. Has DJ Moore, who, has been dealing with a rookie quarterback, of course. I will say one of the games I won last week, I had Jawan Jennings, who went off for like a godly amount of points, which was nice. But this past week was interesting because last night, Tony Pollard helped me to a win in 2 different leagues, which was awesome. And then in the work league, I got here with me and the boys in production and a couple of the other fellas on the show. I ended up going up against somebody. It was a tight game. I actually thought I was going to lose, and none other than Kenneth Walker III, who gets 3 touchdowns last night, ends up propelling my team to a victory. It was crazy. I mean, there was a lot of action last night, especially with 2 games. It was kind of fun. So, I got I'm pretty happy to win in all 3 leagues. That was a pretty nice surprise yesterday. Fantasy football is fun when it's working for you, right? If it's not, man, like those who have Christian McCaffrey, they are so pissed off right now. Oh my God. I'm trying to get a buddy of mine to trade him for me. We'll see what happens. I mean, I don't expect it to happen. I get it. I mean, you're just going to go down with the ship. That's fine. Do it. Just don't come asking for my help. Let's move to the platform. I'm sorry, not the platform. Let's move to the slides and just talk about what's going on right now in equity markets. Of course, we sit here with the ES down 37.5 points, NASDAQ down 200 points, Russell 2000 down 26 points, and basically Dow is flat on the day. But that's not the whole story, is it? When we came in this morning, markets were down pretty big and a little spooked out by obviously what's going on over in the Middle East as rockets are flying everywhere. And obviously that's the case because not only are equities down, but it's been a flight to quality, right? When you look at bonds are up, gold is up. Obviously, oil is up. That's obviously an oil-rich region. That's usually something that really goes on over there. So you got, like we said, bond. When I see dollar up, bonds up, gold up, that's clearly some fear, along with equity markets being down. That's some real fear that's going on at this point in time. And then you see the oil spike that just adds on to it. These are opportunities that, as vol sellers, we look for, right? It's just a matter of being safe in doing so. So I haven't really dove in, to be honest with you, as far as my trades. And a lot of you who follow the show know that I often have been saying I've been long the dollar. I've been long bonds, which is really nice to come into a day and have that work for me. I was long gold. I got out of that, as you know. I was short equities up until today. I was short equities, being short in MES and short in MNQ. And I just closed those out earlier today. As a matter of fact, I got long ES at 57.47 in the orders. That's not nowhere near the lows of the day, but it didn't seem like we were going to extend this sell-off, at least today. So that's kind of where I am as far as equity markets. Flower Power 2222 is talking about the port in union issues. That is an issue for supply chain and extra costs for retailers, but I haven't really seen that thing materialize quite as of yet. Matter of fact, I didn't even know about it until Josh mentioned it yesterday on the show on here on Engineering the Trade. And then I went home and I saw they mentioned on the news, but to be honest with you, I haven't seen that infiltrate its way into our equity markets or any wall of worry. If there's anything you would maybe see it on is the God, I'm already blanking on the name of the it'll come to me, but the metric where basically you can look at the prices of shipping, that's probably the biggest metric you're going to see it on in the time being. I haven't seen it affect any real stocks as of yet. I mean, when you look at Walmart or Target or anything like that, I think, obviously it's a issue to a degree, but I don't think it's affecting markets at all. The biggest thing affecting markets today is what's going on across the seas, and we'll see if it continues to be something throughout the week or if it's just a day thing. Who knows? Sometimes these do calm down. We'll see what ends up happening. The first of the job reports that we're going to get this week is the JOLTS, and it jumped to a 3-month high, over 8 million once again, which, again, there's a lot more job openings, right? It's a job openings report, which is kind of inflationary because if there's a lot of jobs open, gets back to what we saw 2 years ago, where people are able to jump from job to job, sometimes even get paid more. And so it's it makes you wonder. You got to remember, a month ago, this thing was contracted big time. Eventually, we saw a not so great jobs report. All hell broke loose in equity markets. This time around, though, it's a little bit different. You wonder if this jobs opening, JOLTS report, going higher leads to a situation where we get a better jobs report, and maybe then you end up having the runway for more rate cuts, or I should say a bigger rate cut, right? And that's been the push and pull more recently. Is Powell going to do a 25 or 50 basis point rate cut come November? We still got a solid, month and change before we even get to that report. So, and we don't have I shouldn't say report, I'm sorry. We got a month and change before we get to the Fed meeting, and we don't have a Fed meeting in this month. So not only do you get this month's job report and CPIs, but you get next month's job report, no CPI before the Fed meeting. But anyway, what does this mean for rate cuts is the big thing about JOLTS report, right? And then tomorrow we get ADP, which usually doesn't mean as much. But this is something interesting. The fact that we're getting higher job openings once again, does that bode well for a jobs report on Friday? I guess we'll have to wait and see. And does it mean that we can go higher on a rate cut? Finally, we have Nike earnings coming up. Now, last month, as we all know, Nike earnings were a complete disaster. Stock just completely tanked. They're much like, what's interesting? Nike is very kind of similar, I guess, in a way to like Apple. I mean, these are really huge companies that have been around for a while. They were built upon innovation, right? Nike was like new shoes here and there, the Air Maxes, the Jordans, like all of these new types of the foam posits, all kind of new stuff. And now most of the stuff you see is either recycled or basically retro stuff, which again, I love the retro stuff. I mean, I've paid for it and paid up for it at times, but that's not what got Nike to where it is now. Same thing with Apple. I mean, recycling new iPhones and calling them new or coming out with the same old AirPods, et cetera, and then calling them new again. I mean, that's not what got them where they were. That's not the innovation that got them to where they were or where they are now. But hey, that's kind of where we are. And so will Nike be, a lot of it has been, a lot's been said about the oversupply of shoes that they have, and it's kind of the same stuff over and over. And again, they're recycling and it's not new. Are they going to start to come out with new innovation or not? They got a new CEO, as you guys know about, a new guy coming in. The old guy is still around to try to help bridge the gap, but are they going to start to come out with new stuff, or are they going to continue to stick with the same formula? I imagine they're going to change that up. It's just a question of, have they done that since the last earnings? We'll find out. Leftovers. In what countries are people glued to the television? Let's move to the next slide. This is the share of respondents who watch TV for at least 11 hours per week. I know many of you watch for longer. The UK, apparently people are watching television. 32% of the people say they watch television for at least 11 hours per week. In Germany, 28% say that. In France, 27%. I wouldn't have expected that in France. I wonder if that's just... Well, I wonder how much of this has to do with age, too. I really don't know across what ages they did this survey. But, because, obviously I feel like, I would like to think when you're a little older, you're sitting inside watching TV. But, young people do, too. Because that invalidates my point. South Korea, 24%. Can you believe that the United States is 22%? I feel like we watch a lot of TV here. But apparently not. Only 22% of the people say that they watch TV for 11 hours a week. Brazil, the same, 22%. South Africa, the same, 22%. China, you watch TV for 11 hours a week, they will cut your hands off. I'm just kidding. I'm sorry. They won't do that, I don't think. But 15% of the people in China watch TV for 11 hours a week. That's right. That's right. Otherwise, they will kidnap your family. Let's move to the next slide. Let's move to the next slide. Look, like the next slide, like after leftovers? Yeah, that one. Thank you. Equity performance here, S&P 500 performance quarterly. Look, we just had 4 straight quarters in a row. We haven't done that, as you can see, in 4 years. That's right. If you remember the big change at the beginning of COVID, Q1 and then Q2, big complete opposites, almost 20% down, 21% up following the next quarter. But then, yeah, that's the last time we had 4 quarters in a row. Of course, 2022 was not pretty at all. Down 5, down 16, down 5. Just to start the year, finally, we had a positive break at the end in Q4. And yeah, when you look over these last 4 quarters, going back to the end of 2023, it has been a banner ride in equity markets, particularly the S&P 500, 12%, 11%, 4%, and then 5% more recently. So pretty strong. You can almost not be surprised that we're down today. It just so happens to coincide with a day where we have some geopolitical strife going on. But yeah, pretty strong markets. Let's move to the next slide. So I don't typically talk about seasonal performance, but this is interesting. This is the S&P 500 average peak to trough decline, right? So this is just saying if there is a decline in month, the peak to trough decline in any given month is this. As you can see, October stands out at negative 4.6% peak to trough declines. Now, obviously, there's been a couple of really bad Octobers, particularly 1987, that factors into here. Although I should say, well, again, it's peak to trough decline. So it's not like where the month ended. It's just average bottom to top, right? And of course, there was a big decline in October of 87. And there's been some other Octobers that hadn't gone so well in the past. Next in line is September, actually, which is negative 4.3%. September ended up being a somewhat positive month overall after all the talk of how seasonality is in September, et cetera. But it ended up being fine. August before that, negative 4.1%. So these have typically always been some rough. We've seen some rough months and some rough August, September, and Octobers, I should say, over time. And again, this is just peak to trough. So bottom to top, worst declines during these particular months. And then January is the fourth of all of these. And then you see May and June. So something to keep in mind if we do get some declines. It could end up being a little bit volatile in this month compared to other months on average. Let's move to the next slide. It's just seasonality. You don't necessarily know how it's going to play out. Looking at the forward curve, you can see October, VIX futures are trading well above November and December. Of course, October captures that November election. Yes, we have some backwardation, of course, but this is not necessarily going to change itself until, well, it's not going to change itself at all, actually. The October VIX futures expire in about 2 weeks, actually. And then the November futures will become the front month, which are currently trading 1880 right now. This snapshot was taken earlier, but once the October VIX futures expire, then VIX November will be the front month. And so my point is like, usually when we get to expiration, you'll see the front month lower than the next. That's not going to happen here because this thing is still capturing the election. Even though the election won't have happened, this October future will expire. You know what I'm saying? So that's how it's going to end up playing out. But I don't even know if Nova is eventually going to trade below December. December is really low, has been low for a while, and it doesn't seem like it's going to jump up above at any given point in time. So we just got a weird looking little curve here, like the Big Dipper in a way. Let's move to the next slide. I got to be honest with you, I meant to add some numbers onto this, but this is the forward curve, for 3 month SOFR futures, but you can look at this as if you're looking at the Fed funds futures curve, right? So you just take any given point and subtract 100 from it, and you get the idea of what the effective rate will be for that given month and any changes in the rates that are coming up, right? So let me just look at this real quick. When you, let me see, 4.5, when you're looking at March we have on here, I see March, 96.5, is that right? Yep, when you look at March, there's a big dip here in the curve. It's the big dip that you see up there. That's tracking about 4.5% effective rate, right? Essentially to say that even out in March, it's not expected to be too different than where things are now. I should have put numbers on here. Just let's skip past the next slide. Next time I'm going to do this on Thursday and I'm going to put numbers along with this to make this more understandable. But essentially, we're still tracking about 4.25 to 4.5 rates, even further out to March. We'll see how it ends up looking. So earnings, like we said, we got Nike, we got Lamb West. I don't even know what RGP is, but it has earnings. CalMaine, I think it is. CALM has earnings. ConAgra has earnings. RPM has earnings. ADP report, like we said, is coming up on Wednesday. And I fully realize that is not how you spell Wednesday. That's how you spell Wednesday. September non-farm payroll is coming out on Friday. That's going to be the big number. I mean, this thing kind of upstaged the payroll a little bit today, but I'm pretty sure it still has some meaning. As a matter of fact, we'll look at the expected move, including, of course, some of today's volatility. FOMC meeting minutes are next week, right? So basically, we got ADP. You got ADP tomorrow. You got non-farm payroll on Friday, and then you got FOMC meeting minutes on Wednesday, and then you got CPI on Thursday. So you got a couple of things that could mix up some volatility when it comes to equity markets here. We'll see. Number of S&P 500 stocks above the 50-day moving average is 403. Let's move to the platform. Like I said, when I looked at this earlier in the week, it was 70. When we looked at this yesterday, it was like 79 points expected move for the rest of the week. Earlier this morning, this was 96, right? This was a 96 points expected move for the rest of the week. It has since calmed down to 82. Of course, that happened when equity markets were down probably about 60 and change, right? But now it's about 82 and change or so. So probably a little over 1.3%, something like that, if I had to guess. I like to guess and then eventually figure out how far off I was from the actual number. Let's see, 82.8 divided by 57.20, 1.4%. It wasn't too far off, 1.45%. You got to imagine it's going to be volatile. I mean, jobs reports have been volatile over the last couple of months, but volatility can happen in either direction. I should say you should imagine it's going to move. Whether it's going to create volatility, I'm not sure, but you imagine it's going to move because these things have been moving markets for quite some time now. Like I said, we just got a JOLTS report that showed that we've added job openings, which is, I guess you could call it inflationary because that's what was leading to inflation before. Or I should say inflation was leading to higher job openings and more people moving from place to place, getting paid more. Now, I wouldn't necessarily call it inflationary because inflation largely seems like it's been stamped out in our system, but this is one of those metrics where JOLTS, where it could lead to the fact that we're not seeing as many firings as we think we are, and that it's creating a situation where we can not only raise interest rates, but raise interest rates more than we expect. Who knows? It's going to be a lot of Fed speak again this week. We saw some last week. It's going to be more this week. Sort of probably trying to tell us how we can interpret this report. Who knows, man? Or like Agent Per said, call it propaganda. I hear you. I am still long the dollar via short the euro. These are my positions. Like I said, I bought an MES contract at 57.47 earlier today. Closed out an MNQ short. Closed it out for a loss, but it was just time to close it out. Still long bonds. This has actually calmed down. Bonds were up more earlier today. They have calmed down some as equity markets have come back to life, if you will, a little bit. Still down, of course. I did put on 2 equity trades. Costco. I like to put on trades in vol where vol is still up and there's no earnings. I put on an Iron Condor and Costco. $10 wide. I'm short the 945, 825 strangle. I feel good about that, right? I mean, 925 is yet to be reached, really, and then 845. Did I say 845? Yeah, I did say 845. It's down here. So, I mean, that's a pretty good area to sell, right? You would think. I mean, at least it has been for the most part over the last 3-4 months, right? So that's my thought process on that. Diamonds, I wanted to sell more of some of these index ETFs, if you will. I chose not to. I just chose to sell diamonds because it was sellable. Why'd you wreck this company? Because it was wreckable, okay? I chose to sell this because it was above 30. I could sell pretty wide condor. Again, this was another good condor candidate, I thought. 435 is yet to be breached. 430 is yet to be breached. And so I decided to sell that far upside. And I sold 400 on the downside. So this is another one where I feel pretty comfortable about those ranges. But again, and it just so happens to present itself in a 45-day window. Of course, we know 45-day window is very, very good area to sell vol, particularly because you end up making a lot of that within the first 24 days. That's what our research has shown us. So I'm sticking with that. Outside of that, nothing new added to the table, I should say. Still have this AVGO on. I got to take a look at this position. 190, 140. Dude, how do we, I could probably move that in. Can I? 140 is here. I could move up to 150, maybe. At some point it's going to give me trouble. I could probably move this up. Right? Oh, yeah, I got to close this first, though. Let's close that and that. This is still 38. We like that. Close those. Go 52. Run it down just because I know it'll give me static. Boom. We'll go with that. Put that in the follow feed so you guys can see that. All we did there is just adjust our position just a little bit because I think we have more room to sell on the downside, and the trade is still there. It's not over yet. Other than that, I haven't really. I did have long oil. I did close that out. As a matter of fact, oil vol is back up. I was looking at selling some oil vol today with IVR being 80. This is one I do have to be careful of because obviously this is at the heat of the tensions, obviously in the Middle East right now. Oil spiking the way that it did. 6-handle range in oil today. You just don't see that too often. You also don't see vol this high too often, and so you want to take advantage of it a little bit. I was looking at 63, 61. This thing is such a big boy. Even something like this gets you a max loss of 1,500, but I do like this trade, though. I'm going to try and sell this iron condor. 60. Whoa, immediate fill. Oh, God. You're never good when you get an immediate fill. It just is not. I don't know just call it what it is. It just never seems to make me happy. But outside of that, I typically like to sell equity names or like the SPYs and the Qs and the IWMs in the world. And I got to tell you, this was as high as 33, but I didn't sell it, and it's not there now. So there's no reason to force it. You never know if this could be day one of 2 or 3 day sell-off here where we could get more vol. So I'd rather just wait. But this is my number one engine of looking at trade ideas. Looking at S&P 500 or Dow or whatever have you. As a matter of fact, I can do those too. And then just sorting by market cap, because I like this. Market cap essentially will lead you to, most times, the liquid names. And you can just see when you look at IVR on these, ACN, Adobe 12. Most of these are just, the vol is not there. And I don't like to sell anything with earnings coming up. So I'm not interested in Micron. I don't need too many. I've already had a ton of semi names in my portfolio before. So I'm just going to wait. I'm just going to wait for the time being. Let's see if we can find anything in, let's see, market indices. In the Dow Jones, again, the same situation here. All earnings, because of course earnings is coming up. Speaking of earnings, before we go, let's take a look at Nike real quick. What are they expecting here? $6.54, right? What do you think, folks? Do you think Nike does it? I don't know. They might have another quarter. They might have some more work to go. I would be in favor of a... What does a downside look like? Diagonal. 80. If I'm long, then 90 and selling the 80. That's $3.49 on a. You think a massive gap up, huh? I don't know, man. I don't know. I typically always bet up too when it comes to earnings. I'm almost thinking down in this case, and maybe I'm just in a bear frame of mind. This one has $276 of extrinsic. I'm inclined to go downside on this. I just don't know if they actually fully have it together yet. This is a big company. It takes some time to turn around the ship. I think I'm going to buy this diagonal. That's my story, and I'm sticking to it. Folks, that's the show. Thanks for watching, and as always, be smart, be patient, trade small, trade off. See you.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision. There wasn't a lot of innovation. After almost 20 years of open outcry standing in the pit trading, I felt like all the markets were moving to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
Hello, everybody. Tim Knight here. Welcome to October. Begin Q4 2024. Start off with kind of a bang. Couple of strike issues, I guess you would call it. One is the massive port strike called all around the coast of the United States, and that'll affect some businesses. And the other strike, of course, is in the Middle East, a missile strike. I have not been following the news that closely on that. I've been watching the markets too much. But early on, because, through the night, the markets didn't do anything. And for whatever reason, once the opening bell came, things just plunged. We were down like 70 or 80 points in the ES. We were down like 400 or 500 points in the NQ. It was pretty red out there. It has undone about half of those losses. So we've gone from like a 2% drop to just a 1% drop. But it's a drop. I'll take it. And I've got a bunch of charts loaded for you so we can kind of catch up together on what's going on as we enter this new month and this new quarter. So off we go. The S&P 500 closed at the highest point in human history yesterday. And we've undone some of that today. As you can see, we've spent the past 9 trading days with our thumbs in our pockets just hanging out in front of the drugstore. It's really not going anywhere. It's just been a grind. And if things were to get interesting, what would make them interesting is a failure of this dashed purple line you see here. Getting below both this breakout, the horizontal green, and then this very long-term channel, 15 years back. So that's what it's going to take. It would take another day like today without any buyback selling, buyback buying, recovery. But yeah, we'll obviously keep a very close eye on that. October could be an interesting month. The diamonds have also been hanging out for days now. Long shadows on these candlesticks. We had a shooting star here. Call it a gravestone or a hammer, whatever you like. There's been very little movement from open to close and lots of movement otherwise for the past 3 days. The cubes are still nicely down. We sealed up this gap nice and neat, and we went red, little pause yesterday, and another nice big red bar. And there we have it. A lot of weakness in tech, and you can see this reflected in a couple of other places, a couple of other ETFs. One of them is SMH, the semiconductor sector. This is down about 2.25%. And we also have XLK, which tracks very, very closely, as you might guess, to the cubes. This one didn't even seal its price gap like so, and it's slipping away. I'm also starting to notice an intermediate term trend line anchored from here, which was the low on, what was the exact day? Well, that was was that 8.2 or 8.5? Of course, 8.5. I gotta forget the brokerage failure day. And so this 8.5 low and this low right here around Labor Day. And so that is intermediate term support. We would need to break that to make things even a little bit interesting. But at these lofty levels, like I said, I mean, just 7 trading hours ago, we were at the highest point ever on the S&P 500. I mean, keep in mind, we've gone from 666 to over 5,000 points higher than that. It's almost like a 900% gain since the financial crisis. A little rich. And so it doesn't take much downward motion to get things really exciting on the bearish side, because we're so lofty right now. The EFA is well within the confines of this wedge we've got here, and we peaked on this last week, and since then we've been slipping slowly and slightly lower each day. With all the excitement in China in the stock market, it's sort of ironic that their market is closed, and yet it's still the biggest thing going. I suppose everything's acting as kind of a proxy now, even though they are closed. But FXI is up again, big. We have undone yesterday's intraday drop, and we've got a big bright green bar. Now, I had 3 bearish positions on individual Chinese stocks. I've taken one off. I removed this one, PDD, even though I still think it's a terrific setup. And in fact, right about this second might be an interesting time to get into it. I wanted to ease back a bit on my enthusiasm on Chinese bearish plays, but it's still a really good looking chart. So that's PDD. Out of that, I'm still in YUMC, Yum China Holdings, YUMC, which has also, as you can see, been kind of a mirror image of what happened yesterday. And I'm also in JD, which is trading now where it was at its peak yesterday. So crazy situation here. I'd felt yesterday that maybe especially with an entire week being shuttered, that maybe the Chinese mania would settle down. Not so. For whatever reason, everyone's just piling in. So there's that. Now, another tumult today was, of course, in crude oil, because there's been, Israeli/Iranian tensions getting worse than normal. And there was a lot of concern about how that would affect the price of oil. It is up. USO itself is up about 3%. It's a little off the highs. The gap on USO is right along there, 74.12. With the exception of CLF, I had already gotten out of any energy shorts, and CLF seems to not have the tightest relationship with oil anyway. But I will say that selling into the strength in certain individual items might be intriguing. I mean, just some symbols that spring to mind are like APA, SLB, COP to a lesser degree, things like that. But yeah, big, strong day for oil. Another item which has been strong, probably also due to the aforementioned tensions, is gold, GLD. Now in GLD, I bought puts on Friday. I sold them yesterday for a quick profit, and I'm glad, because we're higher now than we were on Friday even. We're near lifetime highs, and we're approaching $2,700 an ounce again. And I still think that it's probably going to ease off in the coming days, but this time I'm not going to do anything about it. I probably should count myself lucky to have made a profit yesterday, but gold has just been a sensation all year long. I was also noticing that, people often have kind of a false equivalency between crypto and gold. And I was looking, and I don't know if I have this exactly right, but from approximately the spring of 2001 to now, which is 42 months, I think, net percentage change in Bitcoin and Ethereum, 0. Ethereum, spring 2021, all the way to now, no change. Whereas gold has had a nice time of it. Over the same time span, something like this, it's done itself proud. So gold, yeah, and the crypto argument is always, well, if you bought back in 2009, well, nobody did, but yeah, yes, it's went from like a penny to $70,000. Gold didn't do that, so congratulations. But let's be realistic. Looking at that little more 4 or 5 year time span, I think is a little more useful than like, well, if you had been one of the 2 guys buying Bitcoin when it was a penny. Yeah, it doesn't work. I would also mention as an aside, as strong as gold is now, miners are only kind of playing along. We're well below where we were last week at the high. So it's a pretty tepid reaction to a strong showing by gold, whose contract is up over $25 an ounce right now. Really, the only, I mentioned, I think I had 14 bearish positions yesterday. The only one of those I ditched early this morning, and it was a dumb one, was XLU. It was dumb to get into, is what I'm saying. I'm very proud of the positions I'm in now, but this one was just like, it seems too high, and there was no pattern. This thing has gone up almost without a downtick for all of July and August and September, and here we are into October. It's just been, you could put a ruler on your screen and it would hide all those price bars. It's so tight and consistent. So that was just plain dumb. So I took a small loss this morning and won't do it again. XLU is a monster. On a brighter note, here are some of the other aforementioned short positions that I'm just pleased with. These are doing just great, and I certainly hope to hold on to them for a lot longer. These expire no sooner than January 17, so they've got like 100+ days on them still, at least. So, for instance, there's AMD, and this trend line's tricky. I wonder to myself if I should be a little more generous with this, because the breaking of this trend line didn't really amount to anything. So we're gonna be more demanding of what it'll take to constitute a break in the trend line. It's way down here. Or you could take a more positive view and say, where's support? Where would be a good time to exit and take profits? Probably a better way to think of it. ARM, really love this one. Down nicely, 3.68%, turning away from that red dashed line. CrowdStrike, another good day. We are getting pretty close to this support, and whether it breaks it or not remains to be seen. But so far, so good. It's been a pretty steady performer day by day. CrowdStrike. Very happy with Lumen today. We've looked at this pattern before. This is a tremendous pattern. It goes back to the 90s. I mean, it's literally decades wide. It is a gargantuan pattern. And I started to get into this way up high, and it didn't do too much of anything until today. So now it's starting to behave itself nicely. So down over 7% on LUMN. Amazon, down just a bit. We are nicely below this trend line, though, and today's high wasn't even above that, so that's looking good. Salesforce, CRM, also, it hasn't done much of anything yet, but we're nicely below this resistance. And General Motors up just a little bitty bit right now, but I do like how this is breaking down. And then the last one of these, Shopify, down 1.75%. As with Lumen, just kind of hanging out, but starting to behave itself not quite as dramatically, but at least we're getting a little bit of sunshine between this stop loss level and current price action. So all those are looking pretty good. And funny enough, I try to mix up with longs from time to time, and the one that is the most consistent performer is the most dull, boring, blasé idea I've ever had, which is Cal-Maine Foods. Once again, the well-symboled CALM, C-A-L-M. They sell eggs. That's what they do. They must do it really well because this thing just keeps climbing. So, NVIDIA holders are wondering, like, when is the magic going to happen again? And all those egg sellers out there are just doing great. So, yay, Calmaine. That's Calm is living up to its name for peaceful, steady returns. I'm picking on NVIDIA here. We might as well look at it. Here's NVDA. And it's a really interesting critter because it's all about this triangle. Resistance, resistance, support, resistance, support, resistance. And so support's down here. And as you can see, I mean, by definition, it's getting tighter and tighter because those lines are converging. So the break above or below that is the next action. That's the next decision point. That's the next indicator about what's probably going to happen. Do the bulls have it or the bears have it? We're getting close. So just to wrap things up, 2 days in a row, we've closed on time. Good Lord. People get used to this. Here's the NASDAQ composite. The cash index, we came close enough to seal this gap. I'm satisfied with that. We're starting to ease back. But as I say, on chart after chart, including this one, this intermediate term line anchored to the August 5 and the September, is it 6? Thereabouts, low. Let's see. Let's get the exact day. September 4. Yeah. That line is the next important test, next important medium-term test. And the big event this week, ostensibly, is Friday morning, the jobs report. And I would also mention an index that doesn't get nearly the attention it should, the broker-dealer index, XBD. This is behaving itself beautifully. We had these converging trend lines constituting this triangle. It tagged this apex beautifully back on the 19th. And little by little, it's starting to get a little bit of distance away from that. So what we want to wait for is some kind of drop away from that congestion zone. So that is it. Bottom of the hour perfectly. And I shall say adios. See you tomorrow.
If you missed the live show, here's our cherry on top weekly recap.
I see you. You've been very quiet. What's going on?
I think I'm injured.
What'd you do?
I think I injured my.
Lou?
I think it feels like a rotator cuff.
What'd you do? Lift up a bag of coffee?
Something like that.
Did you try to wave your hands in the air and you tried to wave them like you just don't care?
I think I'm injured.
Vanetta, I see.
I was doing a lot of manual labor, working out, doing a bunch of stuff, and it just,
It's the mason jars. The mason jars took him down.
Guy from California that was on the show once. Remember that guy?
Mark Sisson?
Mark Sisson.
What's the company?
Oh, there's Sean.
Just have to say that so that it sounds like you're ordering something, like, I was ordering something fancy, pork shoulder. So
It was
Tony?
a pork shoulder.
This is what he told me too.
Yeah, I'm not.
I don't know to believe him or not.
Do you have a photo?
Oh my God! I will tell you exactly what this thing is. Webs. It's called pork shank. Pork shank. It's called Stinko.
Oh my God.
Tom, can you get in frame, please?
You promised on Wednesday that you would tell us where you got the Bears tickets from.
Go ahead. I told you I was going to ask you.
Go ahead. I got it here.
Please,
you said, I don't forget.
$75,000.
I don't forget things. Was it Goldman Sachs or JP Morgan?
Now he's got to tell me. He doesn't remember the lie he told me right now. That's what he's trying to figure out right now. There's no way he remembers the lie he told me. Go ahead.
Let's hear
it. To him, it was JP Morgan.
Go ahead.
I can get up there and slap that stupid beret right up the head. Go ahead. Admit to him that you lied to me during the show earlier. Go ahead.
I didn't lie to you. I didn't say anything.
Yeah, you did. Go ahead. Tell me.
What did I say?
I'm not telling you. No freaking way.
I didn't lie to him.
How'd you get the tickets?
Where'd you get tickets?
I was gifted the tickets.
Sure you were. From who?
Just clean it. It hurts only for a second. Go ahead, JP Morgan.
Mm-hmm.
I'm in my car, so I'm going home, going to buy the tickets, and then somebody emails me and says,
"Who is this? Is it from JP Morgan?"
I'm not telling you. Somebody says to me,
how come he gets the stuff from JP Morgan? I don't get anything from JP Morgan.
They like me better than you.
Apparently.
Unbelievable.
Get the full scoop by checking out the archives at tastylive.com.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bet. My man, Chris, thank you so much for filling in for Mr. Tom Sosnoff, who's off traveling and doing all types of cool things in New York City while we work full days. How are you doing?
I'm doing all right, Tony. We're getting ready to turn into the middle of the week, and we have big geopolitics moving these markets today.
Yeah. Okay. All right. Well, let's get right into it, because today is one of those days where you really, well, both sides had some action, right? I mean, even the S&P's traded about 30 handles lower than this. They traded about 50 handles higher than this. NASDAQ is down 260. Russell's down 31. Russell was another $17 lower than this. NASDAQ was under 20,000, significantly under 20,000 to 19.8 or so. Dow actually turned green around 1:30, 2 o'clock. I saw it up $3 or $4. The Dow is actually down 100 right now. Doesn't tell you the whole story there. Another 300 points lower than that earlier today. Volatility, if I told you volatility was up 7%, you might say, yeah, even the S&Ps are down almost 50, but they were up a lot more than that. They were up another 50 cents higher than this, over 10% at one point. Bonds are up 28, and now I think I'm going to get to the spot where you want to be. Gold is up 24, continues its rally, but I think the canary in the coal mine for you is going to be oil. Oil up $2 to 70.15. Take it away.
We see here today that Iran responds to Israel cutting off some of the tentacles of their various proxy groups over the last few weeks by launching another missile barrage at Israel. Very similar to what we saw back on April 12th, as it were. No casualties reported, according to the headlines that have come out. And as a result, when those headlines come out, stocks find a little bit of their footing earlier in the day, right around 1:20, 1:30 p.m. Eastern time. We're 30 points off the lows here in ES, right around, 56, 57, 63 right now. 20 points off the highs, at least the post-headline highs. We are waiting to see how Israel responds, of course. But, you mentioned oil. That really is the tell here. I mean, you could pull up something like USO.IVR and just see how volatility has shaped up over the course of the day. It's really coming quite a lot. Oil vol has been a bell that once rung. It typically silences very, very quickly on the other side of it. We can look to spikes that we had last October when the Israel-Hamas fighting started. We can look to what happened in April this year. The spikes don't linger for long. So if Israel responds in a manner that seems to be consistent with what they did in April, where tit for tat, escalate to de-escalate, then sure enough, that oil spike, that could be it for the potential near term. Tom has pulled up a really interesting chart here today. He compiled the biggest intraday reversals thus far that we've seen in oil markets in 2024. Today clocks in as the second largest sell-off in crude oil among positive days this year. The first instance is April 19th, where you had a big reversal. And the third instance, number 3, is April 12th. So both of those were near-term tops in oil, Tony. And so if today is any indication, this may be exhausted as a catalyst already.
Yeah, because you're saying oil traded down, to 66 and change, up to 72. It's up $2 now. That would make this an up day in oil,
Yes.
right? That's yes, I get
Correct.
I get it. And that usually marks a top, you're saying.
It has this year so far, and who am I to say that this time is different? But
Sure.
Oil here now at $70.20. That's not nothing that we've seen come off the high here in quick order, and you can time it to the headlines of this attack yielding no Israeli casualties. So, quite frankly, yeah, we might get another little spike overnight or within the next few days whenever Israel responds. But if it's nothing substantive, they're just dropping bombs in the desert, as it were, then this vol that's plagued the market today is going to disappear. Oil and stocks look like mirror images today, by the way. Crude oil bottoms or top ticks when stocks bottom and vice versa over the course of the session. An April redux is not the worst thing in the world.
Yeah, I mean, it makes sense. I mean, we did have some stocks right out of the chute here, unrelated to oil or anything like that. Like, Microsoft is down $8 or so. Apple's been weak all day long, down $7. A lot of these names that we trade have gotten hit today. Very few stocks to the upside. You look here on the high option list. You get red before I even get to the first page, and there's only a handful of them. And believe it or not, those handful are a lot of Chinese stocks. PDD up $10. Meta, another Chinese stock. Just kidding you. Up $4. Google's up $1 and change. But you've had like Baidu is up $3 or $4. Let me check it out for you. Baba was also up. Yeah, Baidu's up $4.57. Baba is up a couple of bucks too, if I remember correctly. Yep, $5.97, back near its highs. I said yesterday that I thought these Chinese stocks had spiked, had that kind of like blow off kind of top to them yesterday. I got a little egg on my face today, so got this one wrong. Got a little delta in there too that putting my money where my mouth is. They took a lot of it away today.
I haven't
Chinese
had
stocks.
I'm not in Chinese stocks. They're black boxes. But we talked about this during the initial spike last week.
I know, but I was so bored. I was so bored a couple of days ago when volatility was near its lows and there was nothing to do, and the Chinese stocks started to percolate a little bit. I was like a moth to a flame. I'm not a bad guy. I did a bad thing.
Tony, if you're bored, as my mother used to tell me growing up, I'll find something for you to do. Come to me next time before you roll the dice on Chinese stocks.
My mom would say,
I have some busy work.
My mom would say, only boring people are bored, Anthony. Go outside and play. So,
well, you're bringing up Chinese stocks here. That's actually a good moment to highlight what was discussed in this week's Cherry Picks, Tony.
Yes, exactly. All about the Chinese stocks. We can put that up there. Dr. Data and his team, which is Dr. Data and Nick Batista. That name sounds familiar. Chinese ETFs and stocks are seeing a spike, and they certainly are seeing a spike. Not only today, the last couple of days. There are some popular traded ETF stocks like FXI, KWeb, Asher, which I have not traded in quite some time. But stocks like JD and PDD and Baba and Baidu certainly always reach our radar. There's going to be a nice little chart coming up here in just a second. There you go. You'll see a nice little huge spike in prices in Chinese stocks with a spike in volatility in these stocks too. And that's what really grabbed my attention, was how the volatility has changed in all these stocks. And you can see the volume if we go down one more quick little page here. You can see the volume really spiking in these over the last couple of days. Which just means everybody's watching it. The next one is the volatility spike in October across the board, which is pretty cool looking at too. I mean, some of these vols have doubled and tripled in some of these Chinese stocks, and they give you a couple of trade ideas. But you can get your cherry picks, and you should have your cherry picks. If you don't know how to get your cherry picks, shame on you. Email somebody, find something, support at Tasty Live, do something, or just click subscribe to Tasty Live newsletters on our website. How'd I do?
B+.
Thank you. Appreciate that. Give the team some love. That's how we judge things around here, is when you guys, give us a little bit of love too. So we really do appreciate it, whether it be on YouTube or anywhere else. Even the S&P is down 45. I spoke to Tom around 1:30 Central Standard Time. I tried to get a day one out of him. He wouldn't really give me a day one because we had rallied back at that point. Actually, when I was talking to him, that's when the Dow turned green. He wouldn't give me the day one, like, we would go down further today. But what's your gut feeling on this? I personally was kind of in the same camp as Tom today. I didn't think we would rally back. Volatility is still, hanging in there, percolating. It's over 20, 2015. Even on my trades that I did today, I did an MU trade. Normally I do one of my patented broken wing butterflies in SPX on a big vol spike that we had. I just thought we'd get a little bit more movement to the downside the next coming days. What do you think?
I didn't think that there was anything to this today, which is why in Futures Power Hour, we put on the long out of the money call spread here, which just dipped out of being profitable. Long the 57.75, short the 5800. These headlines
there was something to this move. I mean, even S&Ps were down 80.
There's something to the move because of the headlines. The White House put out a statement saying that Iran was about to launch a missile barrage. It seemed all algo-driven. It was the war trade. Oil up, bond yields down, gold up, right? Even the yen was starting to get some footing. Stocks were off. We've seen this movie so many times before, at least as far as I'm concerned.
How about these defense stocks too? Lockheed Martin and the rest.
Looking very, big moves there. So the war trade goes back on. We get this report out from what's the equivalent to the Israel Red Cross that says there are no injuries at any bunkers nationwide. So if there's no casualties, then this is just kabuki theater. That was enough for me to say, going to fade it for the day. But October's an odd month, right? Seasonality, you can pick and choose what you want. We talked about this on Let Me Explain this morning. If you're just a pure seasonal person, forget any unique presidential election years or specific occurrences after like 20% year-to-date runs. October's a month for you. Stocks tend to go higher. It's one of the better months of the year for both the S&P and the NASDAQ. And you can make the argument. You look back through history, anytime you've seen a 10% rally or so in the S&P 500, 1/3 of all starting points are the month of October. So you could feel great about it. You also could feel really crummy about it because we went so far so fast this year, and the average return for October after a 20% plus year-to-date gain through the first 9 months is minus 3%. You see the market lose ground 77.8% of the time. During presidential election years, the first 2 weeks of October are the second worst 2 weeks of the entire year. So, Tony, pick and choose your poison right now. Is it day one? Well, you could make the case as a bear. The price action supports it. But if you're a bull, this was enough to fade at least intraday. We'll see what happens.
Yeah, that's what makes a market. I sometimes look at volume too. 3 million SPX options have traded already today. That's big volume. You look at the SPOOs. I think the SPOOs are around 1.7, if I'm correct. Yeah, 1.7 million. Even the S&Ps have traded today. That's a big amount of volume too. I mean, significantly larger than what we've had over the last couple of days. I mean, the move has been a lot larger, and so has, volatility too, percolating. So, I mean, it's all there. I mean, you're right. You could make the narrative to whatever you want. I'm looking at the spike in volatility, and this spike in volatility, you just said the spike in volatility in oil doesn't usually hold. The spike in volatility in the options don't usually hold either. But there's been a few, and I'm not going to go back to Chinese stocks, but there's been a few that this volatility is hanging in there. I mean, you could even go as far as saying, Apple volatility is hanging in there. I know the Ivy rank is only 45, but it's been hanging up there pretty nicely too over the last couple of days. So there are places to find volatility. I'm saying both sides. I'm not saying, you got to pick one direction or the other, but there's definitely, everything's on the board now. And you've got earnings coming in a couple of weeks too. I know that's a little bit further to look than what you like to look at. But you got earnings coming next 2-3 weeks too. And then you've got the election coming, in almost a month in November. So there's a lot on the horizon. I think volatility is going to be here to stay. I don't think you'll get these spikes that you'll be able to sell, but I don't think you're going to miss anything.
I know volatility is not your typical product, but when you think about the relationship between spot and futures price, let's just say it's for any given product, right? If the futures price is above the spot, in theory, futures should roll down or spot should rise to eventually converge at expiration date. In the case of volatility here, we look to where the VIX is right now, and you say, okay, well, it's because XYZ events today. Well, you look out 30 days, 31 days, 35 days, 40 days, and you see, there's the election. Oh, there's the Fed meeting. Oh, there's non-farm payrolls. Okay, so what's coming into purview over the next 30 days for the VIX? All these major events. So this isn't like a rise in volatility because of what's happening just today. There are actually structural things baked into the calendar about a month out that probably will keep vol bid here in the short term. And I think that makes her a good two-way market, quite frankly. October could be a really good month for traders, particularly nimble short-term day traders who are willing to, go to bed with one position, or rather wake up and put on one position and go to sleep and wipe their book clean and approach the market in a completely different way the next day. So volatility, yeah, I'm with you. I think it's feature, not a bug here for the next few weeks.
Yeah, I'll give you that. But, just a few days ago, volatility was 18. And the same things that you just mentioned were all on the board and for everybody to see. I mean, I think volatility, when you're looking at, especially when you look at /VX, which I think is the only indicator that you really should be looking at for daily volume changes. But that's my own personal opinion there. When you look at /VX, it really does react to any type of news event that happens in the moment right now. Like, you mentioned a bunch of things coming, in the coming weeks and months down the line, but those are all known. So if volatility was going to be in the 20 handle, it should have been a 20 handle a week ago. I think this, I'm going to give you a little pushback. I think this is directly related to everything that's going on across the world. Things seem to be percolating a little bit. That's at least my opinion. Hey, you know what?
If I'm wrong and you're right, then this gives me all the more reason to fade the vol because it's geopolitics and it doesn't stick around.
Fair enough. But that does give us one thing to say. What's your assumption next? So who cares about my assumption? Who cares about his assumption? What's your assumption? You can send our trades. That's right. To what's your assumption? You know where to do it. You bring it to tastylive.com/assumption. And then you too could get your trades traded by Tom Sadov, who will be back tomorrow with bells on. I spoke to Tom about traveling. He's not the road warrior that he used to be. So if you haven't seen him out on the road, you probably should sooner rather than later. I think he's breaking down a little bit, especially after foliage weekend. Foliage weekend, then going to New York. Not a good spot for him.
What are you looking
to pick up today, Chris? So if you're right and I'm wrong, what are you looking to pick up? What's percolating for you on the buy side? Anything
I think
at this level. I mean, we're
at these levels.
Well, I mean, even the S&Ps are where they were, Thursday, Friday of last week. I mean, it's not like we've really gone anywhere. We're down a percentage point. I mean, off of highs.
That is true. This morning, when we were approaching the former September swing high in ES, right near 57.33.5, it was, that's a pretty compelling spot to get long and try to pick a low around some of these headlines. That's what we were doing on Futures Power Hour. Whether or not this can give us another 5 or 10 points to the upside is the difference between it being a good idea or one that's directionally correct and just improperly structured. Nevertheless,
is it improperly structured? Is that wrong?
It's like the John Corzine trade, right? Like, why did MF Global go under? Like, yeah, was he doing? They got too big, right? But was he directionally correct ultimately? Yeah.
Yeah, for sure. And you're talking about the nat gas trade, right?
No, I'm talking about his position in Spanish and Italian debt.
Oh,
right?
I was talking about the nat gas trade was very similar to that too. But go ahead. Yes. Mm-hmm.
Yeah. So he's trying to pick the bottom in European debt during the Eurozone debt crisis, and obviously they're doing a bunch of illegal things anyhow. But if the position size was smaller, they would have never gotten margin called, and the market turned within like a month of them getting margin called. And so directionally correct, structured the trade wrong, and a whole host of other illegal activity, but illegal activity that probably would have never been discovered if the firm didn't go under. So I digress. Yeah, I think you got to be patient here. There's not really a good trade on the table. We have non-farm payrolls coming up. Powell told us this week that we're going to have a lower likelihood of 50 basis points in November. The JOLTS report today told us that we're actually seeing a rebound in job openings. That's not a terrible thing for an economy that continues to chug forward. It's going to keep the super glide scenario in check for Mr. Dylan Radigan, who's waiting around.
Hey.
Come on in, Dylan. Come on.
Might as well bring them in.
What's up, gentlemen? Welcome to the show.
Don't be bad-mouthing the super glide. Okay, it's all set up.
Is that a bad mouth?
He was a No, you were like I felt like you were maybe I wasn't really paying attention. I just heard you say my name in Superglide, to be honest, so it was not clear to me what you were really saying. But I was just
talking down the Superglide. That's my beat.
Yeah,
Okay,
I was accusing Jamal earlier today of being anti-American when he told me that he was short deltas in the S&P. So I'm pro Superglide, Dylan.
Okay.
I
have short deltas in the S&P
I'm in
now.
Italy. I was distracted. I thought of your side. I was like, well, because you've had me confused. Because like you were the one that brought me around to this. You really led me to the Superglide starting last November. But I've been somewhat perplexed because I feel like Vecchio's been a little bit like on the fence last month. I feel like I'm looking for ape shit Vecchio, where he texts me. He's like, we've got to get ape shit on this thing. I haven't received that in a long time, Tony. I don't know what you guys. This guy's very calm. Not to mention, where's Sosnoff? You're saying you guys threw him in the forest, you threw him in the woods, and then he came back a different man. He's writing about it. Like he seems troubled.
He is troubled, but he's in New York today doing tasty things in New York, which is kind of cool for us and the rest of the company. But we get Chris today, which brings a breath of fresh air on this show without Tom. So I'm okay with it for a day. I can deal with it.
Okay. All right.
Dylan, they said, Chris is in New York. Let's fly Sosnoff out there instead and make Chris do Sosnoff's job while he should be in Chicago. It's
sort of an insult.
Feels like it a little bit.
Feels a little bit like we got a guy in New York, but
can't trust him.
Not the guy we want. Not the guy we want.
Chris, let me tell you something. I spoke with him in depth for about 15 minutes, which is usually a long conversation for us. And he's ready to pass that torch over to you in New York. He's done with these interviews. So you play your cards right, son. You're going to be on prime time. Mr. Dylan Radigan will have to give you some pointers. He'll help you.
Ooh, I get to win commuting again.
Yes, for sure. 100%.
Excellent. Great.
All right, Ilya, say something. I know you've been quiet there.
I mean, I certainly agree with Chris's overall assessment, not on risk, but on the idea that this is not the sort of news flow that makes me think that we're going to get a lot more geopolitics spooking. I think more likely that recedes. But the moves that we're seeing in equities don't seem to be really just about that. We were talking on overtime yesterday about the NASDAQ looking like it was going to roll over. So I was short going into this thing and via put spreads, of course. So that's working. I got a little spooked out of my crude oil short, but I'm looking to put it back on. I ultimately ended up, it was up a bit. I ended up getting out about break even. And now I have to figure out how to get back in because it looks like it might be done here. All of the signaling from the usual suspects seems to be that this is a version of what we saw in April, which is theater adjacent. Which by the way, is not to diminish how awful this is, because if the theater missteps by like a millimeter, it's a tragedy of epic scale.
You just mentioned oil a quick second ago. I mean, that's a $5.50 move, which is a $5,500 move in oil. I mean, that's a big move. Huge in oil. Move. So I'll give you, but it's mid price for the day. You know what I mean? Like like it didn't move $5 higher and closing unchanged. I would say the top is in and you're done. This is a peculiar move. I guess I'll put it to you that way.
It was down over 3% on the day. Right. Before this, depending on kind of which contract you look at, I think Z4 was down almost 3%. And once this came out, you swung all the way back to up over 5%. And now you're kind of settling back and respecting the underside of the range it broke last week. So it doesn't seem to really want to have legs here.
You mentioned NASDAQ also. I'll give you the other side of that. NASDAQ was up 1.25%. I mean, it's down a little over 1.25% now. So, I mean, you didn't have an equally sized move as you did in oil, but you being short NASDAQ via put spreads allowed you to hold on to that trade. The oil trade, I don't know what you had on. You didn't say what it was, but maybe
I had a USO puts spread on.
Well, you had a put spread on too, so you just got screwed.
Yeah.
Yes.
Yeah. I mean, I just looked at it and said, look, this thing was down 3%. Now it's up 3%, and it's because missiles are going off. I'm break even. Let me just step back here before I end up on the wrong end of a thing. It got up as far as 5%. It's back now, and I'm thinking, okay, well, if this is it, then let's go again.
Yeah, I was going to make the point that maybe you had a strategy that had a little bit more risk to it, like a naked type strategy. Like for me, I have some naked strategies in Baidu. Baidu volatility keeps expanding. Baidu keeps going the wrong direction higher. Even with the market lower, it continues to go higher. These Chinese stocks are unstoppable right now. If I had positions on that were spread, I might have been able to do more spreads and not have to adjust or do anything to trade. That was the point that I was going to make.
That's how I'm positioned in currencies. I want to be in the micro contract, but there's no options there. So I'm just outright short euro, short Aussie, short the pound, and that's working today as well. We'll see if that has legs. Dollar is off the highs, but that seems to be kind of adjacent to what's going on with stocks, sort of. Maybe not confirmed rolling over, but certainly weak in the knees.
All right. Well, I'm going to look at the NASDAQ 100 real quickly for you here, and I'm putting it from the worst to the highest. That's why my list is green down at the bottom here. And you got PDD, which is up $10. But if you look here, you only have a handful of stocks. Let's call this the NASDAQ 100. Let's say there's, I don't know, 20 stocks that are higher in the NASDAQ 100, and you got 80 stocks that are lower in the 100. That's a pretty broad-based sell-off in the Nasdaq. I would imagine the E-mini S&P 500 is going to look the same. The Dow is going to look probably worse, and even though it's down the least today. I mean, this looks like at market highs, if you're set up for a decent sell-off, I think you got all the chips on that side of the table. I mean, we can get saved here. And I don't think we're, like falling out of bed kind of thing, but a nice 3, 4, 5% move lower, I could see that in the horizon these days.
And NASDAQ has been outperforming, let's say, the S&P as a kind of overall benchmark since both peaked in July. So if I'm going to be short anything, it's going to be there.
Good point. Good point. Dylan, that's 2 bells. That means you were late for school, but don't worry. You have a hall pass. You're going to be fine. You're going to keep these guys in line after this?
Listen, these guys keep me in line. If it wasn't for these guys, I'd be doing 1 day to expiration call spreads on the wrong things.
Keep you in the triple levered all cash fund still.
I'd be triple levered 1 day to expiration, 1 hour to expiration.
Go big or go home.
These guys, they're kind of trying to keep me on sides. And you got the oil rally, which is the only trade that's one of my. Anytime oil gets a bid, I'm a happy man because I like to buy those puts, Tony. I'm an oil put buyer on the. I'm a geopolitical skeptic, or at least I'm an oil flow disruption skeptic. Due to the various
I like it. You're a little bit like Sosnoff. S&P 500 about 340. We're down about 160. We're higher, just to give you the number. I just did a quick little calculation. Hey, guys, I appreciate your time. We'll take a quick 90-second break. We'll come back. We got overtime coming up next. Peace, gentlemen. Don't go anywhere. Stay right there.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. I The delta of paper is equal to the partial derivative of rock with respect to scissors. Rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
How many trades must a man roll down before you say that he's afraid? How many times must we be stopped out before our portfolio's decayed? Yes, and how many times will our positions get too big before our minds can be forever swayed? The answer, my friends, is found at Tasty Trade. The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade.
It's another day of missiles flying in the Middle East. This time the market cares. It's Tuesday, October 1st, 2024. This is Overtime. I'm your host, Chris Vecchio, live in New York. In Milan, Dylan Radigan. Off in San Francisco, Ilya Spivak, to take you through the rest of this hour as futures markets get ready to close. 5 p.m. Eastern, 4 Central, as they do every Monday through Friday. No news there. But it was quite the session this morning. Axios reports that the White House informs us that missiles will soon be arriving in Israel from Iran. A little thank you gift for killing Nasrallah last week and their pager operation about a week and a half, 2 weeks ago at this point in time. The missiles, of course, do fly. Volatility spikes. It's more kabuki theater as Iranian missiles kill no Israeli citizens. Ultimately, we're now waiting on the response from Israel to Iran, but given the lack of anyone missing life, which is a fantastic outcome, of course, Israel's response against Iran probably going to be a little bit more tepid. But it was the war trade day, guys. Oil up, gold up. The yen even skirted out a little bit of a gain. Stocks were down, bonds were higher. We turn now into the middle of the week, looking forward to a non-farm payroll report and perhaps an Israeli response to Iran to clear this risk off the deck. Guys, I want to turn our attention to oil first here as we look to the charts, because that is the center of attention. 3.3% up off its opening level, but that certainly does not tell the story of where we went today. Oil prices traded as high as $71.94, as low as $66.33. We are here basically in the middle at $69.83. Dylan, this is your wheelhouse to start, because this is your bread and butter. What are we doing here, buddy?
I've already
How
bought the
confident are we in
puts this
selling
afternoon.
calls?
I bought them this afternoon.
We're in.
I'm in. I'm all in. I'm deeply out of the money right now. You know, we'll see. I got myself about a month worth of time, and I went in a you know, I don't know. I've used in the USO puts. I have to see what the strike was, but it's well into the 60s. I think this is a huge opportunity. It certainly has been every time previously. And again, obviously the levels are levels and obviously days are days and things for things, but I think it's a huge opportunity. I'm very grateful that no one died. I'm gravely concerned about the entire situation, not to speak of it so casually, but I believe the oil trading opportunity, this is where money is made in oil, is shorting it on geopolitics.
Speaking of the geopolitics, our very own Thomas Westwater put together this nice little study here today. This is the second largest sell-off that we've seen in crude oil among days in which crude was still positive thus far this year. The largest intraday reversal that we saw where crude oil prices were technically positive on the session, the 19th here. The third largest day was the 12th of April here. This is now number 3. Those previous 2 times, if you decided to fade the move higher in oil around the expansion of geopolitical volatility, you were rewarded handsomely. Now, of course, it's a small sample size. This time could be different, yada, yada, yada. But when we got that headline this afternoon in the middle of Futures Power Hour, right around 1:25 p.m. Eastern Time, that the Israeli equivalent of the Red Cross, that's that little wick here on our candlestick, that's when we begin to see that the missile barrage ends at 1, and this is the report from their Red Cross, 1:25 and 1:30, that there were no injuries. Oil comes off the board pretty sharply there. Obviously, it's bouncing back as Israel is now getting ready to respond. As their IDF said today, they will be responding this evening across the Middle East to various Iranian proxy groups. It means they could be hitting targets in Syria, Iraq, maybe even Iran itself. We'll see what that does now and if that leads to further escalation. But Ilya, I mean, you know this as well as anyone else here. When we follow what happens inside Iran, the IRGC did release a statement today.
Yes.
And that statement didn't sound like it was geared towards the U.S. And
Curiously worded statement.
It's not geared towards Israel either.
Yeah.
It was a statement that was geared towards a domestic audience to remind them that the Ayatollah is not hiding in a bunker somewhere and that they can protect themselves and project strength. Was it not?
There's an interesting series of signals, actually, before the attack and after. The idea that Iran's president, Masoud Pezeshkian, did not know that this was getting put together when he told the UN just a few days ago that they will not be goaded into a regional conflict seems low likelihood. It's unlikely that this just came out of nowhere, and it hasn't been something that's been in the works for at least a while, because of course the threats were there and there was escalation in Lebanon for a while there. Now you get this, and the message from the IRGC, to your point, is something along the lines of there will be more if you retaliate. And this was in response to recent actions in Tehran and actions outside that claimed Iranian nationals. As if to say, we don't want to create a linguistic link here saying, if you attack Hezbollah, we will respond. As if to say, we don't want to wade into that one. This is limited. And so it does sound like what this is theater, again, sort of in the worst possible way, to maintain a level of deterrence not unlike what Israel is doing with its campaigns in the wake of October 7th, looking as muscular as they can to make sure that nobody gets the idea again. Obviously, every nation looks to save face in these kinds of situations. Iran's no different. So this looks very preliminarily like that. And what we heard from the spokesman for the IDF, the Israeli military, is that this is serious, that there will be consequences, and that they will respond at the appropriate time and in the appropriate place. Which doesn't necessarily say that we're not going to attack Iran directly here. We've seen Israel, for example, assassinate Ismail Haniyeh, the head of Hamas, in Tehran. So it's possible, but we don't get any indications here that either side wants to go bigger and go direct. So in my mind, the playbook stands. I haven't re-entered my crude oil short. As we were just saying on last call, I basically got from a small gain to break even as the spikes started to go, and said, I don't want to give anything else away. I'll get out. And now I'm looking to get back in. IV levels are a bit high here. So the risk reward on these MCL put verticals is a little weird. I think we still haven't had APAC markets respond. Maybe there'll be a little bit more jostling about when they come online, especially since China is off on its Golden Week holiday, so liquidity is thin. We'll see how that goes and if that gives a bit of an opportunity, but I think I'm looking to fade the oil spike here.
Only question for you, Ilya, is why not put the short on? Why not? I guess you were in the wrong side of the spike today, I guess is the short answer.
I was, but ultimately it was a painless exercise.
No, I get it.
The reason why I'm not putting it on now is if you were to go and look at what you would get for the pricing on a put vertical, let's say from here basically out to, let's say, 65, 66 on MCL, what you'd find is that you don't get any much better than 1.5 to 1 risk reward just because the volatilities are still elevated.
Sure.
And so you'd want to let
Can I get you into a call spread? Can we get you into a call spread today? A nice shiny new call spread with your vol.
Fits the wife and the kids in the back, dog, accessories.
Good in the snow, great on the highway.
That I don't think that offers any better risk reward. In fact, worse. So I think what I'm going to do here is let this settle a bit and then get back in once I can get a little bit closer to something like a 2 to 1 reward to risk, even close, like 1.8, 1.7, something like that. It's just a little bit wide still.
It feels like oil vol reached levels today that warrant to look at it fading the volatility regardless. You don't need to be directional about it. It doesn't need to be selling a put spread, doesn't need to be selling a call spread. It's an 81.95 IVR. Obviously, this is a rolling IVR. So when you're looking at the IVRs back last October, for example, we had a big spike in volatility due to the regional banking crisis in March of that year. You go back a little bit further, the market was climbing out of deep, Russia-Ukraine 2022 inflation lows at the end of the year. So oil volatility had been high. The point is, though, at 81.95, this is exceptionally elevated. It's higher relative vol than what we had seen during the spikes in April when we had the run-up in oil prices around the last time, the first time, and now the most recent time, that Iran and Israel exchanged bombs. Did that last? No. Was there reversals around those spikes in vol intraday? Yes, the first and third largest intraday reversals this year on days where oil still ended up trading positive. So who are we to say that this time is different? That oil vol isn't going to dissipate almost immediately. The world only ends once, Dylan. Right? So why would you bet?
It's been so good. I mean, it's only about the trade structure, in my opinion.
Exactly.
The oil will come in.
Yes.
Are you selling the volatility? I mean, I think we all agree it's really, but again, we also all agree you could be right all day about anything and be wrong on the structure, and you have less money when it's over. So I don't know what to tell you.
That's right.
So I mean, this is a great opportunity for me to get better at structure, and I think to explore how to, the first principles for creating a good structure and something where I won't say we have a known outcome, but I think we have a high probability of a good decline in oil prices the next 4 or 5 weeks, if not in the next 1 to 3 weeks. And a good probability of a volatility contraction in oil in those same time windows. It's just a matter of how you position yourself into it and to maximize the opportunity.
How to maximize the opportunity? A short call vertical here. We're currently trading at $70.63. Turning to the charts, the spike highs that we have are just short of 72. Okay. Initial swing low from June. We overshoot a little bit in August. Ultimately, when we rally back, we overshoot to the upside. But there's something here. There's something around 72 that's preventing us from rallying through there. And even today, we didn't clear the high from September 24th, $72.40. So laying into a position around there, let's go to the 16. Hello, hello, hello. We need to go up here. Going a $1.50 wide, you could do a 60% effectively probability of profit where you're risking 2 to make 1. Calling the top here around these current levels. I mean, you could really tighten this up if you want it to be very, very aggressive. Just going to have to see a sharp decline in price given the deltas, but even, risking 1.5 to make 1, 55% probability of profit. Just doing a short call spread basically against the highs that we saw at the end of last month where we couldn't clear today, 81.9 IVR. That is one way to do it without having to pay a, hand over fist by buying the out of the money put spreads. And quite frankly, it's in the high vol environment. I much prefer that, we call it the wedding crashers mindset. Not saying marry me, just don't marry him. We're not saying oil's gonna fall. We're just saying that it's probably not going to rally through 72 here henceforth. So that's the more conservative way of expressing that. If you are gung-ho, I think oil's going back down to 66, guaranteed. Look where we were today before these headlines came out. Why would
I was with you before you said guaranteed?
Right. Well, yeah.
He's just picking up on my used car implication,
exactly.
which I kind of enjoyed.
Yeah, slapping. This isn't a lemon trade, Ilya.
This thing can drive straight to California on 1 tank of gas.
And I mean, and so it has been since
guaranteed,
July.
Who is the when you think of used car salesman, I think of Bill Paxton in True Lies, which is just with that cheesy car.
Yes. Well done.
I think of the Robert De Niro clip in one of those his mafia comedies where he basically threatens to attack the couple that doesn't buy the car. Anyway, you think about a used car salesman, you can have a good time. But you're trying to make a point.
Yeah. So if you want to be more aggressive, right, you can do the out of the money put thing. If otherwise doing it the tasty methodology, 82 IVR dictates that you'd want to fade any spike here. If we are waiting for the Israeli response, let's just keep in mind they signaled for a little bit that back here in April that it was coming, but it wasn't exactly something that spiraled out of control into a broader regional war. And Ilya, you point out what the Iranian president said. So again, so much signaling right now. Rallies, got to fade them. The positioning trade, I still think that's very viable. You know what? There's a reason to put on a condor right now. You're going to have to go a little bit wider perhaps, but you can put on a condor as well. Either way, though, the vol here needs to be faded. It doesn't matter how you structure it. You just got to fade it. It feels like, though, where oil was this morning, sitting closer to 66 a barrel, again, 66.33. If this risk leaves the system, then, path of least resistance is probably to the downside still.
Yeah. And that's sort of the way that I'm approaching this. I'm essentially saying, okay, let's let the dust settle. Let's let the pricing even out and the spreads narrow. And once we kind of get through however Asia takes this, because it's no small thing that China and their stimulus has been the main story for Asia markets, especially, no shock there, for basically a week and a half now. China is closed, so that bogey is gone. You can't just sit there and watch the CSI 300 here and go, are they still buying the stimulus story? Yes. Okay, as we were. You don't get that here. And so with this now the headline, then let's see how Japan takes this on. Let's see how Australian markets take this on. There might be some fuzz here yet because those people haven't had a chance to really react outside of essentially futures and OTC markets. Their on-exchange response hasn't occurred yet. So we'll see if that's anything here. Obviously, we learned with gusto, as it were, what happens when there is a delay in a piece of news rolling through the markets. That's what gave us that August shell shock. So I'm looking for that to happen, to sort of see what happens there and see if there's not an opportunity to basically just get into a put vertical on MCLZ again and just roll it again.
IDF says we proved our ability to prevent the enemy from achieving success with a combination of exemplary civil behavior and a very strong air defense system. We will choose when to impose a price. Israel's not going to respond. That makes this worse. Like they're thumbing their nose at them. They're like, okay, that was your best you got. Okay, this is done, right? Like this is.
There was also, by the way, reports that
EM have good
U.S. missile defenses in the region participated in shooting this stuff down.
Good. That's you know, the people that say like, oh, why are we overseas there? It's like it's kind of what we do, right? Like our allies need help defending their borders and upholding democracy. Like we're kind of the flag bearer for democracy. If we're not out there leading the charge, who's going to do it? So no, not surprised that we're participating whatsoever. EEM up 0.61% today. Note that while we did trade lower over the course of the session, we do pull up and take away a good chunk of yesterday's losses during the day. A shares are up by 2.83%. And when we look to the Chinese stocks, this is actually closing at its high for the session. High is 29.39. We closed at 29.38 here. I know this is tracking what's going on in the CSI 300, but the risk taking hasn't stopped overseas. This feels like a speed bump here today because the war trade came on very, very quickly. But even in gold, even in silver, these prices did back away from their highs as the session went on, ultimately signaling the market is, I think, getting ready to look past this. I mean, how soon, Ilya, does non-farm payrolls become the gravitational pull that sucks everything into it on Friday? We have to wait till Friday
probably
now?
within 24 hours, if nothing else goes bang, as it were. Obviously, everybody was focused on this and nobody was paying attention to the macro data, but we did get the ISM manufacturing report. And if you looked under the surface, it was actually a little bit better. It showed a pretty solid bit of evidence that after a lot of pain, the manufacturing sector might be starting to stabilize. So it shrank for the 6th month in a row. The pace, though, was as broadly expected, unchanged from August. And August itself was a rebound after a low in July, after a lot of pain in April, a lot of pain in May, a lot of pain in June. So if you look at all of this, you start to see, wait a second, this might be stabilizing a little bit. And then you look under the surface and you see, well, hang on, new orders look better, production looks better, deliveries look slower, which speaks to demand perking up, inventories are falling, which is again speaking to demand starting to clear them. This could be pretty solid. Ultimately, in retrospect, we'll see. Obviously, this is 1 month's data. We can't over extrapolate it now. But when we look back on this later, it may well be an important sort of turning point. More importantly, it comes after a bunch of somewhat better U.S. economic data. The GDP numbers were revised better. Jobless claims were fairly good. The PMI numbers from S&P Global were fairly solid. And then tomorrow we get the service sector numbers. That's a much bigger chunk of the economy. You see some green shoots there. You see some reacceleration there. It's going to tell a story about an economy that doesn't need 4 or 5 rate cuts next year. And I think for markets, that's the most interesting thing, because you saw them get a little freaked out by Powell's comments yesterday. It didn't hold, but they didn't like it. They didn't like it that he was out there saying the economy is fine and doesn't need aggressive, rapid easing. And if you get evidence that it's fine and doesn't need aggressive, rapid it easing, one might then reckon, just from a valuations perspective, that's not what they want to hear.
Dylan, I don't think the market cares about the rate cuts next year if the Fed's not cutting because the economy's strong. That's not a real problem.
Can I offer a different
That's how they
topic with
reacted
all
to
due
Powell.
respect?
Let's go down a different path, Dylan. Cut us through this brush of Tuesday's
I
press
mean,
action.
what are we doing here? Have you guys seen the union boss, the port strike, big man?
The most
you-
important union in America right now.
Yes. Yes.
Today, okay, this is just a couple hours old. Like, this is news. This qualifies as news. And this guy, he's not winning any popularity contest with his commentary, the union boss I'm talking about.
Mm-hmm.
And it's sort of a perfect, how would I describe it? A indication, but that there's a better way to describe it. It's a single parable in the global transition from, it's Paul Bunyan in the automation, right? I mean, because you look at the Chinese ports that are run by self-driving trucks and self-driving cranes and remote-controlled desktop stations. And then you look at the American ports, which are run like it's 1890. It's an insight into a broad, major economic transition that the world is going through. And obviously, I think you need to respect, appreciate, and defend those workers. But the way that you do that may not be to preserve a job that's gone. I mean, it's kind of runs up against a horse and buggy issue. You may need to pay a benefit as that workforce. Ultimately, that job may just be going away based on the modern port. So I think that this is not just a strike. I think this is a potential issue for Kamala Harris a month from the election, a potential issue for flow of retail goods in Christmas, and an insight parable to the global transition from people to robots.
Chris,
Dylan,
I have
you
a
mentioned-
cynical political question for you, which I am not qualified to answer, but you may be.
Mhm.
We're not far off from an election. This is a very important union. How
Probably
much
the most
of
important
this?
union in the country next to the railmen.
How much of this is extracting a price for an endorsement from whomever? Is this positioning to get something of and I'm not saying this favors one side or another.
No.
Is this an offer?
No, this isn't, I don't think there's anything political about this. Although
a month
Trump
before
and
the
the guy-
presidential election, you don't think
Trump-
there's anything
This
political?
is like, well, the contract expired here. Like, this is when they worked out the deal several years ago. So
No,
that's but for losing $3.5 to $5 billion worth of good flows per day, and it takes 4 to 6 days for every single day that's lost to fix the supply chain issues, then this becomes a problem in like 2 weeks. Right now, it's not a problem for the market, but it's the most important story that there is out there because it could lead to more significant issues. The guy that's
That's
running
an
this,
interesting
Dylan,
thing for the debate today, by the way, because of course a key part of Donald Trump's platform is tariffs, which would reduce flows through the ports.
Yeah, I have such a hard time talking about the labor policy about Trump because he's a guy who last week is talking about how he hated paying overtime, and how he didn't want to pay
That he
workers, and yet labor's still flocking to him. If you want to have your reasons, I get it, but that being a reason is why is labor supporting him if he's saying I want to screw over work? I like screwing over workers. So debating some of the finer points of policy there is a little difficult. But the math just doesn't work out. In terms of the port strike itself, I'm sure we're going to hear that it's Harris and Biden's fault, even though Biden did say something pretty remarkable today. There is a power that the president has that was passed under President Truman even though he sent it back to Congress because with the veto threat, it was still passed anyway that allows the president to force longshoremen to go back to work for 90 days. So Biden could have just come out today and said, you guys want to go on strike? Too bad. Do it after the election. I would think that he didn't deploy that because he has a sense that we're probably close to a deal already. And so we're not going to see an extended port shutdown. But Dylan, you mentioned what the guy said, right? Like that was perhaps the more jarring thing. He's coming across like a mob leader.
He comes up with full extortion shakedown vibes. It's like a Staten Island shakedown vibe.
He's wearing this gold chain saying, in today's world, I'll cripple you. I will cripple you, and you have no idea what that means. I mean,
He's like, I will bring you to your fucking knees. Okay. He was like this guy. He was full mafia.
Now listen, you want your union leadership to be strong. I get it. It looks like they're gunning towards a 61% pay raise, but there is a certain air of Ludditeness to all of this that is, what a compelling case for automation to a certain degree. Part of the reason why these longshoremen don't want to agree to a deal is because they are afraid of their jobs being automated away, which is fair and fine.
And it's going to happen.
But the ports, and it's going to happen anyway, right? So make sure you get a piece of the pie.
What they should negotiate for is a severance package, and again, like there's a broader macroeconomic issue in America, which is instead of getting into these idiotic fights, policy needs to be generated to provide financial benefits and support to the people who will permanently lose their jobs. There is no shame in that. There is nothing wrong with that. There's something wrong to just leave people high and dry, but it's also ridiculous to not make the transition. So you need a transitional policy that creates a budget to deal with it. Because what's going to happen to these fellows is they're going to get their deal. They're going to destroy themselves on the PR side. And the incentive to make sure this never happens again will be at an all-time high. And automation will come in like a hurricane, and and it won't be good for them. They're better off to come in now and say, we know you're going to automate. We want a long-term severance plan.
There is no plan, right? That's the whole thing. They don't want this to become like a Chinese port. They don't want it to become like a Korean port. They don't want it to be like a European port where there's automation because it takes away jobs, which again, you talk about the horses and buggies. I would encourage everyone to look up the speech from Danny DeVito in the movie Other People's Money, where he discusses how, when you are doing things like that, you are bickering over a smaller and smaller market share, a smaller and smaller pie. And so sure, the longshoremen may be protecting their jobs for now, but if we continue to build and we build out new ports and we build out new facilities, the private owners of those facilities are going to go right to automation immediately and not let any unionized workers in whatsoever, seeing how this is shaping up. I'm pro-union, but the way that this negotiation has gone down, it's you really shouldn't be saying that you're going to cripple someone. That's not really a good faith negotiation term to use. It's a little bit of a loaded language. But it does, it just goes to show how we are at that turning point, right? We're at that turning point where technology can completely take these people out of the equation. Chinese ports, everyone's sitting behind a computer moving around the loading dock. They're not actually physically on the ground. Very few people are. This is a demographic issue that we're facing in the West
I almost
everywhere.
feel like this strike is going to propel the transition.
I don't think that's a surprising thing. Quite frankly, I'm curious to see how this is talked about in the debate tonight, right? Because everyone knows J.D. Vance is really an interesting person to have up there tonight, because he is not your typical Republican. He is much more of a pro-worker, part of the new right Republican, as it were. Corporations
And
are too greedy.
Ohio is a labor state if there ever was one.
Right, exactly. And so a typical Republican may come out here and say, like, we got to do what Reagan did and fire all the air traffic controllers, right? But not J.D. Vance. J.D. Vance, I'm curious to see how he threads the needle for criticizing the Biden administration for not cutting a deal with workers, and yet he himself wouldn't invoke the executive authority to get the workers back to work. So
Well, this is where the tariff thing is also a big question, right? Because ostensibly he's going to be there defending the platform. And what you're saying in that platform effectively is we are going to reduce flows from imports. Therefore, there is less for the longshoremen to do, basically. And that, of course, dilutes their bargaining power to some extent. If you are going to start to raise some trade barriers here, especially to the extent that is being proposed by the Trump campaign, you're talking about a significant hit to overall trade volumes. And that hit makes for a very serious wrinkle in all of this. So if you're going to strike some kind of a deal with the people that lubricate the flows that you now want to reduce, what is going to be your position when you are in direct, as it were, you're standing directly in the way of that thing that they're saying is so essential and that they're using as their bargaining position?
But hypocrisy is the bread and butter of American politics, so that's a non-issue.
Right.
I mean, you couldn't be more accurate.
Yeah.
But blatant hypocrisy, deception, lies, and manipulation, and sanctimony, and 10,000 other offensive adjectives is the very essence of the American political system.
There should be a sanctimony index that is then a tradable product on Polymarket at least, or predicted just as a betting venue. I feel like that's an underutilized thing that could be securitized.
A lot of it. What are we looking at, Becky? What's this? What do you got here?
Well, we talk about one of the debate points has been the cost of living in America. There's debates about how big grocery bills have gone up over the past few years. Some people claiming that they are up 300% or 400% since 2020, which maybe that is true in some limited cases. That's just not what the data shows, right? Nationwide, the reason why we look at averages and medians is to get a sense of what a regular individual is facing, not you and your very niche set of circumstances, because we can't micro plan for every individual household's outcome. And the fact is that wages are up more than grocery prices, even though grocery prices are up over 20% since the start of January 2020. I think one of the things that we've learned the last few years in greater clarity is that if you're getting wage raises, it doesn't matter if you're not taking more money at home, right? Oh, my cost of living went up $1,000. Well, it doesn't matter that I'm making $1,000 more this year because I'm just seeing prices rise and I don't see saving any more money in the bank. Either way, though, the cost of living issue is going to be in full focus. This is perhaps the most interesting chart because while it doesn't speak to problems that are percolating right now, it does speak to problems that inflation may bring about in, maybe in a few months' time. DJP, the commodity ETF, hits the highest levels that we've seen going back to early June, late May here in today's session. This, of course, is the more metal-heavy commodity ETF, DBC, or rather ETN. DBC, the commodity tracking ETF, getting through an area right around 22.5 that has been instrumental in months past. We could see that we topped out there in January. We broke through and started to treat that as a bottoming effort in March. Support again in June, and then we break through in July. Now we're trying to cross that Rubicon again. So while the debate around who's responsible for the cost of living issues in tonight's presidential debate, or vice presidential debate rather, could be in focus. Is it COVID? Is it Russia, Ukraine? Is it the government spending? Blah, blah, blah. This is perhaps the most interesting thing that we have to keep an eye on moving forward. And I would like to point to an area of the market where we really don't talk about much of anything, which is ag. I don't have any specific trade on here, but I'm thinking a lot about how these ag commodities are beginning to bottom. Ilya, last week I sent you and Westwater a chart. I asked Thomas if this was an inverse head and shoulders pattern getting together in corn. No one responded to me because apparently corn doesn't get SEO clicks even in your friend chats. But when you look to the commodities here, you're beginning to see that even ag is participating right now.
Yes.
And if food prices are going up, then we have a bigger issue at hand for inflation.
This is that reflationary story that you and I have been talking about for a while that you are seeing all over the place, which is why I think the markets, and you have to believe the price action when you see it, at least I think so, why they're responding with some concern when Powell says, listen, we are looking at a two-sided risk level situation. We don't need to hurry with these cuts. And the market didn't like that very clearly. We've seen that the markets have read what the Fed has done as reflationary, be it in ag or in copper or in gold or in the steepening of the curve or in the dollar, blah, 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 blah. You name it. It's everywhere. We've been watching it basically since now almost 2 weeks ago when the Fed made their announcement, and even in the lead up. So we have this now percolating everywhere. The question seems to me from here is how much follow through you have. And when you look at ag, those are very compelling setups with significant legs if you look at some of the individual ones, because we're of course much nearer the lows than the highs. I think the question ultimately there starts to be, can you structure attractive risk reward bets, and how responsive do you expect the Fed to be if inflation seems to be starting to percolate in the nearer term? Powell has already given you a bit of a hint that, contrary to what people might have thought, they are not asleep at the wheel, and they've not gone back full 180 and said, before we only cared about inflation, now we only care about the jobs market. No, he's very clearly saying that's not the case. So if this were to move, how much do you expect it to move? This might be more opportunistic if the Fed were to act faster, but it doesn't really seem like this is the place where you'd have a lot of overall risk sentiment cross currents. About the biggest threat to this having a significant rise, in my mind, would be a rebound in the US dollar, around the same idea. Less scope for Fed cuts is a stronger dollar. We've started to see some of that a little bit. So that's a headwind, but these markets are overcoming it for right now. And I mean, even just looking at ZS here, I mean, would getting back to 1.15 be that much of a stretch?
I don't think so. And you know what? The fact that you have soybeans here, they break out after the Chinese stimulus announcement and they're staying higher before Golden Week starts in China. We basically close at the highest levels that you've seen going back to the end of July, when we really closed out last week strong. And so discounting the lack of movement in the very China heavy traded soybeans market, corn here is now breaking out, and wheat here,
yeah, I mean,
it appears like it's just starting
on
to
corn
break
be
out.
A weird level?
I don't think so. I mean, corn here, the volatility is a little bit more elevated, but getting back to 440,
450, something like that.
It's not exactly. Look, it's a way to play the inflation trade. The reflation trade, but from a different angle right now. You could probably do it also through some of the individual names that I guess like Kellanova now instead of Kellogg cereal, but PB&J, just the food ETF, the food and beverage ETF here, just going back and looking at the chart, right? This is, is this a cup and handle right now here? Is this an inverse head and shoulders? Is this just bumping up against a longer term piece of resistance getting ready to break out? But the fact that you're seeing some of the food company ETF names start to perk up and hold up at the highs, while otherwise the market isn't broadly. Same thing for XLE for energy. That's where the strength is right now. So we could talk about this debate and what they may say, and Polymarket actually has great markets for what candidate's going to say what. Kind of takes away the fun from doing our own bingo board here. The commodity story is still the story that we need to watch. Even if there's a pullback because of the geopolitical inflation that resulted in today's oil move, which was a hell of a move and took me out of the jackpot there, particularly on the iron condor in crude, which was really struggling getting through that 21 days to expiration cycle. I got out the second we crossed back above 71. Didn't need that risk on the books. But commodity story is the story to watch now for the rest of the year. It's not equities, even if equities have a pullback. It's whether or not we see a sustained push higher in inflation, because that could be what curtails the Fed's desire to cut rates more moving forward.
How do you, on that tip, how do you interpret gold being where it is, which is mighty high?
I feel like Austin Powers in the third Austin Powers movie, but when he's playing Goldmember, not Austin Powers. It still looks good. It still looks good. Technically, I'm a technical person first when I look at the charts, and I like momentum just because that's where I've made the most money over the years. Which, is that any value add? Probably not, because stocks, at least, there's been a lot of momentum for the past 15 years. So, if you just held on long enough, you've probably been up. Regardless, though, this looks like a pretty significant turnaround off the lows here today. We're still looking for 27.23, at least I am. And then even further to that point, I'm looking for 2,900. I know that's a long ways away, but the charting patterns still say that's feasible. The only question is, how do I structure this? Because I'm basically at max profit right now in the long call spread that I have on, Dylan. So provided the opportunity, I'm going to kick this out in the next few days and roll it up to say 2,850, 2,900. Just because I think we have more time to run, and I'm going to use the opportunity to get a lot of duration here to watch this continue to unfold.
Yeah, I mean, if you look at what you've seen here, obviously it's slowed down a bit the past few weeks, and that sort of echoes what you got in stocks. There was a lot of speculation in stocks. There was a lot of speculation in gold that the Fed was going to go dovish. They did. But the subsequent 2-3 weeks, momentum has been slowing, and Chinese stimulus hasn't helped. Obviously, we got a geopolitical bump here, so it's a little bit higher. We're not taking out the highs. We're just sort of near the range where we've been digesting after the Fed in China and all that jazz. I could see this pull back a little bit more as that digestion continues, but ultimately, I mean, the bias seems clearly higher. So whether you're looking at this to kick out, as Chris is saying, expiries and just give yourself the benefit of time, or if you're not in already, waiting for this to kind of get back to what it was doing before geopolitics rattled it, let it settle, especially with ISM and NFP coming up and there being some upside risk in those numbers, given how U.S. data has been going. You get this a little bit lower, it finds a bottom. I'm looking at it as a buying opportunity.
Dylan, in April, we had a pullback in gold prices. April 12th, we got our spike, just like perhaps today. Last time Iran launched missiles at Israel. April 19th, we get a little bit higher going into the weekend, but ultimately, when we see that the dust settles, gold falls off fairly hard. And that begins our multi-month stretch of consolidation here. Now, I'm not saying that we're due for a multi-month stretch of consolidation right now, but if we're following a similar cadence to what happened last time around, you could almost see multi-month consolidation, leg up into sideways move, final leg up around the apex of those fears, and then you trade sideways. Here we go. Multi-month consolidation, leg up. This consolidation here is basically this. That's the equivalent time horizon. There's the spike around the last major event. Here's the spike around the last major event. I point all that out because if we begin to see gold fail to climb into new highs the next few days around the geopolitical headlines, and we see momentum lost, I think then we have to start to put together a mindset where the rest of the year begins to look a lot more like it did in the second quarter and through part of the third quarter. Where it's not to say that gold's going to go down, but it may go through a period of rest because it has been a really solid breakout. I mean, we're talking about a market that's $200 higher than where it was just 4 weeks ago. I'm watching for that right now. That would kick out my plans for a move to 2,900, but it would mean I would just need more time. The imminent upside momentum's gone. And that would probably be a good thing for stock markets, because if capital's not flowing into gold, it's probably flowing into other things incrementally to look for more return. Why would you want to hold on to a shiny rock if other assets are printing money, right? You wouldn't. Guys, we have 7 minutes left here. On a day like today where the market is geared or dictated by geopolitical headlines, we often lose sight or track of some of the stories that may be moving the market on an individual equity basis. One such case would be what happened with Nike here, for example. They postponed their investor day because apparently they didn't have that great of a quarterly earnings result. We've been talking about Nike here yesterday as well, Ilya, mentioning this over the course of yesterday's overtime. Ultimately, I don't know if there's a great story to tell about this earnings report. Although if you're a company that's postponing your earnings day, it's probably not a really good thing. Revenues were 11.59 billion.
Equal, yeah.
Yeah, 11.59 billion versus 11.65 billion. EPS 70 cents versus 52 cents. Dylan, if we're looking for canaries in the coal mine, should we be looking to a company like Nike? I know we talked yesterday about how they made some poor planning decisions coming out of the pandemic, but if Americans aren't ready to splurge on apparel like this, what are we actually doing here? This is a consumption company.
Well, so I guess two thoughts. One, I don't feel like I know enough about why that number was what it was. And so was it a Nike specific issue, i.e. unpopular designs, distribution, delay, or can you immediately just, I guess in order to make Nike a bellwether for the consumer, you need to be clear that the only issue at Nike was lack of engagement from the consumer. What I'll add to that was, and I'm not sure how much weight to put in that either, but there's also chatter about upstream iPhone 16 production not being as robust as folks had hoped, which I would throw that next to your Nike commentary as on the canary side.
All of these charts are looking familiar. Who was it today that put this out? Was it Bernstein or Bank of America, or was it Barclays? It was one of the Bs. One of the Bs, Barclay analysts, Tim Long and George Wang. There's the note that I see. They said, what did I highlight here? There it is. Our checks indicate that orders have been cut for the December quarter iPhones at a key Taiwanese supplier. We believe Apple may have cut roughly 3 million units at a key semiconductor component in iPhones for the December quarter, they noted. So Apple comes in today about 2.91%, although broadly in line with markets. This is a really fascinating chart, Ilya. I don't know which way we're going to break, but my goodness, if there was a triangle to trade, an ascending triangle is typically a bullish continuation effort. Could also be a topping pattern, but this is going to be one hell of a move when it comes down the pipe.
Yeah, I mean, whatever this is, just if you look at the slope at which it's coiling up, the violence of a break could be significant one way or another. It does look to be ascending triangle-ish, which, to your point, is bullish continuation typically, but not always. And some of this structure is not as encouraging. In particular, that you're not really getting into the highs, that your subsequent highs don't retest the peak. So at a very generous setup, this could be an ascending triangle, or it could be something more ominous, depending on sort of how you let your subjectivity run. with setting all of this up. I think the key here seems to be that if you look at momentum indicators, you have this narrower range between about, let's call it 215 and 230, something like this. The range that's held since basically mid-August into September. And those are your bounds. It's fairly narrow. And with at least some of the company-specific stuff maybe taking a back seat to a more macro thing, because, I mean, if there's slowdowns in deliveries and if things are getting a little soggy, then the last place you'll probably are going to hear about it is from Apple themselves, which gives you space maybe if the markets want to embrace China's stimulus, if as a story that will work maybe. If they want to embrace that U.S. Economic conditions getting better is ultimately good news, which I'm not sold that they want to embrace it near term. But if they do, nothing says you couldn't resolve this to the top side. But I don't think you have enough here to even tilt you in a direction. You're basically right in the middle of the near-term range, with basically $25 above you and $25 below.
Dylan, as we wind down this episode of Overtime, I wanted to go back to the longshoreman argument because there is a little pet peeve of mine that I've come to learn about and love, or rather should I say love to hate over the years. What would that be? That would be the Jones Act. The Jones Act is a really sinister law. Jones Act makes it illegal to do the kinds of things that we would want to do that Europe does, right? When you go to Europe and you get things off of a port, it gets taken from the big ship and puts onto a smaller ship. And then that barge moves the goods around various estuaries, rivers, yada, yada, yada. It's the small shipping, if you will. Here in the United States, we can't do that, particularly if we're bringing in goods from overseas because of this esoteric law known as the Jones Act, which it's illegal to ship anything from a U.S. port to another U.S. port unless it's on a U.S. crewed, U.S. flagged vessel, right? You have some of these really esoteric laws that make our economy so inefficient, so unproductive. And one of the demands that the longshoremen have is that they want to get paid touch fees so that every time an item or good goes from one ship to another, from the dock to a vehicle, from the vehicle onto a different boat, they get another fee for it. Apparently, this guy who's running the ILO negotiations also is being gone after by the DOJ for working with the Genovese crime family. So really giving us Italian Americans a good name. Anyhow, please get this done. I remember the toilet paper shortages of 2020. No one wants to do that again. I really can't afford to wipe my kid with leaves from outside, but that's going to be an issue for tomorrow because Overtime is out of time. We'll be back on Wednesday, same time, same place, as we are every Monday through Thursday here on Tasty Live, 4 p.m. Eastern, 3 Central. For Dylan Radigan in Milan, Ilya Spivak in San Francisco, and myself, Chris Vecchio in New York, we'll see you later. Ilya's back just momentarily after a brief break. He has macro money. I'm back with Victor Jones, The Price of Truth, later tonight. We'll see you all for Tasty Live at night, coming up next.
See you there, folks.
If you missed the live show, here's our cherry on top yearly recap.
I bought a Westinghouse TV for my gazebo outside.
Oh, look at you!
Yes, and I put up Roku. I would watch the game. It was I got my apps
so
all
you're
done.
outside in your palapa?
Yes.
Can you see it from the hot tub?
Yes,
wow.
yes.
Are you going to invite Tom over?
No.
Yeah, that's going to... There's a spider on my desk. No, kill it. Oh my God.
Where is it?
It's on my microphone.
I don't see it.
Thank you, Bat, for coming to my aid.
You're welcome.
Anton, where's your firecracker popsicle?
Yeah, really.
When did you see that?
On every single Zoom call you've ever been on, you're pounding
I didn't want to spoil
firecracker
it.
popsicle. On any Zoom call I've ever been on with you, you've got a firecracker, popsicle, rocket pop, and you're not just like licking it, you're literally like biting it off of the thing.
And I don't know who was taking pictures of me.
Anton, if somebody's on a Zoom call and somebody's eating a rocket pop and they're just like biting into it, somebody's gonna notice and somebody's gonna be like, what is going on here?
I'm doing this just for you this one time.
Yeah, you got to put it against your white shirt. There it is.
It's disappearing. You see that? All right. There you go. No, that's all you get.
Oh, but getting back to our soda machine, excuse me, which does work. It's the greatest feature we have because it makes nice ice cubes and
got a lot of reports. It's out of syrup by 9:30 in the morning.
I just use it for the ice and then I get water, which
you got
a water
ice?
filter.
Don't be showing off. Don't be showing off.
Do you know what kind of ice we have?
None.
Mid ice.
He learned that on TikTok.
I learned that yesterday. That was my whole lecture. I got lectured.
Mids, like mids.
I said,
hey, the ice, it ain't bussin'. I'll tell you that much.
I said,
Nikki,
I said we have ghetto ice here, and I got lectured. And I go,
you should get lectured.
We have mid ice.
Yeah, no cap on that.
So does Tom get to take his paw and stick it with the scoop, or do you just go in and grab it? See,
there's a cup right now. Wait.
Hey, it's not a cup. It's a mug.
No, that's right. We have a ceramic mug that chips off on the ice that you can use. But Tom's already used his hand in all the ice.
And that mug,
nobody thought about putting a plastic cup in there or something like that. It's a ceramic cup with chips in it.
It's one of the old mugs from like 12 years ago.
Oh my God! Has anybody died here recently? Has anybody died?
The ice is so old; it has like that old ice smell. You know, like the ice that sits in the refrigerator or the freezer.
It's called mold.
Like it has like kind of that stale smell to it.
Burn.
Yeah,
freezer burn.
Yeah,
oh,
exactly.
Yeah, the ice is freezer burnt. Yeah.
That just means it's colder. A little cantankerous, but.
And I'm not cantankerous. Why does anybody ever say I'm cantankerous? I'm not cantankerous. I don't even know what that means, but I'm not cantankerous.
You want to know what it means?
Yeah, what does it mean exactly?
Bad-tempered, argumentative, and uncooperative.
They laughed.
I heard laughing.
It's perfect.
I'm not bad-tempered. It's not my design, period. I don't want to be with you losers. All freaking losers. Degenerates. I'm not going to your stupid hat store in Manhattan.
Argumentative.
That's not empirical ham.
Well, they say it is.
No, they don't.
You just said she's vegan.
I didn't say vegan.
Oh, she's pescatarian. Okay.
Pescatarian. Never heard of it. Occasionally.
And uncooperative.
No, I'm cooperative. Yeah, what else you need?
Yeah, nothing.
There you go.
Okay.
Beautiful. I could be
You're
argumentative.
68% cantankerous. Okay, there you go.
Get the full scoop by checking out the archives at tastylive.com.
Golf putt, normal distribution, reduced speed, increased standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Dear Braden, big thanks to you and the nerds for the wonderful tech support. Of course I back everything up to cloud, because I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
No, your office is right near a different. You're like closer to the.
Near what?
This is English. You should watch him read.
From the smart mouths at Tasty Live.
%90 goes to S&P index funds. 10% straight to
Is 20th Century Advice driving your 21st century? Will cover strategies that'll help you integrate futures and options in your portfolio. Sign up at tastylive.com/events and see where we're headed next.
As Iran fires missiles at Israel, stocks take a hit. Not surprisingly, very few people are paying attention to the day's economic data. But there is a nugget of something there that may turn out to be more relevant than meets the eye. I'm going to talk about all of that here. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And we will, of course, take a look at the market impact of today's developments in the Middle East and attempt to contextualize them a little bit from a market perspective. And then to take a look at what came out from the U.S. economic data front while the markets were so focused on the geopolitics and what that might portend over the next day here as we take a look at still more heavy-duty economic news flow from the U.S. immediately over the next 48 hours. So this is the response today, and this is the sort of latest screenshot that I was able to take of the price action essentially right into the futures settlement period. And what we see here is not surprising, really. The S&P 500, NASDAQ down, bonds up, and so interest rates down along the curve, 10-year down, the 2-year down, gold up, the dollar stronger, so clearly a bit of a haven bid there. Crude oil spiking higher. It was up over 5% at one point. And Bitcoin looking every bit the digital gold and haven that people pretended to be. Oh, wait, no, down 3.4% almost amid the risk aversion. And that's after Iran fired, it looks to be close to 200 ballistic missiles at Israel. The Israeli Red Cross reporting after some time that there were no casualties, which is, of course, a good thing, and markets settling off their extremes after that headline coming out. At one point, the S&P was down as much as 1.25%, and the NASDAQ was down 2%. So this is a meaningful improvement here in terms of what the day's price action looked like at the heat of the panic. Not surprisingly, this overtook the markets, but we did get the ISM manufacturing survey while the markets were distracted. And although it seemed to come out in line with expectations, a look under the surface might reveal a little bit more than meets the eye. So what we have here is an outcome unchanged from the prior month, 47.2. That's basically in line with expectations. Some expectations had it squarely as this. Some averages had it a little bit higher at 47.5. But the upshot here is that the manufacturing sector really didn't change significant dynamics. If we look at the headline, it contracted again. This was the sixth consecutive contraction, and the pace didn't really shift one way or another. In fact, we've been kind of anchoring at these levels for a few months here. But then one might look under the surface and see some interesting sort of indications here from some of the early in the business cycle sub-indexes of the data. So consider here, new orders. It still shrank. This is as ever in the logic of PMIs. So 50 and above is growth. Below 50 is contraction. The faster you're going is the measure of distance. So the further above 50, the faster the growth. The further below 50, the faster the contraction. About the only the only exception to the way this works here is supplier deliveries index, which when it goes bigger, that means those deliveries are taking longer. In other words, it's inverted in the sense that slower is higher here rather than higher is faster on some of these other indexes because, of course, of the underlying variable. So looking at the specifics, we can see here's the headline, no change from the prior month, and it's a 6-month run here. But again, new orders still contracting, but note at a slower rate. The index on output almost back to growth and a significant jump here from the pace of contraction seen in August. Inventories now falling, having grown robustly in the August series. And this, of course, suggesting that demand uptake might be perking up if inventories are being drawn down. Similar story from that supplier deliveries index. Note, we were basically at standstill. Now deliveries are slowing, which again suggests that maybe there's more demand, just making it a little bit more of a bottleneck kind of situation, at least as relative to the previous month. Also, the price index down for the first time this year, which may, of course, help with the clearing of inventories, help with encouraging demand. If there were a little bit less of a output price pressure story there. So we're seemingly eyeing some green shoots under the surface of this data. So even as the manufacturing sector in September basically holds near levels we've seen for 2 months now, as far as the pace of contraction, the underlying conditions seem to be giving us a little bit of a sense that things could be anchoring a little bit, maybe looking a little bit better, at least in relative terms. It's important to note that for the manufacturing sector, that we didn't see things get worse is notable, if only because August was itself a rebound after July was the worst in a 4-month series of accelerating contraction. So even just at the headline, we can see things are looking like maybe they are off the worst, which was down here, and starting to get a little bit better after all of this damage being done. Now, of course, we look ahead and we see the services sector on the menu, and that is again expected to give us something relatively steady. The expectation 51.5 on that index, which would be basically the third consecutive month at this pace of expansion for what is, of course, the lion's share of the U.S. economy. If manufacturing accounts for something on the order of 20% of the economy, the services sector is closer to 70%. So we're looking at easily the center for where economic activity occurs, where employment occurs. This will be a much weightier sort of report for how the economy is doing. But if we look at what's going on the manufacturing side, which tends to be a little bit earlier, tends to be a little bit leading, as opposed to services, there does seem to be perhaps a little bit of a skew in a positive direction, albeit very cautiously at this point, which underscores the dynamics we've been seeing in markets since the Fed issued its rate cut 2 weeks ago now, and the dynamics leading up into that. The story, of course, as we've talked about before on Macro Money, has been one of reflation. So we've been seeing this sort of message from U.S. economic data for a few weeks now. As a matter of fact, if we look at the way that U.S. economic surprises have behaved, so measuring the way that data has performed relative to forecasts, we can see that we started to really deteriorate mid-April, which of course helps to explain how the markets were so loudly pining for Fed stimulus, even as the Fed was resistant at the time, and why we saw the markets build out aggressive rate cut expectations for 2025. We can see that right here. This is mid-April, and we can see the Fed is resistant to cuts, so the outlook for 2024 is fairly anchored. But as the data starts to deteriorate, the markets say, well, you're going to need to cut more, and so since you're resistant now, it'll be next year. So this outlook for 20 to 25, this yellow area starts becoming ever bigger, and the outlook gets more and more dovish. We likewise see that you get this continued push lower, so much so that not only is the data getting softer relative to forecasts and ultimately arrives in line with forecasts by the time we get somewhere into early May, you then see a much more dark story where the data starts to meaningfully underperform. Not surprisingly, of course, in early July is where you get the Fed coming out. Jay Powell begins it with congressional testimony at the start of the month and says, okay, we're ready to cut now. The Fed ultimately doesn't move in July. That's stage setting month, as it were. And then, needless to say, on September 18th, now just about 2 weeks ago, they issue a 50 basis point rate cut. What's happened since all of this is U.S. economic data from about late August has started to improve relative to expectations. And this might be not just because the data itself is getting better, but because the expectations are being retuned. But from our trading vantage point, where volatility is created when reality and speculation don't match, and so investors have to reposition, which of course where volatility comes from. What's most critical is that now we seem to have come back to a setting here where the data has improved such that it is basically squarely on expectations. We've almost come back to zero. If we continue to see this, we're going to start to see a tendency relative toward relative outperformance. All of this sets us up for perhaps a story whereby the U.S. does not quite need all of the rate cuts that are currently baked in. And again, this reflation story seems to make the point loud and clear. The markets are not responding to Fed easing and the forecasting that they offered, essentially endorsing the market's view for 50 basis points more in cuts this year, at least 100 basis points more in cuts next year. They seem to have responded to all of that dovishness by saying, not that this will lift an ailing economy back on its feet, but that it will stoke inflation in an economy that's doing relatively fine. That stimulus dumped on top of an economy that isn't shrinking or grinding to a halt, but actually seems to be growing at a reasonable clip, if unevenly, that all of this will be inflationary. And we can see that in the steepening of the yield curve, the 10 to 2-year yield getting steeper as we get into the Fed easing cycle. Gold as a kind of anti-inflationary foil, that's up at record highs. And of course, the bond market's implied inflation expectations, 5-year break even, 10-year break even, significantly higher, and in fact, at the highest level since June. So the markets are clearly signaling here that they think this stimulus is inflationary and more like pouring gasoline on lit embers than it is attempting to restart a fire that's gone out. And so, with that in mind, the current forecast, envisioning 170 basis points in cuts from here through the end of next year, that, of course, subsumes 50 basis points over the coming Fed meetings in November and December, and then 120 basis points in easing next year, so veering on 5 cuts, that might well be excessive. We just heard earlier this week from Fed Chair Powell, who said, by the way, don't forget, we are looking at two-sided risk. It is not as if we've said our singular focus on inflation before has become a singular focus on employment now. Quite the contrary. The Fed is very clearly signaling they do not need to go quickly on easing. They have not, in their understanding, missed the window and need to catch up. And so what we see here may well be something that readjusts to a less dovish setting. And in fact, here's that Fed cut from mid-September, and we can see since then, we've actually seen a little bit of a drift into a less dovish direction. Now, this need not be bad news for stocks. We, of course, saw at the beginning of the year that as the economy improved and the stock of expected rate cuts diminished from looking at 200 basis points to only 76 before it rebuilt again, stocks were able to go up through a lot of this. Now, there's also, of course, periods when they couldn't. So here, where stocks swoon in April, we get expectations of less easing. There's a clear transition here where we anchor at about 200 basis points, and from December into late January, early February, stocks are pinned in place. So we don't have the perfect narrative here by any stretch of the imagination, but we do see that through this period where stocks are somewhat listless, this is the place where you get that diminishing run in rate cuts being driven by an improvement in economic data from about mid-January into mid-February, and then things stall for a while, nearly 2 months. So looked at in that way, this rally here from about the middle of February onward looks less like something motivated by increasingly improving data and more like a rebalancing to something that's less hysterical than this forecasting. The situation now may well be different, especially since the rate cut cycle has already begun, whereas here it was almost a year away. So a more apt leading signal might be what the markets did when Powell started to signal just this week that the markets may be running away too far. We saw this looking at the S&P 500 here, of course. Starting this week, still stuck underneath the highs from last week at 58.30. The markets do dip, though, and we can see those spike lows on yesterday's candle when Powell talks. And so the markets don't seemingly have a very positive view here of what would happen if the Fed's rate cut tally for next year were to be diluted. Which is to say then, if we have a situation on the service sector index that's going to be at least alike to what we saw in manufacturing and perhaps maybe a little bit better, if what we're seeing here continues, that is, well, then we might get more of this. And the reason this, of course, becomes a little bit more worrying then is fewer cuts. Now, a key differentiating factor why this is not this, we touched on this a little bit in yesterday's discussion, might be that the pain from rising borrowing costs is yet to hit. This is a chart from The Economist showing that of all of the rate hike cycles since the advent of the modern free-floating exchange rate financial system going back to the early 1970s, this rate hike cycle is the only one where companies' interest expenses have not gone up. In fact, they've actually gone down. And that, of course, suggests the pain has been delayed. A lot of companies hoarded cash during COVID while interest rates were very low and, of course, spent very little of it because everything was on lockdown. Those loans have about a 3 to 5 year rollover rate, so they should be rolling over right about now and into next year. That, of course, creates a refinancing cliff, and if rates were to be higher than currently anticipated, that would make digesting such a thing more painful, which is why this downtick that we see on the S&P 500 here, rejected from the high and, of course, significantly lower now, motivated by geopolitics in large part, though it may have been, may well get further legs if the ISM number dilutes Fed rate cut expectations further. The key level in view here, 57.21 on the continuous contract, and of course, then 56.65 is the next major swing top, former resistance, now support. Those become critical lines in the sand for what happens next. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show that I co-host with Chris Vecchio and Dylan Radigan, looking at the Wall Street close and what may happen thereafter. I'm back on with Chris for Futures Power Hour on Fridays, on with Victor Jones for The Price of Truth on Wednesdays, back with Victor and Tom for First Call on Sundays, writing for the news and insights portion of tastylive.com, and commenting on the platform formerly known as Twitter at Ilya Spivak. Thanks very much for joining. Macro Money's back tomorrow.
We are ready to build. This is make or break for this team. It's down to the last 2 minutes, and it's time to rock and roll, baby. That's all I got is 2 minutes. The Nets on a good night. I don't know if they're going to be able to make it, but I think they can just slip right on by and maybe take it through to overtime. I think we're going to overtime. Here it comes. Man, he hit the boards hard on that. Wait, this is football, right? Woof! Woof! Take one. Hey, baby. Hey. I like the looks.
He's looking for long-term strategies for this bear market.
Well, first of all, I don't think we're in a bear market. But if he thinks that there's going to be continuation of 2022 and he wants some bear market positions, if you're doing what he's doing, which is putting away $1,000 a month and maintaining some kind of a core portfolio on that, I would have some positions in there that are not correlated to the S&Ps. That's an important thing. You want some non-correlated or negatively correlated positions to the S&Ps, which might be some, commodity ETFs or things like that. And the other choice would be, instead of being long a stock, maybe you'll be short the stock, and against the short stock, sell put. It's the reverse or the inverse of a covered call. Mm-hmm. So a covered call is long stock, short calls. A covered put is essentially short stock, short puts.
Rock, paper, scissors? He just played paper. he'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Rock, paper.
Scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
He's looking for long-term strategies for this bear market.
Well, first of all, I don't think we're in a bear market. But if he thinks that there's going to be a continuation of 2022 and he wants some bear market positions, if you're doing what he's doing, which is putting away $1,000 a month and maintaining some kind of a core portfolio on that, sell put, it's the reverse or the inverse of a covered call. So a covered call is long stock, short calls. A covered put or portfolio on that, I would have some positions in there that are not correlated to the S&Ps of a covered call. So a covered call is long stock, short calls. A covered put is essentially short stock, short puts.
What is going on, and welcome back to the Bad Taste segment. Today's Tuesday. Pretty big sell-off in the morning, a little bit of consolidation, then a little bit of a rally, then sell-off end of the day, but nonetheless, some volatility in the market. How are we doing today, Julia?
Yeah, today's not the greenest day in the world. It's actually pretty red because I have position on. I had actually bullish positions on in SPY, the Nasdaq, and the Russell. We saw a pretty big sell-off, especially across like the Nasdaq. And then I also had an XOP position on. It's not down like a ton today. Like energy products, anything related to like petroleum products. We're doing. It's like one of the few things that kind of did well today. A little too well. And then I also had a BITO position on, so we're seeing crypto sell-off. So I mean, a lot happened today, man.
Crypto Julia, is that what it is? Crypto Julia, okay.
Right now, that's how I know crypto is about to sell off. Whenever I take like an actual long position on in crypto, I know it's about to sell off. So that's apparently getting affected by the port strikes that I don't know if you've been hearing about those. Kind of like a funny. I don't know. I've been still trying to connect those dots as to why like a port strike would, impact a decentralized currency as much as it has been.
Yeah.
The best kind of hypothesis I can come up with is that it just kind of adds more. It kind of clogs up the regulatory process, which we've been seeing some meaningful change in favor of crypto these days. So now. This is kind of like slowing things down is how at least I've been perceiving it. But yeah, everything's been moving. How's your port been looking? What have you, beside the port strike, how is your port looking?
Yeah, no, I mean, for the most part. Well, before, how is BITO? Is BITO pretty liquid? It's not one that I've actually really gotten into as much, but I've never even really looked at the options chain. But I may keep an eye on it.
I literally just bought shares. And I did that because I wanted to, I think I talked about this maybe last week with Luis. We took this trade together. But they apparently pay out like a dividend yield of like 79%, 70
I think we
something
touched
percent.
on that.
Yeah. So I'm just holding shares and now it's selling off. So whatever I make in dividends, it's probably going to break even given how much we've kind of seen a sell off there. Big Deal Donuts, Mind Power, Luis, it's awesome to see all you guys. Thanks for joining us here. But yeah, no, I feel like a lot happened today. We were live when the news broke about the missile attack in throughout like Israel from Iran. So just seeing the markets move off that news was really wild situation. But what have you been looking at? Anything in particular?
Yeah, I mean, in terms of my portfolio, I have 3 indices on right now. I have the Russell, I have QQQ, and I have SPY. The Russell Inspire pretty much break even right now. I'm down a couple bucks on both of those. And then I've had those two on for 6 days. So I have the Russell on and the SPY position on both for 6 days. So I think I put that on last Monday. So those are 45 days till expiration. Kind of boring. Just kind of sitting here, just put the position on. So just managing it, but nothing's going too crazy. And then I sold the call spread in QQQ. I sold the 470 calls, bought the 475. Collected almost a couple bucks on it. I've had that one on for about 22 days now. And I don't know if QQQ is going to come down from here. I have 17 days left on those contracts. Been in this one for a few weeks, but those ones are being tested. And that's really the only one that I really have an eye on. And I really have nothing else to lose in this position. So at this point, it's a waiting game for me on QQQ, but really those indices, I didn't even realize until you asked just now, like, yo, I'm in all indices. I don't even have any other underlyings on right now, but that's how things are going over here, Julie. Nothing too crazy, but nothing crazy on either end. We're just surviving out here right now. That's what it is.
Yeah, there's, volatility all over the place. Nike's moving right now. I believe they just reported, actually, they're down to 84.40, kind of moving quite a bit. So we're seeing a bit of a sell-off in Nike. But yeah, no, I get kind of in the same boat. I'm like entirely in ETFs right now, like some kind of ETF. I got a gold position on. Gold had a really nice day today. That position's doing well. But yeah, my Russell position, I decided finally, like, you know what, Russell, let's go. Let's see what happens. And it's selling off pretty much since I put that trade on. And so I don't know, really big move today. Not the biggest move we've ever seen, actually, like obviously not the biggest move in the world, but I think it's just because the sectors and the companies that got hit really hard. I think we were looking at it on stream today. I think like it was like 60-40, 60% of the components of the S&P were down, 40% were up. We've definitely seen it way more, dramatic than that. But I think it's just because, the companies that got hit very hard, especially in the tech sector. Tech got hit really hard today. And then energy was kind of on the flip side, actually doing pretty well. VIX kind of spiked up to 1926. So we're like right around long-term averages for the VIX, actually, after all that is said and done.
Yeah. No, I'm just taking a look at Nike right here at the same time. You're right. That's definitely a stonk.
Yeah, well, that was a donk, but it's.
I mean a donk. You're right, a donk.
It's okay. Yeah, it's a pretty big donk. And to the downside, so yeah, man, lots been going on. Obviously, Middle East, that's been going on. But then also, there's been a lot of news around like this renewed trade war with China, specifically around chips. So we're seeing that continue to, hit the semiconductor sector. Nvidia, where'd you go? Nvidia is having another big down day. It was down another 4% today. That coupled with like the SMCI DOJ probe is probably bad news bears for Nvidia.
What was that?
So like SMCI is like there's a probe open from the DOJ for SMCI, and SMCI and Nvidia are pretty tied. Like their businesses are pretty commingled. They have a lot of mutual risks associated, and they do a lot of business together. So that's not great. But then in addition to that, there's apparently messaging from certain Chinese regulators about like, hey, domestic companies don't import chips and use domestic ones. So that's kind of, we're seeing a big rally in addition to the stimulus measures that the Chinese government is proposing across like Chinese companies, but also Chinese semiconductor stocks. And then semiconductor stocks in the U.S. Have been kind of wavering a bit off that news. So Nvidia was down another 4% today. I think, Intel keeps getting beaten up. It's down 3.5%. Apple, that was off of iPhone 16. Apparently they cut inventories from that. Broadcom down 3.14%. That's a great number, but not when it's to the downside. It's just overall a great number. And then AMD also been getting beaten up kind of since that news came out. And then obviously SMCI down 2.6%, really sold off since joining the S&P. So and then ON was another company I kind of saw in there. Was any semi stock up today from Big Deal Donuts? That is a good question.
Big Deal Donuts said any semi stock update right now?
Yeah, is any semi stock up? Well, Lockheed Martin is definitely up. Let's see. Lockheed Martin is definitely up. RTX is Raytheon. Those were two that were, for obvious reasons. We were looking at quite a bit today. Let's see. There's some energy companies that are up. A lot of energy stocks up. If there's any semiconductor stock, I'm not Maybe, let me see, actually. I haven't looked into like if there's any sector lists sort of on the platform. I'm sure that there are. I usually just look at the S&P as a whole. So let's see, market indices. I want to look at specific companies. This would be in like technology probably, right? Let's take a look here. Are any of these semiconductor companies? Oh, look, so much red today. Yeah, I think it was like 95% of the tech stocks in the S&P were down today. If there are any semi stocks that are up today, I'm not seeing them reflected in this list. It seems overwhelmingly to the downside. And also, hey, Lo, and it's awesome for joining us. I hope you're okay after the storm. Being a real trooper.
No, I am okay. Just I didn't get any flooding, just a little bit, and then just a lot of the power going out, things like that. That was different. One thing I'm gonna always keep is just some candles, because the power went out and I didn't even plan for candles, but the power went out and I just had candles lit and I was like, oh my gosh, I didn't even mean to do this. I prepared
Sounds very
on accident.
serene, very relaxing.
Yeah.
You know,
Yeah,
it's like a yoga studio or something.
It was a little eerie. I'm not gonna lie, but I didn't mind. But I'll get over here.
So yeah, I'm glad that you're good. But yes, a whole lot going on today in the market. A lot going on this week in the market, y'all. Trying to think what else. Did you want to add anything?
Really not too much for the most part. Really, oil was the one that caught me off guard today. Like that was really, and oil's not even one that I look at too much, but it does look like oil had a lot of volatility. I mean, just looking at the daily candle on oil, just to kind of paint the picture of what's going on lately. I mean, we sold off today on oil, took out the past like 3-4 days, the low of the past 3-4 days, and then we sold off and took out the highs of the last couple of days. So I mean, just a lot of indecision, I guess I'll put it. But the volatility in oil has just been a little crazy. Oil was one that I wanted to get a little bit more familiar in that market, but when I see days like this, it reminds me why I'm not too active in oil. But it is one that I want to pay a little bit more attention to. It's a volatile one, especially today at least.
Yeah, a little.
I mean,
homage.
yeah. See the wick on the bottom of that, and then the wick on the top. Like that's in one day. You know,
that's oil for you. My whole thing, because like natty gas was actually, when I checked this morning, it was down a little bit. It looks like pretty much flat on the day actually. But natty gas is one that I'm really going to watch, because I know a lot of people are talking about like petroleum exports, petroleum, out of the Middle East and that kind of stuff, and what we import. But the U.S. is like the biggest natty gas supporter by volume, by like a lot. And I know that like there's been a kind of a more of a push towards moving a lot of our energy grid over to natural gas because it's a little bit more protectionist. And I think if other countries are kind of moving in that same direction, that puts us in a really interesting position, and natty gas in a really interesting position, while a lot of the world is kind of more preoccupied with like crude oil and a lot of again those petroleum products. I guess is natty gas. Well, yeah. But anyway. So, it did go negative a few years ago. That's also true. It was a few years ago, wasn't it?
It was. It feels like it was yesterday. I'll never forget. I can't imagine some traders positioning themselves with the risk being around zero, or flat right there around zero, not expecting it for it to go negative. And I bet that just broke some people's brains as it broke mine. But I forgot about the negative just a few years ago.
I'm also a silly goose. I can't believe I never realized this before, but natural gas is a petroleum product. Whenever I think of petroleum, I think of like oil and stuff, but they're actually in similar family because they're both hydrocarbons.
I feel like you mentioned that. I feel like you touched on that and you kind of said that.
I did, but yeah, sorry. So natural gas, I feel like there might be more of a like transition into that, and that's one that I'm going to watch as well. But yeah, natty gas. A lot going on, an awful lot going on today. In crypto, in energy, in defense companies, in semiconductor stocks, and NNE. Almost, what is an NNE? I think that's like that's next era energy or nanonuclear energy. That was some news that came out a while ago. I think this is one of those, correct me if I'm wrong, but one of those nuclear companies, right? Nanonuclear, nanonuclear energy. And what are they? They're micro reactors, focusing on designing some nanonuclear reactors. Because there's been another big push towards nuclear energy now, which is again that's a whole other dimension to energy that I'm really excited to see forward. We saw it was up, oh my goodness, it was up almost 14.7% today. Very big day today in nanonuclear energy. I know CEG was kind of, just like the pop that we saw towards the end of September, and this was huge. Yeah, again, seeing this kind of like renewed excitement around nuclear energy, and maybe maybe someday we'll get into that. I've been kind of rooting for nuclear for a while now, so this is looking pretty promising. Tesla deliveries tomorrow, Mind Power. That is another one that's coming up, which is pretty exciting. So we shall see.
You've been touching Tesla at all this year? I think I've asked that before.
Watch it with popcorn.
Where's Tesla been?
Tesla, what is Tesla?
I feel you on that.
Let's see. Tesla has been, man, the recovery in Tesla has been specifically since like August. Almost reaching July levels. It's looking pretty good. It's been, I'm not trading Tesla myself. I traded it a little bit more towards the beginning of the year. But I mean, it's still pretty beat up. In the past year, it's still only up about like 3%, but specifically in like the last 6 months, we've seen it like it's up 47% in the last 6 months. So, will the growth continue? I don't know. Is it at all tied to their deliveries? It should be. Will
the growth continue? Yes.
I'm glad I'm not down today, but I get frustrating seeing certain stocks up that I've been watching and I'm not in. Yeah, the nuclear. Yeah, Dan. Also awesome to see you. Thanks for joining us, Dan. Yeah, dude, FOMO hits hard. That's for sure. Big deal donuts. So yeah. Well, we have a couple minutes left. I wanted to show off a spreadsheet, and I can throw a link to that over in chat. It was for a piece that we released last Friday. Might be kind of cool, so I wanted to talk about that. And we also have trivia, right?
Yeah, we got a couple trivia questions to go over, but I did kind of peep that spreadsheet a little bit. I'm excited to get into that. Yeah, I love a good spreadsheet. I love a spreadsheet.
I hate spreadsheets, to be honest.
Really? I love spreadsheets when they're done.
They're great when they're done.
I love a well-made spreadsheet, yeah.
Putting it together was a pain in the butt. I'll talk about it in a little bit, but yeah, I have my thoughts about spreadsheets. So let's go ahead and hop into this. We do have our trivia questions. We'll try to get to those before the end of the segment. As always, if you have any tickers, feel free to shout those out, and we'll try to look at those before we leave. But first things first, we do have an app. We just made some sick updates this week, actually. I'm going to talk about this on Thursday, but we just added a stock screener. There we go, and made some really cool performance improvements. So if you want to go check that out, it's in the App Store and the Google Play Store. We would love to have you. And then additionally, we're going to have our trivia coming up in a little bit. And if you want to come chat with us, you can find us over on Tasty Live's YouTube chat at Tasty Live Show. I'm also going to drop a link to that spreadsheet in that chat. So if you want to come find it, I'll put it in the slide too, but it might be easier to grab it there. We do also have a Twitter if you want to, X, formerly known as Twitter. I'm never going to get used to saying that. So if you want to come follow us, it's at Bad Trader app. Luis finds some pretty fun pieces of information on there. Does a really good job managing it. Yeah, E?
Amazing job.
Amazing job. Okay. So now the spreadsheet. Let me pull this up real quick. So I made a spreadsheet. We released a video on Friday, kind of a tutorial of how to use it. It's linked in the spreadsheet if you want to go find it. I'm going to show a little bit of it off today because I think it's kind of cool. This is a very good example of a tool that can technically do something, but really isn't designed to be able to do it. But I made a couple pieces about stock price simulations. It's something I find very cool, and found a way to translate that into a spreadsheet so that you can go copy the spreadsheet and use it yourself. So if you want to do your own stock price simulations, that's something that you can do on here. And it was a really fun challenge because, like I said, I don't know anything about Excel and I don't really use it very much. So this was a very fun challenge. Want to check it out?
Yeah, let's dive into it.
Let's dive into it. Let me pull this up real quick. And then, like I said, I'm going to drop this link over in chat on YouTube if you guys want to check it out yourselves. It's publicly available, so if you want to copy it and use it yourself, you can. And yeah, there's a full tutorial on Bad Traders YouTube if you want to go check that out. But effectively what this thing does is you can take, a stock price that you want to simulate, to like Tesla, SPY, whatever stock you want. You can throw some data in here, and then it'll calculate certain parameters that'll actually run a simulation based on the data that you fed into it. So if you want to simulate Tesla prices, for example, or SPY prices, for example, you can throw the data in here, change a couple parameters, and then you can actually run the simulations yourself. So the yellow columns are what you would edit. So, like for here, you would throw in your data, for example. And then this is actually the parameters over here for how you would run the simulation. So this is specifically like for N, it's like how many days in the future you want to simulate. So this is like 100 trading days. You can change it to 20 trading days. You can change it to 45 trading days or 30 trading days, whatever. And then I'll show you the data in a second, but that actually updates. So it'll, simulate the stock price for that amount of time. And then if you want to run a Monte Carlo, so if you want to repeat that simulation many times and sort of look at the output data and what outcomes are most likely, for example, you can actually change this parameter here. This is how, again, you define the Monte Carlo. So if you want to repeat the simulation 100 times, if you want to simulate, 200 times, I'll show you the data in a second, but all of that actually updates on the sheet and runs those simulations so that you can go however far in the future you want and however many times you want. Does that kind of make sense so far?
So far, yeah, following.
So like for this stock price, for example, or for this stock, for example, it's got a drift rate of about 8% per year. So about what the market returns in a year, about 9%. Its volatility, this is all calculated from the price data that you put into it. It's got a standardized annualized volatility of like about 15%. So this is pretty close to like the variables for the market based on historical trends. The S0, the stock price, is kind of where you start the simulation at. So if it starts at whatever SPY's trading at for now, you can plop that in here. Let's say that we want to run, like 30 trading days worth of simulation, and we want to repeat that 200 times. When you go to the spreadsheet, it actually updates, and it does these 200 simulations based on, again, a very simple model, but it's still kind of a model nonetheless. Got to be careful about how you use it. Earnings might this might be misleading if something has earnings coming up, for example, but it still does that, which is kind of cool. Or like, for example, like let's say that I want to do like 3 weeks in the future is what I want to simulate. So I'd put in like 15 trading days is 3 weeks, and then it'll actually update. And then all of these simulations are for the stock price according to, again, a certain model over time. And then sorry, does that make sense?
No, it does. So it's really like kind of like a plug and play and go over to the next page and it'll readjust once you change those inputs.
Pretty much, yeah. So like, let's say, okay, maybe I don't want to run 200 simulations. I want to run like 10. I don't know why I'd want to run so few, but like then it'll actually run 10. And so this is like one example of like a randomly moving stock price in time over the next 3 weeks, for example. So if you want to say like, oh, I want to see, I want to run, 100 simulations of how SPY is going to move over the next 3 weeks. You just put those variables in and then it calculates it. And then on the results page, these are pretty simple results. But for example, we can look at like the pop, which is about 51%, pretty consistent with like our drift rate in the market. Maybe it's like 54%. Your best performer, your worst performer, you can look at like the histogram. You can look at like the first 10 simulations. So you can actually go, run your simulations at home, which is kind of cool. If you wanted to put in, for example, like maybe a portfolio or I made an options version of this. We'll talk about it next week. But for stock price simulations, there's some kind of cool stuff that you can do with this if you're interested in looking at simulated data. And it's available. So if you want to copy it and use your own Google Drive to be able to host it, you can totally do that.
That's dope. Where can we find this again if we want to plug some other numbers in there?
So I left a link over in Tasty Live's YouTube chat. So if you want to find the spreadsheet, that's available. I also have this sheet pinned on my Twitter. So that's @FinancePhoton if you want to go find it. If you go on Bad Trader's YouTube channel, I left a link for that in here. There's like a tutorial of how to use it. And then the sheet's also linked in there. The options version of this, I will say, is really cool. And we're releasing that on Friday. Some people here in chat might have seen a preview of that from stream today. So I'll show off that on Tuesday. But just for stock price simulations, this again was like a really fun challenge because this is a tool that can like technically do something, but kind of isn't designed for it. So it's also annoying because this is like 10 lines in Python. But we did it. It's a thing. It got done. It's a simple tool, but I think it's kind of cool. So if you want to check that out, again, I threw the link in the slides so you can find it there. It's also on my Twitter. It's also on our YouTube channel. And then we threw the link over in YouTube chat if you want to go check that out. So I thought I'd give that a little shout out. It's a fun challenge.
Yeah. I'm looking forward to the option ones Friday because this one's dope. So I'm sure a lot of us are thinking the same thing. I'm going to be waiting for the option ones this week on Friday. So
I'm actually really happy with the option one. Like that was fun because options are, I say this all the time, options are like Legos. You can really like plug and play. Like you can add 5 legs, 6 legs, 10 legs, and all the math just kind of works out in a really consistent, beautiful way. The reality doesn't always work out that way, but at least in the theory world, when we're dealing with simulations, it does. So really excited to show that off on Tuesday is probably when we'll show it since we're releasing the video on Friday.
Got you.
So thank you guys for playing along. I hope y'all find it interesting. We can hop into our trivia now, but yeah, I wanted to give that a little shout out.
No, love it. Thanks for sharing that with us and taking the time to build that out so we could just be able to enjoy it because you did it. But
I hope people enjoy it. It was a pain in the butt.
I believe it. I believe it. But yeah, bad trivia for today. The theme is corporate. That is going to be the theme for today. But number one,
my favorite thing.
The best. Which company's original slogan, "Don't be evil," but then quietly dropped it, leaving everyone wondering if they're now allowed to be evil. We already know when it comes to these big tech companies, any type of rumors, any type of slogans that are attached to these names, people can be really sussed out about, especially a slogan that has the word evil in it, because I would assume a lot of people think these big tech companies are evil in the first place, but this was a slogan that was going with this company for a little bit. Is it Amazon? Is it Google? Is it Microsoft? Or is it Tesla?
Man, they all sound pretty evil. Like
she said all of the above. Where's question E?
Don't be evil. Okay, I feel like something in my jellies is telling me Tesla, because I feel like because they're an EV company, they seem a little bit more altruistic. It's like, oh, we're trying to get the world off of fossil fuels and convert to clean energy and yada yada. So like something about that kind of seems like a Tesla thing. Strictly because of the type of business that they're in, but I could also see Amazon, because Amazon started as like an online bookstore, so like that also seems very wholesome.
Yeah.
A bunch of people are saying Google. It does sound
Google,
wholesome.
Okay.
A couple people are saying Google. Man, Google is so funny because they were like the first company that figured out really how to monetize the internet. Like after the .com bubble popped, they figured out like data, like selling really granular data in a way that they were able to make money from. And that's pretty evil. Oh man, Facebook.
Just gonna add one. Some good answers.
A lot of people are saying Google.
Just adds Facebook as an option.
Yeah, dude, write it in. I think
I should have put Facebook in there. I know we would have had a lot of responses saying Facebook if it was in there, but I fumbled the bag on that one.
Oh, y'all. No, this is a great question. A lot of people are saying Google. Okay, that does kind of seem like a Google thing. For me, my gut tells me Tesla, but I think Google makes a little more sense, so I'm going to say Google. It's my guess.
Yeah, this one is Google.
Yeah.
And that's I should have thrown Facebook. That would have got a little bit more riffraff in the mental in terms of choosing which one. But it is Google, and since we're running out of time, we'll just go ahead and jump to the last one.
Good job, guys. A bunch of people got it. Very, very nice. Let's go to the last one.
Cool. This one's my favorite question, but which company started as a seller of playing cards before becoming the tech and gaming giant that it is today? Is it Sony with the PlayStation? Is it Microsoft with the Xbox? Is it Nintendo with the Wii and other items that they have? Or is it Activision? Which one is it? Which company started as a playing card?
I do actually know this one.
Really?
How do you not know it was Google, bro? I think I was born after that slogan dropped, but maybe that was just me. When did that? A bunch of people are saying Nintendo. Oh man. That's the one that I know. I think it started in like the 1800s too.
Everybody's saying Nintendo.
A bunch of people are saying
Nintendo. If everybody was long on Nvidia, would you get long, Julia?
I mean, I would jump off a bridge. Yeah.
Yeah, I would.
So my mom always used to say, if your friends jumped off a bridge, would you jump off the bridge? I'm like, how high is the bridge?
Oh yeah.
That could be. It's like a trading show on Disney.
Valid question though.
Yeah. GTA. Let's see. Man, this is. I know this one actually, and I'm also gonna go with the majority on this one. I'm gonna go ahead and say Nintendo, which I'm pretty sure is true. They've been around for a minute.
Yeah, it is Nintendo. Nintendo has taken a few different left turns and right turns over the years as it's been developing, and then obviously dominated in the video game space as it got a little older and matured as a company. But yeah, it did start off as a playing card company, and it was one of those things where American playing cards were actually banned in Japan, so they had to make their own kind of, it starts with an H, but I forget what it's called, but they had to make their own kind of playing cards because American playing cards were banned in Japan, so they had to use something else to kind of have fun with, gamble with, do all these kind of little fun games with, but they ended up pivoting, and then we know Nintendo as it is today. But that's going to wrap it up for the trivia of the day.
Yeah, those were some good questions. We got a lot of engagement from chat. Yes, Nintendo was founded in Kyoto in 1889 as a playing card company. That's wild. And a whole bunch of people got it. Is the bridge over water or concrete? Now we're using our critical thinking skills. I like that, Grumpy Mike.
Now we're talking. Love that.
But y'all, I think we're just about out of time. E, is there anything that you want to leave on before we head out?
Nope, that'll be it. Thanks for taking the time to hang out with us, and we'll see you guys next time.
Awesome. Well, thank you guys, everybody, for joining. Thank you for participating in chat. It was awesome to see everybody here. We're going to catch you guys on Thursday. So be careful out there. Good luck trading. We'll talk to you soon. Peace.
Peace.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm